Welcome back.
Welcome back, my friend. How are you?
I'm good.
Look at you.
Monday morning. How's it going? How was Florida?
God. Florida was great. Look, it's like nothing happened while I was gone.
Similar prices for sure.
You drove the boat really well.
Still here. Everything's still working.
Good
Allegedly,
week.
We'll see. Solid week.
Solid
Good
week.
Back and forth. Heading into FOMC.
So how was the weekend? What'd you do?
What did I do this weekend?
Well, you
Not
get
too much.
Prep for your trip.
Yeah, we're putting the last finishing touches on this money pit of a 2.5 week Japan trip, which is now it's just like scheduling the trains and everything. Now all these places I didn't anticipate. They'll ask you like, oh, when are you arriving? Like we'll send a shuttle or something from our place. And I'll be like, oh, like we're gonna get there like at like 3 on whatever it is, like April 5th, whatever. And they're like, well, there's no train that gets in at 3. and so I'm like, okay, I got it. So I need to literally schedule every single, because I guess the trains run exactly on time. And so that's the last piece that it's like, all right, I have to go in, because we're doing a lot of traveling throughout the country. And it's like
tough pieces if you haven't run the circuit once before.
Well, and I'm sure like there's going to be at some point, we're running late for something and we're going to miss some train. It's just like inevitable that we're not going to catch every single bus and train.
I take it Uber and Lyft are not competing out along the trail there?
Yeah, I don't think that they're going to be able. I'm going to be able to schedule. I mean, an Uber from like Osaka. I don't even know how many miles. What would it effectively be like a 2.5 hour train ride?
Is there an Uber and Lyft in?
They have some taxi service called Go, but again, I don't think you're getting like outside the city. And we're doing a lot of like, it'll be fun once we get there, but stupidly, I'm like, oh yeah, let's not just go to Tokyo and Osaka and these places. Let's spend 5 days on this trail in the middle of nowhere going between these small towns. And so that's what I'm really worried about is like, if anything messes up there, what happens? But
okay, how much luggage?
So this is one of the nice things is they'll transport all your luggage. So I've actually already
from
booked,
place to place.
I've already booked. We're not bringing a ton of stuff, but I've booked transportation for the luggage pretty much every step of the way.
Wow. Because I know what we packed. I went to Florida for 2 days for a conference with JJ. Mm-hmm. Then I met my wife on the other side of the state, and we spent 5 days there. Mm-hmm. And there was a lot of luggage. So for considering how short a stay it was, but I tend to just, it's amazing how much junk you end up putting in. Mm-hmm. And we were actually pretty good. We used almost everything we packed, mm-hmm. but it's just packing a lot. So
yeah, this is going to be hopefully a pretty efficient trip. I've bought a lot of Lululemon stuff, more Lululemon stuff, in anticipation of like...
Look at you. I have a special surprise for you after the show, too.
Oh, really?
Yes. I don't want to ruin it now. We can save it for tomorrow's show. But this is exciting stuff. So you got new string pants.
I honestly, I was just like, I need the most efficient clothing for packing for 2.5 weeks. Because, yeah, part of it's like, I'm going to be on this hiking trail for 5 days. But also, yeah, like clothes for 2.5 weeks. With the luggage travel, it's not so bad with the transportation, but yeah, it's a lot of stuff to juggle. But
and what's the weather going to be like?
It's supposed to be at this point. I was checking the weather this week, and the place that we're doing all the hiking and everything is supposed to be like 50s, 60s.
In the morning, is it one of those? Are you a little higher up, so it's cooler in the morning and then it warms up?
Yeah, but it's actually like more south than the major cities. So
okay.
So I think
I was thinking the other way
it's
around.
Supposed to be like warmer. And the only other thing is it's supposed to rain. It's like you've been to Hawaii before, right?
Yeah, but that doesn't mean anything. You go to Hawaii, it says it rains every single day. It rains for 7 minutes, and then it's sunny.
That's what they say, and that's what I'm hoping is that like, oh yeah, it's supposed to rain, especially in the spring, but it's supposed to be just like, oh, it'll rain for 20 minutes, and then like that's pretty much it. So, yeah, man, I'm excited, but a little nervous, and that's really it. And avoiding the St. Patrick's Day. Did you get in on Saturday?
No, Sunday.
Oh, so you didn't see any of the St. Patrick's Day? It's the same every year.
What's to see? It's the same. I could watch a video from 5 years ago. I see the boat turning the river green.
It's just always funny. We went to a yoga class on Saturday morning, and like walking back from this class, and there's just like a lot more people on the street at 9 a.m. than a normal Saturday morning.
And was this green beer yoga?
It was not green beer yoga. It was, nothing, no St. Patrick's Day theme to the yoga, but the streets were, everybody is wearing green. Honestly, at this point in my life, I'm starting to take offense to it as an Irish guy.
So I take it you did not. Now, when is the Southside Irish Parade?
It was yesterday.
Sunday.
Because I think it's
always
Sunday.
the Sunday, right?
Is it the Sunday before St. Patrick's Day? I don't remember, but I think it is. It was yesterday.
Okay.
But yeah, Saturday is the city
Because
festivities.
Beverly's the hub of that, if I'm not mistaken.
Yes, it's a big weekend for Beverly, a big weekend for Chicago. I guess people don't do this like anywhere else. Everybody comes here to do the St. Patrick's Day thing. It's not like, oh yeah, you could go to like Cleveland or whatever.
So did you guys then just hide the rest of the day?
Pretty much. Thankfully, the weather got progressively worse, and then if you got back yesterday.
I was talking to my son on
awful
Friday.
weather.
He goes, it's 70. I'm going, well, it's 73 in Florida. You guys are doing pretty good.
Yeah, it was.
And when I landed, I'm looking out the window, and it's like I've got no jacket. Mm-hmm. And I go.
Sunday is bad.
I go into the gift shop in the Sarasota airport, and they've got like really bad sweatshirts for $60.
Sure.
I of course find the one that's marked 80% off.
Nice.
But it's a 3XL. So.
Did you get that one?
I got that one.
Oh,
and my wife came back. It was like, what are you doing? I said, listen, this is not a keeper. This is just transitory travel wear.
Yeah.
So
it was, thankfully the weather got worse, and so there was not a lot of going outside post noon.
So it got
Saturday.
worse on Saturday then, too.
Yeah, it was just like kind of crazy. I mean, just like windy, but nothing too bad. But yeah, seeing all the people at 9 a.m. with cases of Michelob Ultras and stuff, I was like, I don't need to spend so much time. I think
your
outside
significant
today.
other has never experienced this before, short of last year. What was her thoughts?
Yeah, I think she's from Oklahoma. Again, like I don't think anybody does this. I don't think there's any expectations for like, oh, it's St. Patrick's Day, like we should go do whatever. And I think it was last St. Patrick's Day that we went to a party, and an old friend of mine, this young blonde woman who's married, was talking to me.
You said the nuclear word.
It's not. Yeah, the blonde thing is not great with my brunette girlfriend. But she was like talking to me. We hadn't seen each other in a while, and she's talking to me, and she's drunkenly like now she's crying, talking to me because she didn't invite me to her wedding, and she's all. And Callie was mad for 48 hours about that.
Seething mad or regular mad?
It was no. That was the one of the maddest I've ever seen.
That was the seething mad.
So we don't do so much of the same, which is like at this point in my life, it's like I've cut down on so much of the volatility. It's like I don't even go out on St. Patrick's Day and like do the drinking and everything else and everything else that I would do in the past. But still, it's like, man, I don't think I should be around partying at all. Where it's like I'm soberly standing here and this woman is drunkenly crying and I'm getting in trouble for this. It's like I guess I just shouldn't go to it.
Well, I mean, you're a little young to go the hermit route, but
I don't know. On White Lotus, the daughter that wants to become a Buddhist monk.
Don't ruin it. Don't ruin it. I'm too behind.
More and more.
Behind.
It's nothing. But yeah, I could see it. Thailand Buddhist monk.
I think we start this week with shaving your head.
Perfect.
And seeing how that goes for a week.
I think I have an oddly shaped head, so I don't know how good that'll go.
And then we'll get you in the robe, whatever.
The big like orange or like yellow, whatever that color is. It could look nice on me. I'm down.
I think it could be fantastic. It could be quite a change.
Well, we're glad that you're back, Pete. Here we have relatively unchanged markets to when you left, but a good deal of back and forth. I guess we can start with this Eurodollar piece. Looking at the 15-minute chart, I'll actually bump that up to an hourly chart.
We're starting out the week. I mean, it's interesting. We've seen good rotation because dollar Canada got sold hard. Kiwi finally got a bid to it.
Yeah.
Aussie got a bid to it, and it was a good bid. And what I mean by that is starting Friday and going through all last night, irrespective of SPOOs up or down, rates up or down, they didn't care. Yeah, if SPOOs fell, the Kiwi would roll over, but not like what it used to, which is 40, 50 points. It'd roll over 3 or 4 pips and then continue. That is some really solid tape action.
Very, very consistently. The only piece, I guess, going from last week that is trending outside of its range seems to be this New Zealand dollar and Australian dollar. Now, these have been the weakest pieces of the last couple of weeks.
We talked about catch up versus. Do you buy the leader? Do you buy the laggard? And I think there is a point where once the sentiment changes a little bit, I mean the overall dollar sentiment, these do tend to get a little bit more interest to them. But you can't race that. In other words, that move in euro was so euro specific. You can't just say, well, the New Zealand should be a percent higher because of the euro.
Sure.
This just speaks to really a changing in. And when you look at the daily here, and this is one where you could say, oh, I didn't buy the 56s. I didn't buy the 56 and a halves. Gave me 3 times to buy them down there. Sure, it did. But when you look at just going back, what's mid-range here? 61, 62 cents?
Sure, yeah. If you go back far, if you go back the last year, we're not even mid-range in terms of trading in these commodity currencies. If you're going back the last couple of months, definitely the weakest pieces. As I again bring up this euro dollar, you see it's been a hell of a run to above mid-range for the last year of trading. Now finally these commodity currencies starting to wake up a little bit. And yeah, to your point, Pete, I mean, now this is a couple trading sessions in a row of strength for the New Zealand dollar, for the Australian dollar that we'll bring up as well. Starting to get to the upside of the range in 2025 will be super interesting to see, especially on a week like this where there's not a lot of data around New Zealand, Australia, and Canada per se, but there's a ton of data around the U.S. and Japan and the UK, which we'll see how relevant that is for this piece. It'll be really interesting to see if they continue that strength, like you say, SPOOs up, SPOOs down, these markets continuing to trade higher. Will the Aussie conclude this week above 64 cents? Will this Kiwi piece conclude this week above 58 cents and try to break into a little bit of a different range than we've seen the first couple of months of the year? Because this has been probably the most range-bound piece.
Absolutely. Dollar yen, dollar Swiss, safe haven, not safe haven. They've acted so differently. What are your thoughts going back? Now, again, they're Swiss and yen are both seeing a nice bid. Dollar Swiss, dollar yen getting sold. Pulling back a little bit here off the lows, but what are your thoughts of these quote-unquote safe haven currencies where it seems, at least for the start of the week, it's a little safer out there?
Yeah, it'll be super interesting on a Fed week like this one because the dollar yen and I think the Swiss franc piece has been, yes, safe haven or more flight to quality ish than it was a couple of months ago. But I still think that the interest rate differential in these markets is going to drive a lot of the price action moving forward. And I think you saw it last week where VIX didn't come off until the end of the week. And this dollar yen bounced back earlier in the week. And so you started to see a little bit of the U.S. interest rate stability play through this piece before VIX came off huge at the end of last week. Now you're seeing dollar get sold a little bit at the start of this week, which will be interesting to see if that continues. They tried last night 149.
Yeah.
And again, this is a funny piece where it's like at certain points last week, we thought that 145 was coming. And just like that, this dollar able to regain ground
Right.
back up to 150.
While at the
in
same time,
dollar
euro
yen.
gave no ground whatsoever.
That's exactly right.
And looking at euro yen, you could probably see that play through really nicely.
Yeah, that's been an emerging piece of interesting non-dollar cross pair is this euro yen. Yeah, now trading around 162 and not really giving up any ground up there amid that euro strength. But yeah, I mean, to your point, to start 109 in this euro is pretty much where you left it. They've tried to take it higher, they've tried to take it lower, but it seems like this market is content to just be pegged around 109 as we head into the FOMC.
So FOMC on Wednesday. Curious to see your thoughts because no rate cut expected basis the Fed watch tool and everything. They can always do whatever they want. It's funny. Over the weekend I read, there's nothing to come of this. Statement will be parsed for any changes in words. I think it's kind of a nothing burger. I don't think they're going to use a bullet to quote unquote save the stock market by saying that they're going to lean. I'm sure they're going to say we're going to be data sensitive or maybe in a hyper way because the impact of jobs cuts through Doge or whatever, or a lot of that's being reversed as we speak, though. I don't think they're going to use quote unquote a bullet to try to support the stock market with this Fed meeting.
For sure.
Will the market look on that, though, as disappointing? Will they expect that? Or is this just kind of going to be, we know the market's going to move around this. They're going to parse words and we'll get a little bit of spike. Anything meaningful in your mind come out of a benign statement? And is that benign statement, benign not in a pejorative way, but just an average statement that doesn't change much? Does that disappoint the market in some way?
I mean, I have no clue how it's going to end up, but these meetings tend to be the ones where you see huge moves on what's expected in the future. I couldn't agree with you more, and the market couldn't agree with you more, that there's no expectation for anything coming this week. But in terms of what the projections say, because we're going to get a dot plot and what Powell says, I think there's a strong chance to talk down the idea of a rate cut in May or in June, where it's really priced in, almost a 75% chance that rates are lower, the market's saying, by June. The last thing that we heard from Powell was probably the greatest amount of confidence that we've gotten for the U.S. economy in the last 2 weeks, which was, we're not really scared by this short-term turbulence. We're not looking at cutting rates to, fix this short-term volatility that we see in the market. We're still looking at volatility. We're still looking at data. And if you remember that, you saw equities rally on that. You saw U.S. interest rates rally on that. You saw U.S. dollar rally on that. And so, I mean, if nothing's changed, I think there's an opportunity for a no cut, but a hawkish vibe to come from the Fed with the idea of we've obviously moved lower from the highs of interest rates that we had several months ago, but we're not in an aggressive rate cut environment. And what that means for the U.S. dollar, I think could potentially be super strong. And you see the fact that, 75% chance, 74, 73, whatever it is.
So you think, and jump to D's, because this is what's interesting, and this is something I learned from you, is go out the whole year and look to see where they've shifted it, because this 3 months ago had one rate cut priced into it, basically. Now it's a solid,
1 month ago. One month ago,
it's a solid three. It's a solid three. Again, a wider distribution because it's further out in time. But
there's a number of ways you can look at this. But if you go out, so this column here is 1 month ago what the market was expecting, and that was already, we're starting to see some turbulence around tariffs, and equities are not blowing out the highs 1 month ago. But a month ago, there was a 15% chance of no change in interest rates the whole year. Now, that's not a huge chance, but between that and only one cut, we're talking about now almost a 50% chance of either unchanged or just one cut this year. You look now at the distribution, and it's not drastically different, but now you've got only a 3% chance of no change, only a 15, 16% chance of just one cut, and the majority of the distribution
is 2.5.
Is 2 to 3 cuts. And so if Powell still thinks, like he did a couple of weeks ago, that nothing's changed, and all of this volatility that we're seeing in equities, and he doesn't necessarily control so much equities, really it's interest rates he definitely controls, and then the US dollar can be very closely tied to that interest rate action, and then equities and gold and all these different things, it's less direct of a correlation there. If he still thinks that nothing's changed, but now Eurodollar has gone from 102 to 109, and he comes out and says, yeah, like we're only looking at maybe one, maybe two cuts this year. He's never that clear, but if that's what the words are digested as, and this distribution goes back to where it was a month ago, I think you could see some big reversals in that US dollar.
And that was my question to you. So you think we got to wait till Wednesday? Because right now we're at 109.5. 68 cents in Kiwi. We're at kind of pivot points of either the high end of the range or the range.
For sure.
You think we're going to have to wait for the clarity of Wednesday to breach those? Because sometimes the market gets impatient and it moves beforehand.
Oh, yeah.
It kind of catches everybody off guard.
I think we could see some huge spikes back and forth. I mean, look at we've seen, 50, 60, 70 point ranges around 109 here. But yeah, I think that it'll be Bank of Japan on Tuesday night, Fed on Wednesday afternoon, and then Bank of England on Thursday.
Yeah, that is trifecta. We're going to have a good week trading.
Yeah.
Gold 3,007. Is it helping, hurting Aussie? It doesn't matter
I don't
anymore.
think I can't find gold correlated to anything right now. It was correlated to equities for a good chunk of the last couple of years, but now equities are coming off and gold is moving high.
Right.
I don't know what to tell you. I think that's a one-off story.
No, because you got platinum rallying, copper rallying, silver rallying. It's just a bimetal story.
It's funny. A lot of the risk-on assets are becoming more correlated amid a spike in volatility, but it seems like those non-risk-on assets outside of equities, everything seems to be a one-off story at this point. It'll be really interesting to see, but we got plenty of time to talk about it later this week. Pete, thanks so much for getting back here, my friend. Tom, Tony, and Vanetta coming up next. Everybody stick around for that. Peace.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tastytrade. Make your move.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision, there wasn't a lot of innovation, and I think that left a door open for us, which we really liked. After almost 20 years of open outcry, standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know it, how you feeling? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take a crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Top of the morning to ya. Happy St. Patrick's Day to ye all.
I mean, is this holiday ever ending? I mean, I watched all the memes from this weekend. I saw everybody turned into an Irishman. I mean, I can't even get a good Christopher Columbus Day. We got a 5-day weekend of Irish debauchery.
Yeah.
Then try to be more beloved than a genocidal maniac? I don't know.
It's a lot
I mean, he drove the snakes out of Ireland. Like, we love that. We love that. So
Well played. Well played.
I don't know what to tell you.
It's a little over the top. Yeah.
It's a little over the top. A little over the top.
Yeah.
I'm getting too old for this crap.
Yeah.
But it was perfect weather. It was great. Everyone looked like they had a good time.
It snowed yesterday.
No, well, Saturday.
Oh, Saturday was beautiful. Yeah, I give you that. Yeah, 100%. Saturday was
Yesterday was the worst. I mean, snowing, icy, freezing rain. It was bad.
It was 70 plus degrees on Friday and Saturday. It was snowing. I mean, like legit snow on Sunday.
Come on, act like you've been here before. You've lived here for 40 years in the Midwest, man. What are you, new?
I know. I've had days where I've opened my pool and the next day it snowed. Some years.
Yeah,
Crazy.
Tom, how's your HVAC situation?
Almost done. One more trip.
Almost? Are you serious?
Your guys are there till like 7, 8 o'clock at night on Friday. They got there early and they still aren't done. One more trip, he said. One more, and he promises he's done. I go.
Hey! The kid's got a young baby. He's got to get, he needs formula, diapers, and stuff like that. It's expensive.
Hey, I told him. I go. You're not getting paid until you get this thing done. He goes. I know.
So wait, you don't have heat?
No, I have everything. It works fine.
Then why is he there?
Oh, they're just fixing up some, things. There's still a few things.
He doesn't know. Don't ask the girl. They don't know. They just.
Hey, that's offensive to intelligent women everywhere who are much smarter than whatever the hell Tom is. So let's put some respect on females' names because they know what's going on.
But anyway,
he is a class unto himself.
Yeah, it was fine. I didn't, it didn't disrupt any of my planned activities, so I was good.
More importantly, were you able to get the proper ride right?
Yes.
From?
I got a New York ride from a bakery, and I got actually, uncut, so I got to cut it myself, grilled it. But the key, I told you, I wrote it in the cherry bomb.
Do you own a bread knife?
Oh, yeah. Are you kidding? I'm a Toastmaster. I run the largest toast operation in Chicago. Nobody's even close.
That's not even true.
No, I promise
he's the toast king of Chicago.
There is not a single person in Chicago that sells as much toast as we do.
I'm pretty sure Wildberry would beg to differ, but you pop off. You just spout and
That's
stuff.
when you get a piece of toast with your omelet. That's not selling toast. We only sell toast.
Uh-huh.
But anyway, yeah. I mean, the key was, whoever told me, the key was you make it on Saturday, you eat it on Sunday because then it slices perfect.
Oh, the corned beef.
Yeah. Yeah, then I did what you said.
You made it on Saturday, and then you let it rest for 3 days. That's very biblical of you.
Yes. And Tony, I did what you said. I threw it all on the grill, like on the flat top.
That's the way.
Perfect.
How'd it come?
Where are the pictures?
Oh, I didn't take them, but I should have, but I didn't. But it was probably the best I've ever done in a decade of trying to make corned beef and make it work.
And we're just supposed to take your word for it?
Yeah, no, I'm telling you, it was beautiful.
Where'd you get the bread?
I got it at a little bakery, and it was like New York rye. So it was like,
obviously he doesn't remember the name of the bakery.
A little place on Roscoe, but it was it wasn't like a big giant loaf. It was like a little smaller, but it was right out of the oven. It was great.
It was a petite loaf?
No.
You got the petite loaf? That's okay, girl.
It just wasn't one of those massive, like.
I buy half loaves of bread because I live by myself, so I buy the little loaves of bread.
Mm-hmm. I could see that.
No, it was seriously, it was a home run. But
that's awesome.
That's all.
Now, what is slow roasted corned beef? I just want to. What is slow roasted?
I don't know why.
Well, that's what you wrote, didn't you? What did you write? Slow something. What did you write?
I slow cooked it.
Do you cook it in your crock pot?
Yeah, I cooked it in the crock pot.
Yeah, that's why. Because he cooked it in
the slow cook. My St. Patrick's Day corned beef.
It took almost 7 hours.
Interesting. You
Yeah.
couldn't just boil it like everybody else, could you?
No.
Did you make the Guinness sauce?
No, but I cooked it in Guinness.
Okay, well, I literally gave you a recipe and you couldn't follow it.
No.
It was too hard.
Yeah, I have my own stuff.
Okay, cool.
But I cooked it in Guinness. It was great.
Well, I'm glad it turned out very well, even though there's no proof that any of this actually happened.
I'll bring it. I'll
true.
bring in tomorrow. I'll bring in leftovers tomorrow for you guys.
Oh, that have been unrefrigerated all weekend? Great.
And cooked on Saturday? So we get an extra day of fermentation?
Yes.
Too bad the CDC doesn't exist anymore.
That's right. Who needs that?
Hello?
Hello? Too good.
Did you do anything else this weekend? That was it.
What about you, Vanetta? What did you do? What did a young urban single woman fancy free on St. Patrick's Day do? Shooting fish in a barrel.
It's not my scene. I slept in on Saturday, and then I went to the gym, and then I did some laundry, and then I went to the gym yesterday.
Very boring.
I called my parents, like the good daughter that I am. Hi, parents. And I did some more laundry, and I'm going to do some meal prep today. So it's very exciting.
Oh, my God. You become one of those.
I'm going to kill myself. With your listening to your life, I'm going to kill myself.
I didn't volunteer this information. He asked me. I normally just skip over what
I made a mistake. I'm a good person. I made one mistake. I'm a good person.
Yeah. Sorry, my weekends aren't lascivious enough for you. No, but that's it. That's all he did. But how about you? What did you do?
You talking to me?
Yeah, I'm talking to you.
Yeah. This weekend, what did we do? This weekend was a pretty boring weekend. We didn't have any St. Patrick's Day festivities.
Well, your son's a little young to be drinking a blackout rage gallon downtown.
Oh no! Around Saturday morning, around 9 o'clock or so, I could smell a little bit of cologne from around 50 feet away. I thought I was back in Brooklyn, and about a half a dozen Italian kids were going to come to the cappuccino store to have a little bit of demi-tasse. My son walked down the stairs. His cologne preceded him long before he made it to the bottom step. and he was going out for an Irish breakfast. So he celebrated St. Patrick's Day. I did not. Him and his friends.
Irish breakfast. I like a little Irish breakfast. A little.
Mm-hmm.
Yes, English breakfast. I think
they don't lump those are two different. Like you're gonna start a war. Like those are different things.
There's
you can't call the Irish.
There's a very subtle difference between an Irish breakfast and an English breakfast. I can't remember. I think it's the kind of sausage it is. I don't. It's minuscule.
Uncut and cut.
You shouldn't be talking about things that you don't understand. That's all.
No, we had this discussion last year when we went from England to Ireland, and I was like, and the difference is it's small.
Let's see.
It's probably not small to the people that it matters. Okay, but okay.
No, it's
while both Irish and English breakfast teas are black tea blend. Irish this is just tea. Sorry.
I think it's just the sausage. I don't know. Nothing else.
The primary difference, the Irish version includes white pudding, potatoes, and often soda bread, which adds a hearty, rustic twist.
Oh, yeah. So I forgot about that. So I bought Irish soda bread this weekend.
Soda bread?
Yeah, I bought a bunch of loaves of Irish soda bread, and we gave out free samples.
Oh, you mean that bad coffee?
Yeah.
Just as some dry ass soda bread? Yum.
No, soda bread.
Here's your free sample, peasant.
Soda bread on its own is kind of gross. What you have to do is you toast it and then you dunk it, you dip it in butter. Then it's good.
Is that what you gave out samples of? No, it wasn't.
Yeah, that's how we do it.
With butter.
Everything we do, we dip in butter.
In this economy.
In this economy.
In this economy. Yeah, I love that.
Yeah, okay. You're just making stuff up now. You're like, everyone got a free trip to Ireland at the store. You're like, no, they didn't.
You go to Ireland. You go to Ireland.
Yeah, I was like, none of this actually happened as a concept, but okay. But Scott Sheridan is doing things that are real, unlike you in Fantasyland. Scott is in Japan, the land of the rising sun. How jealous are you?
None at all. I'm good.
Come on, you got to be a little bit jealous.
No, but good news. Tomorrow morning, right now, 7 a.m. on the nose.
I wouldn't jinx it if I were you. I would just let it be a surprise.
Tomorrow morning, 7 a.m. in the middle of the game. Let's see, it's going to be 9 o'clock there. I think it's going to be right towards about the 6th or 7th inning. Tom Ricketts is calling into the show tomorrow morning.
Awesome.
Wow. To do the 7th inning stretch?
I don't know if they do the 7th inning stretch in Japan, but he's calling into the show from the game to say hi to Tasty Nation. So
wow.
Hopefully it's the Cubs winning the first game of the year, because I think tomorrow is the first game. And
hopefully they'll be giving out their first Frankfurters. $2 Frankfurters.
We can't even get bat signal stable, and he lives in Glencoe. Like, how are we going to get Tom Ricketts beamed around from Japan? And it's going to be, I'm no shade to our team, but I'm just saying, Microsoft has limits.
He's got a special in.
Yeah.
Well, we'll see how it goes. I don't think they're going to be roughing it in the owner's box, so I think they'll be okay. I don't know. We'll see. Scott.
Very exciting.
Yeah. I've been trying to get Tom to come on the show for years, and he's like always got an excuse. But this time, Scott cornered him. So from Japan, it'll be really cool.
That's because we sent Scott Sheridan in there to get the job done.
That's right.
We sent you in there to get the job done. You can't get it done.
But because of the time change, it's going to be right at 7 a.m. tomorrow.
Okay.
Perfect.
That's exciting.
So we're going to start on time. We're going to have a little fun with Tom. We're going to which reminds me, guys, you have to wear your Cubs outfits tomorrow.
What Cubs outfit? I am a South Side girl.
Well, tomorrow you're a Cubs fan.
I don't have any Cubs swag.
Well, you better go out and buy it tonight.
Can I expense it?
Sure. Sure.
Yeah.
Don't embarrass us.
Okay.
I think I got a Cubs. What do you call golf shirt?
I gave you one.
That's what I said. I think I have one.
You got to wear it tomorrow.
Okay. All right. Man, I never thought you would be the one that would give me like requests for clothes to put on. You sick SOB.
I mean, it's only for tomorrow. We're only going to make them feel good, you know.
What?
All right, I can do it.
We're going to show the love. That's all.
Yep. All right.
I did see something already go viral. Cubs player Justin Turner, who has this big red beard. 2 kids in the stands, 2 little Japanese kids, had big red beards on, and it was so cute. And so he went up into the stands to say hi to them. It was just really cute. And
he gave them a signed ball or something like that.
Yeah.
Yeah, it was very cool.
It was really cute. So
very cute.
You know how I feel about beards.
Well, JJ was sitting next to him yesterday, so they were chatting. He told me.
Really?
Yeah.
Where is all of this footage?
I am not your social media person, but he told me that
Come
he was.
on.
Oh no, he was having sushi with them. That's what.
With Justin Turner?
I think so.
Oh my God. That's amazing.
Very nice.
That's very cool. All right. Well, you are stuck with us degular people today. The celebrities come tomorrow.
I'm stuck with you guys. Scott's eating sushi with Justin Turner, and I'm stuck here having a old Italian sandwich with Josh.
I mean, those are your life choices. You could have gone. You're the
I know. I don't want to.
You're
I'm good.
miserable either way. So
I'm good. I'm good. I don't need to fly 15 hours. I'm good.
Because there's no place you'd rather be than right here.
For a once-in-a-lifetime experience.
Ugh, disgusting.
No,
anyway,
I'll be fine.
Hey, we got a great show for you today on this lovely St. Patrick's Day. At the top of the 8 o'clock hour, we got an options jive for you. Little research corner with Kai. Then at 8:40, we got skinny on options, abstract application. Dr. Jim in the house. The paradox of choice. Ooh, what does that entail?
I'm not sure. The paradox of choice. I mean, I wrote a piece called The Paradox of Choice, but I don't think Jim took my piece. My piece was on AI, and I talked about, I did a whole discussion on the paradox of choice on our last year's tour. But I don't know where Jim's going with it. I mean, it's pretty open-ended.
Okay, well, we will see where he takes it. He always has wonderful new insight to these topics. That's going to be at 8:40. Then at 9 o'clock, market measures why 1 ratio isn't enough for strategy evaluation. What?
Yeah. I mean, there's just many ways to skin the cat.
Don't use that phrase. There's many ways to pet a cat.
Oh, my God.
Like you could pet them on their head. Don't touch the tail. Don't really touch the belly. Really, there's only one way to pet a cat. And you get airplane ears. I love cats.
I guess so.
That's fine. Then at 9:30 ish, we are gonna take your calls. If you got calls or questions for Tom and Bat, they are gonna be live from Tasty Live today because there's no Scott Sheridan. The schedule's messed up and it's messing up my brain. But just Tom and Bat today, so you're stuck with them. No Scott Sheridan, which happens to be my favorite part of the show, but alas, I digress. And Ginny is back from wherever she was. So Liz and Jenny are back together.
Huzzah.
Could be good.
Huzzah. Huzzah. Hey, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Coming
across the wire.
This
leading story.
just in.
Top story. Just in.
In
today's headline.
This just in.
Breaking news. Story.
All right, everybody. Today's a magnificent Monday. It's March the 17th. Happy St. Patrick's Day. This is a part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Any earnings, Mr. Bat?
No earnings for today, but IWM does have a dividend today. So that's my personal public service announcement.
U.S. stock futures declined Sunday after Treasury Secretary Scott Bessent said he's not worried about a market downturn despite a miserable stretch for Wall Street. He says, all I can tell you is that corrections are healthy. They're normal. Thanks, Scott. What are you guys seeing in the tape action? And is this the response you want from a Treasury Secretary?
Actually, as much as I don't like him, yes, that is the response that I like. Because
okay, let's go.
Well, because I believe the same thing. Corrections are healthy.
All right, LFG.
LFG.
It drives me crazy when people freak out. When we go up 10%, everybody loves it. We go down 10%, everybody's like, oh my God, it's the end of the world. I mean, corrections are healthy. No question about it.
But wouldn't you say that this sort of self-inflicted correction has a little bit of a different feel to it?
Well,
no, it's all the same and nothing self-inflicted.
It depends.
The market has a mind of its own. I've tried to say this for the last 2 weeks.
It depends, because I disagree with Tony a little bit here. If we turn ourselves into what happened in China, then it does, because I feel like I like when Mother Nature corrects. I don't love when.
Right, that's what. Right, yeah.
Yeah, I don't want the U.S. to fall into the Chinese trap where they decided that they would mess with Mother Nature and they ruined their market for a couple of years. I hope that's not the case here. So far, I'm not willing to go there yet.
Ruin their market. We got 5 stocks to trade from China. Come on.
No. Not we do, but they don't. They had hundreds. But what I'm saying is, I hope at this point that it's just a regular correction. But the other part to that is, I'm not so sure we're done with this down move. You know, I mean, I thought.
What's the expected move for the week, and what's volatility doing?
It's big. It's like 130. We talked about it last night.
Is the expected move for the week?
Yeah, it's one of the biggest expected moves for a week that I've ever seen.
That's interesting.
And it's expiration.
But over 7 days, 147. You're there. Mm-hmm.
Yeah. So the expected.
We're gonna get that all today.
The expected move for the week, because I thought we'd be up today actually, and then I thought we'd be up maybe today and tomorrow, and then down later in the week. But the expected move is from 55.50 to 5,800. So that's kind of the range.
Don't you listen to me? The bat said you got to wait till Wednesday after the VIX futures expire. I said Wednesday into Thursday, you'll be fine. You're going to have a little bit of back and forth Monday and Tuesday. I try to teach you these things.
I agree with you.
Okay.
I agree with you.
Well, hey, something else to keep in mind this week. Fed Reserve Chair Jerome Powell takes center stage following the S&P 500 plunge into its first correction since October 2023. The FOMC is going to announce its monetary policy decision and release its updated summary of economic projections on Wednesday. So you guys are keying in here on a Wednesday. And the central bank is widely expected to keep the Fed funds rate unchanged at 4.25 to 4.5%. You're also going to get earnings from Nike, Carnival, and Micron this week. Let's go.
Yeah, we had this discussion, not the earnings discussion, but we had the discussion on the Fed last night on First Call, and the consensus, and this is I'm in on this consensus, is that the Fed will do absolutely nothing this week because they don't need to. The Fed needs to sit back and take action if something bad happens. But if this is the market like it is now.
Hasn't something bad happened? We lost $5 trillion of market cap. What else are you waiting for, Sally?
No, if something really bad happens, the Fed steps in. If not, the Fed's got to just step back and let the market do its own thing. So I think that the Fed does absolutely nothing this week. I think they sit back and watch. There's no reason for the Fed to act here. None.
What are you doing in bonds?
I just bought back my short puts this morning. We've been long bonds. Trade worked out nice. We sold them about 108, 19, 110. Just bought them back at 52 and 54 and 52.
You're talking about bond puts, correct?
Bond puts. So every time the bonds go down, we sell puts. And then when they bounce back up, like this morning, we buy them back. So far, it's been one of the best trades of the year.
117.05 up 13 ticks on the bonds. Yep.
I'm flat now. This is flat. I'm totally flat. Just covered this morning.
This headline says, keep an eye on inflows and outflows. Traders are gauging the stock market's next move, are keeping a wary eye for flows. It says here that the stock market crises from the 1987 crash to COVID share a common theme: dried up liquidity, intensified market moves. Now with the rapid growth of derivatives, there's a focus on how option positions affect underlying spot markets. What are you guys seeing in terms of liquidity and ease of getting in and out of these positions with? Can
we stop this? I mean, this is total bullcrap in my opinion.
Why is it bullcrap?
Okay. I agree with Tony. This is such freaking garbage.
I thought this was so innocuous. Why?
No,
what's wrong with this?
Because I can't stand when people say, watch the flows. How do you watch the flows? I've been watching the market for 40 some odd years. How do you watch the flows? It's like the dumbest thing I've ever heard. Like, it's just
not just that. We have more liquidity than we've ever had. We've had record numbers in just about everything: stocks, futures, options.
Yeah.
I mean, there are so many ways to get long and short a stock now, whether it be buy, call, sell, put, or do some other type of strategy that reduces buying power. I mean, they have no idea on how to do anything here to track anything about what's long and what's short.
Every single person that watches Tasty knows that these kind of headlines are complete garbage.
Wow. All right, fine. I'll take it down.
Take it down, John.
Take it down. Well, if you love that, you're going to love this. Investors are increasingly taking refuge from the tumultuous U.S. stock market by pouring into a type of ETF that offers a trade-off, a cap on potential gains in return for a cushion against possible losses. Over the past month, as the market has pulled back, these buffer ETFs have seen $2.5 billion of inflows. Do you want to talk about this?
No, because it's just garbage. I mean, 2.5 billion of inflows to a buffer ETF. Give me a break.
Well, what do you offer for people who do want some sort of, I don't know, more stability? Like, what would be your solution to them?
Well,
like if they didn't want to just go into a naked underlying, like, what's your advice?
I mean, a buffer ETF just means you're paying a lot more money in fees. So if you really want to go into an ETF, then just pick any ETF you want. Just pick the one with the lowest fees. They're all the same.
They're not all the same. This one will tuck me in at night. All right, keeping it moving. The dollar is on its back foot as economic worries sap confidence. Promising news out of China, but the dollar hovered close to 5-month lows against its major peers. Euro stood not far from a 5-month peak. What are we doing in currencies? Euro, yen, peso, Canadian dollar.
The dollar's a little bit higher this morning. Against everything but the yen.
Euro's up a couple of ticks.
Yeah, the euro's up a couple ticks. The British pound's up a couple ticks. So is the Canadian dollar. The yen's down a couple. But actually, they're just killing premium everywhere this morning. So it's all good. I mean, so far so good. I'll leave it there.
Okay.
All good in the hood.
All good in the hood.
Take it. Hey, let's check on commodities, shall we? Last night, oil prices opened up around 1% higher after the U.S. vowed to keep attacking Yemen's Houthi rebels. Brent futures rose 72 cents or 1.02% to $71.30 a barrel. Let's talk oil.
Same thing this morning. It's up just over 1%. Nothing much. I mean, it's pretty much a dead product right now.
To just under 68, the higher end of its most recent range, but it's on its butt. I mean, it's come down from around 73 down to 68 now. Its lows were around 65.
Yeah, but with very little volatility and no premium.
Okay, so that sucks.
Yeah.
Hey, in other commodity news, gold surged above 3,000 for the first time as investors seek a haven from tariffs. Gold did rise around that $3,000 an ounce. Central banks have also been buying up gold as a hedge against rising geopolitical risks. What's gold doing to start the week?
It's pretty much unched.
Which is high at 3,000, right? I mean, it's at or near record highs.
Yeah.
Are you still short gold here, or?
I have no gold position. I took my tail and put it between my legs.
I'm short. No, I am flat gold short premium in there.
Okay. Is that working?
No.
Okay.
I mean, it's working this morning, but I don't know what that means. Like, this is our best morning in there because they're killing premium because it's unchanged. But no, in general, it's not working.
The state of Delaware has long been a corporate haven due to its business-friendly laws. But Elon Musk's decision to reincorporate both Tesla and SpaceX outside of Delaware have made waves, leading to other major businesses from Meta to others to also look at changing states. So Delaware state lawmakers are trying to maintain Delaware as a top destination for business incorporation. Do you care about this? And what are the ramifications if there's a mass exodus of Fortune 500 companies out of the Delaware Chancery Court?
I don't think you're going to see very many companies exit. I mean, we're a Delaware corporation. I mean, it's a pain in the neck to exit, and it's expensive, and it's just
a pain in the ass to incorporate, period, right? I mean, but there are other states now that do it. I think Texas is one.
Yeah, I mean, we're fine. I mean, just because Elon Musk exit, we're not. Who cares? We're fine.
Yeah, so they are working on a new bill that would make it even more friendly to corporations. It wouldn't be retroactive, so it still would not affect Musk and his situation, but they're hoping that in the future that the state still keeps attracting corporate business. So do with that what you will. Hey, here's a surprise no one saw coming. Intel is the best chip stock this year, and a surprising reversal after a dreadful performance in 2024. Intel locked in for 2025. They're the best performing chip stock of the year, leading the Philadelphia Semiconductor Index for 2025. Intel stock up around 19% for the year. That's SOX is the Philadelphia Semiconductor
I mean, let's put
Index.
this in.
Go ahead. I love the headline. Please.
Let's put some context around this. It's a stock that was absolutely on its butt. Basically, looked like it was going out of business. It's up. It's a $20 stock that's going up. 19%. Who cares?
If you go back like a full calendar year, if you go back to like March to March, let's say, the stock's lost like 30-40%. But from the beginning of the year, when it closed on its lows, you are correct. It's doing quite well, up about $5.
That's what we call curve fitting a headline.
Yay! I love it. What are you doing in Intel?
Nothing. We covered our position last week.
Okay.
We had some long delta.
We were short puts. We were short the 20 puts. I covered them last week.
All eyes will be on NVIDIA's GPU technology conference this week, where the chip company is expected to unveil its new line of AI chips. NVIDIA Chief Executive Jensen Huang will share more about the upcoming Blackwell Ultra AI chip, and they will also announce plans for following products. Also probably going to have to address threats from emergent AI models coming out of China. But all eyes will be on NVIDIA. And again, this is the week of their major tech conference, and the stock historically has moved during this week. What are you doing in NVIDIA?
We're short premium. We're pretty flat. We're going to be a little bit tiny short this morning just because the stock's up in the nature of our positions.
$2. Yep.
Yeah. So we're going to have to roll up some putties here. Putty. But yeah, that's it. I mean, we're like I said, we're a tiny bit short, minuscule.
Un poco.
Mm-hmm.
Okay. Hey, in other AI news, OpenAI and Elon Musk have agreed to fast track their trial over a for-profit shift. They have agreed it's the latest turn in a grudge match between the world's richest person and OpenAI CEO Sam Altman. It's playing out publicly in court. Elon Musk and OpenAI jointly proposed a trial in December, according to a federal court filing on Friday. The parties agreed to delay a decision on whether the expedited case will be decided by a jury or solely by the judge. I believe that's called a bench trial. Do you care?
No, I mean, Sam Altman got lucky in that Musk has lost a little of his leverage. So, it's a good compromise for those guys. I mean, nobody gives a crap about this case. Like, I mean, it's between them. This is like personal. Who cares?
Sure, it is. It is personal. You can't trade OpenAI back, but you can trade Microsoft. What's Microsoft doing this morning?
Hopefully it's up a little bit because I got a little bit of long delta in there. Microsoft 386 and change. No, it's down about $2.
Oh no!
Bastard.
Bastardo. Hey, this is funny. AI is transforming the world as we know it, reshaping industries, streamlining tasks, and integrating seamlessly into our daily lives. But it's also impacting the job market, especially in tech hiring. The rise of remote work has opened new opportunities for AI-assisted cheating in coding interviews. A couple of cases have gone viral where these kids basically used AI to cheat during their coding part of their interview, and then the companies found out after the fact, then offers were rescinded. But there's been like a couple of people online are like, hey, I can help you cheat. And then so now Google is making all interviews in person now. So thanks, way to ruin it for everyone else.
No, you know what's crazy? You know what a lot of people are doing too that's insane is they're building a resume for a specific job. So essentially, like
why is that insane?
No, it's not insane. It's just a good way to, it's a way to use AI. So like if you're applying for a specific job, then you put your job in there, the requirements of the job, and then you mix it up with your resume, and then AI prints, optimizes your resume for that specific job. It's not insane. It's a good way to use AI, but it's
I mean, I have different resumes for different men. I mean,
there you go. But what I don't like about the remote interview process is a lot of places now are using third parties. Have you heard about that?
No.
Yeah, it's like these third party interviews. It's kind of crazy. It's like
I am in no way looking for employment elsewhere. I'm really not. So I don't know. I don't know what's going on in the job sector.
Well, I've been going on a lot of interviews lately, so just telling you.
No, but it was hard for a company like Google to do everything when their kids are still in college or they're still finishing up, it's hard to fly everyone in. And I understand, but if you're on a company the scale of Google or Meta, at some point there's got to be remote parts of the interview.
We don't hire anybody remote here. I mean, we won't interview you remotely here at Tasty.
I would check with our wonderful ladies in HR before you just start talking out of your ass, but okay. Again, I think there's exigent circumstances where sometimes that this happens. I wouldn't issue blanket policies that, I don't know, I'm just saying.
We won't.
I'll issue my policy. I won't interview remote.
Okay. All right. Well, we also let you steer the ship and make you think that you're driving, but it doesn't really do anything. So just gonna keep it moving. Hey, China's Baidu is launching 2 new AI models as part of its Ernie AI system. It's including a new reasoning-focused model that it says rivals DeepSeek's model as it tries to stand out in the fiercely competitive AI race. What are you doing in Baidu?
I believe we're flat. I think we covered last week. Hold on.
Baidu $95 up around $1 or so.
No, we're slightly long Baidu.
Okay.
Lucky you.
Lucky you. Hooray.
Huzzah.
Hey,
Huzzah.
my Taiwanese sources say a set of iPhone 17 dummies appeared in a new leak, and it looks like the phone could be the thinnest and sexiest ever, and it could be Apple's first port-free iPhone, meaning there would be no ports at all on the phone. What do you think of this spec'd up version? Because you just bought a fat, clunky phone.
Yeah. Honestly, I like the iPhone 16 that I have, but I don't like how big it is.
That's what she said. Why'd you get the Pro then? Why didn't you get the smaller one?
The Pro is bigger, though.
Oh, then why'd you get the Pro? Why didn't you get the smaller one? That's what
You could have gotten the 16. Yeah.
I got the smallest one they had.
Oh, really?
Yeah.
Yeah. All right. Well, what are you guys doing in Apple? Apple needing a comeback.
We covered most of our Apple position on Friday. We're pretty flat here. It's flat. We're flat.
Okay.
Yeah, Apple hasn't gotten out of its own way. It's actually been lower for most of the morning. It's just caught a little bit of a bit, as has the market. Even the S&Ps are up 2 after being down around 25 for most of the night, and the Nasdaq's up 47.
Yeah, they were down actually.
Retail sales was your number that came out today.
They were actually down almost 35 last night. And this is a number where this is, this is actually a pretty big move to the upside because they marked them down. They marked them underwater.
On the close, yeah, which is typically a bearish kind of close, right?
Yeah, but they've been down. They were down all night. They didn't get up. I mean, they didn't rally until just this morning. I mean, they just didn't look good.
Yeah. Totally understood. Yep.
Yeah.
Klarna filed its IPO prospectus on Friday, and they plan to go public on the New York Stock Exchange under the ticker symbol KLAR, KLAR. Klarna's top competitors include Affirm and Afterpay. What do you think of a Klarna IPO in kind of a wonky market?
It's interesting for sure. I obviously have never traded Klarna. I mean, nobody here has. I don't know. Like, I have a position on an Affirm. Maybe I'll trade Klarna if it's liquid. I don't know.
It does deal a significant blow to European stock exchanges. The fact that they chose to list in the U.S. though.
I wouldn't list in. Well, I'm not sure where they would list in Europe. I wouldn't list in London. That's for sure.
Okay. Well, they could list on the DAX. They could list in Germany. I don't know.
I wouldn't list on the DAX either. So I'm not sure where else they could list.
Okay. Well, that's okay. I'm going to just keep it moving. Block is betting on lending expansion after the stock slumps. Remember, they changed their ticker bat? It's XYZ. Ugh. So Block is expanding consumer lending through Cash App Borrow. They announced that they'd obtained FDIC approval to issue loans out of their banking subsidiary.
It's funny.
Horrible name change here.
The stock is down 33% this year.
It's funny. Last night, I was almost like an Abbott and Costello routine. Victor did not know that Block or Square was XYZ. So he gives an example of a stock, and he goes, "Yeah, what if XYZ did this?" And I go, and so we kept going back and forth.
Can't do that anymore.
Yeah, no, I go, but XYZ's on its butt anyway. He goes, "What are you talking about? I'm saying XYZ." Like, he's like,
"Oh, that's so funny."
he just thought he was just making up a name. And he's like, "They didn't pick that symbol." I'm like, "Yeah, they did."
Yeah, they did.
I can't believe they gave him that symbol. It's just horrible.
It's confusing everyone. I agree with you.
Do you know that?
Trash.
Here's how crazy it is. We used to have to, the regulators would not let you show, when you're talking about market, the regulators, if you were registered, they wouldn't let you show an individual ETF name. So we always use XYZ as the underline because the regulators approved using XYZ for a sample as an example. Sure. But now I can imagine people are going to use XYZ and go, "Do you know that's a stock?"
Just a compliance nightmare.
Now
it is a compliance nightmare. I can't believe they approved it.
And our compliance officer is on maternity leave. Who approved this? Get back to work. Get back to work.
So true.
Vice President J.D. Vance expressed confidence on Friday that a deal to sell TikTok and keep the social media app running in America would largely be in place by an April 5th deadline. I'm going to need you guys to give me an over-under on this. Remember, we keep kicking the can down the road, and TikTok's fate in the U.S. has been in doubt last year. Again, there was bipartisan legislation that was signed. This was not an executive order. I cannot stress this enough. So
you got to stop. Let's not go down this
I'm just
TikTok.
saying it was legislation.
I don't
signed.
care.
How is me stating facts just because it goes against your worldview and what you want to happen? The fact of the matter is that bipartisan legislation
You gotta
was signed.
Just stop. TikTok's
It's a new form of tariff.
TikTok's not going anywhere. There's no risk at TikTok, so don't even worry about it. Let's just move on.
Okay, but you said that before. It did get canceled before. I mean, granted, it was only for 14 hours. But again, this is legislation
TikTok is never going anywhere.
Okay,
ever.
Well, who's going to buy it?
Tom will just boycott it.
But the deal on the table is to give America like 51% like equity value. Like, who's going to take that deal? If you're China, why would you give up all of your equity?
You don't know what's actually on the table. Just don't worry about it. TikTok's not going anywhere.
Okay. I know you're trying to self-soothe yourself.
I'm not self-soothing. The owners of TikTok.
So what are your facts? What is your?
My facts are the owners of TikTok are too rich and powerful. It's not going anywhere.
Doesn't that negate your argument that they're too rich and powerful that they don't need to take this deal?
They're going to get the deal done that they want. It's not even a risk. There's
okay,
no
so
risk.
Your source is just trust me, bro.
Yeah, that's right. Just trust me, bro.
Sometimes.
Trust me, bro. Okay, cool.
This is one of those cases where you have to follow the money. This one, the money talks.
We'll see what happens. Hey, shifting gears to consumer news, Pepsi, PEP, is in advanced talks to buy healthy soda brand Papi, and a deal worth more than $1.5 billion. The soda and snacks giant announced that the deal could close as soon as this week. Coke is buying Olipop, a competitor in the space. So now Pepsi is buying Papi.
The best soda I've ever tasted.
Have you had Olipop?
No.
Okay, well.
But Papi is the best soda I've ever tasted.
You like a little puppy in your mouth?
Have you tried it? Have you tried this?
Just a little bit. Just a little bit of Papi.
It's the best I've ever tasted.
I'm a Diet Coke girl. You pry it out of my cold, dead hands. Hey, got one thing to talk about. Thoughts and prayers, maybe. The bracket is out for the 2025 NCAA men's tournament. We are now on the precipice of March Madness. Let me just say, is this my camera? My Hoosiers got screwed out of being in the tournament for the second year in a row, whatever. I'm now rooting for the Lady Irish, number 3 seed. Shout out to you, Lady Irish. But what are your thoughts on this bracket? Who do you like? What do you take away from this?
I'm all in on St. John's. I'm going all in.
You're all in on St. John's?
I'm all in on St. John's.
Okay. I mean, Duke was able to win without Cooper Flagg, right? So that's
I just
important.
said I'm all in on St. John's. I'm going all in on Patino and St. John's.
Okay. How about you, Bat?
You got to get through Florida then, right? I mean, isn't that where they are? St. John's is in that division down there.
I just said Florida's good too, but I'm all in on St. John's.
Okay.
I don't know. I'm going to follow my man Robin Maria. Whatever he tells me to do, I'm betting dimes.
Okay. All right. Well, we will see. We will see what happens. Please gamble safely, I guess. I don't know. Finally today, for my viral video of the day, I'm just going to call this Why Women Live Longer, Part 1 million. This, I think, was going for a Guinness World Record for a kayak toboggan slide, but watch what happened. Woo.
Oh, I saw this one. This is great.
Oh, no.
I up in the air. I mean, luckily it's soft-ish snow. But that's no bueno. These are adult men, by the way. But I do.
And that's an inflatable toboggan.
Inflatable kayak.
Yeah. My mom used to take me to Central Park, sad enough. I had a big wooden toboggan, you know, like the one that has the curl in the front. It was so much fun, but we never did that.
We never went that fast.
No, never that went that fast. Never got airborne.
You get it? That
good job out of you, Vanetta.
That would have killed me, by the way. That'd been the end of my life.
I'm sure it would have been. We're going to take a quick 90-second break and come back. We got more Tasty Live immediately following these messages from our sponsors, which is just us. We got Confirm and Send next.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Why are we literally rolling out the red carpet? What is this diva done? Who
I
is
saw
this,
that. Why do you got a little red carpet?
diva?
They said it's
sound.
Do we have a wide shot of the studio? They said it was sound. Yes, my lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here is how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your
They
accidents.
hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. No. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Tomas, we are back, my friend. You know what that means? Time for a little bit more Tasty Live. That's right, with Confirm and Send. Want to take a quick look at what's going on in the market?
Sure.
Beautiful. Let's do it, my friend. Even the S&Ps, they're up, but slightly. Sodden up by about 75 cents. NASDAQ up 37. Russell down 2, and the Dow down 77. Volatility in by 27 cents after the market being lower, flirting with 56.50. It's closer to 5,700 right now in the E-mini S&Ps. Bonds just made a turnaround. They're red at 116.23. You just sold back out your puts, Sadnov. Look at you trading both sides of the market. You're good at this game. You should think about doing this more often. Netflix got itself an upgrade, Sadnov. It's trading $9.32. That's one of the larger moves in the market today, up around, I don't know, what is that, about 14, 15 bucks on Netflix. Some of the other stocks that we've been watching as of late, Tesla's turning around just a little bit, down $2 or so to 247. Most of the market's unchanged, Sadnov, on the equity side. Bitcoin, after trading down to 82,000, is 83,000 and change. Let's just call it mid-price. Oil was a little bit higher this morning by a little bit over 1.33%. That's a good size move to 67.79. Gold just took a little bit of a downturn under 3,000 to 29.92 and change. I'll let the rest speak for itself.
All right, let's do this. It is 7:55 on a beautiful Monday morning. I don't actually know what it's like out today. Must be cold out.
I got to mention a big move in wheat, up 2% to 12 cents. I know we don't have a lot of positions in the ags, but I should mention 2%.
I do have a wheat position on, but it's Godspeed in wheat. Trying my best to grind out some money for 2025 in wheat, corn, and soybeans. It's not easy.
Good luck to you, my friend. Today's supposed to be a little warmer than yesterday, Sadnov. Sunny and 50.
Sunny and 50. I like it. Monday, March 17th, in beautiful, sunny and 50-degree Chicago.
That's right. That's right.
Let's do it. How do you know when it's time to defend a position? Is there a clear-cut point for different strategies?
Yes, when your wife turns to you and says, "You're long that stock at what price?" That's when you need to adjust that position. I mean, there's no bell that goes off here. There's no clear point. I look at it this way. If you have a directional bias and your delta has gone up by 25 to 50%, it's probably time to reduce your delta by 25 to 50% to get back to your original position. I'll say the same thing in a non-directional, delta neutral. There, I'm going to be a lot more aggressive, somewhere between 10 and 20%. So if my delta goes from 0 to 10 to 25 delta, I'm looking to do something as a wide range.
So we get this question all the time. How do you know when it's time to defend a position? And is there a clear-cut point for different strategies? I mean, it's one of the most commonly asked questions to us. And I've thought about, like, there's all these different mechanics about, when your deltas get to a certain level, when the deltas double, when when one is twice as much as the other, all this kind of stuff. But the real answer here is the time to defend a position is whenever you're uncomfortable. Like, you could be uncomfortable if the deltas are flat. You just think that the market's going to rally or sell off. You could be uncomfortable if the deltas are small, if the deltas are big, because who knows which way you're leaning and things like that. So the way I like to say this is throw all that stuff out, and just anytime you're uncomfortable, it's the right time to defend a position. That's all. Because it doesn't cost you anything to defend a position. To buy the guts and sell the wings costs you a penny. So on a 10 lot, it costs you $10. And, that's it. And it's worth it if it gives you peace of mind. So is there a clear-cut point for different strategies? No, it's all the same. Whenever you're uncomfortable, just make yourself comfortable. Okay. Let's go to the next slide. I noticed that you never seem to place a trade outside of the traditional monthly expiration cycle. Is that correct? You don't diversify your expiration cycles at all. Are you mad? You unwaveringly stick to traditional end-of-the-month expiration for all your trades? Is that possible? Doesn't that mean that all positions are equally sensitive to, say, a huge vol spike close to 21 DT?
So they're saying that if they spread their trades out through multiple weekly and monthly and leap cycles, that they'll have a flatter curve. I think that it would. Yeah,
it's totally reasonable. Sure.
Yeah, it's logical, but you're going to have your front options, the ones that have less days till expiration. Those are going to be extremely sensitive to delta movement. You're going to be in a lot more adjusting rage than any of the rage that you're going to have here on any vol expansion, near that 3-week time frame of 21 days.
Yeah,
in my opinion.
The way I responded to this person was, if I was just trading at home, or if I was just doing my thing on my own without doing this show, I would have a lot more diversification of duration. Like I'd have some short term.
You would still be going to volume and tight markets.
I would primarily be wrapped around that 40, closest to 45-day cycle, but I would have some trades that were a little longer and some trades that were a little shorter, probably some more 0 days. But one of the reasons we do what we do is because since we do the show for 3.5 hours out of the 7 hours a day that there's trading, or 6.5 hours? Yeah. There's 6.5 hours a day the market's open. For 3.5 hours, we're doing the live show. And for the other 3 hours, we got stuff going on. So
sure.
To be fair, and this is exactly what I wrote back, we're really, we sacrifice some of our own trading skills to make the show run more smoothly and to be consistent, because that way we don't have to go searching for every single trade that we have on and check all the different. If we stay in one monthly cycle, the show runs much smoother for us, being able to trade and do the show. That's the bottom line. Let's go next slide. I've heard people say the move in the VIX from 16 to 20 can take a long time, but the move from 20 to 25 tends to happen very quickly. Is that true?
I don't have anything to back it up, so I'm going to have to give you my opinion, and not just because the number is larger, so it's easier to move 4 points than it would be when the number is lower, but it does seem to stay in a relatively tight range and then move quicker as it gets outside of that range. So I'm going to say yes, but I don't have anything to back it up with except my own opinion.
Yeah, I mean, it sometimes seems like that's the case.
I mean, a 1% move is more, is harder at 16 than it is at 25. I mean,
yeah. I mean, a 10% move at 16 takes you up $1.60. A 10% move at 20 takes you to 22. But that said, right. I have no proof that this is the case, and my guess is that if we did research this, which I'm happy to ask the research team to do because it's not that difficult, but if we research this, I'll bet you there's no difference.
Yeah, I agree.
I'll bet that there's
probably right.
There's no difference at all. But we can test it. I just don't know. Let's go next slide. Is there an implied volatility level that gets you to lean long? I know there's an IVR level that will get you to short premium, but are there implied volatility levels to get directional with? That's a good question.
Yeah, it is. So they're talking about monthly implied volatility here, right? You usually in a lower volatility stock, even if it has high IVR, let's say a stock that has anything under a 20% IV in the monthlies, you're going to be directional because there's no premium to sell. Lower price stocks, those stocks that are under 30, 40, $50, you're usually going to be directional into.
It's not my first. What I like about this question is that the IVR level is black and white, because implied volatility rank will mean revert. So that is, that's an absolute no-brainer for us. But is there an IV level that gets you lean long? There's no question that really low implied volatility gets us very nervous about being long, and really high implied volatility gets us really nervous about being short, because it means we're reaching some level of extreme. So I wouldn't say that it gets you long. I would say that it raises a lot of red flags about being short. And it definitely, if you wanted to buy something, you'd much rather do it when price is low and implied volatility is high. And if you wanted to get short something, you'd much rather do it when implied volatility is super low and price is high. So the answer is Yes, but IV rank is much better for us because that's black and white. Implied volatility is gray.
Yeah.
Let's go next slide. When the markets have a big pullback like we've seen, it seems to me it's more beneficial to sell naked calls if you can. High volatility allows you to go pretty far out of the money. If the markets bounce, the volatility drop should cause those calls to lose value very quickly. Am I thinking about this correctly?
Yeah, it certainly does. As a matter of fact, if you get a sideways or obviously down market, it's going to be even better for you. Sure, I have no problem with this whatsoever.
Yeah, I mean, I'm the exact same way.
Your directional assumption. Yeah.
What?
It's got to fit your directional bias.
Yeah, I mean, after a big pullback, we love to sell calls for just the reason that you said. I mean, I think I still like to sell calls and puts, but you're right. The calls are the ones that usually get killed. I mean, they feel like they get killed. On the way back up, calls don't go anywhere and volatility gets crushed. So, we don't just sell calls at market bottoms, but if we sell both, it feels like we make more money selling the calls. Yeah, we think the same way. Like, I'll replace short futures with naked calls. That I'll do for sure.
And we've done that numerous times on the show.
Yep. So regardless, yes, you are thinking about it correctly. Market goes back up. Yep. Calls don't go anywhere because volatility gets killed. Let's go back to the next slide. Or let's go forward. And the last one. I know you close and roll trades at 21 DTE because of the increased gamma risk. Have you ever looked at taking a long position at 21 DTE? If the risk isn't worthwhile for selling premium, does that mean it's worthwhile to buy it?
I mean, we never look at it as worth it to buy it. But if you want to try it, go right ahead. Give it a shot. I would rather you do it then than any other time in the option cycle. So sure.
I mean, the reason it's not here. The answer is we don't buy premium at 21 DT because we wouldn't sell it there. We roll forward because of the increased gamma risk and and we don't like the risk reward as much. We're not at the ideal point in the decay curve, but it doesn't mean we'll buy it. We don't flip the cards over. Like Tony said, if you want to try it, go right ahead. I mean, I feel the same way about zero DTs. If you want to buy premium in zero DTs, go right ahead. Because, at some point in the day, you're probably going to be up money. So
you can manage a winner is what you're trying to say. Yeah.
Right. So I don't, I have no issue with buying something at 21 DT or 7 days or 1 day or 0 days, but just try it small and see how you like it. It's harder than you think because you don't know when to take profits, but you need to learn that on your own.
Very good, sir. Good job out of you. Good job out of me. We're going to take a quick 90-second break and come back. We got an option jive coming up next. I believe we got Kai coming in here. We'll be back in 90 seconds. Let's take the live.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a tastytrade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at tastytrade. Make your move, genius. tastytrade.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not, just trust us and do this, which is a very dangerous thing in the financial world. But, learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
It's option. Jive.
Tomas, we are back, my friend. That's right. We've got an option jive. My man Kai here. Kai, take it away.
How are you doing, guys?
Good. How are you, Kai?
Amazing now that you're here.
I'm doing great. Although the stock price is close to last Wednesday or Thursday, but everyone feels differently right now.
Yep. What a difference a little day makes.
Yeah. So I watched the confirmed send, and so the research team, Sahil and I and Gad, we were putting together a couple of great segments talking about the VIX change and the market change, and there's one putting together by the baby shark or the jaw, talking about every 5 points VIX jump and retreat, and their time and the magnitude and the percentage that it happened in the past. It's a really good segment.
Good.
Okay. All right, so let's take a look at what happened last week. I'm going to give you a summary slide starting from this week. So the key point of what happened last week is from the top to bottom in the past 30 days, starting from February 19th, we already saw a 10% market correction from top to bottom, not intraday, the closing price. But intraday prices are almost the same, 10.4% top to bottom, and there are only 16 occurrences happened in the past 20 years. So pretty significant. And the second one is the volatility of the market is pretty high. VIX peak at 28. We're going to talk more in the market measure about this VIX level. It's high, but it's not as high as we expected when we saw a 10% market correction. Third one's gold already broke through $3,000 per ounce for the first time ever. It retreated to 2,900 or something, right right now, but very close to 3,000. The last one is U.S. dollars temporarily stabilized. So we saw different currencies start to fluctuate in the tighter range last week.
Okie
Okay, so last week, we still see really big range of the pullback. So NASDAQ pulled back 2.5%, S&P 2.3%. Surprisingly, Dow's actually dropped 3%. It's the largest one among these. And Russell, 1.5%. These actually are within the expected range, but still very large pullback.
Yeah, these are moves that people aren't used to, especially the downside. So it seems like it's a little bit odd, right? You got a 145-point expected move for this week. That's a big move, even though we've had 100-point E-mini S&P moves almost every day.
Oh yeah. The range is definitely more than 100 points every single day.
I'm surprised we were down that much for the week, even after Friday's rally. I didn't realize it was still down 2.5% after like almost a 1.5% rally on Friday.
Yep.
Yeah.
Yep.
It is actually pretty big last week.
Yeah.
So if we go to the next slide, we can see the expect move and the range. So expect move last week, we started 160. It's 2.8% up or down. Actually, we're only down. We're down 2.3%, so still within the range. And the VIX is slightly lower than the beginning of last week, 22 versus 23. So the range is 130, 140. So you can see the expect move is still pretty big, 2.3, 2.4%. If BAT's number is 140, right? Based on today's number.
Mm-hmm. Yep, good stuff.
So next one is the IVR change. IVR definitely start to stabilize last week. So we only see the gold, the IVR went up. Bond and oil didn't really change that much, but majority of the other major assets, the IVR actually decreased. Not by too much, but we saw the IV start to stabilize. A good sign.
Yep.
Yeah, I feel like most of that was Friday, but sure.
Yeah, yeah. So some major moves. The first one is the gold. So gold already topped 3,000 last Friday. Can we go to the next slide? So the last week, the weekly move is 2.5% to the upside. And the week before is also 2.5%. And from bottom to top is actually from the end of last year or the beginning of this year to last Friday. We're already up 14% in gold. That's a pretty large move. I didn't test any 15% move, how long it takes, but this is definitely one of the fastest one. And the average weekly positive move is only 1.7%. So in the past 2 weeks, we saw 2.5% were pretty big move to the upside.
Yeah, gold's been on a run, biblical proportions these days. No downtick, no matter what the market does. Goes higher, goes lower, it doesn't matter. Gold just keeps running.
Yep, exactly.
Starting to annoy me.
But it also shows you that everybody that thinks there's all these crazy gold correlations, none of them really matter.
That's true. No, that is true.
Yeah, gold has almost, we did a study last year, gold almost had very close to zero correlation against SPY over the long term.
Mm-hmm.
Very close. So, which makes it a very good diversification asset for our portfolio.
Yeah, I just don't know how to make any money in gold.
You can make money if you want.
Yeah, you just got to buy it when it's at 2,000, sell when it's at 3,000. Other than that, it's hard.
Right. All right, next one, currency. U.S. dollar didn't change that much last week. So these are different currencies. U.S. dollars against different currencies. Against euro. So this is the fluctuation. Up 0.8%, up 0.6%, up 0.1%, up 0.3%. Very small range compared to what we saw in the past couple of weeks. So this is kind of see the U.S. dollar start to stabilize last week. volatility decreased too. Did you trade any currencies last week?
I traded them all. Euro, yen, British pound, Canadian dollar. I have positions
They've
on
actually been good to us.
I have positions on all of them.
You still long yen, right, for the long term?
I'm long yen, British pound, Canadian dollar, and maybe flat euro.
Okay, everything.
Yeah, I have positions. I have all of them. Yep.
Cool. So next slide, we're going to take a look at the top 5, bottom 5 performers last week. So last week we start to see some upside move. Intel rally 17%. Intel got hit really big the week before or the month before. Last week they announced a new CEO. So this is one of the reasons that the stock started to rally big. 17% IB rank 59. Second one is SMCI up 10%. Then VST really volatile one. The week before the VST as actually sits at the bottom 5. So last week is top 5. So LUF up 9% and MU up 8%. All these IVRs are pretty decent. Other than the SMCI, all the others are above 30. Bottom 5, airlines, DAL, Adobe, UAL, Apple, and BBY. And other than Adobe, the IVR are pretty good too, because Adobe had the earnings announcement last week.
That's correct. So you should see Adobe volatility come in.
Mm-hmm. Yep. So earnings. Last week we didn't have a lot of earnings, but some had pretty big move. Large downside move is Kohl's and Adobe, down 24 and 14%. Upside is DocuSign, the Altability, 15 and 14% to the upside. These are the big movers from last week. You traded Adobe and Oracle, right?
Mm-hmm.
Yeah, I traded Oracle and that's it.
Oh, that's it?
Oh, Adobe. I'm sorry. I traded Oracle and Adobe.
Yep.
And Adobe, yeah.
Yeah, they were both they were both nice winners. Earnings have been, this has probably been our best earnings cycle in 2 years. So yeah.
Beautiful. So next slide, nothing new. We just want to show you there are already 3,000 companies announced the earnings for the current season, and the average return and winners and loser percentage didn't change that much. I don't think these numbers will change for this season, but it looks like this is a more negative tone compared to all the other earnings seasons. Negative 0.5 is not a big, but it's kind of to the negative side.
Yeah.
Do you feel like the earnings is kind of going down this season?
No, it feels pretty flat, but I can't tell.
Okay.
I mean, that's pretty close to 50-50.
Yeah, very close.
Yeah.
So the last slide is the earning this week. Not too many. We have some on Thursday and Friday morning. We have PDD, Nike, Micron, FedEx on Thursday, and Carnival on Friday. These are the only liquid one that has 3 or 4 liquidity stars.
Yeah.
Yeah, we trade PDD, Nike, and Micron, so those are 3 that we'll definitely trade.
Beautiful.
That's very nice. Good job, buddy. Kai, you finished right on time. Even the S&Ps have turned around a little bit. They're down 5. We'll take a quick 90-second break and come back. We got more Tasty Live immediately following these metrics. Back in 90 seconds with Tasty Live.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live at the opening bell here in about 3.5 minutes. Even the S&Ps are hanging out down 5. So I'm not basically unchanged, although all are red right now. NASDAQ down 2, Russell down 3, and the Dow down 67. Volatility in by 37 cents. That should help the bulls. We'll see what happens to the overall market. Bonds back up, Sadna. 14 ticks. You took a nice little opportunity there and sold some putties in the bonds when they were down around 3 ticks. So good job out of you. Can you buy those back already?
I'm a scalping fool today in the bonds, just so you know.
And so you should be. So you should be.
I have not been chopped up anywhere else except natural gas, and I don't know what to do today. It's 2.5 minutes to the opening, and I have basically no deltas, a little bit short, maybe a few deltas short, only because, maybe a couple deltas short, but I don't think so. And I have no idea what to do. I went home Friday.
What was your game plan when you went to bed on Sunday?
If they rally, get short was my game plan. Because I thought they got overdone on Friday, but I thought they closed them too weak. So I thought, I know that sounds crazy, but they were up about 120 and they only closed up about 95. So I thought that with this down opening, they were a little too cheap and they probably got to go back up and test those levels, which they kind of did this morning. But I don't want to chase them to the upside because I feel like they got maybe 1 or 2 days of sideways to up action. And then I think they're going to pull the plug again and test that 5,500 level, 5,550 level. I just don't know what I kind of want to play. I think it's going to be hard for them to hold rallies.
I think we're going to get chopped up going, like I said, up until the middle of the week, and then maybe catch a little bit of a bid. I think it's I think the other way. It'll probably be 100% wrong. I know you do. You do. That's what makes a market. That's what I love.
Yeah. I mean, on the opening, I'm going to have to do a little something in Netflix because I guess that's up still.
Netflix got a raise in its price. Yes, $238, up $20 in Netflix. Apple's not doing anything. It's basically unchanged here, $213 and change. The rest of the market looks to be about unchanged, but we'll see here in less than a minute.
Yeah, I can probably do something in NVIDIA too. Not a lot. I don't know if NVIDIA is going anywhere fast. problem in Nvidia is I don't like the strikes. They only have $5.
You've been buying the dips in Nvidia. Those strikes are going to change right after March expiration.
Yeah, they're going to change. They're going to change next week. But I don't think they have great. I don't think they have great strikes right now.
No, $5 wide strikes are horrific. They should be dollar wide. It's senseless.
In Nvidia for sure, because it trades 10 million, 5 million contracts a day. 100%.
It's $120 stock too. I mean, what's the rationale to have $5 wide?
I agree with you. It makes no sense at all.
Yeah, none whatsoever. Agreed. As they come spinning out of the turn here, Sadnov, let's see what's down to begin with. MSTR down 7 and change. Tesla down $7. That's a decent sized move in Tesla on a basically unchanged day. AVGO down $5. Reddit down 4 and change. Affirm down 4. These are stocks that caught a little bit of a rally on Friday also. Microsoft down $2. Coin down $1 and change. Costco down $1. Apple down $1. Some big names there, Sadnov. Let's see the upside. Netflix up 17. Lulu up almost 4. Baidu up 270. There's your Chinese stocks coming back. Sadnov, everything that was down on Friday is up today. Everything that was up on Friday is down small so far today.
Yeah, I hear you. I don't know.
Just caught a little bit of a bid. It's up 20 cents or so after being down. Tesla's down 8.
Yeah, Tesla's in a heap of doo-doo. I don't care what anybody wants.
Yeah, it does seem like it. The stock has not really caught itself a bid. It's every time it's caught itself a bid, it's sold off. You could see it over the last 3 or 4 days going a little bit sideways, trying to capitulate here, but really not getting out of its own way.
It's
good IV rank of 67, not as high as it's been. It's been in the 90s, hundreds at one point.
I was talking to my son this weekend, and he.
Oh, please don't tell me he's buying Tesla stock.
No.
Oh, good. Because he's a reverse indicator for sure. Oof, he's
Probably.
got his dad in him.
So he was running in the LA Marathon.
Oh, that's cool.
Yeah. Yeah, he did really good. He ran it 3:30, which is pretty fast.
Crap, just finishing one is good in my book. That sounds fast to me.
Well, it would take me 3 days and 30 minutes. So
three days, and the last 10 miles would be in an ambulance. Yes. Uh-huh.
Yeah. Oh, something just came out because they just rallied the S&Ps. Anyway, but he has a Tesla, so I go.
Sadnov, based on data here, the average is reportedly 4 hours and 32 minutes. Don't quote me on this because I'm not a marathon runner, nor do I know. But if he did it in 3:30, you said
3:30.
That's fast.
Yeah. He said it was his best time ever. He's done a couple of them.
He must have his mother's legs. Oh.
But anyway. So, he has a Tesla. So I go, but he lives in LA. And I'm like, it's probably their biggest market. It's got to be, Southern California. So I go, what's going on, with Teslas in California right now? And he goes, Dad, you're not going to believe this. He goes, CarMax won't make a market on a Tesla out in California. He goes, they have too many cars. He goes, they won't make a Tesla market. And
too much inventory.
And I'm like, wow.
That makes the prices go down for these teenagers who are starting to drive, Sosnoff. Maybe little Vinny's going to get one on a cheap.
Little Vinny, if he wants one on really cheap, he can buy mine.
Friends and family discount even.
Yeah, he can give me exactly what give me exactly what Kelly Blue Book's giving me, and we're done.
Well, with a 10% little like shaving off the top there, because we know that number is inflated.
Friends and family discount. No, it's definitely not inflated. So, for the first time, have you ever sold a car like completely online before?
Yeah. Well, I sold a car to CarMax, if that counts, once.
But you went in there, right?
I did.
So I did it all online. So what you do is you take your phone or your computer and you have to walk around.
You bought a car or you sold it?
Sold it.
Okay.
So you take your phone or your laptop and walk around the car, and then they ask.
So I can't buy the car. You sold it already.
Oh no, I didn't. I mean, they just gave you. They gave me the price.
Oh, gotcha. Okay. Ooh, I'm still in the market.
Oh yeah. Oh. You can have that car if you want it. Look at these spoos.
I might need it for Vinny.
Yeah. Look at these spoos here. Do you sell them?
Catching a little bit of a bid up 14. No, Sadnov. Come on. Only true believers here, Sadnov.
Yeah, but this is getting to, what was the high on Friday? Wasn't it right here? 57.05, or is this higher than it?
This is higher than Friday, Sadnov. Friday's high, I think, was around 57 even. So we're 57.08.
Yeah. All right. I just started nibbling from the short side here. I don't think they're, like I kept saying last night, and I said this morning, I think they're going higher. But like this is
volatility is in by 60 cents now. It was in by about 20 something before. I told you volatility being depressed was going to help the market here a little bit.
Oh, I don't doubt that one bit. I think that I think vol is I think you got vol coming in all week. I think that's the best thing about our positions is that you're going to have vol coming in all week. Also, you mentioned earlier IWM has a dividend tonight. I also want to point out
IWM does. Did you say IWM?
Okay, yeah, IWM. But I also want to point out that just because we got a bunch of positions on in there, IWM, the IV rank last week was 56, 57. It's just dropped down to 40.
Yeah, and it's in the 40s already. You are 100% correct. I made a trade in IWM on Tuesday. It worked out great. By Thursday, it was time to take it off.
Yeah. So I bring this up because this stuff has come in big time, bigly already.
Bigly. There you go. Get with the vernacular, Sadnov. I love it. Apple caught itself a bit up 70 cents after being lower this morning. Tesla's still down $7. Costco's still down $2. Google up about 30 cents or so. A couple of stocks are making a little bit of a run for the roses here. BRT was lower. It's up by $2.40. We'll see what the rest of the market brings us.
Yeah, I'm trying to figure out what time is it. Oh, we got a couple seconds left. You know what has crappy markets? Netflix.
Netflix up almost 30.
I know, but the markets in there absolutely stink. It's almost
I agree with you.
I mean, it's in a strange little way, it's almost untradeable.
It really is. Markets are $3 wide in Apple. I mean, I know the stock's up $30 now, but yeah, 28. But yeah, sure.
I mean, it's almost untradeable. Let's see. Yeah, I mean, this little rally might surprise people from overnight, but I don't think, given the rally on Friday, I don't think it surprises, it definitely doesn't surprise me. Let's put it that way.
I agree with you there. Volatility contracting in Tesla on the way down. You saw volatility actually expanding the last couple of days prior to this end of this week. This end of this week is starting to go sideways to a little bit lower. So maybe Tesla's got a little bit of life to it. Volatility keeps going down.
Yeah. All right. I'm good, man.
All right. Let's take a quick 90-second break and come back. We got more Tasty Live sound off. What do we come up with next? That's right. Nothing says Monday like this, man. The skinny on options, abstract applications. My man, Dr. Jim, next. Monday's going to slap you in the face. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The beauty of Thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tomas, we are back, my friend, and nothing says Monday like a man who owns 2 kittens. That's right. That's right. Jim himself slapping you in the face with Monday. What's up, my friend?
What's up, man? What's up? I'm going to get my 2 little kittens from getting neutered. I'm going to grab them today. When the market closes, I got to drive 2 hours each way, gentlemen. 2 hours each way. And so, I really wasn't sure what I was going to do for dinner because that's going to run kind of right into the dinner window. But Tony, man, this conversation we had before the show, watching you eat your eggs with your ketchup, I'm like, I may do the same thing, man. We'll go a little eggs, go a little ketchup, and we're all set.
If I'm ever eating eggs with ketchup, please do me a favor. I've been kidnapped. Find me, okay?
Oh, Tom,
I'm being helped by terrorists.
Tom, you got to be the middleman here, man. You got to be the arbiter of truth. Ketchup on eggs is obviously delicious, man. Help us out.
I'm 100% with Tony. I would never put ketchup on eggs as long as I live.
You can only do that if you're like under 6 years of age, and then you give it a little bit of a reprieve.
Yeah, but have you ever tried it? Like, let's make sure we're talking apples to apples here. Have you ever tried it? Or are you
when I was 6 years old.
And that's when you shut it down? Like you tried it once and you shut it down?
My testes dropped, and then I couldn't have it anymore. So that's I understand why you're where you are. It's okay.
I'll tell you what, man. Ketchup on egg, ketchup on the bologna and chip sandwiches. Like, you guys are just, it's nostalgic. It's not even about being delicious. It's about nostalgia at this point, Tom. You know what I'm saying?
No.
Here, you got on the way home from wherever you're going. I'm sure there'll be like a Denny.
I'm going to the boonies, man. I'm going to the boonies.
I'm sure there'll be a Waffle House or a Denny's. You'll be good. Or what's the place I like? Oh my God, I can't think of the name. My road stop on the way to Indiana.
Buc-ee's? Buc-ee's?
No. The breakfast place.
Waffle House.
No.
No, he said Waffle House. Right?
No. I can't think of the one, but it's gross, but it's where I would stop.
It's gross, but it's what you like.
Yeah.
Well, I mean, I'm
Cracker
going.
Barrel.
No, not Cracker Barrel. That's Tony's place.
Cracker Barrel is amazing, and there is a Cracker Barrel on the way because I had to take them and drop them off yesterday. So yesterday I already did the trip, so I've already got my stops all planned out. So I don't really need your assistance, but thank you. There is a Cracker Barrel that's on the way. And so I may have to
need his assistance. Are you sure?
I'm just saying, if you guys start hating on the biscuits at Cracker Barrel, like we're gonna have to shut this segment down right away.
I gotta tell you something.
The biscuits at Cracker Barrel.
I went to a 24-hour diner yesterday, and counter service only, 24-hour diner, and I gotta tell you, it was great.
Yeah. That's what I'm saying. Yeah. And they probably already had the bottles of ketchup like at your station. So when the eggs showed up, you're ready to go.
They serve ketchup with pancakes there.
Oh, now this is the innovation that I'm looking for. Like, we got to push the envelope, gentlemen. Like, we can't just settle on ketchup.
I said, you got syrup? They go, no, you eat pancakes with ketchup here. That's it.
This is my place, man. Like, you got to hook me up with these people. Oh, man, that's so good. So St. Patrick's Day, gentlemen, what are we doing? Obviously, the Chicago River is dyed green. I mean, what else is going on?
I made corned beef.
You guys
I made corned
shoveling
beef.
some snow?
I made Reubens, corned beef Reubens, and they were a huge success. That's all I got.
Okay. All right.
Yeah, we didn't do anything. That's all I got.
Yeah. Fair enough. You know, and that's
Yeah,
just,
I mean, it's yeah, I don't know what happened. My Irish wife is not so Irish anymore.
Speaking of hitting the road, I don't even know if I'm supposed to say this publicly, but I'm going to go ahead and do it anyway. A little birdie told me that a Mr. Tony Batista is going to make his triumphant return to the other cities outside of Chicago. Is this correct?
I had to save you guys. You've been struggling. You had to bring a cardboard cutout of me. I mean, if nothing says "Bat, we need you" like a cardboard cutout, then I said you got to get the real thing. Sure, I'll come out with you, fools.
Well, when you were gone for a week, like Tom had to shuffle in like 19 people. We needed like 19 people to replace you for 1 week.
I saw that it was a whole baseball team.
I went to the zoo. I I rounded up the animals just like Noah's Ark, and I got easily got plenty of replacements.
Yeah, sure. I understand.
Oh, that's good. Well, it's gonna be fun. It's gonna be super fun. I mean, from what I can gather from the schedule, I don't know how often it's going to be a Dr. Jim and Tony Batista on the same stage, but it's still very fun that you're going to be back doing what you do, man. It's great.
We'll try to make it happen for sure. Thank you for that.
Yeah, no, that sounds good.
Yep.
Have you ever heard my window selling story?
I believe I have.
Okay. Well, you might get to hear it again.
I might get to hear it one more time.
Maybe so. Beautiful. All right, let's do some finance. Let's go. John,
I'm ready.
Going here on today's piece, the paradox of choice. Mr. Tom Sosnoff, I know this topic is very close and near and dear to your heart, is it not?
This topic is very near and dear to my heart?
Of course. You talked about this on the road last year. I mean, I wasn't paying attention when you were doing it, but I heard the words come out of your mouth.
I actually mentioned this morning that I did a piece on the paradox of choice, and I think at the time you said, I'm stealing that.
Yeah, I 100% did, because I'm like, that's a pretty good topic. And so here we are. This morning, we are going to do the paradox of choice. So, John, go ahead and get us going on the intro slide here. Without question, the Tasty Network is changing the world of financial content for the better. But one possible downside to all the content that we produce is that it can be very difficult to sift through the endless array of information available to a trader, which could lead some to hesitate in their decision-making and experience the paradox of choice. And so this is a very interesting phenomenon, not only as traders, but also as, I mean, honestly, just citizens of a 2025 world where many of us have so many freedoms. We have so much information at our fingertips. We kind of are routinely faced with the paradox of choice. So, John, get us on the next slide. What is the paradox of choice? It's actually very simple. And from what I could gather in my research, I'm curious to know what your research produced there, Mr. Tom Sosnoff. Barry Schwartz in 2004 is the one who's largely credited for kind of uncovering the paradox of choice. And it's essentially the following. Too many choices can often lead to difficulty in decision making because you don't know what to do, you're overwhelmed, you're confused, and you really just kind of don't know where to go next. And so my question to you, since you are an expert on this topic, what do we do, man? When we're faced with the paradox of choice as traders, how do we handle it? What would you say?
Well, I don't know who Barry Schwartz is, but I made up the paradox of choice myself. So
of course,
I don't know where you found that. But yeah, I wouldn't.
Did you really think that it was yours? That's amazing.
I did.
That's
I wrote
incredible.
I did write it for the piece I did on AI. I had no idea that it existed somewhere else.
Of course, you wrote it for a piece you did in 2024, and this dude developed it 20 years prior, and it's yours. I got it. Go on.
Well, I don't know who he.
As are everything.
I don't know who he is, and I really don't. And I thought it was fun because I like the whole concept of paradoxes. I always thought our live shows wrapped around paradoxes were always kind of fun. I didn't think about it as analysis paralysis, but I did think about it when I was applying it to AI and having to choose, having to kind of in the future potentially decide against, almost against the machine type of, answer, which answer is applicable and how do you make that decision in a business like ours, which is incredibly subjective.
Okay. So what do you do then? So what was your solution? So you just outlined the problem. So what was your solution?
Well, my solution is to always go with what is best over what's best backed by whatever kind of math you're using. So if it's just subjective, then you go with your own opinion. If it's math based, go with the math.
Okay. All right. Tony, what do you think about all this? So what do you think about in a world? I mean, I'm going to share my thoughts obviously in a couple of seconds, but what do you think about in a world where we're faced with so many choices as a trader? What do you do to make your way through the forest?
It's interesting, and I don't think there's a wrong answer as long as it gets you to push the button. And I think that's what we do on our live shows. I think that's what we do here. I mean, we can argue and make fun of both sides, whether somebody thinks, the probability of success is subjective when you have 100-point ranges and the expected range is less than 100 points like we did last week. Or you have things like, we're at a correction and we should rally and we go lower. It's all the same to me. As long as it gives you confidence, I think you have to be confident to be a successful trader. I think that's what it comes down to. So whatever you call it is fine by me.
That's a great point. And I think the confidence is a really, really good point. Really good point. Good observation. And, when you think about like what we do on the network in terms of kind of giving people that foundation, because a lot of people that find us, the truth is, I mean, they've never sold options before. Like it's brand new to them, right? They've either done some stock or maybe they've bought some options, whatever. And they come on our network and it's like, well, wait a minute, these guys are selling options and they're doing something very different. Like, what we're trying to give people is that foundation to build up that confidence so they do feel comfortable and they feel confident, kind of executing those different trades. These are really, really, really good comments. What I'm going to do this morning is, because this is a difficult topic to try to figure out, like, okay, where could I go where it's not super abstract, even though that is obviously the title of this segment, Abstract Applications. But I was like, man, let's try to make this somewhat applicable. So, John, get us back into the slides here. Let's first start with, okay, so this is a process for making choices that the literature, so your Barry Schwartz's, your Tom Sosnoff's, etc., that developed in the academic literature around making choices. Kahneman, Tversky also did this, the behavioral finance guys, Tom, that I know you love, like prospect theory, things like that. Determining goals. What do I want? That's step number one. What are going to be your methods for achievement? Like, how are you going to achieve this goal, right? That's step number two. Step number three, attach probabilities to the actual goals themselves, which this was really eye-opening to me because I'm like, wow, that's exactly what we do. And this is actually straight out of the literature from, your Barry Schwartz's, et cetera, that talk about how to kind of make your way through the paradox of choice, where you feel overwhelmed and confused and you don't know what to do next. And then lastly, of course, you have to evaluate your position. So I took that framework and I'm like, all right, that's still too general. That's still way too vague. How can I apply this to us as traders? And two pathways forward through the forest kind of emerged. Number one, for a beginner trader. Number two, for a seasoned trader. I think they need to be different for reasons that hopefully will become clear in the next couple of minutes. So, John, hit us on the next slide. Here is my suggested pathway or process for a beginner trader using the same kind of reference points that the literature laid out for making decisions with a paradox of choice. Number one, determining goals. If you are a beginner trader, I think your number one goal should not be to make money. I think your number one goal should be to gain experience and improve your market awareness. I'm going to stop right there. What do you guys think about that? I'm a brand new trader. I'm excited to make money, but I don't think that should be your number one goal. What do you guys think?
You're talking about gain experience and market awareness?
As opposed to wanting to have the best P&L that I could possibly have.
I mean, they're both important. I don't think you can gain experience and market awareness without some focus on your P&L, but I would say gain experience and market awareness are pretty important. Yeah.
Okay, if you had to choose between the two, in terms of which one is more important, your P&L or gaining experience and market awareness as a beginner trader, which would you choose?
It's
pretty close.
As a capitalist, I'm going to go with your P&L. And I'm going to say that only because it's a learning to win is just as important as learning everything else.
Well, okay, so now that's a great line. I'm going to take that line too, because that's pretty good. But you're still missing the mark entirely here, because if you're focusing too much on P&L, you're going to do some crazy things. You're going to do some things that that you probably shouldn't be doing at that moment because you're so fixated on your P&L, where there could be leaks in the boat, Tom. There could be all kinds of holes, and you're in the middle of the ocean, and you're so focused on whatever that you're not plugging the holes. And right now, it's just a tiny leak. You got 10,000, you got 20,000, whatever. If you fix it now, it's going to be easy to move forward. If you don't fix it now, when you've got 80,000, 150, 300, whatever, you didn't fix that leak, it's going to be a huge problem. Huge problem.
Okay, I've been on both sides of this train in business and in trading, and I've backed a lot of traders in my career, a lot. And there's a lot of really smart people with a lot of experience and a lot of market awareness that could never make a dime. And there's a lot of people.
That's true. Yeah.
And there's a lot of people in business that just, it's like, do you want somebody, if you're drafting a football player, do you want somebody that knows how to play football, or do you want like the biggest, strongest, you know what I'm saying? There's a certain amount of, there's a lot of value that I place on being able to make money. It's a skill. So I'm not going to give you that it's just about experience and market awareness. It's both.
Okay, fair enough. Okay,
and hence,
I think it is
that is the true paradox of choice, because it really, learning how to make money is not something anybody can learn what options are, but learning how to make money is a whole different skill set.
I'll tell you what. I mean, we are at like an inception level of paradoxes now, because that's a paradox of choice inside of the paradox of choice, and so that's some good stuff. No, I agree, but I will just say this though. So you brought up the football thing, and I think that's where you and I are going to disagree here and differ, because the way you said that was like, oh, you always take the bigger, the faster, the stronger. I disagree. I totally disagree.
I don't always hate it, but physical specimens are very different than, go look no further than
Look at your boy Johnny Manziel. Look at your boy Johnny Manziel. He was a physical specimen. I know you love Johnny Manziel. Dude, he flamed out after like a year. He made a half a season.
Look at your boy Tom Brady. He's the GOAT.
Look at my boy.
And he's not a physical specimen.
Football.
What?
No, you're making my point.
Yeah, you're making Dr. Jim's point. Manziel was undersized and.
No, he was a beast. He was a beast. Come on.
No, I'm saying
6'4",
look at Tom Brady.
240.
He had a football mind, not physical.
I know. That's my point.
No, he knows how to win. That's my point.
Johnny Manziel was 6 foot on a good day.
Anyway. All right. Okay. So very fair point about learning to win, learning to make money. I think that's a very, very, very fair point. However, I still stand by the fact that if you come out of the gates and you're just focused on money, you're gonna have a real difficult time. Real difficult time. Okay. So methods for achievement as a beginner trader: define risk strategies. Just start small. Start with the stuff where the max loss is known, and you leave the training wheels on for a little while. Attach probabilities to the different things that are going to happen. This is where our content can really be a big help. Your market measures, your options jives, etc. And then you're going to evaluate, like, do you actually understand what's happening at the portfolio level and then at the strategy level? Okay, so John, hit us on the next slide. What if I'm a seasoned trader now? This is going to be a little bit different. So Tom, you're going to love this, because your goals is to improve your risk return. So your goal now is all about P&L. So, you're not Tom Brady in the first couple seasons. You're Tom Brady in like the 4th season, 5th season, right? It's all about wins. It's all about W's, Tom. Tom Brady couldn't even be Tom Brady before he was Tom Brady. And so methods for achievement: undefined risk strategies, your strangles, your ratio spreads, etc. You're going to attach probabilities the same way. And then you're going to evaluate, Tom, which I know you love this. You got to measure your performance metrics. How are you doing against the S&P 500, Tom? How are you doing against the big dogs? I know you love that as a benchmark.
I do not.
I know. I know. But you have to evaluate somehow. Whatever benchmark you want to use, it doesn't matter. Use a T-bill. Use your own made-up number. It doesn't make a difference. There has to be some evaluation at some point, right? It's kind of like, like after every year, because we're coming up on another one. Like after every year, when we go through the tasty gamut and you think about all the people you have working for you, and you get to a Dr. Jim and you evaluate Dr. Jim, and you're like, man, I don't know how I still have this guy. Like he is so special. He is second to none. Like, how have I still lucked into a position where Dr. Jim comes to work for me as hard as he possibly can every single day? That happens for you every year. That's part of the evaluation process.
Yeah, you must be looking at something different than us. What do you got going on?
I'm looking at Johnny Manziel highlights, man. 6'4", 240.
6'4", 240. That's saying. Tom Brady.
He's a beast. So with the paradox of choice, we're all met. I mean, the beautiful thing, it's a catch-22, right? The great thing about Tasty is all the content, but then it's like, well, the drawback is kind of all the content. And so this morning, what I wanted to give everybody, it's not super concrete because I couldn't go that detailed and deep with it, but I wanted to rough out a roadmap. If you're a new trader, look at the previous slide. If you're a seasoned trader, look at this slide and start thinking about, okay, where can I maybe, kind of strengthen up what it is I'm trying to accomplish, given where I am on the learning curve of trading.
Okie dokie.
Paradox of choice. First made famous by Mr. Barry Schwartz. Don't let Tom Sosnoff tell you differently.
It sounds like you kind of made up that name, Barry Schwartz, but I'll look at it.
Yeah, look it up. You'll find it. You'll find it. let's get him a few takeaways. I got to watch those couple of Johnny Manziel highlights that are out there. The Tasty World gives the active trader a wealth of resources to improve their trading acumen. But the paradox of choice suggests all that information could make decision-making more difficult, which is why having a roughed-out roadmap for both a beginner trader and seasoned trader could be really helpful. And did you guys expect a Johnny Manziel reference on this morning's show?
Didn't think you had it in you.
Yeah, I'd probably not.
There you go.
Yep.
There you go.
Totally
Beautiful.
agree.
All right.
Good job out of you, Dr. Jim, and you finished right on time. Good job there too. Even the S&P is only up 18. So I don't know if you got out of your futures that you sold, I'm assuming.
I've been scalping them back and forth.
Beautiful. Good job.
And you know why you're able to do that? Because when you started out 70, 80, 90 years ago, you focused on market awareness. And now look at you. You can focus on P&L.
He's got a good point. Practical application right there.
Can I just say one thing? If I didn't focus on P&L, I couldn't have lasted 70 or 80 years.
So this is a chicken and an egg thing. Okay. All right. Well, while I think about what comes first, I'm going to put some ketchup on my eggs, and I'll get back to you.
We're going to take a quick 90-second break before I throw up. We got more Tasty Live after this with the market measure. Nick.
It's so delicious. Oh, man. It's the sweetness.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. You listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bet.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Yes, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, my friend. What comes up next? That's right. A market measure. Even the S&P is up 23, holding steady.
Yeah.
What do you think here, Sadnov?
It's a damn good question. To follow up, by the way, this, John, put up the live event coming up. The digital recording of Mike, Nick, and Katie. This is the only event on our calendar right now. Is that on tastylive.com/events? You can sign up for Mike Butler. Mike and his whiteboard is one of the most popular pieces we've done over the years. Tens of millions of people have watched this. Watched Mike's series. He's got a ton of videos out there. But in addition to that, Katie and Nikki are joining Mike, and we're doing a digital collectible. We tested it in Chicago. It's really good. It'll be streamed on March 29th. It's completely free. You can sign up for it at tastylive.com/events. We'll play it at 10 a.m. Central Time on March 29th. That's a Saturday morning. And when it's done, I think it's going to be around about 75 minutes long. I'll get the exact time for you, and then we're going to play it. We're going to play it back to back, so you'll be able to watch it. We're going to loop it twice. And then Mike, Nick, and Katie are going on the road together, along with Ryan Grace. And we're going to have 4 speakers. They're going to be on the road. They're going to, I believe, 4 different cities, and we will post it very soon, probably later this week. They are going to be small, intimate, in-person events, kind of like what we did here in Chicago. Only about 100 to 120 people max. They'll do a Q&A at the end, but we're going to be going to 4 different cities with all 4 of them. Also, Dr. Jim's going to be hitting the road this year, doing a solo show. Again, small, intimate events, and only about 120-ish people in each one. We'll give you more information on those cities later this week. We're just finalizing the dates and the locations, but those will all be in 2025. So there'll be a grand total of 7 different events with Dr. Jim and with Katie, Mike, Nick, and Ryan. Dr. Jim likes to fly solo. And then,
nobody actually wants to talk to him is what it comes down to.
Or travel with him, or go out to dinner with him.
Or travel with them. That's right.
Eat with them, or do anything. He's
anything. That's
anything. Right. But also, like Dr. Jim mentioned, the bat will be going back on the road this year with me, and we are going to be announcing a
whirlwind tour, Sadnov.
A 9-city tour with a lot of details coming out very soon. We're just wrapping up the final things. We'll give you guys plenty of heads up. We are very excited, and it's going to be on a first-come, first-served basis. We think that there'll be plenty of people because the bat hasn't been on the road for a while, and they want to come out and see this. First come, first serve.
Come see the old Badillac. It's going to be tour.
First come, first serve. It's all free and everything, but we will give preference to people that have signed up that are Tasty customers, IG customers, or Tasty at IG customers, or Tasty FX customers if they get filled up. So preference will go to existing customers. Even if you don't have a funded account, you can still be a customer if you sign up and everything done. So all those people will get preference.
It's me, Tom, and the RV on the road again. That's right. Grassroots tour, Sadnov.
I swear to you, it is not me.
We got the Madden bus out there.
I swear to
it's
God,
awesome.
It will never be me, you in an RV. Or a bus.
Oh, don't worry. I'm going to give you the bump out.
We will not be in an
RV. Give you a nice bed in the back.
We will not be in an RV or a bus together. But we may share a room.
Not again.
All right. Anyway, let's do it.
I'm ready.
9:14. We're in Chicago. Best city in America. I grew up in New York. I've lived in Chicago now for 40 some odd years. And I've traveled all around this country and all around the world for the last, 25 years nonstop. And you never been to Chicago? It's the best city in America. So I'm not a homer on that.
It's a great city. It's a great city to visit.
City.
It's a good city to live.
It's a beautiful city. The architecture is spectacular. It's clean. It's safe. If you haven't been to Chicago, you should get out here. And this summer, city's up for grabs. It's really amazing city. So
I don't know what statistics you're looking at for safe, but sure, okay. Better than it was a few years ago, 100%.
Depends what neighborhood you're in. Believe me, every city's got issues, but
of course.
Chicago's pretty damn safe.
Yep.
Why one ratio isn't enough for strategy evaluation? Not sure I understand that. Why one ratio isn't enough for strategy evaluation? All right, Mr. Batista. Let's see what we got.
Let's do it.
And by the way, I just got yelled at for talking about the events. We're just getting people excited. Don't worry, it's coming very soon. We got a couple little dates to work out, a couple little travel plans we're still working over. When underlyings share common metrics, like the same implied volatility, traders often simplify strategy evaluation by using a single ratio for risk and return. However, relying on just one ratio doesn't fully capture a strategy's potential. So we're going to look at this comprehensively today. For example, a credit to buying power ratio can be used to compare different underlyings of the same strategy. But how can it be used to compare different strategies with the same underlying? And the answer is it can't. So let's have a little fun here. This is tasty fun. Let's go to the next slide. The credit you receive to the buying power you're using, that ratio, can be used to compare the profit potential per unit of risk for different underlyings of the same strategy, particularly for underlyings without an IV index or a significant IVR skew. However, the credit to buying power ratio cannot be used to compare different strategies because it does not account for win rates or the probability of a large loss. That is correct. You know, obviously, sometimes you can sell something that has a really high win rate with the probability of a huge loss if you're wrong. Like, that's the trade-off. Let's go next slide. So to see example of when it can be used, compare two 16 delta strangles. One with IWM as the underlying, the other with the Qs. Yeah, I would have probably used even different choices than these two, but you can see the credit to buying power ratio is almost the exact same, but the IVR is significantly higher in the Qs, and the current IVX is the exact same. That's why they chose this. So the same implied volatility, but the IVR is significantly higher in the Qs, yet the credit to buying power ratio is richer in IWM. So it's hard. Let's go next slide. So IVR suggests that the QQQ has a high IVR and is a suitable underlying for a short premium trade. I think we would say that for sure that's fine. Let's go next slide. IWM and QQQ have the same implied volatility according to the IV index. Without knowing the long-term averages, we don't know definitively if these implied volatilities are high or low. That's correct. That's why we use IVR. So with an IVR of 55 and an IV of 27.5, we would assume that that is a very high implied volatility and hence a very tradable underlying. Let's go to the next slide. So when comparing the credit to buying power ratios for 16 delta strangle, we can see that IWM actually offers more potential profit because the credit to buying power ratio is greater per unit of risk for the same level of uncertainty. This is an example of how to use credit to buying power ratio to find opportunities that may not be obvious from IVR, and then compare different underlyings for the same type of trade. Now, do we go through all this? And the answer is not usually. This is like very heavy for us. This is like an extra step. It's actually pretty good if you have time, or if you want to take it to that level. But, you know, like for me, I would be more comfortable with the IVR, and then looking at it this way, it does give a different perspective. It's actually a really interesting piece of research.
Yeah, for sure. I mean, do you look at your credit to buying power ratio, or is it just like I did a vertical spread in VRT that happened to work out really well, and it didn't use a lot of buying power, risk one to make one kind of thing. I've done other trades where I'm risking, 2 to make less than 1, and those trades don't work out. Does that really mean that credit to buying ratio is something that I should look at, or is it just because I had the right delta for the trade?
Yeah.
I mean, obviously you had to get delta right. I mean,
yeah, you're right. I mean, I'm not saying it's easy, and I'm not saying that this is what we do all the time, but it is a really interesting study here that here's a different way of looking at it. That's all.
Sure.
Let's go next slide.
Get you that.
For example of when we can't use the ratio, compare a 45-day 16 delta spy strangle to an iron condor. The iron condor is roughly 3 times the credit to buying power ratio. However, since it's a lower winning rate and a larger loss probability, it doesn't necessarily have double the profit potential or less risk. That's right. You can't use the same approach when you take undefined risk to defined risk. And so we just looked at a lot of different details of this because, you know what, everybody likes to, sometimes, I shouldn't say everybody likes to, sometimes people like to look at things different ways. We like to present everything. And that's a fair way to look at things a little differently. Strangle versus strangle, and strangle versus iron condor. Let's go to the last slide. The credit to buying power ratio can be used to compare the profit potential per unit of risk for different underlyings of the same strategy, but cannot be used to compare different strategies. Yeah, I never thought of it that way, but that's really good. Different strategies have different risk-reward profiles, which the credit to buying power ratio doesn't take into account. That's what we always used to use, like return on capital for that. And that's why it would, we'd say return on capital can't be used, but it's the same thing. So therefore, comparing strategies only using this ratio can misrepresent the relative profit potentials and risks of different trades. Yeah, that's why we used to look at return on capital differently than we would look at other things. But when it comes to defined risk trades versus undefined risk trades. But again, whichever way you want to do it, we're cool with that. But start by eliminating certain things with IVR and then work from there.
Good job. Good job out of you. Good job out of the team. You know what else? A good job, Sadler. We got plenty of time for phone calls. 855-238-2789 or 855-BE-TASTY. Phone lines open right now. That number will be below in just a second. Give us a buzz, Sadler. You want to know why? Because Sadler, he likes to tell people what to do. And you're going to ask a question, and he's going to tell you what to do. That's right. Immediately following these messages, we'll be back in 90 seconds. Light them up. I got 4 or 5 lines open.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
The beauty of thinkorswim was that we were different. From the name to the front-end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a Tasty Trade account. Plus, smart tech and a broker who's got your back at Tasty Trade. Make your move, genius. Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Damn! Wow. Long live the trader nerd!
Man, you're a turd!
Trade junkie!
Hey, it's fun, see? Tom and Tony in the morning!
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right, Sadler. We're going to phone calls. The number's right there below it. There it is. 855-238-2789 or 855-BE-TASTY. Give us a buzz. I got a couple of lines open. I do see Toronto, Dallas, and Florida on the lines. Sadler, quick moment for the market here. E-mini S&P is up 21. They seem like they're in a holding pattern here. They really haven't had a lot of back and forth action up from around, let's go wide range, up 15 to up around 30.
You know, it's weird. I feel like I really feel like these NASDAQ stocks look heavy.
NASDAQ does look heavy. NASDAQ's not up at all, really, up around $19. And if you look at this list of stocks that are lower here, and just a high option volume list, it's MSTR, Tesla bringing us down by 12 now. Tesla was only down around 6 or 7 a moment ago. AFRM, I don't know what happened to that stock, but that's a 13% move to the downside side. Now 43 and change, down $6.70. Meta down 4 and change. Nvidia, which was higher a moment ago, down 2. So NASDAQ does look weak. I'll give you that.
Yeah, it looks very
volatility in by 75 cents, giving a little bit of work, a little bit of help to the upside here. So watch volatility here in the coming moments.
Yeah.
All right, you ready to go to phone calls?
Yeah.
Let's go to Toronto. I got Sam. Sam in Toronto. What's up, my man?
Hey, guys. How are you?
Hey, Sam. What's going on, man?
Just had a quick question. I've been following you guys for a while, and the last time I think I heard you guys give an update on whether you guys are coming to Canada or not was at the end of January. Just wanted to know if you guys have any updates for us.
We don't. We've been having a huge issue with our clearing firm, and it's been it's just been a monster challenge for us. They haven't been able to get done what we need to get done. I mean, we're licensed in Canada, but we can't find anybody to clear our trades. So it's been a battle. So Scott and JJ are working on it, and nothing to report yet. We got to wait till Scott gets back in the office to get an update.
No worries. Awesome. Thanks so much.
Sure.
You got it.
Sorry
man.
about
Good
that.
luck to you. I mean, listen, we want to be there more than anybody else. I mean, we've been working on this so long, it's almost like egg on our face.
Yeah, it's bad. It's bad. We're not happy.
I'm not proud.
Yeah. This has been this has been a $10 million disaster for us, like just trying to get to Canada. We've literally spent $10 million and we haven't got there yet. So it's not a pretty situation here. We're very mad.
No, for sure.
Yeah.
Well,
Yeah.
hope to hear some better news in the future. Thanks, guys.
Yeah. Sorry.
You got it, man. 855-238-2789 or 855-BE-TASTY. Every time somebody hangs up, another line opens up. I got 3 or 4 lines open. We're going to go for a half an hour, so please light them up. I only have 2 calls. I could use about 4 more. We're going to go to Dallas. Revso?
Revso. My middle name.
Oh, sorry. Yep.
It's. You can't hear me?
Oh, no.
Yeah, we can hear you.
No, but say it again. I can hear you right now.
Oh, yeah. My name's Rezo. It's my middle name, actually.
How you doing, Rizzo?
It's the handle I'm using on chat. So anybody on chat will know who I am.
Okay, cool.
Awesome.
Yeah, so here, I've been at Tasty for a couple of years now. I love your stuff. Every time you come to Texas, I show up at that show. So I've met Tom about 3 or 4 times. Haven't had a chance to get to Chicago and meet the bad. Someday that'll happen. So here's my question. I'm able to trade. I'm able to do the mechanics. It's taken a while, to embrace all that stuff early on. But I feel comfortable with it now. The question I have now, as the market moves forward and my view on the market changes, I may have some positions with that old view, right? And now new trades come up. I place those trades based on my current view. How do I shift gears with those old trades? Do I just defend until I get some profit, or there's 21 DTE, or do I cut them right away? How do you handle, for lack of better words, shifting gears with your changing view in the market? Just leave it right there and let me know what you think.
How do you handle flipping the cards over kind of thing?
Yeah, exactly.
Yeah. Tony?
Yeah, I mean, it's not easy, and a lot of times, even after, I don't know, 40 years of doing it, I always get caught in the beginning of a reversal in direction, because nobody knows when the reversal direction is or when it's been by the dip. I mean, so many times I've been, benefited from buying a little bit of a dip and selling a little bit of a rip, that I continue to do it today. I mean, I don't know. Some of these stocks have lost 50%. I'm nibbling to the long side. I don't know what the long-term take on the market is. I just look at them as individual stocks.
Yeah, I think the question is more of like, how do you kind of rationalize it, or how do you settle it internally, right? Because that's kind of like the challenge for me is, I remember when we first got in this business, people would be like, well, you can take a short position and just double, buy back your shorts and buy an equivalent amount to go long, and then you just flip the cards over. And I'm like,
yeah, nobody
does that. Like yeah. I don't think in all the years I've been trading, I don't think I've ever gone from, being short to being long. Unless It's just like an intraday, it's really choppy or something. But as kind of an overall stance on the market, I don't think we go back and forth that much. I mean, I think what Tony said is probably more accurate. We wait until we believe that they're oversold or we believe that they're overbought, and then we kind of change our overall opinion. We rarely try to flip the cards over on any short-term move or anything like that, if that helps. I think
I'm with you in terms of how your view is changing. But I have existing positions, and what do I do with those existing positions? Right now, what I'm doing is I'm just being very mechanical.
So what's wrong? What's wrong with that? But what's wrong with that?
I'm wondering if there's a better approach. So let's say there's a reversal, like what Tony was saying.
Yeah.
You know, and the reversal had happened about a month ago. So here I am, slightly long, right? And now all of a sudden the thing's rolling over. So all my new positions are taking on that new view, and I'm making money on those new positions. And I find myself defending my rear end off on the old positions, and I'm wondering, well, should I have just cut them? And sometimes when I look at my track record, you know, sometimes defending, I'll actually eke out a small gain, right? And sometimes they end up going from a small gain to a loss. I start pulling my hair out, thinking, you know, I wish I would have cut those positions. And so I just have a hard time struggling with, older positions where my view has changed. I don't know if I'm making sense.
Yeah, no, you're making sense. It's just I just don't know.
You don't want to lose on some of your trades.
I don't know that we have the answer. I don't know that we have the answer, because I think that the same thing happens to us. Like I'll sit there and I'll get long something, and then later on in the day I'm like, oh my God, this thing looks like crap. I just want to be I don't want to be in this anymore. And so I tend, if it helps, I tend not to close those positions, but I tend to adjust the deltas on those positions.
Okay, that's what I'm doing now.
Yeah,
it's sometimes a little painful, a little struggle. I was just kind of hoping, I was just wanting to make sure that I'm doing the right thing.
I think you are.
I think you are. I mean, you could be more aggressive with your existing positions to get that long delta to neutral or even bearish, but that's such a hard thing to do because you're probably leaning with a little bit of long delta in that existing position because you like that delta in that position.
Exactly. You know, a week before the reversal, that's exactly what I wanted. And now today, it's like, okay, this is a little painful.
Yeah.
I get it.
Yeah.
I don't have an answer. I wish I did. You're right. Tom is right.
No. So my takeaway here is, when in doubt, be mechanical.
Yes.
Absolutely.
And you can still tweak your deltas a little bit, whichever way you want them, but that's absolutely the answer.
Okay. Good.
100%.
I'm not that far off then. I just need to keep working it.
Yep.
Yes, sir.
Thanks, guys.
Thanks.
Appreciate it.
Yep. You got it. 855-238-2789 or 855-BE-TASTY. That's the number to call. I got 4 or 5 lines open, so give us a buzz. If you want to get your question answered, now's the time to call. Give us a buzz. I got phone lines open. Florida, Abe. Abe in Florida. What's up?
Hey, good morning, guys. How you doing?
Doing good.
You got a lower. There is an echo. Sorry.
Sorry about that.
I'm not new to trading, but I'm new to options trading, and I want to do an iron condor. My question is the width of the strikes. How far apart should I make them? Because like this morning with S&P, like you could see like resistance and support. So I was thinking to put the top of my iron condor at resistance and the bottom at support. But then if I do a 0 DTE, I don't know. How does that work? If I do 0 DTE, I got to wait for it to expire fully in the money? Or fully out of the money, I should say?
Well, what's his name? Abe?
Yes.
Hey, Abe, here's a trick. Set your short strike. I don't care if it's a 0 DTE or if it's a longer term. Okay, I don't care what it is. But set your short strike at the expected move for the day. And because each day has an expected move. Like are you doing SPX? What do you want to do? SPX?
Yes, S&P.
Yeah.
Okay, SPX. Well, I don't know if you're using futures or whatever. But if you're using SPX, like just so you know, like the expected move today at this point
$30 on the 0 day
is $30 from now because it's 9:30 in the morning. So it's $30. So set your short wings at $30 and then set your long as wide as you're comfortable with. So like if you
so I'd rather see you do one contract $25 wide than 5 contracts,
that's right.
$5 or $10 wide.
Go as wide as you can with the smallest number of contracts. That's the general rule. So if you're comfortable, like let's say putting, like $1,700-$1,800 of risk. You go $30 wide because that's the expected move, and then you go $20 wide for your long option. So $30 wide from the at the money, and then $20 wide from that for your long option.
So it's $30 wide from at the money. So that means 30 up and 30 down.
Yep, exactly.
Okay. So 30 up and 30 down, and then how far apart?
It depends how much money you want to risk. If you want to risk like $700 or $800, you go $10 wide. If you want to risk $1,700, you go $20 wide.
What's the payout on that?
What?
Okay, so fine. So now it's 11 o'clock in the morning, and I want to close it, or I just buy back my contracts, correct?
Yep, you buy back the whole thing. Single trade, buy back everything.
Right. So what am I expected to make on that?
And by 11 o'clock, like another hour and 15 minutes, you're hoping for 25%.
Okay. Cool.
25% of the credit. 25% of the credit you receive.
That I received, right? Okay, fine. So 30 up, 30 down, and then $10.
Yep.
Perfect. Thank you, gentlemen. Greatly appreciated.
Thanks, man.
You're going to hear from me again, by the way.
Yeah. Anytime you
we'll
want.
be here.
All right. Well,
we never go anywhere. We're always here.
All right, awesome. Thank you, gentlemen. I appreciate it.
Thank you. 855-238-2789 or 855-BE-TASTY. That's the phone number to call. We're going to go to Dallas. I got Jackson. Jackson in Dallas?
Hey, how's it going?
Doing
hey,
good,
Jackson.
Man. Thanks for calling in.
What's up, man?
Yeah, thanks for having me on. I stumbled on you guys in December, and I've been watching a ton of your stuff. And so I just started trading. I got a small account right now. It's about $2,500. And it just feels like it's, with the small account starting off, there's only a limited amount of stuff I can do. What are some stuff y'all recommend with that size? And I've watched y'all's videos on small account sizes, but I was curious what you would do right now starting out with a $2,500 account.
Tony, you want to take it or you want me?
You can start if you like. Get a little bit closer to the mic, so enough can't hear you.
Okay, so a couple of things here. One of the nice things about having one of the challenges is small accounts are, just so you know, small accounts are always going to be a little bit more challenging because you have limitations as to different things you can do. But one of the nice things about the current environment, if you're just starting out, is that implied volatility is high, and some of these prices have come down, pretty significantly from where they were. So I would start with some. I would start now again because you're going to be very conscious of the amount of money you're using. So I would start with very small contract size, like a one lot, and I would start with some short put spreads, just because we've sold off a lot. So I'd probably sell some out of the money put spreads, and you're only going to use. Your target would be to use max a couple $100 on each trade, and I would try to put on to start off with 4 or 5 short put spreads. Or you could do short put spreads and short call spreads together. It doesn't matter whether you do them as an iron condor or just a short put spread. And because volatility is high, and you could probably put on, let's just say, 5 different trades for less than $1,000. And by doing that, it's going to give you a really good feel for what you like. And then you could take it, after that, you could take it to another level.
Okay, fantastic.
Yeah, I think Tom kind of hit it on the head there. And then I would stick to liquidity too, right? So you gotta be
very liquid underlyings. Like $5 wide spreads that you're taking in about $2 each on, or $2.50 each on, or whatever it ultimately becomes. But you'd want to put on about 4 or 5 trades. Try to use about $1,000, which is about 40% of your capital, and just spend a month and watch how they go, watch how they operate, watch how you handle the trades, you make your own adjustments, whatever, and see how that all works out. And then next month you come back and you can be a little more aggressive.
Perfect. Thank y'all.
Cool.
You got it, man. Good luck to you out there.
All right, thank you. Take care.
Yep, you're welcome. We're going to go to Sean. Sean in Los Angeles. What's up, Sean?
Hey, good morning. How are you, sir?
Hey, Sean.
Calling you about our favorite stock, Tesla. I am in Tesla as a stockholder, and I want to know what your viewpoint is, what Tesla is going to do in the next week, 2 weeks. I'm down severely, about 200 points now. And I want to hear from you because of the news and things. What do you think Tesla will do and what it will affect? It's the most traded stock.
Yeah, well, Tesla has a $35 expected move for the next month, and it's got a $50 expected move for the next 2 months. So if I was down 200 points on Tesla, I would not expect, anything getting back to even in the next 2 months' time. At the very best, you could at the very best, the best case scenario would be a $50 return in price on Tesla. Now, the volatility in Tesla is 75%, which means, you could be in for a lot more rough going. I would be looking to sell calls against that if you're just naked long stock with Tesla, just because nobody knows nothing on price and you got to reduce your basis. I wish I could tell you the future of Tesla.
Yeah. Yes, I am. I entered Tesla at 427. It's now at 230 something today, or 230.
I know, but Sean, in the future, you have to be. It's not a question of what we think Tesla's going to do right now, because it is what it is. It's down $10 today. It's 238. I mean, we can't help in that regard. In the future, though, you buy a stock at 430 something. You have to have a game plan. I don't have any problem with you not stopping yourself out or anything like that. But all along, you should have been selling calls against this or doing something against your Tesla stock. You can't just let it, watch it just go down 200 points without doing something and then say, hey, what can I do now? You have to be more aggressive. You buy Tesla at 430, you've got to recognize at some point, hey, this doesn't look good, or I need to sell calls against this position. I'm not saying you could have salvaged your position, because I don't think you could have. What you might have been able to do is pick yourself up another, let's say, 40 or 50 points by selling calls. So you could have reduced your cost basis maybe to 390 something. I mean, that's.
I agree.
I agree with you. That's what you should have done. I mean, at this point, it really depends. If your opinion of Tesla's changed or anything like that. But at this point, I mean, I would probably wait for a bounce before I sell calls. I mean, I wouldn't sell them with the stock down $10 today. I mean, Tesla looks horrible, but I'd still wait
heavy. And I have long delta in Tesla.
Yeah, same with me. But I would wait for a bounce before I sell calls in there. But you have to sell calls on a bounce. I mean, if you wanted to add a few more out of the money short puts, I wouldn't hate that play here if you're still bullish in Tesla. But Tesla's clearly in trouble.
Or put spreads.
Yeah, or put spreads. I mean, there's no doubt that Tesla's, it's one of the more vulnerable stocks. It looks like it. And it's one of the reasons the market went down as much as it has.
Yep. Agreed.
I mean, remember, Tesla was a leader to the upside, and it's the drag to the downside.
Yeah, that's what happened, Ed. I did not do that correctly. So I'm in here where I am. I'm afraid to sell calls here because it could rise higher. I'm thinking maybe I should sell on a bounce a call, as you just mentioned, above 100 points or something, and start trying to see if we can make some money standing,
I mean, I would sell calls on any rally in there if I were you, because that stock just because it is what it is. It doesn't look that good.
Mm-hmm.
When do you sell calls? Do you sell out a month out or shorter durations usually? 15 days or 10 days or?
I usually sell a month out, but you could do whatever you want depending on how closely you're watching the stock.
Yeah, but I would prefer the April or May options.
Okay, very good. Very good. Mm-hmm. Thank you very much. Thank you.
You got it, man. Good luck to you out there.
Yeah, thank you.
We're going to go to Pittsburgh. I got Juan in Pittsburgh.
Hey, good morning, fellas. How you doing?
Hey, Juan.
Thank you for holding.
No worries. Thanks. Hey, just a quick question. I just needed your opinion. I have a Nike position, and I got the 75 put and the 85 call in the April expiration. So basically, I'm in the money, obviously, on the put side. With 3 days to go before earnings, what is your suggestion on something like this?
Hold it.
What's the stock? I missed it. Sorry.
Nike.
Yeah, it's Nike, and I am short the 75 put in April and short the 85 call in April. With earnings 3 days to go, I'm basically tempted just to leave it here and just hope for the bounce. And if I don't get it, then I'll decide what to do on that day, whether to roll to the next expiration or do something else.
You're short the 75 put and the 85 call.
Yeah, it's got about 40 delta, Tom.
Yeah. I mean, I probably move each one down a strike. I know that sounds crazy, but I don't like to be short in the money, but I understand the play here. So I'm not opposed to what you want to do, Juan, which is just wait and see what happens, because Nike's on its butt anyway, and maybe they have a good one. I think if it was me, I'd probably roll the calls down one strike and the puts down one strike. Take the, I don't know if that's a credit.
Yeah,
small debit. And then see what happens. It's still a long position. But you could leave, I would either do that or leave what you have on.
Okay, I'm sorry. I was going to do a little bit different. I had it up on the screen. I'll do it for you right now. I would probably roll to May, because I'm feeling like you didn't have this on to be an earnings trade, just morphed into one. I would stay with the same short strike 75. You're a little bit in the money, as you said. I would probably bring down the call to the 82.5 or 80 in May and collect myself, I don't know, like $1.35 to $1.95 in credit, depending on what strike I went to. I would opt out for the more time.
Tony, it's like you must be doing this. You must have been doing this for a long time, because that's exactly what I was. When I put on the trade, exactly, I wasn't making this an earnings trade, so you read it correctly.
Yeah. So I try to take the earnings. Yeah. I mean, you can't take the earnings out, but I try to mitigate it. You got a $6 expected move for earnings. If you get it to the upside and you roll to May, you'll be right in the middle of your two short strikes. Right. Obviously, you're going to make more money back if you stay in the shorter dated. I opt for duration over direction, so I would probably roll.
All right. Well, good thing to think about. Thanks a lot, guys.
No wrong answer, man. That's the problem.
Thanks, Juan.
Yeah, no.
You got it.
Thanks a lot, guys.
Florida, Sadna, we're going back to Florida. I got Andreas. Florida Panther.
Hello?
Hey, Andreas, what's up?
Yeah. Good morning. So I have a question regarding futures. I would like to add futures to my trading, but they are totally different two options, right?
Yeah.
So what would be an entry-level trade?
An entry-level futures trade?
Yes.
Options, futures options, or futures themselves?
Futures themselves.
Well, you can try one of the micro products, because an entry-level futures trade, you should not use the minis, you should use the micros. So like /MES or /MNQ are the two most liquid.
Got it. So I can sell a put on any of those and they work similar to options?
No. Hold it. Say that again. You can sell a put? No, you said just the futures. We're not talking about options for a second, right? We're just talking about the futures. Right. You can sell at every point in MES is $5. A full point's $5. And every point in MNQ is $2. And I think that's the cheapest way to to learn how to use futures.
Okay. But I can follow the same mechanics as option trading.
No, not really, because futures are more directional and it's not volatility based. But what I would look at is the expected move, so that you kind of know what your parameters are for what you're looking to happen. But just remember, if you're trading like NASDAQ futures or S&P futures or any other future, you're very directional in your approach. You're betting on a market direction. That's all it is. They're highly leveraged, highly efficient, very liquid, all based on direction.
Okay. Thank you.
Okay, sure.
Yep, you got it. We're gonna go to Washington. I got Kim in Washington. What's up?
Hi, how are you guys today?
Hey, Kim.
We're doing great, Kim. Thank you for calling in.
Hi. Great. 2025 is my year to learn options.
Let's do
I
it.
trade on IBKR.
Okay.
This weekend I did a partial transfer to you guys at Tasty Trade.
Okay.
And IBKR says, wait, don't go. We have the highest rate on idle cash, and we auction off each of the option orders to the best bidders.
Okay. Tell them congratulations.
What do you guys say?
We say to them,
come closer to the mic, Tom. You're out in no man's land. I can't
Kim,
hear
we
you.
say to them, congratulations, guys. I mean, they're obviously a competitor of ours, and a lot of people leave Interactive Brokers to come to Tasty. And all I would say is, we've been competing with them for 25 years. I would argue that there's certain things they do that they do really well. Like they have a good global network and they do pay higher rates on cash. I would say the difference with us is we have way better front-end technology. It's not even close. Ours is faster, it's stronger, it's more stable. It supports way more strategies, a lot easier to use, and that's really the key. We also have much better content. We have much better support, and you get to talk to the founders of the company, and you'll never get to do that at IB as long as you live. so
You're right.
The difference is that we're very real, but I don't hate their platform. I don't hate those guys at all. But it's just, we're competitors, and of course they're going to try to get you not to leave, but people leave all the time and they go to us because we have a better front end. It's just simply better, faster. It's a better platform. And the way that you want to trade in the future, you want to be on the best technology you can be on.
Perfect. I really appreciate it, and I hope to see you guys at a live show.
Great.
Awesome,
We'll see
Kim. Thank you so much. Sadnov, we're going to take a quick 90-second break. Thank you so much. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next, Saz? That's right. Liz and Jenny. You got it right. What?
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. crypto. We got it. We get it.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Looking for a better broker and a bonus? Sweet. Get up to $4,000 when you open and fund a tastytrade account. Plus, smart tech and a broker who's got your back at tastytrade. Make your move, genius. tastytrade.
Crypto is better when it's tasty. The Tasty Crypto Show, hosted by me, Ryan Grace, and Frank Caberna, will help traders of all levels learn DeFi trading. We'll provide our insights on altcoins, crypto industry news, and blockchain education. And we'll have you swapping, staking, and trading using derivatives in no time, all using the Tasty Crypto Wallet app. So don't fork up your chance to become a crypto master. Watch Tasty Crypto only on Tasty Live.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Everybody, and welcome to the St. Patrick's Day edition of the Liz and Jenny Show. My name is Liz Deerking, the beautiful brunette, back from her world travels down to Disney World on a Disney cruise, and then to a dance competition is my friend, Miss Jenny Andrews. How you doing?
I've been gone for 11 days. Did I miss anything?
No, nothing. Nothing. Markets smooth sailing all last week. What the hell?
I'm not kidding when I tell you that. So when I left, Liz, I don't know if you remember this. We talked about where do we think the market will be when I come back. And so I came back from the cruise last week, and I did not have internet. I didn't buy the internet package. I didn't watch the markets. I had no idea where the market was until I got back to the U.S. on Thursday. And I think I said I thought it would be at 5,800, and I think you said 5,600 or 5,700. And I was shocked when the boat pulled in, and I turned on my phone and saw it 5,500.
I mean, Friday saved us. So you were on land on Friday. Friday was an up move. But listening to Kai this morning, so Kai put together a piece and it was great. Last week, even with the monster rally on Friday, that's why I was fascinated by. Even with the monster rally we had on Friday, so thank the Lord for that, we were still down over 2.5% or over 2% for the week, which is crazy. It's big. Here, let's take a look. I'm going to go
pull up the chart because I'm so glad that I decided not to buy the internet package and chose to just remove myself from the world, or I would have been crabby every day.
It was crazy. Okay, so if we can jump in the platform, that'd be great. Because Jenny, I think you left here. I was just counting backwards. I was like, this is Friday, Thursday, Wednesday, Tuesday, Monday. This is the Friday.
And
yep.
I left on Thursday, the day before. Right. I left that day and I was like, goodbye, world. I'm shutting down the internet. And thank God, or it would have ruined my trip. Just like I wasn't going to let what happened to me in Hawaii happen to me again. And it would have.
Well, and I did. Whenever I would text you, because we could text, I would say only good news. I would tell you random things because I didn't want to tell you the day the market was crashing. Okay, now that being said, I'm very glad you're back. Wonderful. All the guests were fantastic. I mean, the show with Ryan, amazing. The crypto show. We'll talk all about this. I'll pepper this stuff in. TP, fantastic. Tony from Mexico, fantastic. All my guests were amazing. So I do want to give a big shout out to them.
I want to hear all about it, but just can you do me a favor? If you click on Thursday, because that was the day we came back to land, came back on Thursday. Can you tell me what the low was on Thursday? Because that was the first day I looked at it.
The low was 55.04.
Yeah, right. And I guessed when I came back, it'd be around 5,800. So 400 points lower than what I thought.
Yep.
Can't believe I missed that. It was like when
Now, my question is a serious question. Do you think I can get away with this hat all week because it's St. Patrick's Day week? Like all week?
It looks good on you.
Like trading floor and everything. I'm holding off on getting my roots colored until I go on vacation.
Hey, wear hats. I love the hat. I love the hat. Wear it all week, Liz. Wear it all week.
At the SIBO, will they make me take it off and I'll have hat head? Probably.
Oh, so remember, it used to be no hats at the SIBO, but in the winter on the super cold days, they allowed hats. But I don't think this week they're going to.
I know. So, well, maybe a scarf. I'm just gonna put a scarf on it. We'll see, but no, nonetheless. Okay, I just want to show you something because here's what I thought was bonkers. Number one, we got filled on two things this morning. The GTCs got hit. When GTCs get hit, this is a good thing. We know it's for a profit. So our Philip Morris Iron Condor got hit and our Archer Aviation put got hit for 50%. Great. Okay. But I'm just going to go back 7 days. Okay. Because I want to show you. I did not enter into any new trades. Please keep this in mind. I did not enter into any new trades. These were things that were closed, number one, for a profit, or number two, for things that had happened with capital. Okay. So lots of times. And we got assigned on a lot of stuff to the point where I was like, what is happening?
Look at Tesla. So how much buying? So you must have walked in and had no buying power having stock in Tesla.
Oh yeah, no. There's a couple days where I had no buying power, Jenny.
And I'm impressed. I logged into our show account for the first time today, and I'm impressed. We've got about $15,000 in buying power. Good job, Liz.
I was very creative. Okay, a couple things that I want to say. I'd rather be lucky than smart. Okay, this one was, and I pushed everything out, but I didn't get to talk through this on air. Kohl's. This was a scratch. This was one of those days where it was like the market was not looking good. I didn't know why we had this in there, and it was a scratch. Okay,
so I bought back a short put. Yeah,
I just bought back a short put, literally for the same price that we put it in for on this day.
Oh my gosh!
Yes, when I was like dun 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 the next day. So it could have been a lot worse, but that was like lucky than smart. The other thing that I wanted to show you, which I was very creative at, is this hood. So hood. On what day was this? This is the 10th. So I'm going to go to the 10th here. The massive down day.
Wait, you're still on Kohl's. You're still on Kohl's.
Oh, sorry. No, hood. This is the 10th. I was just going to show where it was. But it was just the massive down day of like in general, the market was going crazy. We had a short put and all of a sudden it was holding up so much buying power. It wasn't even funny. So I switched it so you can see we had the 40 short put. In hood, and I switched it to a zebra. I bought back the put and switched it to a zebra with that same short call, mimicking the exact same position, and saved us a ridiculous amount of buying power.
And yes. That was something for people to see how when we're down day, how margin can explode.
It did explode. Now we can switch this back now. I think it's like situation normal. All's right in the world.
No, is still using a lot of buying power.
It is using a lot of buying power.
Yeah, let's take a look at selling puts in hood. There is still a lot of buying power.
But I replicated the position identically. That's why I did that. I used the zebra and sold the exact same put or exact same call of the put that we bought back. So this would be the same thing. Now we can ratchet up this zebra.
You could do that. How much buying power was the put using?
The put was using 1,500.
Okay, which seems like a lot, doesn't it?
Yeah, and this was using half of it. That's why I switched it that day. No, you can ratchet it up. We can close it. I do kind of in this market like looking at things with a fresh set of eyes. I do thoroughly like looking at things with a fresh set of eyes. The one thing I did not touch because I did not know what to do with it is OKLO.
To the 40-35. I mean, that's just a $5 wide spread. And so at least it's just a $5 wide spread because OKLO is trading.
Yeah, 20. and it's a full loss here. So I left this. I left this. This is actually coming back a little bit.
Well, I mean, they have earnings next week, I think. Well, I keep saying, I mean, how many times have we seen earnings in OKLO? But it is saying that it has earnings. I don't know if you want to, let's take a look at next week's options in earnings. What are they saying the expected move is?
Jenny, I don't know. I mean, it does finally have the bell on it, which OKLO has had this purple line and it keeps moving down.
So many times. And that $5 put spread trading for $5, there's no reason to close that, and it's not going to be rollable. If you wanted to keep a trade going, I've got my own account pulled up here because I wanted to talk about those December puts that I sold before I left. But I still have my OKLO going. I've got the short 27 puts, short 34 puts. I've got a myriad of short puts in there that I'm keeping and rolling and keeping going.
I would have switched this. What I find crazy is take a look at this. It's cash secured. Cash not secured. Cash secured. Yes, not settled.
Oh, it's always been. It's always been, which is why we have a spread. It's always been. How much is a diagonal in there? And I don't think. And we could wait till after earnings to get back in, because I don't think their earnings are gonna be some amazing earnings. So why don't we could wait till after earnings if you want to.
Yeah, let's wait on that one. Those are really it. I mean, other than that, a lot of this stuff is residuals. I'd like to start putting more in. As I said, none of these are new trades. Like none of these are new trades. This is all management or closing for a win. Like IBIT, we took off for a win. I'm sorry, this is a new trade. Triple Qs, you're going to love this one. We were talking to TP about getting short when the market's already down. We sold a $2 wide call spread for 70 cents. And it is doing its job, I guess. We're up 10%.
Oh my gosh. To put in a GTC for that, because we're never going to blink an eye at looking at that. You know what I mean?
I know. There we go. So that's in.
So what with crypto down so much, I'm curious, what did Ryan Grace have to say when you had him on? Because crypto took a huge hit.
Crypto and the market are together. That's what I'm saying. If you think crypto took a huge hit, the market took just as huge of a hit. And
I thought crypto was down way more because crypto, I thought I saw it down in the 70s where we had it was almost down, 25% from where we saw it at the highs.
So it's pretty interesting that he was showing, and everybody can go back. It was an amazing show. He is so intelligent in what he does, and he delivers it well. We were all over the place on crypto. He's a fan, but he's a crypto guy, right? So
right, like that's it.
Yeah, but what I found the most fascinating, and I would encourage everybody to go back and watch that show too, and keep an eye on him. I'm going to keep watching all of his shows. Is how different each of the cryptos are. How they each do something completely different. Like they not price action for the cryptos, but how they each do something different. And then I wanted to know what his portfolio was. And his portfolio is very similar to mine, which made me happy, where he's got 80% in Bitcoin.
Okay.
Like 20%, like 15% Ethereum, and then 5% in the rest of them.
Okay. Yeah. Okay. And what did he say about some of the new coins coming out? And we added some new coins recently. And did he have one in particular that he liked, or any kind of hot new coin that he thought was a good?
No. He's a Bitcoin person. He's a Bitcoin, Ethereum, Solana, Cardano, even Bitcoin. Here's what I found fascinating. Bitcoin and Ethereum are two totally different uses. So he's a fan of the Ethereums because of its use. And he's a fan of Bitcoin because I found this fascinating. Bitcoin, all the other coins, there's not a finite amount. Bitcoin has a finite amount. There will only be 21 million Bitcoin, period, end of story. That's it. So it's a finite amount of Bitcoin, which means it's valid. That's why he calls it digital gold.
Okay.
Yeah. So it's fascinating. And we'll go back and we can talk about this stuff kind of as we pepper it in. Because
I'm glad you had him on. And what did he say about the new coins that recently were added?
I mean, any coin's a good coin. He thinks coins are going to be all over the place, but I know I think you're trying to be like, he said buy. He didn't. That wasn't.
Well, I know we added some new coins, and I didn't know if he had anything, anything to say about the new coins that were just added.
No. I mean, I was asking about all of them. He's like, they each have their time and their place. You never know, and then none of them are really standing out. I mean, I asked about XRP only because you know about that.
Oh, yeah.
And he gave his opinions. He's like, it is what it is. I don't see anything. It hasn't proven anything yet.
So what's crazy to me is when you pop open the cryptos, how many we have again now. Before, a month ago, you popped that open and we only had a handful. Now we have so many, which is great to see.
I don't know. Are you on your phone when you were looking at your account?
No.
Or were you on your computer? Because if you go, I'm so impressed with what the team did with the mobile app with crypto.
Oh.
Because now if you go into your account, there's a button on the bottom that just says crypto, and it's so organized. It's fantastic.
Well, I did. Okay, so it's funny because we got off the cruise ship. So that was the first thing I did. So we got off the cruise ship and we got onto a bus, and the bus took us to the Disney resort. And the first thing I did, open my phone, open my platform, look at the market, and I bought Ethereum. That was like the first thing I bought when I got onto the bus. I opened it up and I did it right from my phone. It was very easy, very easy.
So did you notice the crypto button at the bottom? Because JD didn't have his. He had to update his app to get it.
Well, I must have, because why would it be the first thing I did was go buy Ethereum when I opened my market for the first time after not looking at it in 5 days?
Because you were dreaming Ethereum while you're rocking on that boat. How was the vacation? I typed in Disney so we can take a look at that while you're there. You were on a Disney cruise and Disney World. Was it crowded? Is this going to save us?
So our cruise was not at full capacity. I feel like I've outgrown the Disney cruise.
Oh, you do?
Yes, right. Like going with that's what we said. We've kind of outgrown it, which was, we haven't been on a Disney cruise in 5 or 6 years. The last time we were on a Disney cruise, our kids were much smaller. Lily wasn't 16. She was 10. So
yeah. And Logan was 16. But you had a 10-year-old
Logan was 15. Yeah. Logan was 15. Lily was 10. Wonderful trip. Kids loved it. This time I felt like I outgrew it. I'm not going to book another Disney cruise for myself. And they're wonderful.
For the one you already have booked.
Well, yeah, I already have one. That's just a quick 3-nighter. But I kind of felt like the things we liked about it when the kids were little, we don't have little kids anymore. So the next time I book a Disney cruise will be when I'm going back with grandkids.
Oh, I can't wait. So, but you were here, were the parks busy?
We were only in the park. It was spring break. Yeah, it's spring break. Yeah. So are they busy? Yes. Disney at 99. What do I have in Disney? I'm just going to look to see what.
Here's what I was going to say. The reason I'm bringing this up is just a random stock. So you were in Disney World, you were on a Disney cruise. That's why I brought up Disney. Look at this. You've got a 36 rank. You've got high ranks across the board still, even though so the Disney's down, ranks are still pretty high. Let's take a look at the VIX because VIX has come down quite a bit, but it's still in the 20s. So what you're finding is that you still have products with ranks everywhere that you can kind of lean in and start putting in trades.
It's kind of nice having my account open here. I usually don't do that. So, and I just got back, so I haven't really gone through symbol by symbol by symbol by symbol. So bringing up Disney, I look down, I'm short the 105 puts. So yeah, at 99, it doesn't look bad. I've got the 105s.
Right.
So open how much premiums in the 99 and the 98 puts?
Well, and this is what I was going to say. I mean, maybe not like market, but this does, if I open this, you might think this is crypto, right? Do you know what I mean? Like, was it 110 and now it's in the 90s? Like they look very similar. Like that's what kind of we were talking about with Ryan.
But Ethereum went from.
Oh, Ethereum lost 50% of its value.
50%. That's what I'm saying. Like some of this crypto was ugly, ugly, ugly. It lost 50%.
It lost 50%. And it's supposed to lose 50% because the volatility is so high. So like that's what Ryan and I were talking about, and he brought up some great charts saying that the reason you're gonna see massive swings in these things because the volatility on these is so high, and then he shows like the chart and how you're going to see 70% drawdowns, 80% drawdowns in these.
And so when you look at so that's really interesting. So if you go to the trade page, and you go to the April implied volatility. So April implied volatility for Disney is 29%.
Yes.
Then if you go to IBIT, which is Bitcoin, if you go to IBIT and you go to the April implied volatility is 60%. So it's expected to move double of what Disney
does. Yeah. But it didn't.
Yeah. No, because Disney only lost about 10%. But
no, and this IBIT doesn't look like it lost that much in the same time that Disney lost that much.
I bet, yeah.
It looks like Disney. It looks like Disney lost more.
Disney went down quite a bit.
Yeah.
It did. But crypto was going down before this move. Crypto was slowly going down before the big move last week.
Yeah.
Because Bitcoin went from, what was its high? How high did Bitcoin get? 100 and
it's high, yeah, about there. And then now it's trading 83.
Yes. So
which isn't that bad.
Over 20%.
It's kind of like Disney. Disney was, its high was, right? So Disney, if we're doing high to high, Disney's high is 120 and now it's 96.
Well, and look at SPY. What's SPY? Like, what's the percent that SPY lost from its high to now, to low, high to low?
So high, and that's a fair assessment, is 613-ish, right? To 450. I'm sorry, 549.
613 to 549, 64 divided by 613, 10%.
Yeah,
10%.
I mean, yeah, it's a pretty big drop.
And what if, so only half as much as the crypto market went down.
Yeah, but they're pretty correlated is what he was with the.
Well, yeah, and I get it. Again, this is a lower volatility. Crypto has a higher volatility.
Yeah, here you got a 25.
If you're playing that market, you're playing for bigger swings.
Yes, here's about 25, and they have a very high implied volatility.
Right. So, okay, so let's go. We've kind of gone off track a little bit. We were talking about, do we want to sell any puts in Disney? Do you want to look at? I'm curious to see how much buying power it uses, and what you get.
You can do $1.30. It's a 5,500. I'm sorry, 1,500, which is great considering these lower price products are holding up that much.
Yeah, $1.30 holding up that much.
Yeah. Now,
if we wanted to use less capital, you could pay 23 cents for the 85 put.
Yeah, then you're only using 900. Perfect. Let's sell puts in Disney.
It's not bad, but in our situation where we only have $15,000 in buying power, we have to almost be strategic in how we use our buying power.
I know. Now the game begins, right?
So it's like $800 or $900 to make 50 cents on this Disney. I think we've got to get a little more strategic in how we're going to use our buying power.
Okay, so let's take a look. I just went to our cap required for these. The things that are holding up the most capital is CMG is our number one.
We're short the 55 put is trading 49. Just change it. Can you change that into you can buy the 45 call.
You can buy the
45 call. There's only 50 cents, and if you want to keep a long position in there, you can buy the 45 call.
You could buy the 45 call, and then even remember, keep in mind, you're capped out at the 55 when you've got that 55 put.
Mm-hmm.
You could even do something like that.
We don't need 35 cents that way. I'm done selling calls for 40 cents.
Well, all I'm saying is the only extrinsic value we have in the 55, we're filled in Disney, the only extrinsic value we have in the 55 is 35 cents. That's all we're getting right now. It's as if we were long the stock and sold the call.
This is really easy. You can buy that and you could replace it. We're just essentially long stock. You can replace it with that 45. You're not giving up much.
Well, I think my point is, do we need to be in Chipotle Mexican Grill?
No, if you don't have to be in, we don't have to be in Chipotle Mexican Grill.
So, I mean, look, if we were talking highs to lows, you got 66 down to 48. These are big moves.
And have you been at all doing the Jajun?
I did not this week at all because I couldn't with the guests. We very rarely put on trades. I used their knowledge and talked through things. So we did not do Jajun.
Okay. I'm just pushing trades out. I was curious as I'm pushing trades out. I didn't know if you've been doing the Jajun.
No, we have not. And honestly, in this market, it's been kind of crazy. Hold on, I'm going to put a GTC in for very small. That's the other thing we were talking about. Everybody seems to have the consensus that you button it up, you take tighter profits. In this market.
I think they did a piece on IWM, and I know IWM is going ex-dividend. I'm curious to see what kind of premiums in IWM. It's at only $204. Are you getting back into your 217 calendar?
No, I mean, I have been, and this has been one of my major losses. I've been just selling at the money puts in IWM. So that did not work out so well, but it's the best you can do with the most extrinsic value. So I'm not doing the 217 calendar, but we could get them with that.
Well, no, I didn't know. I know you usually get in when stocks get around where you can see it at that level. But with Kai's study with the market measure today, talking about IWM and the premium you can get at IWM, I wouldn't mind getting into IWM with like a skewed iron condor, kind of like a jade lizard, but you take more risk to the downside and less to the upside. Maybe
I would love to do jade lizards. That's what I've been putting in my account this week, is taking advantage of the implied volatility and putting in some jade lizards. I'm going to do 215, 217. We can get about 40 cents.
Sure, and then try to get $1.50 on a put spread.
190. That's not bad.
Well, I don't think no 150 on a put spread. I don't think we can get a naked put.
I was going to say, because the buying power in there's a lot in this. So if you're going to get 150, I'll go.
How wide do we have to make this?
Not bad. That's $1,200 for $2.
That's not bad.
It isn't.
That's not bad.
It's, when you take a look at this, that's a pretty good return on capital.
And we're, April is crazy. Is it crazy that April's only 31 days?
I know, it is crazy. And this is triple witching, by the way. This week is triple witching, which is notoriously bullish, isn't it?
I think so. I think so.
It's notoriously bullish. So, I don't mind shipping this. I'll put this in. We've got a 31 day trade.
If you don't want to use $1,200 in buying power, tighten it up. We don't have to collect over with the call spread. We can tighten up that put spread and collect $1.50 instead of $2.
Well, I was going to advocate.
Or you could always do two. Remember, we had that one viewer who would do like 2 put spreads to 1 call spread. So do like 2.
I was just going to look at this, but it's going to move it moves the break even. You know what I mean? So here, let me do this. Delete leg. If I'm going to do 2 put spreads, I can take it down to here. Let's go 90, 85. How much am I getting there? So whatever, we're getting $1 for it.
Yeah, just leave that. I think just leave that. That's fine.
So here,
you don't even need to do 2. You could just do 1.
Well, that's kind of when I pulled it up, I was like, it's not bad at all.
No, just do 1. I think we have to get creative on trades. We can't just keep throwing like $1,000 in buying power, trying to, make 50 cents. If we're taking it off at 50% profit, we need to do other trades too.
The other one that's holding up $1,000 in buying power for no real reason is AI.
Why don't you turn that into either a put spread or a diagonal?
So you can take this AI. If it's using that much buying power, we can actually leave this and buy.
Yeah, that's fine.
This will go back $700. Yeah.
Sure.
It's still got a high rank. We're just doing something for buying power. We paid a dime and got back $600.
Do you want to take off MCL? How much did we collect on the MCL?
So MCL is 36. I think we have a GTC in for 50%. This was a jade lizard. It's going in the right direction. This was fine all week long. So this never really, so you can see, this was when you were gone. It was all week, never really 50%. I put the GTC in and kind of let that sit. I have no problem taking this off though.
Only if we're trying to free up buying power.
This is a very low buying power trade. So let's put this on, maybe put something else on. Let me go. I'm going to cancel the order. Watch how much we get back.
It's a jade lizard. So we always say if we get 30% on a jade lizard, we're fine with it, because if it goes up and blows through the call spread, we won't make anything on it.
So take a look at this, right? So we have a jade lizard. It looks like a $67 product. We're only getting back $400 in buying power, which is fine. I'm fine with that. But it's just all these other products we're looking at. There's so much buying power in them.
So last week while I was gone and the market was falling, was there anything you saw that you were like, oh, this seems like a lot of bang for your buck?
Welcome back.
Welcome back, my friend. How are you?
I'm good.
Look at you.
Monday morning. How's it going?
I won't get hurt, but I want to do something with this implied volatility. And I did your old school ones. So I'm super far down.
Right.
Do you know what I mean? Meaning I'm just going to show this in IWM. Like the old school jade lizard would be We go to 45 days. 70 cents. So when you think 70 cents on a put, and then a dollar wide call spread. So
yeah.
There you go.
The old school Jade Lizards, and the puts are so far.
Yeah. Yeah. Jenny, I'm going to pop into Twitter if possible, and I'm going to show something real quick. So if you go to Tasty Live on Demand, the Liz and Jenny strategy series, I know we went very quickly through that. The Jade Lizard is right here. So
and the Jade Lizard for this kind of market where we've fallen and you're looking for a way to get back in, but don't want to get hurt if we bounce or whipsaw back up, the Jade Lizard's a great strategy.
Yeah, it is a good strategy just because.
Now the risk is to the downside if we keep falling.
The risk is to the downside. It's pretty. What I like about it is it's pretty. It's pretty far though. So when you're doing a traditional Jade Lizard, you get pretty far. If this falls, can grow teeth, and you got to sit on it.
Now, after doing my research, I see best results for bringing the put up to a 16 delta. So now if I'm looking at Jade Lizards, I usually bring my put up to the 16 delta and collect more, especially in our research shows when vol's high, bring it in a little bit.
Yeah.
Because you're still, we're trading 204 and that's at the 187.
Yeah, right. And that's a good way to do it is bring it up. When you said this so much last week, I was talking about it with TP, fortune favors the brave. Bring it up. You're up $10 higher, but that's it. When you've got implied volatility, that makes sense. Okay, so I'm gonna go back
so speaking of getting like really far, I know that when we were having those down days before I left, we talked about going way out to December because you get so far. And then before I was leaving for my trip, I was nervous. What happens if the market keeps falling and vol blows up? And how much could these blow up if vol blows up? So the only reason I pulled up my platform was to show some of those. And what happened, I closed a lot of them before I left, but I did leave. I can see here's one that I kept on. So 13 days ago, I sold the 100 put in coin in December.
Okay, so
just because I know a lot of people wondered what would happen to those if we keep falling and vol goes up. So 13 days ago, I sold that 100 put in coin. And it was about $2,000 in buying power. It's still about $2,000 in buying power. And when I sold it 13 days ago, I sold it for $585, and now it's $750. So it's a loser, but it's not terrible, and the buying power is the same. It hasn't exploded.
It is crazy. It's not bad.
What's interesting is now 100 is the expected move.
This is what I'm saying. Now you're inside the expected move for the cycle. That I don't like because I know when you put it on, you're like, oh, this is great.
Oh, it was so far away. 13 days ago, where was coin? Go back 2 weeks. But
here,
go back a couple weeks. And exactly. I was like, whoa, geez, the 100 put seems like free money.
Yeah.
And I thought if we got a pop up, I'd be able to get out of it. Well, we haven't had a pop up, but then what I see is that, margin hasn't blown up in there, and that put, if I want to take it off for a $200 loss and put that money somewhere else, I can. It's not terrible. And actually, I thought about taking those off for a small loss and getting into now just like regular monthly coin where you're getting a lot more, you're getting a lot bigger credits.
So Tony from Mexico does this quite a bit with his kids as well. He looks at it as not in coin, because I don't think he does a lot of volatile assets, but your S&P 500. Okay. So the one thing that he said, and I love this, and he's got his daughter doing this. If you had $10 to invest, right? Okay, so I'm just going to give you the highlights of his. If you have $10 to invest, you take $500 of it, or I'm sorry, $5, 50%, put it in the S&P 500. You take $2 and you put it in gold. You take $2 and you put it, what was it? Bonds, was it? Oh, Bitcoin. So $5 in S&P, $2 in gold, $2 in Bitcoin, $1 in CLT or bonds.
Okay.
And then he's like, lather, rinse, repeat.
And when he says put it in, does he mean selling put spreads?
No, he was just saying just in general. In general. Just in general, if you're doing it like an asset gathering system, if you're looking at this as gathering assets or for his kids, 500 goes in the S&P, like 50% goes in, like say you get $100 a week, $100 a week, you would do 50% S&P, 20% gold, 20% cryptos, 10% bonds or T-bills or something of that
And
nature.
that's how he, and again, people can do that however they want. They don't they just like Tana would teach his kids, they'd be selling put spreads. So, they could take that portion and sell put spreads if they didn't want to just come out and buy.
And to your point, that's however you get there, like however you want
however
to do
you get
it, but
there.
that's just a loose, and I thought it was pretty cool.
And I love when Tony from Mexico comes on.
Yeah, he's good. He's good.
Yeah.
Okay, I'm going to go back to Twitter because it's pretty funny. Yeah, Polish Warrior. Welcome back, Jenny. Next time, can you give us a heads up on how the market will behave when you're on vacation? It was crazy. It was crazy.
I'm sorry that you were here with guests because I know how hard it is to try to manage the account with guests every day. I'm sorry I left you in the thick of it. But the crazy thing is, Val never got as high as you would think. If you told me, Jenny, you're going to leave for a vacation, and when you come back, SPOOs are going to be 5,500, I would have thought VIX was 40.
The highest, it did briefly touch up here. UBXY never got up that high. So here, this is what I talked about with almost all the guests. This is when you think the vol could keep its wings up. And it is. 20 is still high, okay? So a 21 VIX is still relatively high. But they were saying the scary part about it is the stair step up. This kind of action leads you to be like, whoa, okay, we're going to be fine. Whoa, okay, we're like, the violent up and down moves are crazy. The stair step up in the VIX is a little bit different.
You'll laugh at this because the day I left, so like I said, 11 days ago, and I have it. This trade's been on for 11 days. The day I left, because my portfolio is bullish, I'm long Delta. The day I left, 11 days ago, I bought the VIX calls that expire today, the March 18th or tomorrow, March 18th. VIX 26 calls. I paid $1.50 for them. I was like, this is my protection. This is my protection in case the market plummets while I'm gone. They're worthless.
Yeah.
I was like, I'm not going to worry while I'm on the ship because if the market plummets, I'll make money on these.
I got these 26 calls. We're going to be fine.
And so for people who think they can hedge a portfolio, it doesn't always work. Like the market fell huge while I was gone, and these are worthless.
Yeah.
You would have thought for the move we had that VIX would be 40.
Well, I kept looking at UVXY because, I always have wait, hold on, I put it in wrong. UVXY, you ain't got no alibi. Take a look at this. 23, you would think it looks just like the VIX. It never got higher than it, even though it's never got higher than it.
Yeah, with the move we had.
Yeah, it's crazy.
Seems really weird, doesn't it?
So this whole triple witching thing, I do want to go back to VIX because doesn't VIX expire? Doesn't it have a different expiration? Hold on.
Well, this morning my calls expired to AM today. Or tomorrow. What's today? Yeah, AM tomorrow.
AM on the 18th, right? Yeah, so tomorrow. I thought, okay, yeah, so it's a Tuesday expiration. Why did I think it was a Wednesday expiration?
I don't know. If it does a change week.
Can I ask a question? If it says the 18th in the that would be the 18th.
Tomorrow morning.
Yeah, tomorrow morning.
Because there's 0 day. If it were like later, it would have a day on it.
Yeah. Okay, I gotta go. I have to go back because oh, thank you. Thank you, Cherry Trader.
Liz, your hat looks fantastic. Yes, I do like the hat. It does look good.
Thank you. I love it. I'm gonna see if I can get away with it all week. Listen, Jenny Forever. Welcome back, Jenny. Thank you very much. They like the hat. How does $9 trillion federal debt getting refinanced this year? Okay.
How does $9 trillion federal get refinanced this year?
The CR Friday added another $4 trillion debt ceiling and $1.4 trillion debt. Who's the tasty macro expert? Oh, you got to watch Ilya and Chris. So, right? Yes. So 100%. After last call, I watch them sometimes. They're great. So I would say Ilya and Chris, and they're two opposing forces, and they're on right after each other. So it is overtime, and then Ilya comes on with his macro view. So, and you can go back and watch it in the archives.
And I'm ashamed to say my degree from University of Illinois is in economics. And I don't tune into our show for the macro outlook. You know what? I should really maybe brush up on my My macro skills, I don't know.
I do thoroughly like watching Chris and Ilya. I think they are fantastic. And Dylan's on with him too. Dylan's got a good perspective. He's in overtime. And then as soon as overtime ends, Ilya has a show. And it's great.
I love watching their show. Yeah. I do. I really do. And then he does give us some info. iBit is up 11 or down 11% year to date, and gold's up 14% year to date. So at least you had some gold in your account, Liz, to help offset the move.
See, just like Tony from Mexico, I've always got little bits of gold in there. It didn't really do anything. I like this though. I did some financial planning, and it looks like I can retire at 97 and live comfortably for 11 minutes. Yeah, and Frank the Great just put it in the chat. So 3 p.m. is overtime, and 4 p.m. is macro money. It's just Ilya. So check him out.
They're really good. I do love them both.
Yes. Uncle B too. I love it. I won't even look. How long did you make it without peeking? She did good.
I didn't look. One day I had a glimpse of an idea of what was happening from the text you sent me. Just the way you worded it, I think maybe the market's down from the way Liz wrote this text.
No, I just said silver lining. IG's up.
Oh, so that gave me a hint that the market might be down.
I didn't say anything else. I said, I don't know. No, I think I wrote it. Only good news.
Only good. Here's the only good news you have for the week.
Okay, this is shameless for me to do this right now, but I need this. I will screenshot this and send it out. I got lots of emails about Jack Tucker and what he does. And so I'm just going to very quickly say, Jack Tucker, number one, we love you. Number two, he is a very large tranche, meaning 10 at a time, SPX iron condor seller. And he does quite a few of them. So this is here. This is what he's doing. He's putting them in at different times. Iron condors in the 0 DTE SPX.
And he's, okay, so I did this. I did mine today. I'm back today. Today's my first day back in weeks in the SPX Iron Condors. And I'm back in. I'm going to do them every day now. I think, but I'm not nearly as big as Jack. I just did one, but my goal is to start getting back into these again. And kind of, for a while we stopped doing them, and I don't remember why, but we stopped doing them for a little while.
When the market was violently moving, I think we said,
maybe we'll wait.
Maybe we'll wait. Okay, so yes, this is what Jack Tucker, this is not us. He is not a Tasty employee. Jack Tucker is doing iron condors in 0 DTE SPX and quite a bit of them. And here he says 3 tranches, collected 19,200 in premium. And here's his P&L curve at entry.
And will you click on his again? I want to see how wide. Is he still doing like $20, $25 wide? So
yeah, I'm assuming it would be the 26.20 and the 55.95. So he's got
$25 wide.
$25 wide.
Now I did mine. Mine was like a baby today. Mine was, it was only $20 wide. It was only $20 wide, but yeah, both sides $20 wide, but I brought it in, so my risk was less. So I brought it in $20 wide, where I collected $900 and risked $1,100. So my risk was much less. My collection was bigger. It was almost like a chicken. Where you're collecting almost half the width of the spread.
Yeah, a chicken is collecting 50% the width of the strikes ish.
Yeah.
So yeah, that's where it is. I will screenshot this and send it to the people that I have to email back. And then also Bob on Fire, thank you very much. I did not trade a single earnings trade throughout this entire thing.
Yeah, why would anyone with the crazy market? There are other things to do, right?
I think Tom did. I know the big one was Adobe.
Oh, I know he said this was the best earnings season he's ever had, or something like that.
Yeah, so Adobe had earnings and it gapped down, but I think that everybody was okay. It was within the expected move. Do you know what I mean? And so but I've not really done earnings. And honestly, this is kind of the wrap up, right? So Lulu's usually the end, and I want to see when that is. But this week, we've got Pinduoduo. That's something I take a look at. MU, I've got it in, and JT does too. Nike, FedEx, Lennar, CCL. So Thursday, there's a couple that we might take a look at.
What is Micron doing? I know SMCI. Do we still have SMCI? That had a big up move last week. That was one of That
we
was
do not have SMCI.
Okay, so that one I think had a big move last week, or maybe just Friday, or I don't know if it was the whole week. Because that's something we're usually in. We've been in it.
It did not have a big move last week. This actually stayed pretty.
It did.
I mean, from 35 to 40, it's not. This is. If you think this is a big move.
Well, it's up instead of down. Like if you go back from when I came back and I opened up my platform, this is one of my only greens. So from when
that's fair enough. That's fair enough.
As long as I was gone, this seemed like it had a big move. Maybe because it was the only.
Okay, that's what I was going to say. That fair enough. The perception when you open it up where it's the only thing that's green, that makes sense. But it wasn't
35 to 41.
Yeah,
35 to 41.
I was like, if you think this is a big move, you should have buckled up last week. It was out of control.
All right, 10:45. We have 15 minutes.
I do want to make sure we get to everybody because the one thing that was totally neglected, Jenny, Twitter.
Oh.
So I do feel bad, and I understand if it's going to be light because for days or for weeks, we really didn't get into it. Do you know what I mean? We had too many people, too many different things. Yeah. We really didn't get into Twitter. I do want to drill home the fact, if you are on Twitter, you don't even, you put the hashtag in LIZJNY, and you can see all the stuff that Jack Tucker is doing if that's what you want to do. Oh, I want to show you this. This is when I was on with Ryan Grace.
Oh, cool.
Yeah, it was really fun. We went into the studio.
That's right. You went in. That was fun.
Did.
Oh my gosh, this is hilarious.
And I'm gone in 2 weeks. I'll be here this week and the next week, and then the following week I'm out. And I think you're going to have Newman on, aren't you?
I'll have TP on. I have Dr. Data on. We're going to do so tomorrow. Well, tomorrow Liz and I are going to do a piece on the buffer trade. Which is going to be good. We heard Vanetta do a little news clip on it today, and we thought we'll do a piece on the buffer trade tomorrow. And then you're here. We've got this week, next week, shows going as usual. We'll be live from the SIBO on Wednesday, but then Liz leaves for her cruise.
Yep.
Her cruise. And hopefully you have better luck than I had because my world's still rocking.
I can't believe that because you're a cruiser.
This might be... My next one that's already paid for might be my last one because I am still, my world is still rocking. I thought I was cruiser for life, but I don't know. And do you know how if you make your home exactly how you want it, right? Like if you have your bathroom and your shower and you make your home beautiful and you go on vacation and it's not as nice as your home, you're like, I'd kind of rather be in my home. Well, I got really tired of that bathroom.
Oh, and the cruise?
Mm-hmm.
Oh, yeah.
By the last few days, I was like, if I have to brush my teeth with a water bottle in the sink one more time.
I will send you video of our bathroom on the cruise ship. You're going to die.
You're not in a little room. No. You're not in a little room.
But I agree with you. Like, you're right, because we're going to be there for quite a while. So it's nice to have the big bathrooms. The last time, my husband was so mad because our bathroom had like 4 stairs in it. And he, like, in the middle of the night.
At night. Oh,
yes.
At night. Oh, no.
Like, we're never doing this again. I don't want stairs in the bathroom. I was like, that's true.
Well, and I don't know if I told you this, but, and I know I've been maybe lukewarm about my cruise feelings, but did I tell you someone died on our ship?
What?
Yes. And they kept the body on the ship for the remainder of the cruise until we got back to Florida.
Wait, hold on.
Yes. Yeah.
Wait,
and I'm not making a joke about it. It was very, 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 very sad.
How did they die?
And it was a young dad who had 2 little kids. Yes.
What? So that like heart attack?
Yeah.
Oh my.
Yeah, and he had 2 little kids and a wife. And after he died, we were just like sea day, Disney Island, sea day, waiting to get back. And the whole time I'm just thinking like, there are 2 little kids, a wife, his body's on the ship. Like I think that might be why I got off. I was like, this is my last cruise. It was so weird and sad. It was so weird.
So did they tell you guys, or did they try to? I mean, I'm not laughing, but have you ever seen those? There's that comedian who's like, then they try to hide it. Why did they tell them?
And I saw.
everyone.
I saw that before on a ship where someone started choking and then all the waiters like blocked it so no one could see.
Yeah, they like dance around you and then they like roll out. Yes.
Yes. Yes. And I watched Dr. Odyssey. Do you watch Dr. Odyssey, the cruise doctor?
It's next on my list.
You have to watch it before you go on the ship, the cruise doctor, because we were like, after watching Dr. Odyssey, we know, well, we've seen some things that can go on wrong on cruise ships. But so we had a couple things happen on our ship. There was one heart attack, and unfortunately he passed away. And then there was another stroke, and I don't know what happened to the stroke victim. So it was a weird.
Why are they alerting you of this? Why did they alert everyone?
Because that you hear across the loudspeaker to the whole ship, they have a code for it. They have a code for it where I can't remember what the code was for heart attack, but they're like, da-da-da, in room 6228, da-da-da, in room 6228, da-da-da, and they keep saying that, and then the crew or whoever needs to go goes. But then we knew some people who knew all the codes, and they were like, oh, that is a heart attack. And then the next day, they're like, whatever the other code for stroke was in room 50, and so we're all close to our room.
I get it, but how did you know the body? Like, who did you ask? Because clearly you investigated this more. If you knew the body stayed on the ship and you knew he died.
Because there was, the Facebook group, you can become close and friends with all the Facebook people from the Facebook group of the cruise. So they were part of that Facebook group, and like people knew people, and they're like, oh my gosh, we helped him. We did CPR on him. We were doing CPR while we waited for the cruise crew to come. And unfortunately he didn't live. So this is just like, you become friends with so many people on the ship who are in the same circle.
Okay. I was like, you clearly investigated a little bit if you knew that. That's crazy.
Well, word gets around on a ship.
Yeah.
And then all the workers were acting super weird. Like our stateroom hostess was acting very strange.
That is crazy.
That has never happened to me. What?
I think it happens all the time. You just don't know that. You're not privy to the information.
I guess.
Yeah.
I guess. Right, because we did see that person choking, and then they were like all hiding them.
Dance around. It's terrible. It's terrible. Okay,
but
Jenny,
so anyway, if you hear these codes, you probably never heard. I've never heard these codes before on the cruise on a loudspeaker.
I never have either, at all.
Yeah.
But only switching gears, just because we do a trading show, not a cruise line show. I just want to look at the SIBO's most active, because it's one thing that I didn't do all week as well. Even when we were doing all this crazy stuff, I didn't even get to bring it up with a lot of people.
Yeah.
So take a look at this. SPX March 17, which is today's 5,700, 40,000 have traded. Let's see. Let's go take a look at that.
What is a little more interesting, because that's today's. That's going to be gone. But I think it was more interesting, the SPY April 11th, 455 puts. So that they're much lower, 455 puts, because we're trading 560. Those 455 puts in April. I'm curious to see what the open interest is.
455 puts in April.
I mean, look how low those are.
Yeah, but they're still worth 30 cents. Oh, where's the open interest? Hold on, let me switch this.
Because I'm wondering, is it someone buying them back?
2,000. There's only 2,024. And how many have traded? 100,000.
No, but what is that when it's 2.24 thousand?
Yeah, what is 2.24? Here's 109. This is 2,000.
Yeah. So that's an opening trade.
An opening trade.
That's scary.
100,000.
If someone thinks that they need the 455 puts in April.
Yeah.
Yeah. That's not too far. Okay, that'll be when you're just coming back from your cruise. If we're trading 445, I don't know if I'm going to do as good of a job managing this account as you did.
Things have gone horribly wrong. Yeah, that's right. Because I will be gone. Let's see.
You're gone the first week of April.
Gone the first week of April.
Uh-huh.
So I'll be back here.
Yeah, and April 11th. Those are the puts.
Yeah. No, it's April 31st. Or were they April 11th? Did I do that wrong?
No, they were April 11th.
Okay, then I've got them wrong, because I went to the end. I went to regular April. Let's go April 11th, 455 puts. Let's do this the right way, because I was wrong in my thing. There's only 38 cents, and 177 have traded, still open.
So this is an opening trade. This is an opening trade. Someone just bought 100,000 455 puts.
And we assume that because who would sell them for this?
Nobody.
100,000.
Yeah.
So let's take a look at this open. I mean, obviously, you're going to see the 100,000, but let's take a look at it tomorrow too. So it was the April 11th, and I'm glad you corrected me on that. I just went to regular April. So SPY, April 11th, 455s. It's crazy.
Right. So like that'll be the week you'll come back that Monday, and those will expire that Friday. Hopefully, we're not trading 455.
Oh my God! I accidentally almost sent that order because I dropped
See, like no one's selling those. You're using $4,500 to make 28 cents. Nobody in the right mind is going to go out and sell those for like as far as the retail trader. As far as retail trader.
For the sake of the show, may I put one in?
Buy one, yeah. We'll watch it.
I did. I'm buying one. I accidentally dropped my hand in and we almost sold it, but I didn't want to.
Yes.
Okay, so now tomorrow we're going to keep an eye on this. Then when I'm gone, you'll have something to take off if we're trading 455.
Oh wait, can you look at Burke? Only because I got the best news ever. You know, I only like to wear Birkenstocks. And yesterday, guess what news I saw yesterday?
What?
They are finally making gym shoes.
They are?
I ordered them yesterday.
Amazing.
So I'm very curious because normally their shoes are very heavy. The bottoms are heavy. I'm very curious to see. I can't wait to get them, and they'll sell out. I bet they'll sell out like this. I'm curious to see if they're heavy like their shoes or if they're light like a gym shoe.
You can't have a heavy gym shoe. It's like an oxymoron. What are you gonna run in like?
Well, but that's what I'm saying. They have shoes that kind of look like gym shoes, but they're not because their bottoms are so heavy. They're that cork bottom or that heavy bottom. So I'm very curious to see how these gym shoes are going to be. Hopefully they'll come and I can wear them to the SIBO on Wednesday.
Ooh. Take a look at this, Jenny. You want to talk about top to bottom. This thing went from 62 to 42.
Oh, I have it. I have it. I got it.
This lost a third of its value.
Way to rub it in. I have the 55 puts, the 50 puts, the 45 puts. I've got them all.
Yeah, that's no good. Not right now. But hey, you know what though? You're supposed to have these corrections. This is what the moral of my story from last week is that this happens. You're supposed to have correction. Things don't just go in the same direction all the time. And that's what implied volatility shows you, is that when there's an implied volatility, the stock is priced to move.
And it's not a healthy market if we just go straight up, right?
No.
I think this was just it just seemed like maybe too much too quickly. I like the back and forth chop, but we were just, for the last 2 weeks, mostly just down.
Well, you know what was crazy too is it really does affect options traders because you have to take action or you will take ownership. It didn't really affect like my son's account. I mean, he's got 2 puts in there that 2 puts, that's it. The rest are just stocks that he was buying. And he came home from school being like, oh, this is a buying opportunity, and went in and started buying more things.
Well, I got off the ship and logged into my son's account, and it was negative. He may have gotten a margin call while I was gone, and I don't know if he answered it. And he probably wouldn't have known what to do because he couldn't get a hold of me either. Like, I was on the ship. I told him, if you need something, call Grandma. But could you imagine if he was like, Grandma, I got a margin call. What do I need to do?
I mean, he should have called me if he got a margin call because I know he's got my phone number. But that's pretty funny.
Well, it was good to see you, Liz.
We are out of time. It is 10:58. I'm going to and I hope I'm appropriately dressed. Going to a golf lesson right now. My one of many. Can't wait. Dusting out the old shoes. My kids are old. My son now works at Cog Hill. I'm going to be going back to my golfing days.
I think that's great. I think that is excellent. Maybe one of these afternoons I'll join you.
Yeah, I can't wait. So first lesson, we'll see if I can still do it. All right, Jenny, it is wonderful to have you back. We are going to put more trades in tomorrow. We're still pretty good with our buying power.
Yeah, we'll be in Chicago tomorrow in the studio.
Yeah, and we're going to go over, and I'm glad we're doing this. We're going to go over what the buffer trade is, because that was a headline, and you and I both know that those headlines, we can break it down because the tasty traders are so much smarter.
All right, everybody. Have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow, everybody.
In the world investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Zach, South Carolina, how are you, my friend?
Hey, I'm good, guys. I just wanted to let you guys know and Tasty Nation know that I've been following you guys for 3 years. Where else can you call two real traders? They pick up the phone and answer your question. There's so many so-called traders out there that give you vague strategies and want you to buy their course to learn more, but you guys at Tasty put all your info out for free, and all you ask in return is for us to use your platform. Thanks as always for what you guys do.
Love it, man. Thanks.
Thank you, man. Thank you. I really appreciate it. Very kind word.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. Got my man, Mikey Butler, and of course, Ryan Grace in the house with us today for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. And more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever, just come hang with us for the next hour of the day. Get to spend it with my buddies, Mike and Ryan. Ryan, how are you, sir? Happy St. Paddy's Day.
I'm doing well. Happy St. Paddy's Day. This was, I'm ashamed to say it, this was my first sober St. Patrick's Day in all time.
That's a really rare occurrence for a Grace brother.
Yeah, right?
I know that must have been really tough for you.
Kept the monster in the cage.
Yeah.
Yeah, took it easy. So I'm feeling pretty good.
Good.
How are you guys?
We got after it.
Yeah.
We got after it.
I think yesterday was the lowest amount of steps I've taken in quite some time.
Couch day.
Yeah.
Couch day.
All right.
Recovery, watching the players, But yeah, went out Saturday. One of my friends had some extra tickets on the river at like one of the high rises. They were doing like a brunch thing. So I was like, okay, I'm going to do that. And then we met up.
Yes.
And then one of Mike Logue's friends met up with us late night, and he was like, "Guess what? We're doing whiskey shots." And I'm like, "No, please." And that's how that night ended. So yeah, it was a wild day.
Even if you aren't drinking, it's quite the spectacle.
Oh yeah.
Just driving around, and I think people get it. But for those that aren't in Chicago, I'm sure there's obviously other cities that do it well. But man, it's almost dangerous out there. Like if you're outside after 7:30 a.m., like everyone's drunk.
Yes.
Fall down drunk, like at 9 a.m.
Yeah.
Yes.
And there's the roads, like all the streets are shut down. Like all the streets by the river are shut down. So it's just people walking everywhere. You got all, the suburb people coming in to just go absolutely nuts.
Yeah.
We saw some crazy stuff.
Yeah, we did.
Yeah,
we did.
But it was fun.
What's the craziest thing that you saw? Can you speak to that on the show?
I saw someone just like laying on the ground, like on the bridge.
Okay.
And
like in the middle of the road?
At like 8 a.m.
Yeah.
That sort of thing.
You can't really do that because that's like where people are crossing.
Yeah.
So just like stuff like that.
Yeah.
Which goes in line with what you would expect.
Yeah.
But yeah, that was probably the craziest. Luckily, I didn't see anything violent. Everyone seemed to be happy. I think when you have a nice sunny day, there's less of that.
Weather helps for sure. It also amplifies it. I guess it probably made it much, much worse in that case where compared to years past, maybe it's 30 degrees and windy outside, 70 degrees, you have a reason to party.
Yeah.
Yes. I will say this year was more lax than I remember. It was more like there were just people out like boozing on the streets.
Yeah.
Which I feel like is kind of a new thing, maybe the last couple of years. But this one was like everywhere you went, there were just like people drinking on the streets and sidewalks and stuff.
No laws in Chicago anymore.
No.
Pretty much. That's what it seems like. That's what it seems like.
But yeah, it was a grand old time.
Awesome.
Yes.
What do we got going on? Oh, we actually are getting the little rally. We were calling for the rally in Bitcoin before the show started.
Don't say it too loud, dude. I don't want the gods to hear us here.
But yeah, kind of a quiet way to start the week after last week's mayhem.
Yes. Vixpiration this week. You have option expiration, another big one. March is another, big quarterly expiration at the end of March too. So definitely a little bit of chop here. You got E-minis up 15 and change here. Not quite the high of the session. We got as high as 57.26, so about 18 to 20-ish points higher from here. We've had about a 70-point intraday range, 75-point intraday range. So certainly seeing some price volatility continue here, with volatility itself still relatively high, but coming in a little bit. NASDAQ up 7. It's been a little heavy today. You have some stocks dragging it lower. Tesla cannot get out of its own way. It's down another $13 and change today. Nvidia as well down $2. Some of the less polarizing stocks than those two. Amazon down below 200. Apple as well, kind of near the lows, 211. Google has just been dead money for 2 months or so. Definitely hasn't been much strength in the big Mag 7s. Dow up 253. You got the Russell up 16. The Russell the strongest of the group today, with bonds a little higher, rates coming down a little bit. Oil up 44 cents here, 67.35, having a little bit of a bounce. Volatility futures down 71 ticks, 20.15 on the vol futures. If you look at the curve, it's certainly starting to flatten out here. We've been talking about how there has been some backwardation. Not so much anymore. It's very, very flat. Maybe just given that we've had kind of a chop, or at least a bottom. Has felt like we've put in a little bit of a bottom. Maybe that's the reason there. As I said, bonds up 23 ticks. We're actually near the high of the session here. We were about 10 minutes ago at the highs, but they've been strong today. Gold and silver have both been super strong. Gold's at above 3,000. Silver down 21 cents today, but has had a really nice rally. And then, as Mikey was saying, Bitcoin having a little bit of a bounce back here. You got the futures down 800. Spot is basically unchanged here, up $150. It's been a choppy ride in Bitcoin the last couple weeks.
It has been. But I don't think that it's specific to Bitcoin or crypto. When you look across the market, what you're seeing here is impacting everything, right? You talked about Tesla down, Nvidia down, the NASDAQ down. We had that breakout in volatility. I've got some slides here that we can kind of walk through more of the macro drivers if you want. But I think it's all really the same thing. And you're in an environment that really historically, you've seen Bitcoin and other crypto assets perform pretty poorly within that environment. Same thing that we're seeing here with long duration tech stocks. So not surprised that Bitcoin is lower. Also blame it on myself. I haven't been here in a couple weeks, and it seems like every time that we don't do the show together, we get this big pullback in crypto.
Yeah.
So maybe the opposite will be true as well. But I think, as you mentioned, you're seeing volatility come down a little bit. I see in the chat here, talk of market stabilizing. That's what you need to see. This breakout in vol that's been, pretty bullish in momentum terms, that's just going to see positions getting taken down, degrossed, deleveraged, obviously, and, a lot of this concentrated stuff is being unwound. No surprise that, again, Bitcoin is lower. But if we do get, post maybe FOMC, we get a little bit of clarity here, a little bit of stabilization around interest rates as well, we might see lower vol. I think that's going to be supportive of crypto, but structurally here in the short term, it hasn't traded very well.
And a quick little update, we did add Ryan to the follow page. We're going to get him up and running with some crypto trades here in the future. So if you notice, he is on there too. Ryan is back, one of the OGs of the follow page.
Yeah, it's been a while. The approach that I'm going to take there is going to the best of our ability. Sometimes you're not always looking at this and posting trades. We're going to try to really stay on top of it, but want to take a systematic approach. We've done some research where we look at the different trading ranges around implied volatility or realized volatility levels. We've talked previously about rebalancing based on Sharpe ratios on a quarterly basis. So you're going to see a lot of that there. We're going to trade it more actively, but it isn't going to just randomly be, hey, the market's open, let's buy some crypto today. We're going to really try to come at it with more of a rules-based approach.
And we've last week we had a couple questions because I've kept your moving averages on my charts. I like how they look.
Awesome.
They're and I think we've talked about it before. I'm not a super technical guy, but it's fun to see how these things change and kind of just use them as sort of a indicator for short-term direction or maybe to help build an assumption or whatnot. You use them very, very much in the crypto space.
Absolutely.
Can you give us, and if we can jump to the platform real quick, I'll pull up, my just on Bitcoin just to kind of show these. How do you look at all these? Because I have the 8-day, the 13-day, the 21-day, and then I put the 200-day on there. But you mostly use the 18, 13, 21, correct?
Yeah, and these are the Slim Ribbons. These are from Steve Miller, tastylive, Tasty Trade, OG, if anyone remembers his show. And so I've kind of always used these indicators, and I think they work really, really well for momentum. And when you have something like crypto, which doesn't really have a lot of fundamentals to trade off of, is correlated to the broader macro environment and let's say U.S. equities at times, but not always, I like to trade the momentum in there. And so the way that I use this is, you kind of look at this just sequentially. And you could break it down so that you're looking at this on a 4-hour basis or 6, 12-hour basis, whatever. You're going to have more noise in the short term. But you look at the daily, and that's going to precede, obviously, the weekly. And then when you start to really see those things break down, let's see, a bit of a moving average crossover or kind of like a transition in terms of whether you're bullish, bearish, et cetera. Once you start to see that, that can act as a pretty good indication that the market is starting to price in or digest new information, starting to see a little bit of a trend shift. And I think that's really important because with crypto, these things absolutely trend, similar to currencies. And it's something where you can't really put on a short position. There are more ways to do that today, but for the most part, it's kind of long only. And when you get outside of the U.S., you look at perpetual futures markets, there's a lot of leverage embedded in there too. So momentum really matters and the trend really matters. And you need to absolutely be aware, as much as you might love this over the long term, hey, 2030, I think Bitcoin's going to be $1 million, whatever the narrative is.
It's a long ways away.
Right. You don't want to get caught up on, a monthly basis in those 30% drawdowns. Or you want to understand when you're really kind of detached or extended from where we've been, right? Super, super bullish. You can think about this in almost RSI terms as well. But when you're very, very overbought, maybe that's another signal to get out. And so when you start to see those moving averages really widen out, that can help you with picking spots to sell on the upside as well as on the downside when you're looking at them on the chart. But for our dashboard, I look at price momentum, again, just as buy or sell signals. I want to be more aware of that longer term trend. So the monthly is really important to me. The weekly is important. And then you're going to get some chop, obviously, with the daily in between there.
Yeah.
But if they start to trigger in sequence almost immediately, it's a sign that either you want to get in because you just had a bullish reversal, or you should be getting out of this and reducing positions. And so a couple things that we're seeing that I would argue are concerning here is that ETH has been pretty bearish for some time on a relative basis, much worse than, say, Bitcoin or some of the other tokens in there if we compare it to Solana. That triggered much earlier than others, and so maybe that would be used as a way to just get out of ETH and you kind of rotate into something like BTC. But what we're seeing there is a continued breakdown, and more recently, you can see that versus just about everything else, we now have transitioned from a bullish monthly moving average kind of signal here to a neutral, which the next step there, if this continues lower, is obviously going to be that bearish signal. And those things tend to precede bull and bear markets over time. So you want to pay attention to it. It is going to be backward looking, a little bit slower moving, obviously, as you get into those longer time frames. But that's how I use this, just to try to stay in front of a trend change and then ultimately stay on the right side of the trend. Because you look at this environment that we're in right now, and naturally you want to try to find bottoms short term to pick trades. Yeah. But arguably, this is an environment where you're really looking just to kind of short these larger rallies within that expected weekly or even monthly move until that shifts. So I know that's a lot to kind of unpack there, but that's how I think about it or how I use it.
Let's jump to the first slide real quick. I'm glad you brought up, because a lot of the crypto trading, there's not much you can do strategically. It is a momentum trade right now because there's not really a deep liquid option market. The perpetual futures are overseas. It's hard to do anything strategically other than trading on momentum. So when going back to the indicators you use, are you looking for like 1 day trades, 2 day trades? Like, is this like, you see the 8 day, start to trend higher versus the monthly, and that's a 1 week trade for you? Like, is that the sort of?
It's probably more of a signal than anything. There could be trades within that where, let's say that we're modeling based on implied volatility, and we want to have an understanding of what volatility is doing as well. Is it starting to trend higher or is it trending lower? But using that volatility and using the spot price, as you guys know, calculate a 1 standard deviation move, using the implied as probably the best input. But for a lot of crypto assets that don't have options markets, you could use a realized volatility. I think it's better than nothing. Yeah. But calculating that move, and then within that environment, if I'm saying, the easiest one to trade would be, we're looking at green across the board. This is super, super bullish. I want to buy then those pullbacks. If I know that we're bullish in terms of momentum on the daily, the weekly, the monthly, and I know what the 1 standard deviation range is given the volatility, that's going to change, obviously. But that's an environment in which I feel very comfortable continuing to buy the dip versus where we are right now. You're kind of in neutral territory. I mean, you got that bearish signal early on, and I think if you look at this, a lot of these signals triggered when you got the crossover right around the beginning of February. So regardless of what was driving that price action, you got that signal in the market. And sometimes you do get chopped up where, okay, I'm bullish, I've now quickly shifted to a bearish environment, I'm going to get out, and you could see a very quick reversal back into that bullish environment. But more times than not, what I've observed, and you can run the numbers on this too, these signals work as a pretty good sign that you should either be getting out of a trade or into a trade, and at least just pause and kind of reassess and see how it plays out. If you had done that, again, at the beginning of February when a lot of these daily and then subsequently some of the weeklies showed up over the following weeks, you at least sold at some higher prices than where we are right now. But it's not necessarily giving you an indication yet that you should be buying. I'd probably wait for that daily to kind of shift back to at least neutral when everything's bearish right now, short term.
Are you a little surprised the volatility has remained relatively low? I know that you do have the vol skew to the upside, but just given the way the market has been and just the overall sentiment in the world at large right now, that volatility in these crypto assets really hasn't like exploded.
I'm surprised that when you look at implied volatilities for Bitcoin especially, it's not a little bit higher. That said, this continues to be something where people have these arbitrary levels that they kind of pick or have anchored to in their minds. And so even in the derivatives market, what do you see? Well, you see a bunch of call buying.
Yeah.
You don't see on these spikes to the downside a huge spike in implied volatility. We did get up there, but just like we did in the VIX, it's been slammed down over the last week or so. That said, I think if you were to get a larger move in the equity market, because I would argue that when you look at what's happened in equities too, it's been pretty persistent, but it hasn't been extremely violent. We've had a couple days where we were 2 to maybe 3% down. It was day over day, and so it felt a little bit worse than what you've maybe experienced in the past, where 5% down, VIX spikes from 20 to 40,
and then it's over. And you get that one. This has been
controlled.
It's been controlled, and it's been more painful. Like the grind, the 1% down move for 2-3 weeks where you get the 10%, 12% full to the bottom. That is more painful than the 1 day spike where everything just gets, you get whacked and then it's kind of like over after that. This has been more painful. I feel like.
And I wonder too, I don't have any data in front of me that supports this, but I just wonder with kind of the further institutionalization of this, and you see more participation, just the assets under management growing and some of these ETFs that now have options on them, at least in the US. Is there a volatility dampening effect as a result when you have these call overwrites? Because you can still get some decent yield going out even just to the 20 delta strike in IBIT a month out. You're getting paid
10%. It's amazing. I mean, that's Mikey's trade for the year has just been selling premium in IBIT on both sides of the market. It's a no-brainer.
Yeah.
I mean, in terms of volatility, obviously you have that risk.
Well, and I think we look at these levels where we're not, we're seeing the pullback in the market. So you've got Bitcoin, it's down 22% on a 3-month basis, and everything else is much, much worse, with maybe the exception being XRP, at least with what we have up on the screen. But we're still talking about assets that have implied volatilities, annualized volatilities of 55%, 72%, and they're sticky between 55 and 65 or 75 and 85. So these are very elevated levels. It's just that we're coming off of realized, which can be well north of 100 at times. So I would argue that volatility is still pretty high here, even though we're not seeing a spike.
We're used to. And
which I think you only are going to see that, certainly north of 100, obviously, when you get the up moves. Given it can only go to 0. But yeah, you would expect maybe a little bit more of a move. But you did get a pop in vol in there over the last couple of weeks. It's just come down very quickly.
Generally speaking, the overseas markets, option markets, is there any selling of premium, or is it all just call buying?
I don't track it that closely.
I think it has to be all upside. Like, it's got to be a 3-to-1, 4-to-1 type situation.
Well, I mean, on the other side of that, I'm sure you have people that have a spot Bitcoin position that are going to sell the 3-month or the 6-month, so maybe some longer term stuff north of 100,000 strike price. I think you do see that in there. But with this especially, I mean, you tend to see those vols really spike on the upside, which I think is an indication that people, bid the calls up on the tails.
No doubt.
Yeah, the IBIT position is nice because it's a smaller price product, and even into this move, into the Bitcoin move we've seen, IBIT's gone from 60 to 47. So, and the premium is certainly representing a larger range over time. So even if we chop around here, selling premium on both sides can still be nice. But yeah, wild to see the big movements in the markets. And at the end of the day, I mean, Bitcoin's still only down 17K from 100. From the beginning.
It's moving
of
with the market. It's the same. I mean, it's a similar risk asset.
Yeah.
And
Yeah, I don't have it on my screen, but I'm just quickly trying to pull up where we are, relatively speaking, if we look at Bitcoin versus gold. Okay, so here, let's just look at this on a year-to-date basis. We've got Bitcoin down about 11, 12% or so. Russell's down almost 8. NASDAQ's down 6.5. S&P's down 4. Gold's up 14% year-to-date. On a one-year basis, gold's outperforming, up almost 40%. Bitcoin up 23%, and then you still have, the NASDAQ and the S&P in positive territory while the Russell's flat. So I think this is a correction here in the short term, and again, we've got some slides to illustrate this, but that growth scare and kind of the inflation deceleration popped up here, and that's just an environment that you see a big risk-off move quite often.
Peter Schiff couldn't be any happier.
Sure, he's excited
with the situation. I've seen some "I told you so"s already. They're starting to come. He made some fart jokes I saw, or was that poop jokes? I think he had one of those where he was like, like my poop's unlimited or is limited too, but that has no value. Something like that.
Well, on a 5-year basis, and I think you have to look at this from a very long-term time perspective, you get Bitcoin up 1,600% and gold's up about 98%.
There you go.
Yeah, and the implied volatility in Bitcoin, the furthest that we can see in the Bitcoin futures still covers a 16K range in the 74-day cycle. So volatility is certainly here to stay in Bitcoin, but nice to see that if you were bullish a couple months ago, you can get in at certainly lower prices than where we've been at.
Do you have any interest in some of the newer coins that we've launched? Because we had Link, XTZ. What were the newest ones that were?
XTZ, XLM, Chainlink, Cardano, which symbol is ADA, Shiba Inu, another meme on Ethereum, SHIB or SHIB, SHIB. Pepe is coming soon. So there's a couple that are in there right now that you'll see the data feed isn't being pulled in yet. Team's working on that. So we've got a few more that we're going to launch. Those are SUI, S-U-I, or SUI, I don't know how people pronounce it. SUI is the ticker, Aptos, APT. Those are a couple that I'm maybe more interested in terms of layer ones that are high performance blockchains. So I think you can kind of compare those more to like a Solana. We're seeing a bit more activity start to materialize there as well. My portfolio, though, is primarily in Bitcoin, Ethereum, Solana. I have a small bag. Maybe the other 10% of the portfolio is in a lot of these other things. Some layer twos too, like Optimism, Arbitrum. We're going to be bringing those tokens to the platform as well. But still kind of just sticking with what's been working for me. But I'll take shots here and there and start to add to positions, especially on these things that can go up or down, 80%.
Who needs 55% implied volatility when you can get 95?
Exactly.
Double or zero.
These are things that just, if this is an environment where Bitcoin is going to get hit pretty hard, then the rest of the stuff is going to trade as if it's going to zero.
Yes.
And you really need to be patient. You will get into that environment that looks a lot differently. I mean, really the opposite of where we are here today. And that's when this stuff just goes into blast off mode. But we're absolutely not in that environment. So I kind of just am waiting around until I add more to those positions.
We do have an interest rate decision this Wednesday. Assuming everything goes as expected, which is that we stay right here. How do you see the Bitcoin market reacting? Kind of status quo, where it moves where the S&P and NASDAQ moves, or?
Yeah, absolutely. I think if we've got a couple slides here, we could just jump ahead to maybe slide 6 in the decks. This is going to be your cross-asset correlations updated as of this morning. You're going to continue to see that positive correlation in the short term with risk assets and cryptocurrencies. You're going to see that inverse correlation with bonds. This is a reflection of the environment that we're in. Unless we start to see, serious pullbacks in the VIX and volatility come back down to, let's say, 15, I don't think you've necessarily found a bottom in crypto, and I don't think you've necessarily found a bottom in the NASDAQ or the S&P just yet. Probably trading closer to those levels. I think maybe what's more important here than the FOMC, given that there's no expectation for any change in interest rates right now, is probably how we trade post-expiry for the monthly here. I think that's going to determine direction just based on hedging flows and kind of where we are right now. That said, I think you're nearing a bottom in crypto. When I say crypto, probably BTC is the best proxy for that. Could you see 75, mid-70s again? Absolutely. That's what's implied when we look at current spot price. And I would want to see this move well above probably about 88,000 and hold there for those momentum signals to be then short-term starting to look a lot better than they have been for the last month and a half. So I expect everything again to trade together in the short term, whether that's up or down post FOMC. No real change expected out of the FOMC, but we're going to pay attention to how that shifts in terms of interest rate expectations into the back half of 25. And it's still early cycle, in my opinion, with crypto. Everybody expects us just to go up every single day. You've had that correction. I think it's a buyable dip. And remember, the corrections in Bitcoin are like 20 to 30%. It's not 5 to 10.
Yeah. We've had this discussion too with just equity markets, but the bottom, is it a V bottom or is it a grind back higher bottom?
Oh, I don't think it's necessarily a V bottom unless you got a real catalyst for that. And I mean, look, you could see that
But that's what it's been. The last 4 or 5 years have been just if you miss it by 24 hours, you're out. Like you miss everything.
Yeah. I think it depends. Okay, so it depends on expiration. I don't have the numbers in front of me, but you often get these periods of time where, because there's been so much hedging activity, as I think we've seen here, you have a really big futures position that's going to get unwound on the dealer side of things, and you could get those big spikes, and maybe that then reignites the rally. I think the real catalyst you would need for just, again, we'll call it blast off mode, certainly on the margin.
Really technical term, blast off mode, yes.
So what takes you much, much, much higher in crypto assets over time is going to be a more aggressive stance in terms of rate cuts out of the Fed and ultimately stimulus.
Yeah, QE, just give us more.
And we just aren't in that environment, right? We're clearly pulling back on the fiscal side in terms of spending, at least for now. You have QT that's been ongoing, balance sheet reduction on the Fed side, and you have interest rates that have been pretty sticky here at 4% with this concern over the reemergence of price inflation. And maybe that being somewhat tied to tariffs. And there's just a lot of uncertainty around that. So that's why I don't necessarily expect a V bottom, just given how much uncertainty the market is faced with right now, kind of in the early stages of Trump 2.0 presidency here. But post-expiration, I think you could see a pretty quick rally into a 2 to 3% up move, as we've seen before. But I don't think anything has really changed yet from a macro perspective.
Yeah, I think the pain trade is a chop higher, like we've had to the downside. So I think that's what we're in store for.
We're on the pain trade ship, feels like. But I mean, over 100-point move expected in the S&P through this week. Bitcoin over the next 11 days, plus minus 7K in the futures. So still some volatility to be seen. But yeah, love to see it.
What else we got on these slides?
If we want to just cycle through, I mean, we've talked a bit about performance. It's been short-term bearish. I see no change there. Very quickly, if we just hit, I think slide 4 in the deck, Bitcoin market cap dominance stuck at 62%. That's not a sign that it's altcoin season by any means. When we look at relative performance, ETH versus BTC, just continuously getting crushed there. Solana versus BTC getting smoked as well. When we break it down and we look at Solana versus ETH, a little bit of outperformance on the Solana side. There could be maybe a very, very, very short-term trade in terms of some relief with Ethereum. It's been beaten down, relatively speaking. So that might be one thing to look out for there. But the trade has been for some time now just to stick with what's working, and that's been Bitcoin. And I haven't seen any sign of that changing as of yet. Expected moves, nothing out of the ordinary. You could easily get back into the mid-70s. I think if you get closer to 70, and I've written about this over the last couple of weeks in the email newsletter, that's an area that, to me, I would start to add more to that core position. I mean, you can get some bounces, obviously, in between, and you can have some trades. But I think, a bottom that I would look to buy or maybe add some size to is probably closer to 70 if we get there. ETH probably goes back to 15 the way that it's been trading. Your expected move in there is 1,700, 2,000 on the upside, but it's traded really poorly, relatively speaking.
It seems like the and this isn't much on the ETH side, but the Solana side, the meme coin buzz has kind of died down.
Absolutely.
And I don't know if the volumes are reflecting that too. I imagine they are, but we haven't had any discussions about the Trump coin. It's almost like that.
Trump coin was the end of it.
Yeah, but that that occupied our brain for a good week, and now I forgot about it until just now, and I feel like that's kind of happening with I don't see the same meme everybody launching meme coins anymore. It was such a short blip of time. Is that it? Is it over?
I don't think it's over in the grand scheme of things, but absolutely reflective of the macro environment we're in when you just look at capital flows, and then the blow up that we've seen in whether it's AI agent tokens or it's in memes. That said, that does not mean that memes are dead or AI agents are dead or that we're not going to see this happen again. You quite often get these extremely violent and volatile cycles, and they're very short-lived in crypto. And so that narrative kind of shifts from one area to the other. And it's really just, in my opinion, existing capital flows within the space. It's not necessarily new money coming in, right? And I think the new money coming in, and we can speak to just the huge outflows in these ETFs over the last few weeks as well, but that new money has been coming into your Bitcoin funds, and hence you have Bitcoin market cap dominance that's been stuck at 60%. So I think, there will be another narrative, or you'll see a reemergence and some of these things. You've got people in here that are continuously building regardless of what the price has been doing. But you have these hype cycles, and it's just super, super speculative because none of this stuff had any real fundamental reason for being worth the billions and billions of dollars it was worth, and now it's back down to it's worth 10 to 20 million versus where we were. But I don't think that means that it's dead. I think that trade will pop up again. It has pretty consistently historically that's been the case. Yeah. But in this environment, you're just trying to catch a falling knife, and it's maybe going to consolidate sideways, but there's no real catalyst for it to go up at the exact moment.
Yeah, I bet that Google Trends chart is probably so perfect. The keyword of meme coin or something probably correlates to it probably has a 90% correlation to tops. That's what it feels like.
Yes.
At least in the recent past.
Yeah, these things burn so bright that they just burn out.
Yeah.
But there are trades, right? I mean, if you can catch some of the stuff early, if you're in the Telegram groups, the Discord chats, et cetera, there is alpha there. It's just so quick.
Yeah, you gotta be in and out. The ETF inflows. Do we have a slide or outflows? Do we have a slide for that or no?
I've got just a couple headlines here towards the end of the deck that speaks to this. Crypto market news. So a couple things here. Solana futures have recently launched in the CME. There's two sizes. There's a 25 SOL and a 500 SOL, more kind of institutional sized. And then just a quick point on capital flows. So when you look at global crypto funds, not just the ETFs in the US, but globally, and there were many smaller ETPs or ETFs that existed prior to the launch of the US Bitcoin ETFs. But you saw 1.7 billion come out last week. That's the 5th week in a row. And that takes the 5-week total to 6.4 billion. So
incredible. A lot. That is a big number.
I think again, it's going to be volatile. These flows can move back into these products, but you kind of live by the ETF, die by the ETF in that sense. So explain some of the quick selling pressure that you've seen.
That money's not going in the ecosystem though.
Not necessarily.
Speculative up down money.
And I think it also it shows kind of a rebalancing as well. The same thing that you've seen in Mag 7, you've seen in tech from a portfolio allocation perspective. And, there's a lot of signs of that too. If we go to the slide 2 before this one, we look at the themes, right? So I've got macro drivers, sector performance reflects defensive positioning. Look at the positioning that you're seeing or the performance in that positioning if we key in on the 1 month and 3 month basis, right? Healthcare, utilities, real estate, consumer staples falling a little bit. But if I look at those bond proxies, real estate, utilities following what we're seeing in TLT, right? That's on the other side of consumer discretionary, down 13%, 18% on a 3 month, tech getting crushed, comms, financials to some extent. This to me just reflects very defensive positioning, risk off in equities, which represents again that market environment that we're in. It's no surprise that we're seeing the price action that we're seeing based on the economic data that's starting to unfold. And to that point, if you go back one more slide, this isn't the best indicator, but it works, right? So here is the Atlanta Fed GDP nowcast, right? So this is going to take in data and it's going to give a forward-looking indication based on this model of where GDP for the quarter is going to be. It's not perfect, but this is, I think, useful in explaining what the hell happened in February. Well, in addition to kind of the Doge cuts in fiscal spending, which the fiscal side of this was really a huge driver of GDP. If you look at the last 12 to 18 months or so, last couple of years, really, you're seeing that unwound. And there's just a lot of uncertainty as to what spending is going to look like there. You've got growth slowing. You look at oil prices, you look at PPI, producer price index or producer prices that feed into consumer prices. You got CPI slowed here as it was reported recently for February. And again, it's just reflective of this environment where you have a slowdown. Now, it might not be that deep, but it caught everybody off guard, or at least as it started to really materialize throughout February. But you had those really quick triggers. If we go back to the momentum signals for Bitcoin, it got you out, hopefully. But this is what I think explains why we're seeing, it's not so much like people hate Elon Musk. No, it's that stock, as well as NVIDIA and the NASDAQ, represents an exposure in a portfolio that you absolutely don't want to be in this environment, just like you don't want to be in crypto right now. From the kind of risk, perspective of an institutional investor, portfolio manager.
They still have the Bitcoin position, right? They never did anything with that.
I think they still hold some on the balance sheet. I don't really know. Yeah.
I think it was like a fairly big, wasn't it like 400 or 500 million that they had?
It was a big number. I can find it.
And I think they kept it. That's an interesting little piece there.
Early 2021, invested 1.5 billion in Bitcoin. That news sent Bitcoin soaring over 10K in theory, allegedly. Yes. But 1.5 billion in early 2021 is a lot of coins.
Yeah, that's an interesting proxy. Where's Saylor been? I saw some stat that he was like 20% of the buying or something.
Yeah, I haven't seen that. I know they're still purchasing some, a very small amount as of recently. But I haven't followed it that closely. But I believe he's still in the market.
What's your view on that situation? Is he the ultimate trapdoor?
I don't know. I haven't looked at how that's structured. I think Bitcoin would have to go close to zero. Sub 10, I believe, for all of the damage to be done. But I don't necessarily think it's something where the whole MicroStrategy blows up, right? This is still a company that has
strategy.
That has cash flows.
Not micro anymore.
Just strategy.
Just strategy. Rebranded. Dude.
Macro strategy.
Yeah, there you go.
Yeah, I don't know. I mean, he's going to continue to buy based on what he said, and he has a price target that's much, much higher, whether he's right or not. I think it maybe becomes less relevant over time, but short term when there's nothing else to look at, I think it's okay. Where is he at? And sometimes those flows are fairly large.
He is in the same realm as like the meme coin Google Trends, where he is more relevant when Bitcoin's moving higher, and less relevant now. Like when it's not the focal point of markets, he kind of goes into the background, and then he pops out and gives you like a "I told you so" when we moon, 10, that's like his role is like the gasoline. Rather than like the fire starter.
He performs that role very well.
He does.
Even into the sell-offs, he tweets things like, "We simply do not sell our Bitcoin. We just buy more."
Yes.
Someone was like, "What if Bitcoin goes to $1?" And he's like, "Well, then I'll be buying more Bitcoin at $1," like something like that. He's a wild one. But yeah, I think he'll continue to be a focal point, especially when Bitcoin moves higher consistently, just because the public sees him as like the person that's benefiting the most because he's running this crazy company here. So, but yeah, Bitcoin. But what's interesting is Bitcoin hasn't moved that much higher from the lows. I mean, it certainly has, but MicroStrategy bounced from 210 to almost 300 again in the last week. So
you get that extra vol.
Yeah.
That's really the way to trade it, through MicroStrategy or Strategy Now, or some of those levered ETFs, whether it's long or short, whatever your view is.
Is it MSTU? MSTU?
That's
2 times long. Yeah.
The 2x long MicroStrategy fund.
Who needs 100% when you can get 300% applied volatility?
Oh, man.
So good. New app, new coins. We have the Tasty Crypto up on the right side here of the platform, so you can see the interface on the mobile app. Lots of new stuff coming.
Yeah, a couple things I'm excited about there. On the mobile app, we've added a new crypto tab, which I think we've talked about on the show here. Certainly we've talked about on the network.
On the Tasty Trade mobile app.
Yes, it's on the Tasty Trade mobile app. So for any new users, you're going to see a crypto tab now. It consolidates everything in one place. So you've got the tokens that are available to trade. You've got the futures, the ETFs there. It acts as both a watch list as well as a way to put on your orders and enter into the order ticket there. So I like the fact that it's all in one place. If you don't have crypto enabled on your account, you can do that at Tasty Trade through Zero Hash. It's going to be available for cash and margin accounts, not yet available for IRA or entity accounts. But if you have a cash or margin account, you want to enable crypto, you can do that. It's pretty easy to do it. And then if you want to transfer crypto in and out of the brokerage ecosystem, you could do that as well. You have to also enable crypto transfers, but you can start to do all of that from the same page, the single view now. And then, continuing to add more product and some more features that are coming soon in the development roadmap as well.
Yeah, I like this markets page you have here. This looks new. The fear and greed index.
Oh, if you're on the so if you're on the Tasty Crypto wallet, Sorry, I was speaking to the Tasty Trade app. On the Tasty Crypto wallet side, big release as of last week. We wrote about this in the email, so there's some more details there. But we've got this markets tab. You have a dashboard now, a watch list. If you want to add tokens to the watch list and track prices, you can beyond just what you hold at your address. The thing I like about this is we've added a news feature, which might not seem like that big of a deal, but it's very easy to use. If you tap on any of the logos on the left-hand side of the watch list, it's going to pull up what feels a lot like TikTok or Instagram, going through the reels or the stories. And then you can read those different news articles, or you can kind of cycle through them if you wish. We've made some improvements to the DeFi dashboard, so that's things like connecting to Uniswap and being able to kind of discover other protocols you can use. We've added a couple more blockchains. And then maybe the biggest update here, kind of hidden in some sense in the platform, but when you log in to your Tasty Trade account, previously you could log in and you could transfer crypto out of the brokerage. So if you wanted to use ETH on chain, you wanted to swap it for something else, you could do that. Now you can buy crypto at Tasty Trade through the Tasty Crypto app.
Yeah.
So the cash balance that you have, it'll appear. You can buy the tokens that are available, and you can do that right there directly through the Tasty Crypto interface. It is in your Tasty Trade account through Zero Hash, but you can use the Tasty Crypto app interface as a front end.
And that you enable that a couple clicks to have that.
All you have to do is just log in, assuming that you had it already enabled. So if you're trading crypto at Tasty Trade already and you want to just, hey, log into my Tasty Trade account in the Tasty Crypto app and buy Bitcoin, buy ETH, whatever you want to do, you can do that right there in the Tasty Crypto app, all in one place.
It's awesome.
Beautiful. I've got the newsletter to get on the newsletter that Ryan's talking about. Comes out every Saturday and Wednesday. Pinned to the top of the YouTube chat, tastycrypto.com. You can find it there as well.
Thank you.
You got it. Yeah, the markets literally haven't moved since we started the show. Bitcoin still hovering around that 83K level. I'm scanning the YouTube chat for some crypto questions.
I'm looking at your NFTs in this wallet. There's a Tasty NFT.
Got a bunch of random things in there. There's some stuff we're working on. I'll put it that way. So maybe people are getting a little bit of a sneak peek, but
oops.
Yeah, it's okay. We've got a lot of cool stuff that we're working on that you'll see us announce and roll out here in the next couple of months.
And if you haven't been watching the Tasty Crypto show, The Beans, Monday, Wednesday, Friday, they're messing around with some stuff too. And
yeah, Beans is awesome.
Giving some cash away. It's great.
Door prizes. And on the Tasty Crypto show this afternoon, 4:30 Central, we have our first guest. So we've got Volmex. This is a crypto volatility indices. You can think of it as like a crypto Bitcoin VIX, ETH VIX, that sort of thing.
That's cool.
We got the team behind that coming on the show and talking about the product, but also how they're seeing things in the market in volatility terms, strategies where there might be edge at different times. So tune in today at 4:30 Central for Volmex on the Tasty Crypto show here on Tasty Live.
Do they take them all together, like the space as a whole, or is it just like a Bitcoin vol?
I believe they have different indices for different tokens, yeah. So we'll find out more on the show, but there is definitely a Bitcoin VIX equivalent in a sense, Bitcoin Volatility Index, Ethereum Volatility Index. These are all based on the options. So I'm really excited for that this afternoon. Hopefully there'll be some good insights there.
Beautiful. I'll be watching.
Yeah, love that. Brandon is stuck in Mara. I know Mara. I feel like a product like Mara is going to have a hard time with the continuous Bitcoin halving, just because like when you're mining and you're getting paid less and less, but your expenses are going up. In theory, like it's tough. What do you think about some of these products, or are you really just sticking to the tried and true Bitcoin exposure? And
yeah, I haven't been that close to the miners. I haven't really traded anything in here recently. I know there's a handful of them, and you can probably just pick the best ones based on the price performance here. I think the market will give you a signal. But no, I haven't really been in these. I mean, certainly as you get into names like Coinbase, or as you guys have talked about, MicroStrategy, you get into the miners, Robinhood even. These are going to, in a way, some more than others, be great levered crypto proxies. When you look at the correlations, though, it's not perfect. I would say Coinbase is going to be closer to about 80% of the time. It's going to be moving in the same direction. But, those I think about in almost the same way that you would think about a gold miner or an energy company versus the underlying commodity itself. There's going to be more leverage, but it's not always going to be perfectly correlated with price performance. You do have risks that are specific to the company, right? Coinbase, yes, is going to trade most of the time in line with the price of Bitcoin or its performance. But there will be times where, this also depends on trading activity and its earnings, what's happening on a quarter-to-quarter basis. So it's not always going to be a perfect representation of what's happening in crypto or what's happening with Bitcoin prices. But I think if you're looking for more leverage, you want to trade the options in there, there's definitely ways to play it. More so, I've just been in, like I said, Bitcoin, ETH, and Solana.
Yeah, I think the Mara and Riots of the world have kind of lost their luster. There's so many more places to go now relative to like the 2 or 3 years ago when we were really trading these.
Yeah.
MicroStrategy, you have the multiple leverage one, MSTU and MSTY. You have Coinbase, you have Robinhood, you have iBit now. These have kind of been second fiddle.
Yeah.
To those.
Yeah, I think with the ETFs, right, there's just less of a reason, and it's not a knock on any of these. They're great trading vehicles. They could be good investments. I haven't looked at them that closely, but that conversation has certainly shifted given you just have easier ways to get that price exposure if you want it in your portfolio.
Yeah, and I think it just adds to the same narrative of, when markets are selling off and it's a risk-off environment, your Maras, your Riots, your meme coins are going to be like the first to go, I would say, or close to it. But still, even if you're in Mara, it's a $12 stock now. If you're at $17.50, if you traded small and you're willing to take more shares, you could average down that way. The May cycle, this call at 17, if you have 100 shares at $17.50 is my assumption. You could sell the 17 call for 70 cents and just try and get out that way. But yeah, I mean, it doesn't mean it can't go up. It certainly can go back up in a pretty violent way. But like we've been saying, you need more of a macro, everything's rallying type situation before you should expect to see that.
In terms of where you might get some more flexibility, you can trade the options. I'm much more interested in something like the wheel strategy, selling cash secured puts, taking the stock if you're assigned, and then selling a call option against it on something like IBIT.
Yeah.
That's a much more interesting trade to me than trying to figure out which one of the best, which one of the miners is the best opportunity.
Yeah. And IBIT has been moving with Bitcoin price movement. It's got 60% implied volatility right now, even with the depression in the market movement we've been seeing. But 60% IV in a $50 stock, like we're collecting dollars every time we roll. So it's been a really nice vehicle, and as long as it stays around this range, we'll be good for the year-long trade. I just created a butterfly in that position.
Oh, on the upside, the call ratio part? Yeah, to this downside move?
Yeah,
Okay.
so we added the call ratio. So I've got the 50-55 call ratio. I already had the 55 short put. I just bought the 60 call to completely define that butterfly risk to the upside for 20 cents.
There you go. And now you're leaning long. You have the short put that, you'll keep rolling.
Yeah, just in case we engage in blast-off mode, I don't want that upside risk.
Of course not. Why would anybody cap their upside?
Right. I'm looking at IBIT though. I mean, if people are worried about downside here, you can sell calls and buy puts.
The skew is
right.
incredible.
I mean, I'm looking at, let's sell the 55 call 31 days out, 70 cents, buy the 40 call for about 60 cents. There might be something there. That's not the trade that I would do necessarily, but just starting to kind of eye up some of these prices in here. It's interesting. Or you're selling something outside of a one standard deviation move. Surely you could see a continuation of this crash in Bitcoin prices, but you're talking about something that's down, we were almost 20% in the last month or so. What was the number that we had up there on the screen? If I recall correctly.
It's right there.
Yeah, 15% in 1 month, 22% in the last 3 months. Maybe you're down 50%, but I'm willing to take that shot. I'm willing to buy something that trades at a 55 vol for 50% down for that move that I think it's going to go back up.
It's tradable when they started. They had some guy on. Maybe it was like Defiance or one of the ETF people that. It was basically like a collared exposure to Bitcoin, and basically it had like a capped, 5% down. Your downside is 5%, your upside is 10% over the year, and it's basically doing what you were just showing of selling a call and buying a put that's the same price. There's so much skew in Bitcoin to the upside that the risk profile sets up like where you have, assuming it's binary, the upside is 10%, the downside is 5%.
Yeah, and you get into an environment too where let's just say that it does really rip, and you have calls that are in the money. There's going to be premium in those calls, at least in the short term. You might get a roll or two in there where you can really collect some volatility premium on the upside, even though you're still at the same strike.
100%. Yep. One more quick thing for you. The Ethereum stuff. Have you heard anything, any rumblings about?
It's a good question. I haven't seen anything recently around ETFs and whether we'll see staking permitted and then those staking rewards being passed on to investors in the fund in the form of a dividend. I think that's coming. I guess you could also, just to shift gears, look at the Solana futures launching and the CME. That to me is precursor to ETF announcement.
Yeah.
I think some of this stuff is probably back half of 2025, unfortunately. That would seem to make sense given how others were announced and kind of the timelines there. But no, I haven't seen anything recently around ETH ETFs, but I do think that, it's been super, super bearish in terms of sentiment. You look at just crypto Twitter, everybody hates Ethereum. It's been left for dead here.
So
I think those are where you find the trades, right? I mean, it can go down a lot more. ETH in Bitcoin terms has just performed terribly, but there will be a trade. Early is wrong, but I think you could see a pretty violent reversal. I mean, you look at the short open interest in there, and you got to assume that some of this is probably a basis trade, but I don't think that speculators and kind of the larger hedge funds in there have been as short ever on record. So you could get a little bit of a squeeze, but if you've been short ETH, it's certainly been working, and it might continue to do so, certainly in this macro environment.
Feels like it's coiling. Right around the 1900 level, hasn't moved in 4 days, just chilling there.
Yeah.
But yeah, I mean, we've covered this every single week. You've brought it up many times that the ratio.
Yeah, that's why the bag is so big right now. Ryan comes on every week and tells us ETH, and every time I look, it's lower, lower, lower.
Yeah, when's it gonna recover? We will see. We shall see. All right, that's it. 12 o'clock on the dot. Thanks for tuning in. If you've got any further questions, you can reach us all on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. And go give Tasty Crypto a follow as well. Stay tuned later today. Like Ryan had mentioned, special guest later on. And if you're in the YouTube chat, I've got the Tasty Crypto newsletter link pinned to the top of the YouTube chat. You can also find it if you just go to tastycrypto.com. It's on the homepage there. But yeah, kind of a boring market. We'll see if that shifts this week. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned, and we will see you same time, same place, 11 a.m. Central tomorrow.
Peace.
Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
We are back. It's Monday, March 17th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we're kicking off a big week here.
Yeah, we are. And I'm happy to see that the markets are in a nicely optimistic mood as we start this week, because I would like them to keep going higher so I can short them at a better level.
Me too. Because the siren song of getting long could not be withstood for that much longer, Mr. Spivak. Friday right into the close as we looked at the S&P breaching those two key facets of what defined the downtrend since late February, from February 20th onwards. I decided to jump in with a short put spread. It was posted on the follow page, so I'm not sure if there was enough time for people to see that late in the day Friday. But I am trying to scalp up here into about 57.75, 5,800, and for a bit of a bounce. And I think I'd like to sell the market up there. But what makes us think this could be a potential turn? The Ides of March beckon a turn, Ilya. That is the question. Typically, if the market does turn higher during the year, March is a good place for it to start, particularly after the anniversary of Caesar's death on March 15th. So what happens after these not so bear market corrections? Well, a bear market is a decline of 20% or more off the high. A correction in technical terms is just 10%. Friend of the show, Ryan Detrick over at Carson Research, produced this chart showing what's happened to markets after those 10% corrections, but we don't go into bear market territory. If that's the market that we're in right now, it would stand to reason that this next month should be pretty good. On average, since 1955, actually since 1950 onwards, but the first occurrence is in 1955, when we've seen a correction of at least 10% but doesn't reach 20, the 1 month return is 3.1% higher 75% of the time. Now, granted, this is a small sample size, right? N does not equal 30 here. But when we layer this on top of the fact that CTA positioning had just reached its most net short level since October 23, and they had completely capitulated in their longs. We see economist covers with the president of the United States with a barrel of gasoline in his hand, dumping it on US dollars. It feels like you have some sentiment extremes in place. And then, well, we have our technicals and our volatility contraction. And it felt right for me to take a swing at the long side here, at least for the first few days this week, Ilya. March 15th is when it tends to turn. So if the worm's going to turn, better now than never, I suppose.
Well, right, and this is sort of part of the logic, not the seasonality. I don't, frankly, put a whole lot of stock into things like this when it becomes actionable. It's not so much a singular thing for me, but it is, of course, a useful bit of information when you kind of dump everything into the bag and go, okay, what do I have in the bag?
Right.
This isn't anything I'd hang my hat on as far as statistical representation of returns I'd expect, but it does go in the bag. And last week, as we've talked about, my thinking was the market has understood the danger that it dislikes here, and it has decided on what it wants to happen. Because what you saw about the middle of last week was Fed funds futures moved sharply in a dovish direction, not around any given piece of data, but seemingly around the idea that, look, we're going to have this uncertainty, and trade policy is going to go back and forth, and fiscal policy is going to go back and forth, and we're just not going to have a settling of the dust on any kind of timely scale. So what we're going to do instead is we're going to do what we always do when fiscal policy gets wacky. We're going to turn to the Fed and go, right, so you all are going to backstop us with the cheap money then, right? Because you all look over there and you see what that is. So we're going to need some reassurance here. We're going to need some cheap money to make all of this smooth over. And so Fed funds futures, and this happened after Treasury Secretary Scott Bessent said, that this is detox. The economy needs to adjust. A few other policy officials, including the president himself, said the economy needs to just adjust. Then the adjustment might be painful, but don't everybody worry. It's going to be worthwhile. There's a great and bright future on the other end. As a post-Soviet, I can't quite think where I've heard that before. But anyway, what you end up seeing then is the markets go, right, we need the Fed. The Fed's next week. They're going to give us more cuts. They're going to be dovish. This is going to be great. And so I got out of my shorts about the middle of last week, thinking, okay, now everybody's going to be built up on the hope that the Fed is going to save them. And when it doesn't, when the Fed gives you the usual gradual Fed, no hair on fire, everything's fine, we'll see you when it's a real crisis kind of rhetoric, that's when the levee breaks again. When everybody realizes the cavalry isn't coming around the bend. So I think we have more room here. We have today, we have tomorrow, and we have going into the Fed itself. It's relatively later as far as event risk goes. I mean, most economic data comes out 8 in the morning Eastern, 9 in the morning Eastern. This is not that. So there's some room here. And I would not be surprised if we're back in the upper 5,700s, nearer to 58, as a consequence of all of this. And of course, my knives are sharp. I'm going to be looking for that to be an exhaustion point. We'll see if it happens, of course, maybe not. But I'm going to be looking at what the price action looks like up there and looking to cut its head off.
As we turn into this week, vol crush continues. It's a mixed day here, but mostly to the upside as the NASDAQ flashes out of red territory. S&P up by 0.33%, NASDAQ flat. Dow Jones up by 0.64, the Russell up by 0.75. We mentioned last week on Friday when you and I were talking about how a particular instance of this technical momentum may be eroding that defined the downtrend over the past few weeks. We started off the show with that. But those two facts were, one, during the downtrend since February 19th, you hadn't seen the S&P 500 or the NASDAQ put in a close above the prior day's high, and you hadn't seen either of those two indexes put in a close above their 1 week moving average. Now, come Friday at the close at 4 p.m. Eastern when I benchmarked it, okay, whatever hijinks happened between 4 and 5 p.m. is none of my business. But at 4 p.m. Eastern, we were above both the 1 week moving average and then looking at the previous day's close, we were above those previous day highs. So the two things that have defined the downtrend here on a technical basis have since been breached. Today, the market is trying to find some upside. We're not there quite yet, but IVRs have dropped from the 50s now down into the high 30s, suggesting that vol really is coming into a certain degree. This is a big week for vol, right? Not just the Fed, VIX-spiration, quad witching on Friday. So we should expect a lot of turnover, and there's been a great deal of turnover here today already, 1.41 million contracts traded, in part because we're rolling from the March to June contracts. We see ESM5 here now up on the board as opposed to ESH5. So I have what I need right now to have a short-term swing to the upside, looking for a move up towards that 1 month moving average, 58, 53 or so in the ESM5 contract. That likewise lines up very neatly here with swing lows in October, November, and again in January, within 10 points right now, 15 points right now. So if we were to get a bounce up there, it would be a place to potentially reset or turn this into a bit of a short iron condor, where now I'm short a put spread. I can go short a call spread up here against the highs, and now I have a directionally neutral position in my pocket set along the same time frame. So as it were, 44 days to expiration right now, 44 days to expiration, short the 5550, long the 5500. We'll see where this goes, but it's worth a nibble given the exhaustion, the 10% move off the highs, the type of turn that we've seen, the technical facets broken. I wouldn't call myself a big bad bull down here, though, not yet. But I do have my toes in the water. I'm starting to nibble.
Yeah, I mean, I'm not looking at this as anything that necessarily compels me to be long, because my object in doing that would be purely tactical. I would be saying, you know what, I'm looking for a tactical upswing. I don't believe in the upswing. I think the trend is down, but if the market's going to go up, sure, I'll buy some. The reason I'm not doing that here is if you look at, let's say, a 4 hour, you can kind of see the last vestiges of technical barriers holding up here. There's some swing highs marking the top of this range, former swing lows lining up with those exactly right there. So I'm looking at that and going, okay, am I going to be the hero that is going to press this, considering I don't even want to be long? I want to be short, just not here. Like, am I really going to go fight this now? Nah. So I'm just going to leave this be. Now, if it pokes above that line and doesn't mess up the risk reward, who knows? I might get a little long. I'm certainly not constitutionally opposed to buying, because my objective, as ever, is to make money. And if I make money betting against my own bias, I have no problem with that at all. It's the money that I'm after, not the bias. So as I look at this, really the only thing holding me back is that last bit of resistance. And it matches across this to NASDAQ. That same inflection point is there. So I'm just looking at the tops of these ranges and going, okay, well, if you give me an easy break, fine. If you don't, so be it. I'll look to be on the other side, which is where I wanted to be in the first place, just some ways away above where we are here.
As this downtrend breaks, it does look a little bit like an inverse head and shoulders pattern here at the bottom. It's not fantastic, but you can see, I think, with that low that you have intraday on March 7th with the swing highs, then you see here on the 12th, and then again, even today on the 17th, something about 57.25. The market seems to be treating as a line in the sand right now. Whatever that reason may be, if we are able to turn further through here, I think that gives us great confidence. Two things that actually do appear there that are on the screen right now. I know the 8 EMA appears in that area, as well as the 1 month VWAP. We have the 1 month EMA here on the screen, but the 1 month volume weighted average price would come in closer to 57.25 today. So, like the momentum is still negative right now. It's still very much a downtrend. There are the seedlings of reasons why one may expect a bounce. And certainly that's where I have my chips in a constrained fashion, right? If I'm feeling really good, I would just be buying calls. This is, I think the market may stop falling now because the momentum's been broken, but you can see that in the NASDAQ here as well. Friday, the high, Thursday's high, 19,900.75, and NQM5 here. We get the close at 19,919.50, as well as above that 1 week moving average. Today is a little bit too much of a doji to say that this is a sizable rebound, but again, you poke through 20K on the up end today, and you start to see where we could chip away and move higher. This really is a story about
close. I mean, Friday gives you what is essentially a bullish engulfing. So it's pretty good.
I think it's worth discussing why there's a divergence here, though, today, right? The Mag 7 names are down 1.55%. If you were to go to something like QQEW, the equal weighted NASDAQ, that's up by a very healthy 0.87%. Same thing for the S&P 500. RSP is up by 1.19%. You also see it here on the index level, right? The Russell up 0.78% in today's session. So there's actually somewhat of a healthy rotation occurring here internally, like where the risk isn't just coming back into like the safe stock names, which are usually considered to be the mega cap tech, although what's safe in a world where these tariffs are flying left and right and their supply chains may be completely upended. That's a huge concern for some of these names, and the dominance
may be changing a little bit for sure.
That and the fact that, if we look at the flow, some brokerages have started to put out information, right? Like people on balance, Americans are net neutral on U.S. stocks for the past 2 months or 3 months for 2025. But European clients, they have been selling out their U.S. positions and buying in to European stocks. So on balance, the flow of funds has been money leaving U.S. equity markets and going into European ones. So the fact that like you're not seeing mega cap tech as the first thing that's purchased up here, those are the names that people have been riding globally to generate returns for the past several years. And so it looks like those positions are still being sold out of to fund the longs in like German steelmaking names that we've seen prop up here in 2025. I digress. I think these are good signs. They help, again, reinforce why we might see a short-term bounce. It's a nice little composition here, small cap versus big cap, mega cap, value versus growth, if you will. And those are green shoots that you can hang your hat on at least until Wednesday at 2 p.m., dare I say.
Yeah. I mean, I think that sounds right. I think this clearly looks like momentum that's changing, and you can see it across the indexes. It looks very similar across the indexes. And if you're a bear, as I am, at least in this environment, you don't want to go straight down. You want an orderly stair step. It's difficult to get that usually on the way down. Markets typically panic sell. They don't panic buy. So when things build, they typically build in a more gradual fashion, or at least you want that. Last thing you want if you're a bull in some market is a parabolic rally, because that's going to be one of those easy come, easy go situations where if you got in early, Godspeed, but if you try to chase it, you're going to get burned more often than not. So I would love for there to be an orderly bounce that neatly holds the major level of former support become resistance, gives another opportunity to get short, gives a nice orderly leg down from there. That's my ideal. So I'm standing aside here and just waiting. I think the Fed is going to not say much of anything, and I think the markets would very much like them to say something. And what they're going to probably do is not commit in a way that the markets are going to find agreeable. And that may well give us more consternation thereafter. So I'm going to watch, as ever, by the way. I'm going to let the price action dictate. If the market decides that they're going to get a reassurance from the Fed and they want to believe it, so they do, that's an entirely open possibility. So we're going to have to wait and see. It could survive, in fact, long enough until the next piece of big macro data tells the markets, no, actually, the Fed's behind the ball. But what we're, I think, looking at scope for a meaningful bounce here. I don't think it's a bounce that changes the trend, but it can have some ways to go yet.
You know, the flip side of this argument about small cap over mega cap and value over growth is that what you're seeing is money pour back into the markets in a manner that's exceptionally defensive. Top performing ETF today right now is GDXJ, followed by XOP, IYE, XLE. The only green shoot you see is that XRT, the beleaguered and beaten down retail ETF, which, you know, given its importance throughout this decline and really the topping in the broader market since December, it being the most recession sensitive sector ETF, it having peaked in December, never recovered back to the highs after that Fed meeting. It falls off first and experiences the largest drawdown of any of the sector ETFs thus far. It right now is actually showing a sign of a turn here today too, back above its 1 week moving average, something that we actually haven't seen closed back above prior to everything else breaking down in the index level. You have to go back to February 14th here to see that occur, right? So all of a sudden, maybe this is good. But on the flip end, where's the risk taking? Where's the people jumping in with 2 feet? XLK only up by 0.06%. SMH is lagging the S&P effectively. Actually, now it's above it, 0.45. Maybe there's more ILIA coming into play, but it's still mostly defensive right now. XTL is one of those names that draws my attention, right? We did have a breakdown here earlier this year. Wherever we want to mark it off, we may be trying to turn back through it today in some semblance. There's enough to work with, I think, where, you've had a remarkable run, by the way, with being bearish, both in the Russell, right? Getting out at the 200-day, it rallies up again, you sell it again. Same thing with S&P, NASDAQ, right? You got out last week, and I think you and I are on the same page here. I may be trying to be cute by half too much, where I'm trying to play this bounce on the long side. I think there's enough here for me to feel comfortable doing that, which is why I held the position through the weekend. I really hate putting trades on Fridays, right?
Me too, actually.
Right, and so that said, the fact that we didn't have that nightmarish futures open on Sunday night wasn't great at, Fitz. Besant will not stop telling us that he does not care about stock prices.
Yeah.
Outside of that,
they just keep sending the macro hedge fund guy out there to go, this is fine. This is fine. This is my area. This is fine.
I'm just so confused by the idea that, like, if the markets are sinking, it's okay. Like, if the stock market is a discounting mechanism for all future cash flows. The stock market is saying to some degree that it believes that future cash flows are going to be lower as a result of the direction we're heading. So I have trouble squaring those two facts. I digress, though. If XTL is rebounding, if you have like retail rebounding here, you have the seasonal window now. Second half of March is usually good. We have 2 days before the Fed. If we can get back to 5775, 5800 in ES, It's a great place to look for something directionally neutral. And Ilya, I know that both you and I will be looking short probably at that point.
Yeah. I mean, I think you look at this and you say, okay, so on the one hand, it makes sense that the markets would stop falling because if the operational idea is we're afraid because of policy uncertainty. And if you read the PMI reports and the consumer confidence reports, I mean, we just got U of M on Friday. It was terrible. Consumers are very unhappy. They see a lot of inflation downwind because of these tariffs. We're up to 4.9% on the 1-year inflation outlook. We're back to 2022 as though the Fed's been doing nothing. So the situation is looking dicey. But from the market's perspective, which part of that don't they know at this point? Seems like they've basically learned everything that there is to know, and that they're not going to get much in terms of speculating on this press conference or that soundbite, because, again, if you listen to Scott Bessent, they don't care. And if they don't care, then there's not a reaction function. I mean, they'll care eventually, depending on the severity of the sell-off, but at this level of consternation, they don't care. So from the market's perspective, you start to go, okay, well, what's the path of least resistance? We know the Fed cares because we know the Fed has a very clearly defined mandate. And if it sees the economy taking it away from 2% inflation or away from its unemployment rate objective, that is to say, maximum employment in a context of still going to 2% inflation, then the Fed's going to act. And so the path of least resistance is the Fed because there's no ideology there. It's just mechanics. So when you look at the market's response here, it's very rational. You go, right, okay, these guys don't want to help us. Obviously, we're asking for help, or the market wouldn't be down 10%. So we don't like it. They don't want to help us. The Fed's going to help us. Here they come. And if the Fed doesn't help them, well, then you have a real narrative shift. But until you do, you don't. And so what else is there to bake in? But for the moment, just a more dovish Fed. Now look around the markets. Bonds are up, dollars down. Market likes it this time. Unlike, for example, last week or the week before, it decides it wants to care about those types of things. Now we were saying, oh, the market doesn't care about the Fed. Cares about the Fed now. These correlations wax and wane. But when you look at the price action, in particular across major assets, you can see, or at least get a very good sense of what the underlying thinking is at a sort of crowd level. And I think you can very clearly see the markets are starting this week saying the Fed is going to help us. That's what you see in the long end. That's what you see in the dollar. That's what you see in Fed funds futures. We'll see if they do.
It's a good time to transition over to bonds. Stocks taking a turn higher here. S&P up by 0.5% now, 57.21. NASDAQ up by just over 0.25%, 19,970 or so. Dow Jones, Russell up by 0.77 and 0.97% respectively. Bonds are turning higher here today, although they did back off their highs somewhat as the session has moved forward. 117 and 5 ticks here for ZB. We continue to consolidate, bounce around right on that 1-month moving average, that yellow line, right above a key swing area where the market has found support and resistance dating all the way back to November, right around 116.5 or so. Ilya, I think that you and I both have a constructive view on bonds and perhaps some 3 or 4D chess kind of way, which is to say that the Fed isn't a proactive institution. They're not going to signal that they're coming to the ride this week. Well, that doesn't mean any rate cuts are coming up front necessarily. It does potentially set the market up for one of those two steps where initially it's disappointed by the lack of cuts and then realizes that less action now means that it's going to require more action later. In that event, you still feel pretty good leaning long deltas through this week, do you? I suppose is the question, like I do.
Yeah, I mean, I don't think there's anything that's been upended here. I mean, you are very neatly stair-stepping. You have stalled precisely at former resistance becomes support. You have this falling wedge-like structure telling you that you're coiling up into some sort of a breakout. And typically when you have this kind of a thing, especially as it holds support, in a trend pointing higher, it speaks to continuation. It speaks to a pause. And so even just technically, the structure here is seemingly supportive, but sort of narrative-wise, to extend the conversation that we're having about the market looking for the release valve from the Fed, if the Fed doesn't promise them anything huge this week, doesn't go out signaling more cuts in the SCP summary, you don't get from Powell a committed, like, we see it, we're probably going to go sooner now, and instead get, hey, okay, we know, but we have time, so it's all good. We can just sit and wait. Don't worry, everybody. Everything's fine. If we get that,
I have
the market's going to want more easing.
Yeah, but it's going to want more easing. I can't remember who wrote it this weekend. I read a really interesting note. It was something to the extent that if the Fed doesn't show willingness to start moving on rates soon, an acknowledgement that the economy could be slowing down, right? In other words, like sacrificing its independence to give Trump and the administration what they want, which is clearly lower rates. You listen to what they're saying, you look at the actions of what they're doing, you can surmise that they care more about interest rates than stock prices right now. They may step up the tariff rhetoric after Wednesday, right? If the Fed isn't going to budge after a 10% correction in stocks and the threat that this may do for the economic slowdown, then we need to push a little bit harder to force them into a corner to actually start lowering rates. Is that something that resonates with you? Like, should we, is that a mindset that perhaps we should have in the back of our head as we look at trading conditions on Thursday and the news flow on Thursday in the wake of the Fed?
I don't know that the market at this point is going to be terribly surprised by more of this kind of rhetoric. I think that's why it's looking for the Fed outlet. And if they don't get a sense of urgency from the Fed, we're going to get a replay essentially of what we saw last year, perhaps with greater vigor. There wasn't the kind of urgency last year. There wasn't a president that was conducting trade negotiations in this kind of a adversarial way last year. There wasn't a Treasury Secretary coming out saying, we don't care that the market is falling last year. So maybe you get a more violent response here, beckoning, but direction-wise, I think you get a very similar parallel to last year, where in the first quarter, sort of going into the second, you start to get this sense that inflation is getting sticky, but the economy is, after a pop at the start of last year, is starting to run into some sort of a wall, and conditions start to weaken. And the market starts yelling at the Fed, going, hey, wake up. The economy is turning. If this is that thing where accumulated rate hikes finally come together, this is going to be a recession that you're going to sleep through. Wake up. You need to be cutting. And the markets are yelling at the Fed. Basically, if you look at Fed funds futures and the pricing there, you see the markets screaming, you need to be dovish from about mid-April or so to mid-August. And when the Fed resists, because it's looking at CPI and going, it's not going like we want, it's not falling fast enough, it's sticky, we'll wait, we don't know, they start to pile in the rate cuts into the long end of the curve, saying, well, if they're resisting now, they're going to have to do some kind of a catch-up run later, so they'll have to cut and faster, later and more intense. And all of that, of course, ends up going into ZN and ZB. So as I look at what seems likely this week, I think we get a Fed that's resistant. And the place where you get the most responsiveness to something like that, other than the dollar itself, is probably the long end of the curve.
The correlation between the long end of the curve and the stock market has started to wane in recent days. On Thursday, March 5th, the rolling 1 month correlation between ZB and ES was negative 0.83, which again, bonds up, stocks down. Since then, that's gone to negative 0.51. So just on a rolling 1 week basis, then we see here that correlation, it's now at negative 0.11. That hit a peak back on the 24th of February when ZB and ES had a rolling 1 week correlation of negative 0.99, near perfectly negative. So I think what we're learning here, I was comfortable being long bonds and long gold during the stock market sell-off, but we have to acknowledge that those may really not be the same trade again at this moment in time. At least at this juncture, they haven't behaved that way. Stocks have been starting to put in a rebound. Bonds have been holding up. Same thing for gold. The story here that we got to watch is what happens in energy, of course, because that relationship between bonds and oil remains ever present. I think we're probably going to see a pullback on Wednesday in the bond market. I think it's going to be a total misnomer, total fake out. And if the market sees a Fed that's not going to come to help, it's going to do that two-step where it says we have to do more later on. And ultimately, that's recession fear. That means the recession odds are going up because help is not on the way. So do I really buy into this rebound on XRT and everywhere else? In terms of pricing, though, Elliot, 22.3 IVR in ZN. In ZB, it's a little more elevated at 38.6. ZN is half the contract size of ZB. It's a little bit more approachable for retail traders. If the size of ZB is too large, you could always head over to TLT, which is effectively just the ETF version of the product and much more manageable to fine-tune your, allocation or exposure here in this Fed week, this VIX-piration week, and in this OPEX week. Ilya, metals are losing gains here today. They've oscillated back and forth, so I don't know if that's a fair thing to say because we do see that gold is back in GCJ5 above $3,000 an ounce. And on this very short-term time frame, it would appear that we are flagging of sorts, just shuffling sideways, gathering new momentum, not exactly looking toppy yet. I have my upside targets for 30.39 and 30.60 right now in the short term. But the longer-term perspective, of course, is that for GCM5 may be working on the potential for a bigger move up towards $3,200 an ounce or so. In that regard, I don't have the duration exposure that I'd like, but I still like the idea of rolling up gold calls here. The fact that we moved away from stagflation last week helped gold perk back up. That is a risk for gold this week and silver this week. If we think about a world where the market feels like the Fed isn't going to help and recession fears are creeping back up, and it's because of tariffs, which may induce at least a one-time price hike, that is inflationary. And it was during this little brief window here, Ilya, when we go back to this daily time frame in gold, it was that window in the days after the S&P Global report when recession fears are kicking in and inflation fears are still running high with the tariffs, that gold gets slammed. And you have a window where we're up near 3K and we drop down closer to 28.60 or so. It's about $140. That's not out of the question this week. So if you're trading gold long here up at the all-time highs, duration really is your friend if you're on the long side right now. I would be much more comfortable operating with a short-term time frame if I was short around that like 25 or even 10 DTE. I don't like selling calls to stand in front of a train, but there is a similar-ish setup here on the other side of the Fed meeting where gold could pull back, and we can't ignore that.
Yeah, I mean, that's the only reason I'm not looking to be more aggressive here. So I see that Friday we kind of stall. Now we're working on a kind of mutant inside day. And so I'm looking at this and thinking, okay, well, let's see. And indeed, it is because of the Fed. I would be much more constructive on this, just saying, look, this is a breakout, and we're going to go. But because of what seems to be coming into view with the Fed, and in my view, the possibility that the Fed doesn't take the dovish bait, as it were, that what you end up with then is some sort of a pullback, maybe back down to former range resistance become support. And I want to be long. I think it's always really funny to me hearing this argument that a tariff is a one-time adjustment. Well, yeah, it's a one-time adjustment to that price. But when you're talking about things like aluminum and steel, things are made of aluminum and steel, and then you make an adjustment to that price, and that's an adjustment to all the prices of the things made of them, and that might take a certain wedge of the population through the marginal cost of now this is too much. You will recall what happened during COVID. It has not subsided in a lot of ways. People have not traded up their cars. Meanwhile, the cost of auto insurance has gone up because people's cars are older and they're getting less maintenance. So all kinds of things extrapolate from a one-time price adjustment with absolutely unknown consequences to anyone. It's impossible to foretell all of the knock-on effects. And when we say, you know what, it takes about 12 to 18 months for a single Fed rate move to get priced into the economy, what are we actually saying? We're saying that after a one-time price adjustment, in this case in the price of credit, a much more liquid thing than goods, it takes close to a year or more for the full breadth of the impact to spread through the economy. It's going to take a good long time for a one-time quote-unquote price adjustment in something like steel, copper, aluminum, to work its way through and show all of its many consequences. So, for my part, I look at this and say, okay, this is not a story that's going away quickly. It's not a story that's going to go away anytime soon. The markets are going to want relief from all of this. And if the markets want relief from the Fed and they don't get it, gold's not going to look great. So, let's see. You probably get a tilting of the yield curve, which is why I don't want to be necessarily long the front end. I don't think the front end does particularly well. But the long end might very well get crushed. The dollar might very well get smacked. So do I think gold or silver have a lot of legs against that backdrop? If they eke out a scratch, that would be impressive. That would speak to resilience. If gold prices in this environment manage not to fall very much, that would actually, I think, be very constructive.
That's part of the reason why I've been constructive. They're so darn resilient right now.
Yeah.
And they've been so resilient. They've been outperforming the S&P 500 for the past year, 2 years, since the turn of the millennia, right?
Yeah.
They've been really, really resilient. Stocks are continuing to turn up here now, Ilya. 57.31, clearing that 57.25 area, the 1 month VWAP, EMA, as you go up your Fibonacci scale, 5.813, 21.34. So some nice little levitation here. We see gold up by about 0.16%, silver down by 0.36. Daily time frame still trying to poke through the downtrend from the October and the February highs. We find our support today on the 1 week moving average, which coincides pretty neatly with where some of the former highs in mid-February were carved out. I still think this looks like a constructive chart. So I'm going to stay long the gold calls, long the silver calls. They continue to work. SIK5, there's still plenty of time in this, 38 days to expiration. GCM5 obviously has enough time. Copper here is moving up. And this is an interesting conversation that's going to dovetail with how we're going to talk about the Australian dollar soon. But there was some news out of China. Stimulus, real stimulus, perhaps. Copper's up at a new yearly high, $4.95 a pound. Hard to believe this was near $4 at the start of the year. It's been a healthy 25% rally. I still have my short put spreads in here, Ilya, operating along Delta side. What's the China story coming out of this weekend? Because you can't ignore the Aussie and copper doing what they're doing after the news and data.
No. There was a special action plan. All kinds of special, quote-unquote, things coming out of China. Special off-budget bonds, all kinds of things that seem to be normal and regular, but also magically held away from the deficit calculus math. But in any case, the government announced that they have plans to, quote, vigorously boost consumption by putting up wages, reducing all manner of regulatory burdens, and otherwise attempting to unshackle economic activity. And they're talking about subsidies for childcare. They're talking about promoting AI a lot for obvious reasons. That was a big theme at the National People's Congress. So there is a whole grab bag of stuff here.
Mm-hmm.
What's interesting is as I go through this, what I don't see is the government is going to go spend a bunch of money. Instead, what I see is, again, we're going to tilt incentives to make people happy, give them more money that's disposable, and then they'll go spend it. There's a really great movie called Too Big to Fail. It's on the basis of the book, and I believe that's what it's called. And there's a great HBO movie of it made, and it describes the sort of breakout of the 2008 crisis, the collapse of Lehman, and the bank bailouts. And at the very end, there's this scene where a pensive Hank Paulson is standing there once the banks have been forced to take TARP money, and he's asked, well, they'll spend the money, right? As in, they'll boost the economy, right? Like if we give them this money, they'll spend it, they'll lend it, they'll ease credit conditions. And he goes, of course they'll spend it. Sure, they'll spend it. And he's looking very much uneasy at having not compelled them to do so. This sort of is what looks like the strategy for China for months now, where they keep opening more money spigots for people and go, well, here, go, spend. Everything's fine, look. And people go, we don't trust any of what you're doing. We're just going to take this money, we're going to stuff it under the mattress. One of the things I've been watching very closely is the spread between time deposits and demand deposits in China, because there's data on this. You can go to the PBOC's aggregates. They'll publish them for you. And you can look at the spread between how much money is sitting in basically the equivalent of savings accounts and how much money is sitting in the equivalent of checking accounts. Because what you're looking for essentially is how readily is people's money sitting there to be spent. And we're looking now at the sharpest ratio in favor of time deposits.
Yeah.
At least since 2008. At least. That's just as far as the data readily goes.
Right. So, just to restate that, if you think about this in American terms, we don't really think of holding money in our account, calling it a time deposit, right?
Right.
You have your checking account, which is money that you just can take in and out, debit card, go to the ATM.
Smooth, liquid.
Right.
It's cash.
The time deposit is like a CD, right? So you can have money in your bank account, but if it's in a CD, you can't just willy-nilly withdraw it from the bank. Right. And so what Ilya is getting at is people have a lot of money in the bank right now, but where are they keeping it? In their liquid checking account where they can access it anytime, go to the ATM and take it out? Or is it kind of locked in a time key, right? Because it's in like a certificate of deposit kind of situation. And
Something
really,
like that, yes.
We're seeing people put them into these time deposits where they're not exactly. You don't put something into a CD. Like, I'm not going to take $10,000 and put it to a CD if I think I need that money in the next 6 months. The whole point of it is
that's exactly right.
Right. And so like we're seeing people put their money into these time deposits more and more, suggesting they're not going to spend it in the here and now.
That's right. And the ratio is 2.61. Actually, even worse. The February numbers just came out. 2.8 is the latest. So just think about this. 2.8. For every $3 essentially that go into savings, 1 is in consumption. So, yeah, the authorities in China are loosening restrictions on how people can have cash, use cash, but it doesn't compel them to actually do it. And there's no confidence or belief in any of these measures from the general public. So instead of spending all this new money, they're saving it. So yeah, okay, the markets get a little bit more from China. But again, it's the wrong kind of thing, because what it doesn't do is build confidence. And ostensibly, Beijing thinks they're going to roll out enough of these things that eventually they'll get critical mass. That's not working. What they want, that is the public, is for the government to have some skin in the game, to put their money where their mouth is. And they're not doing that. And I think this thing may backfire, because when they keep not doing that and the markets keep saying, no, we're asking you for something specific, get it right, and they still don't, at some point the market is going to go, why aren't they? And they're going to, instead of incompetence, see conspiracy. Because eventually, when the incompetence is so pervasive that it keeps happening over and over and over and over and over and over, despite market signals, you go, well, now you mean to be incompetent, so is this just a conspiracy? And so that might backfire on the whole thing. That might actually diminish confidence more.
While we're talking about China here, I did see something going around on Twitter this weekend about China's money supply, which really ground my gears. So we're going to just do a quick detour on this, okay? People have been pointing that China's M1 money supply has effectively doubled overnight. That's not exactly true. They changed their M1 methodology back in January 2025. M1 now includes household demand deposits and non-bank payment institutions' customer reserves, which it didn't previously. So reclassification of how they're counting the beans is the reason behind this surge. This is not a gigantic liquidity injection per se.
You then see a gigantic surge in new yuan loans and total financing because they move the goalposts. But of course, we've seen
moving the goalposts.
Month's data last week, and it's all back down.
I'm just saying people shouldn't get like, I'm not long copper and long gold because China's M1 money supply is exploding. And
yes,
this falls into like the Reddit category where people are placing trades based on that. Please let me know so I can be the counterparty. Okay, yes. Ilya, oil quickly here. It's a brief, boring day in energy, so we're not going to spend too much time here. We've been bounding down around the low from December 20th in the CLK5 contract. It's been resistance of sorts, right around $67.50 in recent days. Today we're trying to rally through it, but we run into that 1 month moving average and we're finding resistance. And it's almost goes to show how this downtrend and break is still very much in play. 26.1 IBR, not worth it. Certainly not if you only have limited capital and you have a chance to play what's going on in ES or NQ right now. Same thing for natural gas. It's only up by 1.49% today. This is an area of high interest for me because that 1 month moving average has been a pivot point. And both oil and natural gas are highly uncorrelated to whatever the Fed does on Wednesday. Rarely do they ever move around this. So just to brush over these two as we're going to make our way over to what's happening in currency. If you're looking for things to put onto the trade docket that may have some ability to diversify your exposure, if you have a lot of correlated positions right now. Energy can fill that need, particularly around a macro binary event like a Fed meeting, which they tend to be a little bit quieter around. Let's talk about the dollar being punished here today, though, as we wrap up this futures power hour. And I think that's, kind of a cross section of what's happening with oil. You mentioned the market not really buying the China story, and you can see that in oil. But the Australian dollar here is having a good session. Vol has really collapsed today, and I loathe that I didn't do this earlier myself, because I messaged Westwater this morning at like 9:15 in the morning, New York time, and said, Aussie looks good for a short put spread. It had like an 80 IVR at the time. It was trading closer to 63.70. We only added 20 pips from then, but we're starting to see a breakdown in a devilish kind of way here with an IVR of 66.6. The downtrend, right, from the October and February highs, that's breaking here. We're clearing the March swing high. If you want to play the China story, there is a way to do that with some higher vol names. I think the Aussie actually is the best bet right now, if that's the case. But again, this is really anti-dollar still. A lot of money's flowing off of U.S. shores. Even the Canadian dollar is up today, guys. That's not good. The Canadian dollar is about to be experiencing what we like to call recession here down south. And if this trade war continues, and yet the market doesn't even seem to care anymore. So bad signs for the dollar today overall.
Yes. I mean, and all of this, as we were saying at the top of the show, seems to be reflective of the market saying, here comes the Fed. They're going to let us off the hook. Countless mentions, no doubt, of the Powell put. I mean, at least with this Fed chair, there's some alliteration there for quality writing. But that, of course, was always not exactly it. There never was a central bank put. Central banks are in the business of avoiding credit crises and being counter-cyclical. That's their job. That's what they do. So there's nothing nefarious there, of course, but the markets do love a good story. So they're going to seemingly be angling for Fed white knight rescue missions here into Wednesday. You see it in the dollar, you see it in the bond market, you see it in Fed funds futures, and that doesn't bode well. The dollar is down pretty much across the board. The only one kind of getting a little bit of pushback is the yen, because this is a risk-on day. I think that's why you're seeing, for example, the Canadian dollar and the Aussie participate like this. Sure. They weren't nearly the kind of participants in this move last week or the week before. The euro, the pound was where all the action was, because it was, Europe is spending on defense as a kicker to all of this. And you weren't getting the kind of stock adjacent currencies, Aussie, Kiwi, Canadian dollar, gaining traction, because, of course, stocks were getting shellacked. It was very much a risk-off bias. Here, they participate, but the yen, which is the flip side of that risk-on bias, which is more directly related to yields, it's not getting the kind of support here, because I think it's a risk-on day, and so you don't have that kind of a perspective here. Nevertheless, the uptrend is very much intact. I'm not looking to get off the boat here whatsoever. I'm holding long and not going anywhere for now. I am likewise short the dollar pretty much across the board. I had futures expiry, of course, last week on the March contract, so I've rolled out the euro, I've rolled out the pound to June. I didn't roll out the Canadian dollar and the Aussie. I just took my P&L there, basically flat on the Canadian dollar, and made a little bit on being long the Aussie. I'm going to be looking to add those back in once we get a little bit better risk reward here, with the Aussie first up, I think. So I'm going to be looking to be a buyer. I'm still a little bit of a buyer on the spot side, but I'm going to be adding more where obviously futures rollover is not a thing. But I'm going to be rolling up to M6M here probably within a day or two. It just needs to reset risk reward a little bit ahead of the Fed. We're approaching a swing high, so maybe back up off that a little bit as we digest, and I'm in because I think the dollar has more selling to do here.
Ilya, just a quick note on the yen here. It's been hugging that 1 month moving average for most of this year. We've gotten a little bit away from it and get sucked back down right to that yellow line. This is another one of those instances where, given how we've seen a pullback from the swing high in December, always good to get some insurance while the sun shines. It's not raining, right? Yen is fairly interesting, 26.5 IVR. Longs have been treated well this year. What's next on the calendar? Well, tomorrow is a busy day. We aren't quite there yet, but we have a Bank of Japan rate decision coming up around the corner, a Bank of England rate decision coming up around the corner, right? Barbelling that Fed meeting. We have bond auctions this week. Busy day tomorrow, housing, building permits, Canadian inflation. It's a day for macro risk, and all week long it's a week for macro risk. Typically on Mondays, we have in the past looked at the COT report, the positioning report. We haven't done that in a while. It'd be nice to do that again. But let's talk about why it's important here. As we do a brief bit of education, head over to tastylive.com, top banner, Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. But we are out of time here, so just click that link on the slide here below. It will take you there directly. Ilya, you and I will be back later on to continue this conversation. Before then, though, we're taking a quick break here on Tasty Live. Up next, Dr. J, Dr. Jim Schultz with From Theory to Practice. We'll see you on Overtime.
See you
there. Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than, boom, trade like a trader. Tasty Trade. Make your move.
Just for a minute, let's forget about your favorite stocks. Just for 1 second, let's leave specific strategies on the shelf. Let's talk about what really matters. Your portfolio. How do you build it? What should you target? How do you manage it day to day? The answers to these questions and more are inside our newest crash course. So I'll see you there. Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. Man, I'm so glad that you are here. This is a big moment in your day. It's a big moment in my day, and we get to share it here together only on the Tasty Live Network. So thank you guys so much for being here and being a part of what it is that we are indeed doing. If you're watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and you can join the discussion and you can celebrate with your fellow bulls and you You can commiserate with your fellow bears. Most importantly, you can communicate with all of your brethren that are also watching the show and watching the market. It is a good time had by most. But let's go ahead, Josh. Bring us in here. Bring us into the market. Yeah, we still got something cooking. There's still a little something going there. Got a little coconut oil on the back burner there. You mean S&P's up 42, looking pretty good. Risk-free instrument doing what the risk-free instrument is supposed to do, up 111. Those would be the NASDAQ futures. Extremely high-risk product, just so we are all clear. The Dow up 419. You've got the Russell 2000 Futures Index up 23 on the day. Lots of green on the screen. You got bonds are up, notes are up, UB40's even up, so that's a bit of a shocker. Obviously, gold up another 4 points, over 3,000 now. So that's pretty, man, that's some real nice work out of the shifties. Really, really nice work. Got the British pound is up. You got the euro is up. You've got the Bitcoin bros are even up today, man. Look at this. The Ethereum bros are even up today. Man, everybody is up today. And so, man, that is some good stuff. Got the NASDAQ back over 20,000. Now that we have officially rolled into the June contract, we are now in the M contract. I always love the roll days because it's kind of like you pick up a few extra 100 points, you know? Like you go to NASDAQ H, or go back to H, NQH5, you can see this guy's still at 830, 19,830, right? But you got little NQM5. You just picked yourself up about 200 points, man, you know? And it just all comes out in the wash. You know, Rob Thornley style, man. It just all kind of comes out in the end, and nobody really gets hurt. Got NASDAQ up to 20,000. You've got ES back to 5730. Man, the market is looking good. The market is looking good indeed. Now, of course, if you guys have any questions for me, drop them in the chat box. I'm going to try to get to as many as I can here in the next few minutes. We're going to do a few things in the portfolio for the first half of the show. And we'll see where the wind blows us. And then I have a really good feeling, a sneaking suspicion that it's going to blow me right into the YouTube chat right around the halfway mark of the show, give or take about 10 to 15 minutes. So let's go ahead. Let's go into the different things that are happening in the portfolio. We don't have a lot I want to talk about today. It was funny after the show on Friday. I was scanning through some of the comments. And you guys never disappoint, man. You guys do not disappoint. You don't disappoint me on the show. You don't disappoint me after the show. Like, you guys are just there. You're on point. I mean, the humor that you guys deliver after the show in the YouTube comments, you are right there in that B- wheelhouse. Like, it is consistently just hitting that 80 to 82 percentile. It's, man, it's some good stuff. But I was laughing because I was calling this Spotify, I think. And it is, of course, Shopify. And so really, though, I mean, are they really that different? You know, you've got Spot, which is obviously the real Shopify, the real Spotify. And then you've got Shop, which apparently is the artist formerly known as Spotify. And it's like, are these two really that dissimilar? I am not so sure. Like, I'm not so sure at all. In this internet digital age that we live in, maybe there's more crossover than we at first thought there was. And so Spotify and Shopify are apparently technically not the same, but at the end of the day, it doesn't really matter for our purposes. You can see we've got this little strangle on. It's working out so far today with Shopify up a few cents. What's Spotify doing? Spotify also up today? This will be our new pairs trade that we'll be looking at. Spotify, yeah, ooh, look at Spotify, $19. Wow, maybe these are kind of different. So you've got, wait a second, you got Shopify is 97, and Spotify is basically 597. And so that's a little bit that's a little different maybe. So yeah, I think we can go back to the fact that these are not equal, and we'll go ahead and we'll leave it at that. But man, look at Spotify. I'm shocked. I mean, I'm a bit shocked that they're still in business. I'm more shocked that they're at 595. Let me look at this chart of Spotify. Is this a daily chart? Yeah, this looks like a daily chart, right? Yeah, we can go all the way back to yeah, here you go. You go all the way back to basically the beginning of 2022. I'm just going to circle like right over there, right? That's going to basically be, that's about 200 a share, about 175 a share maybe. What's the low? Yeah, 190. Well, actually, if you reach back into the very beginning of 2022, you're looking at a low that's maybe 187, 188 or thereabouts. The stock is now 595. I mean, just a clean little triple over the course of what, 2 years, 3 years? Hold on, 22, 23, 24, and a little bit into so a little over 3 years. So a little over 3 years. 3 years? Over 3 years for a triple? I mean, the crypto bros laugh at that. The crypto bros are like, why would I even get out of bed? Right? A triple in 3 years? Man, I'm looking for a quintuple by Friday. And so give me some Solana, man. Give me some Ethereum. Give me some Batcoin. Give me something. But Spotify is just not going to do it for me. But anyway, the company is doing quite well for its longer-term shareholders since it has indeed tripled in just over 3 years. That's pretty impressive. I got to be honest. All right, what I want to do, though, so a couple of things. So number one, I want to talk about Apple. And then what else do I have? Is that it? No, that's it. That's it? Is that all I wanted to do today? I think I wanted to take a wee little bit of a victory lap here on Best Buy, since Best Buy is up almost $2 on the day, and we basically have long stock in Best Buy since we're short the 85 put. The deltas on those are pretty close to 100. It's not going to be perfect, but you can see we've got about 82, 83 deltas. So we're picking up about 80% of the move, and so you can see with the stock up, a couple bucks, we are also up basically a couple bucks. And so we're picking up a little bit of a one-for-one deal today, which is kind of nice. But remember, with every options position, it's always more than just direction. You also have the extrinsic value changes, and you also have the volatility changes. So you also have the theta impact. You also have the vega impact, which are going to influence every options position. Whether you sell the option or buy the option, it doesn't matter. These are going to be the three primary drivers, with express apologies paid to my row bros out there and my dividend reinvestment plan bros out there. Those are also going to factor into an options price too, but they're on a much smaller scale than delta, theta, vega, direction, time, and volatility. So Best Buy is looking pretty good. We're going to sit tight though and do nothing, which is basically, that's kind of the bed that we made for ourselves after this thing fell out of bed right after earnings. I was like, well, all right, we have a deep in the money short put. I didn't plan on doing this, but desperate times call for desperate measures, and you've got to be willing to, step up to the line and call that Johnny Manziel audible, like I talked about with Tom and Tony this morning on the Skinny and Options abstract applications. So if you missed that the first go round and you are in dire need of a few too many Johnny Manziel references, then I would watch the show earlier this morning. But sometimes you just got to do it, man. Sometimes you just got to call that audible. So that's what we did with Best Buy. We're going to sit tight. We're just going to play it like we would long stock, which is pretty much a sit and wait and see and all that kind of stuff. All right, so there's nothing really else. I mean, Delta Airlines is doing okay. I mean, everything's doing all right. IWM is doing all right. Starbucks obviously doing okay. We've got a recovered call, a little investment deal right there. Shopify is doing great. Tesla obviously is going to expire worthless, so that's one of the sticks in the mud, I suppose. But let's go into Apple though, because this is the one that I do want to adjust, because I think we maybe missed an opportunity on Friday when Apple was a little bit lower. I mean, we got bailed out because Apple's higher now, but I think that this was something we probably should have taken a closer look at on Friday, but we missed it, and so here we are, and we just got to make do with what we've got. So Apple, AAPL, I have a 220-240 strangle on with 31 days to go. You can see the stock is at 214, just under 214. So what am I going to do? Well, we've already made one adjustment in here. You can see if I bring up my chains here really quick. If we crack open dem bones and we look at these chains real quick, you can see the strangle. Only the OG chains fans are going to know what I'm talking about there. February 20th, 267, we sold the 220-270 strangle. And so that was the original position. And then on March 11th, so this was just last week, we went ahead and adjusted by rolling the call down from 270 to 240. So that leaves us with what we have now, which is a 220-240 strangle on. We've collected a total of 472. You can see that number. I'll even grab my Diet Strawberry. You can see that here. You can also see that here. So the way that I have my groupings on the positions tab, thanks to you all, you guys are the ones that brought this to my attention. I was not using this prior to you guys saying, hey, you should probably use this. And then I changed, and then I started doing something different. And so if you group by order chains like what I've done here, not only will you have your positions be kind of neat and tidy with the trade prices, you'll have nice little names here and things of that nature. But then once in a while, from time to time, your computer will just start randomly playing Alice in Chains songs, which is kind of nice. Right? I mean, like when you're not really in the mood and it's kind of a bit of a somber day, like you need a little rain when I die. Like I need a little rain when I die. And so every once in a while, the DJ Magic just spins it up for us, and it's pretty nice. And so if you look at the chains over here, though, you can see that we've made these couple of rolls. We've made these couple of adjustments. We have 472 for the strategy in total. What are we going to do now? Well, this is kind of the the standard operating procedure for a strangle adjustment. Usually, if you can get away with it, which we have been able to so far with Apple, the first adjustment is into a tighter strangle. That's what we've done here. The second adjustment is going to usually be into a straddle. That's what I'm about to do in the next couple of minutes. And then later on, if the position still is not working, that's when you consider going inverted. And so again, you can play around with that. You don't have to follow that like to a T or anything. This is just a suggestion. This is just a little something to toss into the memory banks and say, all right, these are some kind of reference points that I can use for adjusting a strangle. You may prefer to skip right over the tighter strangle and go right into the straddle. That's fine. You may prefer to stop at the straddle and not go inverted. That's also fine. There's a number of different ways that you could do this. You may prefer to stay in the wider strangle, exercise some patience, tap into the do-nothing strategy, which we've learned is oftentimes the best strategy. That's also fine. Like there's so many different ways that you can kind of slice this guy up that it really is very much a gray area. But still, we want to plant at least a few flags in the ground along the path to give you a couple of things to consider. And so we went into the tighter strangle. That's what we did over here on the right-hand side. What I'm going to do now, though, is I'm going to roll this guy into the straddle. So if I go ahead and I stay in the April cycle. So another thing to point out here is Apple has earnings on May 1st. Happy month anniversary to you guys, a couple months early here. May 1st, Apple has earnings. I don't really want to still have this position on come time earnings. If I still have this position on come time earnings, then something went very, very wrong. Because the only way that that would happen is if the position is not working in a most likely significant way. If that's the case, then I'm just probably going to cut it loose and be done with it. I'm just going to, just close the position and be done with it. So I'm not really interested in adding any time to the position right now. Now, of course, we could roll into the weeklies. You've got like the April 17th monthly with 31 days to go. I could go to the April 25th with 39 days to go. I could roll into that weekly, which that's a little weird. 8-day difference. Must be is that because of Good Friday and stuff? Probably. That would make a lot of sense. April 17th might be, is that a Thursday? So I'm assuming, hold on, let me check my April 17th. Is that Thursday? I'm assuming it is. Give me 2 seconds, because it will all make sense if that is the case. Hold on a second. April 17th. Yeah, that's a Thursday, right? Okay, so April 18th is a holiday. It's Good Friday, so that makes sense that the expiration is going to be the day before on April 17th, and so the next weekly option is 8 days away. So it all makes sense now. And so, all right, so you could roll into the weekly. I'm not going to do that, though. I don't really want to mess around with that. If I was going to roll this position, I'd roll it into the May monthly with 60 days to go. Now, if there wasn't earnings, I would consider it. It would definitely be something that I would entertain. But because there are earnings, I'm not going to do it. Because there are earnings, I'm going to go ahead and I'm going to sit tight in this April cycle. So let me open that guy up. And then we're not really going to think too much about this. We buy back our 240. We sell out at 220, and look at all the credits that we're going to be able to pick up on this. This is one of the benefits of doing it when the stock is not too far gone. Like you can see, the stock is still very close to our strike. We're going to pick up about $4 on this guy. So we're going to almost double our total credits collected. Now, we are going to have a straddle on, which doesn't give us much room on either side, essentially. We have the stacked shared short strikes when it comes to the 220 put and the 220 call, with no distance between the two, where they could both potentially expire out of the money, which is a huge advantage of having something like a strangle, not a straddle. However, given the fact that we're at 31 days to go, we're a little further down the decay curve, given the fact that I'm not going to roll this guy out to May, given the fact that I might consider holding this guy inside of 21 days to go, again, we're not signing on any dotted lines. This is very much an informal conversation, but I'm just letting you know where I'm at. We may go to 18 days. We may go to 16 days. We may go to 14 days. I may go to 11 days. I'm going to entertain an 8-day, DTE in terms of how long I may hold this position, because I don't want to roll this guy out. Now, hopefully it won't come to that, but we just have to wait and see. Sometimes things come to what you don't want them to come to, and that's just the way that it goes. And so let's go ahead and let's roll this guy out. And wow, look at the market strength before we roll it out. Look at this thing, man. It's almost like it's been beaten down to a pulp the last couple of weeks, and it needs a little something just to kind of goose the gears. Just a little bit. You've got EMS up 55 now. NASDAQ up 185. Got the boomers up almost 5 honeys on the day. Man, that's looking pretty good. So, all right, let's go ahead. Let's see if we can fill that to 431.
We can roll. No takers at 431. Let's try 427. I think we'll probably find somebody. All right, so we got filled at 427. Beautiful. Okay, so we adjusted our Apple position. We did a little market commentary. We talked about Best Buy and took maybe half a victory lap, and maybe a third of a victory lap on Best Buy. And then I'm not surprised that the market is up. It's been pretty quiet though today. There hasn't been a lot of movement, really. I mean, there's a little back and forth. I mean, earlier this morning as the market's searching for equilibrium and doing different things, but it hasn't been crazy like it's been the last couple of weeks. I mean, there've been other days the last couple of weeks where the market was up 55 or 60, similar to what it is now, and then of course it would finish the day red or sell off a lot or whatever. But it was a lot crazier than what it's felt like this morning. I think a lot of that's going to be a testament to, the market's just going to stay quiet. The market's just going to stay quiet. And why would the market stay quiet? I mean, I don't know. What would you do? Like if you were 2 days away from the most important economic print of your lifetime, what would you do? Would you be quiet? Probably. Right? Would you be kind of tight-lipped? Of course, because you'd be nervous as all get out. And so that is exactly what the market is doing today, because Wednesday we do indeed have the most important FOMC print of our lifetimes. And again, this is very, very basic stuff, right? If Jay Powell, if he goes with the purple tie, it's time to buy, right? We already know this. If he goes with the purple tie, it's time to buy. But again, he's already done purple like 6 in a row. He's got to break the streak, man. Just throw me a salmon, right? Throw me a powder blue. Can you give me a powder blue? Like, I mean, that might do a little something. I have a feeling if he goes with powder blue, then you're going to be stepping in some doo-doo. And that's just the way it's going to be. So, all right, let's go into you guys and see where you guys are at. That's a good transition, I think. It's about as B- as any other would be. So, Orgenu says, greetings from Italy, Dr. Jim. Your managing options portfolio webinar saved me. Man, look at you. Thank you so much and have a great week, man. I hope you have a great week too, my friend. Thank you so much for being here and being a part of what it is that we do. I appreciate you, my friend. I appreciate you so much. Thank you, Organu, for being here. And it's so encouraging and very humbling to know that the managing options content helped you so much. That's really great. Again, I'm always here if you guys need help. So just let me know. I appreciate you guys. Sam Mel's in the house. Dr. Jim's in the house. Hope you had a great weekend. I did, my friend. I definitely did. The only bummer is, and I talked about this this morning with Tom and Tony. So our 2 new little kittens who are like a few months old now, 4 months old, 5 months old, maybe, I don't know. I lost track. But it's time for them to get neutered. And so we had to take them back to the rescue where we got them from, which is like 2 hours away from our house. We could have done it at our normal vet, but it would be super expensive. And so I'm like, nah, man, we just got to do it. Well, it came time to pay the piper, and we had to drop them off yesterday, and we got to pick them up tonight. And so guess who's dropping them? Oh, guess who dropped them off? Me. Guess who's picking them up? Also me. And so, man, it's gonna be a little brutal when I head on down there, heading out to the boonies of Florida, basically in the center of the state where nobody lives, just a bunch of daywalkers left and right. And so yes, I got that to look forward to after the market closes today. And so yes, but it was a great weekend nonetheless. Thank you there, Sam L. Sam L goes on to say, Doc, is Uncle Jay going to save us? Or should we start saying our goodbyes to our loved ones? Well, I'll tell you what, man. All I can say is this. I've been trading a long time, right? I started trading in 2007, so it's almost 20 years, and I've been studying the markets basically since 2000. In all of my professional experience, everything that I've experienced myself, everything I've read about, everything I've studied, there has never been a more impactful economic print and economic discussion than what is going to happen at 2 o'clock when the number is released, and then at 2:30 when Uncle Jay walks out for the presser. And I don't even care what he says. All I care about is what is he wearing. All I care about is what color did my man roll with today. That's all that matters. This is not the stuff that they're going to teach you on the internet. This is not the stuff that they're going to teach you in a Principles of Finance class undergrad. Like, you've got to go all the way to learn this. You've got to go MBA. You've got to go PhD. You've got to finish that dissertation, and then you finally, kind of come to grips with this type of knowledge. And so I'm giving this to you guys. I'm saving you guys years and years and years of education. The only thing that matters is, did he go with the purple tie? Because if he did, I'm about to buy. That's how you do it. So I don't know there, Sam L., but I think it would be just good practice to probably throw out a few extra hugs the next couple of days, because I fear that the end is indeed near. So Junior Matt, good morning from Australia. New crash course, Dr. J. Yes, that's correct. Yes, I'm working on it now. I've been dragging my feet a little bit. But yes, I'm working with Ryan, our resident YouTube expert, and the production team and everybody. I'm very excited about this new crash course. I think, and I'm a little bit biased since I know the person who, produces all the content and creates all the content. I know him personally. I know him well. I'm a little biased. I think it could be our best one yet. Now, I'm not going to say what it's about yet. I'm going to wait to kind of release that just to kind of keep you guys in the dark just a little bit, kind of like Lost Season 2. Where you're like, okay, this thing is awesome, but I still have no idea what's going on. Very similar idea that I'm trying to work from here. And so I'll let you guys know at a later date, but I think it could be our best one ever. Let's see. Don 721, great segment this morning, Dr. J. Man, I appreciate you, Don 721. Thank you so much. We talked about the paradox of choice. And it was, I'll tell you what, I got to hand it to the creator. I got to hand it to our visionary, our leader, when he drops some, pearls of wisdom on our pathways forward through the forest. I mean, when he said about making money being a skill, and when he said about, how he said, you have to learn how to make money and learn how to make money well, or whatever he said, that's absolutely true. I totally agree with that. I mean, I disagree with everything else he said, but that part was actually, that was very, very good. And so I was a bit shocked. Normally he's a little kind of slow, got a little hitch in his giddy up on a Monday morning, but he shocked me this morning. And he really came to play. So I got to hand it to him. Emmett Morrison in the house. Hey there, Dr. Jim. I'm ready to absorb some knowledge, man. I appreciate you, Emmett. Thank you for being here. Hopefully I can give you a little something. And we rolled the Apple strangle into a straddle. Pretty basic stuff, kind of run-of-the-mill Betty Crocker type stuff when it comes to a strangle adjustment. But again, these types of things, man. I mean, I basically talk about the same 6 things every day. That's all we do. Now, we don't cover all 6 every day. Some days we only do 1, or some days we only do a couple others or whatever. But I'm not really, I'm not going to come out here and totally reinvent the wheel. Like, I'm not going to come out here and start doing some brand new things. Now, there are some brand new things I'm working on behind the scenes, right? But those are so far, not far. Those are so much into still the raw materials process that they are not ready to see the light of day. They are not ready for public consumption. If they ever get to that point, you guys will be the first to know. And by first to know, if I really figure it out and it starts working, I'm just gone. So when I just disappear, then you'll know that it worked. And I'm taking all my raw materials with me to Fiji. But in the meantime, Emmett, I really hope that you get some value from what it is that we're doing. Thank you so much for being here. Adam says, Adam Arnfield, what's going on there, Adam? Would have gotten extra $5.50 on 3 Netflix call spreads if I'd sold them today. So you were long some call spreads, I'm guessing, because Netflix is screaming higher. Yeah, Netflix up 47. Yeah, Netflix up a ton. It's interesting with the NASDAQ being fairly strong today. You've got the NQ is up almost 200. But then you look at the components and it's like, well, Apple was red up until a little while ago. Apple up $1, Amazon unchanged, right? Amazon up 10 cents. Netflix is up a ton, of course. But then you go on down the list and it's like, look at the others, man. Google down, right? Down 30 cents. Meta down 237. Like, that's pretty interesting. Again, Netflix is up $1 million, but then you go on down to like Tesla down 11, right? And so it's like, man, where are all the gains coming from? Gains with a Z, of course. Like, where are these guys coming from? They're not coming from the Mag 7s or the Mag 6s or whatever, or the MAGA 1s, whatever it is. It's like, where are they coming from? I mean, I don't know. I guess they're coming from like, Chipotle, because we know that Chipotle is in the NASDAQ. Oh, speaking of Chipotle, hold on a second. Yeah, look at Chipotle, 18 days to go. If you've been following the show the last couple of days, we've been trying to roll this spread, but we can't because the Chipotle markets are the Batista markets, right? Now, again, I don't know who is responsible for Chipotle specifically. It could be Tony, it could be Nick, it could be Vinny, right? I don't know who's controlling the Chipotle pits right here and right now, but I know that last week we tried to roll this into the next cycle and we couldn't because the next cycle didn't exist. So let's take a look at the Chipotle pits today. And let's see what's going on. Look at this. Man, these guys. They need to chill out on some of that travel hockey and give me some May options in Chipotle. Man, look at this thing. You got April options, 31 days to go. Okay, that's normal. You've got, earnings coming up on April 23rd. Okay, it's all good to go. But we're missing something. We're missing a little something that usually goes right about here. Man, no. And they've got June. They've got July. You want to do a March 2026? No problem. I got all the March 2026 that you need. But you want to do a May 2025? Nah, man, I can't help you. That's crazy. Is that not crazy? Am I the only one that thinks that's crazy? There's no way. Y'all got to be with me on this one. man, somebody just, right into the Batista estate, right into the bottlers, do something. Like, let's get some May options in Chipotle. I'm going to wait. I'm still going to wait because I'm so curious to see if these things ever show up. They have to show up at some point. They can't take it all the way down to April expiration. We only have 18 days to go. We're in the weeklies because I wanted more strike availability. But there's no way that they're going to take it all the way down to even this expiration. I'd be surprised without the May monthly showing up. And so they're a little bit behind the 8 ball here. But again, I think Vinny just finished his season. So we got to give my man a little bit of time. And so let's see. Sergio's in the house. What's going on there, Sergio? I skipped over you. Sorry about that. I appreciate you very much, my friend, though. Thank you so much for being here. I really, really appreciate you. NASDAQ now up 211. And so that is some good stuff. Let's see. But Adam, yes, obviously, woulda, coulda, shouldas, man, right? It's always, you always got to give yourself a little bit of leeway. Like when it comes to trading and when it comes to, just what we do on a daily basis, you're never going to get the whole move. So you need to just go ahead and kind of relegate yourself to the fact that, all right, I'm just going to get a portion of the move, of every move. It doesn't matter if you're buying call spreads, playing the upside, if you're selling call spreads, playing the downside, if you're scalping futures, kind of following the Errol Coleman system of trading, whatever, you're never going to get the whole move. It's just not going to happen. And so like kind of kicking yourself for not getting more of the move, that's a tough game to play. Now, if you're just straight up like scraping off just Canadian nickels, then that might be a problem. Like at least get me some U.S. currency. At least get me like the full 5-cent deal where you don't have to do the exchange rate. It's only worth like 3.5, like whatever, right? So maybe that's something that you can revisit. But I would be, just be a little patient with yourself. But I appreciate you, Adam. Thank you for being here. Sparky Dog in the house, Dr. Jim. Dr. Jim says, I'm as worried as Tua. Oh, here we go. A Tua comment. Man, you all hit me where it hurts. Man, but I've been Eagles from day one, so I don't give a rip about Tua, but I'll go on. I'm as worried as Tua when his left tackle's on IR. What are we going to get assigned in BBY? It's a great question, and I'm also very concerned for Tua. But it's not really the left tackle. It's the right tackle, right, because he's left-handed. So for him, you would hope that, the left tackle problems he would be able to see and hopefully kind of circumvent some of those. But the right tackle on the backside, that's going to be a bit more challenging. But yeah, so for BBY here, you can see that the extrinsic value in here is still almost $1. So I'm not worried about assignment. I'm not worried about assignment at all because remember the other side of the contract, the long side of the contract, whether it's a put or a call, it doesn't matter. If he or she chooses to exercise, then he or she loses whatever extrinsic value is in the contract. They get the intrinsic value, but they lose all the extrinsic value. And so most people are motivated, especially in the markets, are motivated by economic outcomes. And so here, there's a significant amount of economic significance in that extrinsic value. So as long as this number stays kind of plump and robust, I'm not really too worried about being assigned on BBY. Now, is it possible? Yes. And will it happen from time to time, even when the extrinsic values are quite lofty? Yes, it will. But the likelihood of it happening is pretty low. And by pretty low, I mean less than 5%, less than 3% every day, I would say. Now, what defines plump and juicy and robust in this context? I mean, definitely anything close to $1. That's plenty plump enough. I would say anything over 50 cents. I would say anything over 25 cents is enough to stave off most assignment risk. Once you get under 25 cents, it gets a little dicey. Again, you got to remember, though, it's 25 cents in the options world, which is $25 in the actual world. And so, sure, maybe your Sosnoffs and your Batistas aren't going to give a rip about $25, but most of us commoners, most of us peasants and plebes, we care about that. And so it's like, I'm not usually too concerned until it gets under 10 cents, honestly. But I'm just kind of giving you the hierarchy of working through, kind of the risk. And, I mean, I plan to hold the BBY for a while, so you're going to see it every day. Like you'll see it every day, and if we get assigned, then I'll tell you all we got assigned. I'm like, we got assigned, now we have to deal with it. Now what do we do? And so I would say right now the likelihood of taking assignment is very, very low, almost zero. But it's never zero, of course. When you sell options, there's always some positive probability that you get assigned. So hopefully that helps a little bit there, Sparky Dog. Let's see. Junior Max says SPX. Let's pin 5750 on some Friday revenge is sweet. SPX is probably, it's right around 5,700. So yeah, it's a little bit. It's gonna kind of converge on the March options, so not the M options. I'm guessing that ESH5 is pretty close to that. Yeah, it's only a few points higher. And so those two are going to converge come Friday. That's essentially what, triple witching is. You have all these things that come to a head at these quarterly expirations, which of course are going to be December, March, June, and September. And so that's going to be Friday, but nobody's trading March anymore because today is one of the heaviest roll days of the cycle usually. And so everybody's kind of trading June now. But let's see. Robert's in the house. I appreciate you, Robert. Thank you. Daniel RV's in the house. What just happened with COF? Is that Capital One? I think that's Capital One. I feel the strangle while the stock was doing nothing, and it dropped 5% in 5 minutes. And I have no idea. You should ask Samuel L. Jackson, though. He probably knows. Capital One Fund. Yeah, that's right. It's Capital One. And so Capital One, you've got 162. Yeah, down $10 on the day. I would imagine if some kind of news came out, maybe Samuel went somewhere else. Maybe he went over to Chase. Maybe he went over to like Regions, Fifth Third or something like that. That would be a big down day for Capital One, I would think. That'd be a pretty big loss for them. And so Capital One down $9 on the day. I don't know. Can anyone help out Daniel RV? What happened to Capital One? Does anyone have any news handy? I don't, and even when there is news, I don't even have the news handy. So the fact that we'd have to dig for this makes it even more problematic for me being able to figure out what may have happened with Capital One. But let's see. Richard Price in the house. Appreciate you, Richard. Harsha's in the house. What's going on there, Harsha? Hey, Dr. Jim. I had a disaster of a trade. Sold APP. Is that AppLovin? Yeah, we did a little AppLovin before. I think that was an Anka special, if I'm not mistaken. Yeah, that's AppLovin. Yeah, look at that. Wow, the stock's up 8. Man, this thing is a mover. I'll get to the rest of your question in a second there, Harsha. But yeah, wow, look at that. Yeah, 80% IV. I mean, it's, you're kind of signing up for something it's going to move around. It's not just going to sit tight. Like you ain't trading Procter & Gamble. Like this isn't, General Electric, which I think General Electric's at like 1,000 or something. So that's not even a good example anymore. But Procter & Gamble is always a good example when it comes to stocks where it's like watching paint dry. But AppLovin is not that. But Harsha goes on to say, I had a disaster of a trade, sold AppLovin 510 put from March after earnings. I panic adjusted to June 2027, 390 put. At this point, I am like long stock. That's correct. Can I sell near-term calls to reduce my delta? Yes, you can. You absolutely can, Harsha. And so, hey, so first of all, right? Sure, in hindsight, you might think, all right, I probably shouldn't have done that. Like maybe I reacted a bit too quickly. Maybe I panicked a little bit. Hey, we've all been there. We've all been there. I've been there. You've been there. You're there now currently. A lot of people that are watching the show right now have also been where you are right now, or they are also where you are right now. So you are not alone, my friend. You are in good company. That's the first thing I want to say. The second thing I want to say is yes, and this is the beautiful thing about the derivative space. There's almost always, maybe even always, something that you can do. There's a move that you can make, right? It's kind of like for all my chess bros and my chess brethren that might be watching the show. Now, I'm still pretty awful, hanging around the 650 to 680 rank, which is absolutely terrible, and it's embarrassing to say out loud publicly, but it's true. But still, I can understand the game, at least at my level, which is very, very beginner of beginner, right? But still, it's like, man, there's always a move that you can make. Like there's always something that you can do. Now, maybe you find that you got yourself into a pretty difficult spot because you keep running into these family forks where homeboy has his knight trapping your rook, your queen, and your king at the same time, which happens to me often. And so that's the situation where, okay, maybe you don't have a move that you can make. But pretty much other than that, you've got something you can make. So for you here, that is correct, right? You could sell calls. You could sell near-term calls against that deep in the money put. Right, you could go ahead and treat the deep in the money put like stock, still hold on to it because you're getting a little bit more buying power efficiency than you would if you had the actual stock itself, and sell near-term calls against it. So it's going to look like an inverted strangle, but the way you're going to trade it is going to be more like a covered call. And then you decide, kind of how far you want to move or how far you want to place the short call. Like, do you want to maximize premium collection? Then you do a short call that's closer to the stock. So right now the stock's at 310. Maybe you're selling 320s, 330s, 340s, right? That's going to, of course, put you in a more of a pickle if AppLovin does rally back. But maybe you decide, hey, I want lower delta calls, so I have more room for this thing to run if it does indeed recover and rebound. That's your call. You have to make that decision. But it's always gimmys and gotchas. If you want more room to run, you have to be willing to take lower premiums. But if you want to kind of neutralize your bullish bias even more effectively, then take the higher delta, higher premiums. You have less room to run if the stock does indeed recover and rebound higher. And so the tricky thing, of course, about this position is just kind of thinking through what you want to accomplish. Like, what are you trying to accomplish? And obviously, if you stay in this at June 2027, this is a very long-term project that you've signed up for, which you're not obligated to do that. Like, you can make changes from that point too. But if you do stay, for June 2027, this is essentially going to be, a 2-year project potentially. And so hopefully that helps a little bit. But Ruben C says, good afternoon, Dr. Jim. We love that all that green on the screen. Yeah, we certainly do. Can you explain why Iron Condor is $5 or $10 wide is so hard to make money on? Yes, I can. This is something I've mentioned on the show many, many times before, and we've even unpacked it in detail many, many times before. But it has been a while since we've talked about this, so let's talk about it for a couple of minutes. So if I go into let me just go. I'll just do. Do I have a position? No, I'll just do SPY because I don't even have a position on SPY, so it'll be kind of nice and clean. So if I go into SPY and I go into May. And I'm just going to set up like a $5 wide Iron Condor. So let's say I sell a 540, I buy a 535 put spread. So I sell the 540 put, I buy the 535 put, and then I go to the call side. I'm just kind of picking strikes at random here just to get something on the books. Let's say I sell a 600 and buy a 605. Yeah, okay, that's actually not too bad. So this is a $5 wide. So this is a $5 wide Iron Condor. So when you look at this, so the first thing that I want to point out to everyone's attention, I want to bring this to everyone's attention. Look at the pop on this trade. It's 50%. So that right there should cause you to just gently pause. It should cause you to kind of say, that's interesting. So if I go to like the curve view, for example, right? Like let me go to the curve view, click on my analysis tab, and you look at like a graphical representation of an Iron Condor. Like what you see, I'll zoom in a little bit. You even see like, man, I got all this space. Like I've got all this room for the stock to run, and I'm gonna make money. Like, isn't that how this works? Yes, that is how this works. But the probabilities are kind of cluing you into the difficulties that you're going to run into with a strategy like an Iron Condor. So what are those difficulties specifically? Well, I think the biggest one is simply going to be the longs that are on both sides of the option. So remember that whenever you sell options, right? When I sell an option, I'm picking up a number of things, but I'm picking up positive theta, I'm picking up negative vega. So I'm able to benefit from the passage of time. That's good. I'm also able to benefit from volatility contracting. Also good, because volatility normally contracts, especially after periods where it's expanded rapidly, just like the one we have just gotten through. Volatility is kind of falling through the floor today and may continue to do so for the coming days. Now, I don't know what's going to happen. Maybe it spikes again tomorrow. We're just one Tennessee tariff tweet away from VIX being at 30. Like, I understand that. But generally speaking, just look at a graph of the VIX. It wants to contract rapidly after expansions. That's what we've basically based and pinned our whole network on. Okay. When you sell options, you have both of those things. When you buy options, you're actually buying back both of those things. When I buy an option, it's negative theta. So the positive theta that I picked up on the short option is being watered down, significantly so, by the long option that I buy. Similarly, the short vega that I pick up on the short option is being watered down by the long vega that I have to absorb on the long option. So what ends up happening is the net result on something like an Iron Condor, you're still positive theta, but barely. You're also still short vega, but barely. And so now all of a sudden, the passage of time is not as valuable as it would have been if you had a strangle or a short put or some naked strategy. Like here, I'll even show you. Let me actually kind of put some numbers to this. So if you look here, look at the theta on this Iron Condor. The Vega's not on the trade bar, so I'm not going to hunt for that right now. The theta will make the point that I want to make. Look at the theta on the Iron Condor. It's $1.87. It's not terrible. Like, it's not too bad. It's like, all right, I'm getting $1, almost $2 a day in positive theta. Like, this is really, really good. Okay. But look what happens if I go in here and I uncheck both of these long options. Now, this is a strangle in SPY. I would never do this because my account's not big enough. But still, I'm not going to go to a different stock to make the point that I want to make. The same general relationship that we're establishing right here, this will play out at any price level stock. It could be a $50 stock. It could be a $30 stock. It could be whatever. If I get rid of the long options though, look at how that theta changes. Now I'm collecting $20 a day. Now, again, this is a big dog strangle, right? This is a Shooter McGavin strangle. You can see the buying power is $8,000. You've got to have $100,000 in your account minimum to do this trade right. You probably need even more than that. But the point still stands of what I'm trying to kind of draw your attention to, right? I'm basically reducing my theta collected by like 90% by buying the wings. Now, it's not always going to be 90%. Sometimes it might even be more. Sometimes it might be a little bit less. But it's going to be some huge, significant watering down effect of what it is you're trying to capture with short options. So what ends up happening is the days aren't as valuable. The volatility contraction is not as valuable. So you end up having to stay in this strategy longer than you would like a strangle or something like that. And so that is essentially what I mean when I say iron condors have a lot of friction. There's a lot of friction in these strategies because of the longs that you have to put in place to define your risk. Obviously, if the longs weren't there, it wouldn't be an iron condor. It could be a strangle, which is, again, a great thing, but you have no safety net. Like, you have no training wheels. Like, you know, if you fall over, you're going to fall over. Like, if you hit a little pebble on the road, like, you're going down. And that's what you're signing up for with something like a short strangle. So hopefully that helps you a little bit to understand. Now, again, I just kind of threw the iron condor under the bus. And rightfully so, but it still is not completely without merit. Like, it's a great strategy for learning. It's a great strategy for understanding a neutral bias in the market. And if you widen out the wings significantly, you know, even beyond $10 wide, now you're kind of getting more into like a synthetic strangle. So now it's not as much of a defined risk strategy anymore. You're $15 wide, you're $20 wide, you're $30 wide, you know, big boy Scotty S. Now it's going to feel a lot more like a strangle while still giving you some semblance of safety by having those longs in place. Still not my favorite thing to do in the world, to be perfectly, you know, frank and Frankie Walsh with you all, but in the spirit of completeness, you know, we have to obviously address that too. So hopefully that helped you a little bit there, Ruben. Great question. We hadn't talked about that in a while, and so hopefully that helped you and maybe anyone else who gave a rip about iron condors. But man, I can't believe it. I'm done. Can't believe the show's over. That's crazy. It goes so fast. You guys have no idea. Oh, by the way, we have extra long shows on Thursday and Friday. And so definitely tune in for that. That's going to be super fun. But guys, I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay optimistic. We'll see you guys tomorrow.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy red for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Hey, what's going on, everybody? Can we
really rally without a proper capitulation. Markets are making a move here. We're trying to figure out if this whole thing is over. There's also lots going on. Klarna is supposed to be entering the market sooner or later, and they just announced a deal with Walmart, which is not good for a firm. So we'll talk about buy now, pay later stuff. And then, of course, we got to talk about the rest of the week. We got Fed Day, and even though the market's not expecting much from the Fed as far as changing rates, still possible chance that we could get a decent sized move based off of what they say. So we'll talk about those three things and more and look around at markets. But first, welcome to the most dangerous show on the Tasty Live Network. Folks, it's Engineering the Trade. I'm your host, Jamal Chandler. It's Monday. Josh Fabian is in the house. How you doing?
Is this not the most quiet 65-point rally? I was just thinking that, like, yeah, we're up 65, but it's like,
I mean, we had some quiet 65-point plus
like it's like
drops.
This is the norm now. Yeah, 50 here, 60 there.
And if people are wondering what we mean by quiet, look, if you haven't been around long enough to see big moves in markets and violent ones, they're a lot more noisy in that there's a lot more like right now, what's up big as far as big names? You know, typically if you would have had a 65-point rally, you'd see, well, Netflix is doing what you would expect on a 65-point rally in S&P 500.
Yeah.
Meta, Tesla, Amazon, Google, not so much, right? Like, so that's kind of what we're getting at. Kind of interesting.
This is when I miss being on a desk. Like the phones would be ringing left and right. You'd be chaos. You have one phone over here. You're talking to a customer or whatever. You're talking to the floor broker, and just absolute insanity. I miss those days.
Things have changed in that way. Before we get to markets, man, how was your weekend? How you doing?
My weekend was a lot of basketball. I really been negligent about watching college basketball, and so I felt like before I made my very informed picks in the bracket today, I had to just dedicate my time to watching basketball over the weekend.
So you self-proclaimed did your bracket in like a few minutes.
Yeah, probably less than 5 minutes.
Having not watched basketball for the last 4 months,
I'm gonna get them all
you
right.
watched this weekend and you
I know
exactly where.
I know everything. I know exactly who's going to win. I know. Look, you give me a team, I'll tell you who they're going to. You give me the game, I'll tell you who's going to win. It was crazy.
What was my 7-10? My 7-10 that I'm worried about is Marquette and Marquette and New Mexico State.
Yeah.
That's Shaka Smart versus Rick Pitino's kid. Who's winning?
Okay, listen, I love the 10-7 upset. I almost always pick that.
Yeah, and Marquette 7.
Marquette, it's like, I don't know. I can't, it's like.
You said pick the game and you tell me who wins.
Okay,
Marquette. For familial purposes, I have to say Marquette.
Yeah, exactly. Like
I may not have picked them in the bracket, but I have to say Marquette because my daughter goes to Marquette.
Half brother goes to Marquette, and so it's like I almost have to do it for them.
It's gonna. I think what's also in that region is the potential chance. I just saw some article about this, but there's a potential chance that Arkansas and St. John's ends up meeting up. You know why that matters?
Arkansas and St. Who's the coach?
This is by the way, what we're talking about. This is the essence of college basketball now. These matchups. I'm gonna give you a second.
I don't know what.
You don't know who the coach of Arkansas is? So Pitino is the coach of St. John's, as you know, right? And he coached at where? Among other places. Which place do you think of most when you think of Pitino? College.
Kentucky.
Yep. Who else coached at Kentucky?
A lot of people. Rupp.
He's dead. It's Calipari. He coaches
that's right.
Arkansas.
That's Calipari. Oh, that would be.
It could happen. It could happen.
That would be fun. Yeah.
So there's a lot of different things, and I'm pretty sure that's some of what this bracket has done. Like for some way or another, people are going to end up matching up without us even knowing when they match up. We're going to be like, oh my God, I forgot that guy is there, or student went to this school and now he's playing against his former team because the way the transfer portal works, it's going to be wild. I'm pretty sure.
It is by far this Thursday, Friday, Saturday, Sunday are the 4 best days of the year.
No doubt. I mean, that's why I'm spending 2.5 of them in Vegas. I am going to be in Vegas Thursday and Friday, and it's like the best. And Saturday, I'm coming back Saturday, but I love it, man. It's my favorite.
I may come down with bubonic plague on Thursday. Possible. I'm just giving you a heads up.
It's awesome, man. I can't wait. And before we move on, too, I got to mention this. It was fun watching local basketball, high school basketball here. A lot of teams won. All the teams that won, like 1A, 2A, 3A, and 4A, all Chicago area teams, which was cool. Bennett Academy is one of the more famous ones that people know. Frank Kaminsky went there, whoever knows him. He's also an ex-Badger, but I'm looking forward to it. And then, you know what? The biggest game of the weekend was my game. 5th and 6th grade, that's right. We won the championship, baby. Park District.
Yeah.
That's right.
Yeah.
That's right. You know what? I'm having to calm my kid down. Not calm him down, but like sort of set expectations, because in the past year he won a basketball championship for Park District last year for our different town, our actual town, and then he won baseball in the summer, where he hit the home run in the championship game.
Yeah.
Now he's won this. He's doing it up, man. I mean,
that's awesome. That's confidence building.
Yeah, it is, man. That's exactly what we're going for, man. And keeping him humble. He works hard though, man. He works hard at all these different things.
Talk to him about how to handle being a winner.
Yeah, I know.
I've been asked to submit a video.
All pro. Well, you did lose. You know what? You did lose in the championship game, so no, I don't want you to.
Oh, I almost. Whoa, that was on the cusp of coming out. Whoa, that was dangerously close.
It's funny how that happens sometimes, right? I know, it's just instincts. Let's go to the platform. Let's talk about what's going on here, man. You brought this up. I actually mentioned it on Friday with Tom and Tony on This Week in Stocks. VVIX, at the time, it was still 115. You talked about how it did it close below 100 on Friday? There you go. Yeah. Closed below 100 on Friday. So as we talked about, as I mentioned at the top of the show, can we have a proper rally can we have this kind of rally without proper capitulation?
Apparently so.
Effectively saying, is this over? I mean, is this?
Apparently you can have this guy. I think personally. So I didn't.
Well, this is a rally, but are we going to sell this rip?
Yes, we're going to sell it. I think so. I didn't realize about VVIX until I think Saturday morning when I was looking around at some stuff. I'm like, I didn't realize it had come in that far. But it's hard if you want to attribute the sell-off to tariffs or concerns about more tariffs. None of that changed, right? It's all we haven't had any news on that front, and I combine that with the fact that we broke the 200-day moving average, which is a big deal. Okay, I think that's a big deal. So I think what we're seeing here is this rally and this contraction volatility. Maybe we get up to that 200-day moving average, but I think we're going to have we hit it like 3 or 4 times before we broke through it to the downside.
Right.
I'm not expecting us to break through it on the top side with one shot. So I expect us to get, close to it, and then I wouldn't be at all surprised if we see a pullback after that.
So within your statement is my thoughts about this, which essentially, again, for those who don't know, VVIX is basically a measure of basically how many options are trading within the VIX, right? How many people are reaching for VIX options.
Vol on vol is.
Especially in the upside, like especially the calls. And just because of the way the calculation is made. And so what to me this is saying is that in watching vol, VIX itself, VIX futures, right? Like I have them over here. I mean, VIX, the March contract is trading 20.5, sharply down from like, what was it up at? 24.
March is 20.5 because what's J's?
J's April. And so that's 1985. That's not. We're still in backwardation, but it's a weird backwardation if you really see the chart. Because let's just take March out of the equation. Now you're like at 1985, 1980, and 1990. So that's kind of flat. Just those three. Mm-hmm. But when you have to factor in the H, by the way, which expires on Wednesday, it is still backwardation. But the fact that they've come down quite a bit, and the fact that VVIX has come in below 100, to me says the market is getting used to this situation. And we always talk about uncertainty, right? That's the thing that drove the market. That's the first time it didn't like. Well, it's getting kind of used to this situation. It's not going to be like, you can't just, before it was like tariffs. And it was like, now it's like tariffs.
Wait, how was it the first time?
Tariffs.
No, that's how it is now. How was it the first time?
Tariffs.
Yeah.
One of those.
There's like this adaptability to the market, and that there's this high sensitivity initially when something new comes in, but as we talk about a lot, the market figures out a way to price all that stuff in. and then it becomes less sensitive. So.
And you said there's no new stuff on this.
There's no new
right?
stuff,
There hasn't,
right.
The last thing we heard was tariffs. Must have been Wednesday, Thursday, I don't remember. But tariffs on steel and aluminum, or EU tariffs on alcohol. Like that's the last thing we kind of heard. And even those, they're starting to almost feel like those are veiled threats. But as soon as there's action, it's like, oh, we'll push it back a month, until you actually.
I think April 2nd is like the next big date for things. But I think I think to your point, the sensitivity is kind of dulled a bit, but he has a way of just amping it up a little bit each time. So I would not be surprised, if he came out and said something along the same lines with tariffs, maybe we don't get much of a market response. But if it's something new, then I'm curious to see what the sensitivity of the market is to that type of stuff. So what that new might be, who knows?
Who knows? But I think that's it. Like, I think you asked off air before we started the show, does that mean this is over? And my answer is, I don't think it's necessarily over. I just think when we look at vol, we look at VVIX, the market is saying we're getting used to this tariffs thing.
Yeah.
But if like you said, if something new comes up, that definitely puts us in jeopardy of not necessarily breaching this 200-day moving average. And I'm also with you. I think we're going to bump up against this 200-day moving average at some point. But again, we do have a major catalyst this week, whether or not we're expecting
a rate cut.
Yeah, I mean, it's still a major catalyst. It's still, an excuse for the markets to make a big move one way or the other.
I think it's going to be what he says. I mean, you can't cut rates right now with so much kind of in flux. If we go forth with the tariffs, it's going to be inflationary. I don't even think there's any debate about that. I think even the Trump administration would tell you that, it's going to be inflationary for a bit. But I think it's what do they say after the meeting, and what their thinking is as far as rates go. But, the data that we've been getting the last couple of weeks, like CPI and things like that, they're slowing down. So
I'm also going to give you another metric that I've noticed as far as this market.
Is it the Pythagorean theorem?
It is the amount of people watching our show. We've had record people watching our show more recently. And so the more people watching the show means volatility is high.
It's on Mondays primarily, I've noticed.
Yeah, sure. But it does mean, I'm being real, it means volatility is high because people are watching. People are curious about markets. It's more interesting. Markets are a lot more interesting when we have this stuff going. Let's be honest. When volatility is high, markets are in. When volatility is high, markets are in vogue, if you will. So, big story today about buy now, pay later. Affirm, they have lost their status with Walmart. Klarna is going to be their number one provider, and Klarna is supposed to be going public within the next couple of weeks here. And we were having a friendly discussion about the current environment, and everything's expensive, it was a lot more expensive with inflation. Inflation has come down, but then there's the worry about tariffs and how that's going to affect people's pockets. It's a great time for buy now, pay later to sort of announce their presence.
It makes logical sense that if you have if you can finance your payments and you're a little bit concerned about the economy, why wouldn't you keep some of that money and finance it with Klarna or Affirm? And can we just call it layaway? Because
can
we just call them layaway? Because that's all it is.
That's exactly what it is. I know.
Layaway, it's 21st century, Gen Z or whatever gen we're on layaway.
I know, right? Ain't that some shit, man? Layaway was such a negative connotation.
I know, but now everybody does it.
When we were coming up and we made we made fun of people. Oh, you
got no money.
You got no money. You put on layaway.
And it's the same thing with secondhand shopping.
Yeah.
That's what everybody does now. They go to these shops and they yeah, no, I'm good, but thanks.
I know, it's funny. I had a poll the other day about if people would buy, what would you buy secondhand? It was a poll that I'd found. I should have polled it.
I remember, I saw it. Yeah, it was
on Friday. What would you buy secondhand? Most people say clothing.
Shoes were up. I'm no.
I know, right? I know.
No.
The only time I've ever done that is for gag stuff or a party or you had to, whatever. But
I don't even want to buy a used car. Okay, I'll be honest.
I know.
It's
I know.
I want my stuff to be mine.
Marks, how you doing, man? Thank you. Appreciate the love. Talking about a Rocket Lab put, huh?
Rocket Lab.
Any advice for managing a losing out of the money long put in Rocket Lab, the 16 put? I like this question because it's unique. It's different. Out of the money, you're along the put, huh? Well, I'm just curious. What tempted to take losses?
Money.
Well, I'm just curious. It really, without have you explain a whole bunch of stuff, it really boils down to what was your thesis for getting long the put anyway? Do you have an existing position? Are you long some stock, and that's why you got long the put, or did you just literally get long a put outright, thinking this Rocket Lab is going to tank? I don't even know what Rocket Lab does. There's a lot of interest.
I think they make rockets.
No, they don't.
Lab.
No, they don't.
I think that's Rocket Lab. I don't know what they do.
They're like food. No, I'm just kidding. I don't know what they do.
Me neither. But to your point, when it depends on what your thesis was. Are you protecting long stock?
Oh, it's an aerospace company. So
That's what I said.
Right.
They make rockets in a lab.
You didn't say it in a way that sounded like you were serious.
I was 100% serious.
No, you weren't.
I'm always serious.
Oh, God. Shut your mouth when you're talking to me.
If you were if this is a directional shot, if I take a directional shot like that where I buy a put, I'm willing to lose the whole thing. Like, that's just sort of my... I
agree.
It's very much the same mindset as, like, if I go to the casino and I take, a few $100 with me, like, I am prepared to part with my few $100 if it comes to that. If you're doing it because you're protecting long stock, well, then your stock is probably performing well if the put's not in the money. So...
and if, like somebody just said, they did tank from 30 to 16. If you bought this 16 put when the stock was 30... Marks, you just got a real lesson in volatility and how things work because, this is exactly what happens. This is why a lot of times we sell these type of things because even though the stock has dropped quite a bit from 30, this is how things work. I mean, the fact remains is that this is fairly out of the money. It's still a low delta option, and so that's why Vol came in on it so much. So to answer your question, like Josh said, I would be if I bought a put in this situation, I'd be willing to just hold on and just whatever, take it, take the somewhat of the loss. Or I put it on with the idea that I wasn't going to take it off anyway. Or if you're down 50%, just call it a day and close the position if you're really worried about it and you want to recoup some money. But I mean, this is a lesson, and sometimes things don't tank as much as you would like them to tank, right? And it sucks sometimes, but.
I actually had a similar situation with Amazon where I was long the stock. I had sold calls, bought the puts, and stock tanked. And I actually closed the whole thing out last week because it worked. So, it really just does depend on why you got into it to start with.
Yeah.
I'm trying to read this next thing.
Hedgehog, fade the rip. You know what? I would say fade the rip. If you have long deltas and you're actually making money on those long deltas, you should 100% fade the rip. If you are just fading the rip just because you think it's going to fall, I don't know. I don't necessarily know if that's the case. We got 2 days now of strong volume and markets moving up.
But I get it.
Yeah, no, I get it.
I sold micros Friday towards the close, and I was able to cover last night. And I got lucky.
You did.
I got very lucky. I was able to cover last night. But I certainly get the,
I mean, especially here, 57.50. I mean,
what's the 200-day moving average on
what?
On the continual on ES.
I'm looking at it right now. It's 57.76.
57.76.
On ES, it might. Yeah. Am I see? Oh,
is that right? Are you sure?
Yeah, I don't know. I think we're close to roll. That's why. No, when I did $ continuous, that's at 57.02. If you look at the continuous. That's at 57.02, but if you just do ES, of course, it's 57.50. So
wait.
That's actually
200. No, dude.
Yeah, look at the continuous right now. What do you see for continuous? What do you see? What number?
57.72.
Really? Mine says 57.02 without me. That's the March futures, without me doing anything.
I'm just ES continuous 57.72 200-day SMA.
Well, I said 57.76.
Well, no, you're wrong. 57.72.
Whatever, either
Whatever
way.
it is,
but what number do you see for the continuous contract right now?
57.0150.
57.0150, right?
Yeah.
Yeah, that's kind of weird, right? But it's going off of the March. Even though it's showing us continuous contract, it's showing us the March. And right now, June is at 57.53.
Whatever. Fading the rip, I think that you've probably got, I mean, my thinking is you got 70 points of risk to the upside.
Yeah, possibly.
And maybe a couple hundred points to the downside.
Yeah.
I don't hate it, but I probably would do it, because even though vols come in quite a bit, probably still would do it like by selling ES calls or SPY calls or SPX.
I mean, we're getting. Normally I would say we're getting dangerous to an environment. We're getting close to an environment where it's dangerously close. We're going to be ripping higher, but like we said, this has been such a headline-driven environment. It's hard to say that, Yeah. But when you look at all the market internals, you look at the volume we have right now, 1.7 million contracts traded today.
Pretty good.
You look at VIX, where I don't know where actual cash is. Where's cash? Cash is 20.43. We're close to falling below 20. You look at the futures, and like I said, backwardation, come Wednesday, backwardation might not even exist.
It may not exist.
That's where we are right now. I think things are changing very rapidly. And sometimes it just takes not having any damn headlines and any crazy news to make that happen.
Good luck with that. I mean,
I know.
I mean, and this isn't even a political statement. It's just that we're in a period where you can generate headlines right now, and it sells ads and stuff like that. So I expect headlines. I don't think it's going to get quiet.
Well, that's what Steve Aguilar is saying. We could be one tweet away from another correction. It's true, Steve.
Yeah.
It's very true. David Gallimore, I thought Rocket Lab was a mortgage company too, but it's just regular old Rocket. Yeah.
Yeah, that's right. And they merged with Redfin.
Yeah, they
last week?
bought Redfin last week, I think. Yeah.
So now you can shop online.
Sooner or later, it's just going to be online for mortgages.
You're just going to go sit there with your phone. You're going to scroll through and be like, I want this house, and you can get a mortgage and be done. That's it. And God, I hope it's like that, because the process of buying a house is a pain in the ass.
I was trying to frame how I want to say without getting in trouble. So you're saying you don't want any more attractive stay-at-home moms to be your mortgage lenders? Is that what you're trying to say? Your mortgage brokers? You don't want that?
I didn't say that. I said I want it to be an easier process. Somebody can still hold my hand.
I mean, that's going to look. If these things really end up going that route, it's going to put a lot of people out of jobs.
I don't understand why in this day and age it's still such a pain in the ass and all the stuff you have to go through.
Like or buying a car. Like the same
buying a car too,
situation.
Yeah. Well, the buying a car thing I always thought was about like their way of just wearing you down until you're like, fine, I'll pay whatever.
I know that's 100% part of it.
I just come in and I go, how much is it? And they say this, and I go, okay, I'll take it. They're like, wait, you don't want to negotiate? Like, nope.
No, just leave me alone.
I want to get the hell out of here.
I know, right? Dude, if and when I buy a car, which is probably sometime in the next year or so, I mean, I keep saying that, but it's nice not to have a car payment. Anyway, when I do, that's the biggest thing I'm worried about. Like, I don't feel like dealing with, I don't feel like dealing with these.
I truly, I've been going to the same guy since I was 16, and I call him, and I say, hey, this is what I'm willing to spend. What can you put me in? And he does it, and then they bring me the car.
Oh, gosh.
I don't have patience for it.
Yeah, not at all. Let's see. For Wednesday this week, which is Fed meeting, as of right now, 76 points of expected move between now and Wednesday. Is that low?
Is it low?
Is it low?
No, I think it's all right. I mean, given what we've been doing, look, we're up 55 today.
Yeah, we're at 65 at one point.
I think that's a reasonable range to expect to be within, yeah. I think that... I really think Wednesday's going to be a non-event, to be honest. I really don't... I think that what he says is going to be the important part of it, but I still think it's going to be a non-event.
I would like to think so, but we have moved on those things, for the past, 2 years. We have moved on a lot of Fed meetings.
Yeah.
But as a matter of fact, I have a reminder to myself, but I don't know where I got it from. There's this chart that shows the percent moves on days of Fed meetings. I need to look at that versus.
This is the first. Well, they had a meeting after the inauguration, but it was the next week, I think.
Yeah.
So this is the first one since the new administration was in. I think he's going to come out and be like, I don't know. That would be great if he just walked around.
Your guess is as good as mine. You know what I mean? The 18
comes out with a beer.
Sits the beer on the table. All right. What we got for questions?
This is my fourth one today.
Yeah, really. That would be great. Well, market's pricing in 76 points, Agent. That's Argent. Excuse me, Argent. I don't want to mess your name up. I hate when people do that to me. Argent. per.
If it's this, you'll risk money. Like, you risk money trading to make money that you have to pay taxes on, but you won't negotiate a better car deal to save money that you don't pay. Yeah, that's exactly right.
Yeah.
My time is.
Thank you.
I think my time is just is more valuable than sitting there and arguing for what ends up being like $600.
Well, yeah. I mean, we got expiration coming up. March expiration, of course. That could also be an event. I don't know how big that one is.
Well, that one is end of quarter too.
It's in the quarter. I expect it to be something.
Yeah.
You could have a situation where we end up moving another 150 points.
Which way do you think? Like, take everything else out, just based on where we are right now. Forget about any potential headlines or anything like that. What do you think? Where do you think the bias lies, up or down on Friday?
No, I'm biased on both of them. I want to say down on both days because I want to be wrong. No other reason than
I want to fade myself.
I want to be wrong. I think we're going to be down on Fed Day. I think we're going to be down big on Fed Day. I think we're going to be down big on expiration. That's what's going to happen.
Friday worries me to the upside because we've got so many of these stocks. We were talking about this before we came on. How many stocks are like down 50% from their 52-week high?
Mm-hmm.
And I think that there's a lot of money that could get put to work.
Yeah, no, definitely. I mean, there is an oversold nature to this market. I would say the lean is to want to be higher, but I just don't know how many buyers are left at the moment. I think you really need something positive to get people to step back in. And the funny thing is, like, if you just base it on what the dollar is doing, it doesn't necessarily mean there's a lot of cash on the sideline either, right? It's not like, the dollar is up big, so that means there's a lot of cash on the sideline. I don't know what to make of that neither. This has been an interesting market, man. I mean, yields have been all over the place. Dollars down. Obviously a lot of other risk assets been down. Bitcoin, equities. I don't know which way is up at the moment, and I think we're going to find out maybe sometime soon, maybe this week, maybe with Fed meeting, maybe with expiration.
There's basketball Thursday, Friday, Saturdays on this. That's all we need right now.
Typically, the market is quiet on.
It is.
Used to be.
Market is quiet Thursday and Friday.
Used to be.
Yeah.
We'll see what happens, folks. That's the show. Thanks for watching, and as always, be smart, be patient, trade them small, and trade them often. We'll see you.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Forbes called us best online for options trading. With stockbrokers.com, we're number one for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Hello, everybody. Happy Monday to you. Well, I believe I mentioned some teeth gritting would be involved, and that is what we're going through right now. The bounce is well underway. which, as I said, paradoxically, I welcome because we got to get this done. And I don't know, my spidey sense is that maybe the Fed on Wednesday will kind of wrap up this bounce. But yeah, we're moving apace. I'm glad for the cash I've got. It's actually higher now because I got a little carried away with all the tumbling. So I entered a position into that really wasn't a great idea. So I've got my cash like 50% plus at this point. So a lot of dry powder, a couple of flesh wounds, but it's still a really cool market. So I've got the charts ready for you, and let's jump in. And we begin, as always, with a spider. And we have been, we basically bottomed on Thursday. So the open on Thursday was pretty close to the bottom. I beg your pardon, the close on Thursday was pretty close to the bottom. Then we rallied mightily on Friday, and then also today. This line is here to mark last Monday's high. It does not necessarily mean it's important resistance at all. I just sort of left that as a marker right there. I'll show you some other charts later that suggest, in fact, the last chart is the S&P, what seems like a sensible target point. Here is the VIX. Now, we are easing down on this, and I want to just switch gears and show you a little chart I made for the weekend, because I was curious to myself, after the VIX peaks, which in recent months has been in the upper 20s, how long does it take to deflate? How long does it take for it to be reasonable to be bearish again? And the good news is that it's not months. It's actually tends to be measured in not even weeks, but days. And I measured out over the past year the deflation instances. And as you can see, 9 days, 14, 9, 4, 7, 4, something like a little shy of a couple of weeks, a week or two, something like that. And we peaked on the VIX ourselves last Tuesday. And so we got up to around 30. We're at around 20 now. We're flirting with the teens. I had a pun about that, but I'll just leave it aside. But anyway, we've burned off about a third of the VIX in its entirety, and the VIX gets cheap, like at 14 or 15. And I don't know if we'll necessarily get that low, but my point is that we're on our way. And today's we're up almost 60 points in the ES. We're up over 200 on the NQ. The bounce is blazing because to those with pretty short-term memories, the market seems really cheap right now. So pretty cool stuff. So it won't be too long to deal with this, I don't think. Moving on, the Diamond ETF. This one, and again, to emphasize, this is not a resistance point. This merely was anchored to this low. But we bottomed here, and we're blasting higher. And as I said, near the end, we'll look at some more kind of rational targets for where things might exhaust themselves. Here's the cubes, bottomed like so, and pushing higher. And there's the really powerful resistance is this trend line, of course. I don't know if we'll necessarily get that high, but let's keep moving. Semiconductors, SMH. Now, in this instance, we've come a long way. We bottomed here, and to my eyes, the first meaningful level of resistance is right there, and that is not far at all away. Semiconductors kind of led the way down during the tumble. And so kind of internally, they're the most vulnerable. So we're actually getting close to what could be a reasonable resistance point. Now, I would caution and say that, XOP pulled the same stunt and it went raging right into its pattern. So just because there's a cute little line there doesn't mean it's going to just stop. But we take these a level at a time, and it isn't there so far. So that's our first observation point. Sticking with semiconductors for a sec, NVIDIA, as I pointed out last week, got so low it got even a little below its supporting trend line. It's gone zipping higher, and we're getting close to a slightly important resistance line right there. AMD up strongly, up almost 5%. That's been battered and mashed, getting close to this level like so. Broadcom, not up much. Pretty poor performance on Broadcom's part. In fact, in a way, it kind of peaked. This little bounce peaked last week, and we opened quite weak today. We're here right now, but really just grinding away. And even worse than that, on semiconductor, considering the depths that it plunged, not that much of a rally, just a couple of percent at this point for ON. I would also point out, as an aside, Apple. I don't mention it much here because it's a really interesting chart on a multi-decade perspective, but short term, I don't really bother with it. But it's interesting in as much as we do have this interesting little top right here. It was actually red earlier today, which is incredible in this market. But this is the key, and this is a key that should be watched in the weeks or even months ahead. The very, very long-term channel midline, which has not broken or been violated really since way back about half a decade ago. So that'll be worth watching as well. Tesla, the Fibonacci's, like every other time, they won the day. Look at this. So we peaked here. I don't even have to look. It's the 18th. And then, so we fell, found support, bounced, fell, found support, kept supporting, and snap, there it goes. It's in a new range now. Down, 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 down. Pause right there. Nope, it's so weak that it falls and then rallies up to the same Fibonacci pair, finds resistance there, falls really hard, way down here, and then last week starts to rally here and then way up here. But look what happened. So this Fibonacci pair is what I mentioned as important resistance. The level itself, 250.17, the highest we got, which I guess is on Wednesday, 251.84, which is like 0.6% above the Fib. Really did a good job. So resistance, 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 and now even in this very green day, turning south. So Tesla is still very vulnerable. The next really major support, of course, way down here with this Fib pair, and then even more dramatically, this trend line way down here. So we're talking about, a price starting with the digit 1, which is pretty grim. So like 180, 190, something like that. EFA, amazingly, lifetime high. Just gone raging higher. So I'm staying away from the blast zone on that one. And just mentioned anecdotally, Baba, big Chinese internet stock, having a very strong day too, up almost 5%, having come off this enormous base. So this is a new recovery high for Baba. We didn't really talk about brokers much during the sell-off, but they really got zapped hard. This is just one Interactive Brokers. This peaked at around 236, and within a few weeks' time, it fell down to around 160. So very big drop there. Look at the gap. Got very close to the gap, just about sealed it, and now it's rallying. And I see another gap. Let's just throw a line right down like so. In terms of an important resistance zone like that. Quantum is reliving its fad. D-Wave, QBTS, having another strong day, approaching lifetime highs on this. This is a typo, ignore that symbol. Rigetti also enjoyed a nice little rally that's kind of stalling out right now. The one that kind of caught my eye, and God help me actually put in a small short position on it, was this quantum company, IonQ. It was very interesting to me, and I've got to stop right at that line just above it, so 26.41. But it seems to me, if you look at this top, and this top, and this bottom, and this bottom, this seems to be a creature that respects its own formations, if that makes any sense. So we'll see how that goes. But I've got to, I normally wouldn't go near quantum stuff, but I'm going to give it a shot. Got a short position on IonQ. Gold, huzzah, another record high, solidly above 3,000. I see the futures front month is up, not much, 0.22%, but it's still a record. So gold continues to do great. Miners doing very well. GDX up over 2%. So this is just eyeballing. This is the highest it's been for 13 years, something like that. Pretty impressive. And one item you may not have heard of before, but this is an interesting little hybrid OUNZ, like ounds. This is a gold plus silver investment instrument. And as you can see, it's been having a grand old time. It's also at lifetime highs. Getting back to the looming question, how high the bounce? How high the bounce? I've got a few odds and ends that help on that, I think. One is the IWM small cap ETF. And in this instance, and we can just reflect back here, we had a top here, big fall, and then it worked its way back to the pattern and then fell in earnest. And we actually stayed in this range for way more than a year, I think. Here's the new pattern, big fall, starting to recover, but as you can see, not there yet. So this definitely could have more life in it. I would also say, don't forget the importance of crypto in terms of this, the kind of psychology, the risk on, risk off feeling. And this is mired down in the mid 80s, still around 84 and change. But if this began to sell off and get back into the upper 70s, that would help the overall bearish case. But more specifically, and I went through all my index charts this weekend, because anytime we talk about Fibonacci, it's usually Tesla, but it applies to other stuff as well. And there were some index charts where this really worked out nicely. Here's three. Here's the NASDAQ composite. And in this case, we've got a fib that starts at the bottom back at around Halloween 2023, and of course peaks at the lifetime high. And so these lines are drawn automatically. Look at this. Check out this green line. Let's zoom in nice and close on that. Is that amazing? Look, there's the line. And this was, it was just falling like mad and then put on the brakes. Support, 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 and then finally starts taking off. So those fib levels, very, very cool. And it just eyeballing this a little more than halfway done with the bounce. So we could have another day like today, tomorrow, and then maybe some more little gravy on the turkey on Wednesday. But as I said, the next kind of pivot point could be Powell. The Russell 2000, we've touched on this by way of the IWM. This had fallen quite deeply in this fib range, but now it's starting to rally. And so this is what we're working toward. And as I said, just kind of roughly speaking, maybe about halfway done with the bounce. And then sort of ending where we began, the S&P 500. In this range, the fib goes from farther back, about a year farther back. In fact, the big bottom, October 13, 2022, all the way up to the lifetime high. And this is like, was eye-popping to me. Look at this. This is amazing. There's Thursday's low. There's the line that is like opened exactly at the fib. And then off to the races. Cool stuff, huh? Really cool stuff. So there's the fibs for you. And in this instance, the fibs are based on such a long pattern that we don't have a line to show where the bounce might terminate. But I sort of roughed out a zone here that kind of smells about right to me in terms of an exhaustion point. Call it something like, 5,800, round about there. So, yeah, okay, good. All right, well, that's our chart survey for the day. And hope you're doing all right. And I look forward to seeing you tomorrow with more charts. Take care now. Bye-bye.
If you missed the live show, here's our cherry on top weekly recap. Why are we literally rolling out the red carpet? What has this diva done? Who
I
is
saw
this?
that. Why do you got a little red carpet?
Diva.
Like it. They said it's
sound.
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here is how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your accidents.
They hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. No. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem! At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Well, he's more public in his mentality. I'm a believer. I believe that the world is good. And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade. Forbes called us best online for options trading. With stockbrokers.com, we're #1 for options and futures trading. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live here on this special day. The evening S&P is up just about 1%. They're up 56. NASDAQ up almost 200. Russell's up 25. And the Dow flirting with up 500, up $472. Volatility in, well, almost $1, trading at $19.95, down 95 cents. Been weak all day, and they've crushed volatility across the board. I think they finally took last weekend out. Bonds are up 6 ticks to 116.30. Call it mid-range for the day. Bitcoin, 84,500 after trading down to 82 land early last night, back up to 84,500, about $2,500 difference. Oil up 40 cents to 67.30 and change. That's at the low end of its range after catching a bid last night. Gold is up $5.70. Been going pretty much sideways, pretty much an inside day to the upside in gold. Silver doing slightly the opposite, same way, but to the down side. Nat gas down 11 cents, finally under $4. Getting ready for pool season, Sadnoff. Need it under $3. If you can help me out with that, I'd greatly appreciate it and consider you my best friend. Euro's up small. Sadnoff, this has been a day all about the upside, Sadnoff, not the downside. Netflix started us off. It was up around $20, $25 right out of the chute. It's up $42 today. That's an almost 5% move in Netflix. Costco, which has been taking a beat in the last couple of days, up almost 2%. That's $16. And you even have your Baidu, Sadnov, up $8 or $9, almost a 9.5%, 10% move here in Baidu. Royal Caribbean back from bankruptcy, up another 4%, up 8.5%. Coin up 7 and change. Carvana's up 7. Everything is up, Sadnov. The only buckers that we have to the downside are some, Tesla's your biggest bucker. Tesla never got its wings underneath it at all today. It was down, maybe down 6 or 7 was at the highs for the day. Affirm was also down most of the day, down 3.5. And then everything else is volatility related. Meta down just about a half a dollar. Amazon down around half a dollar. Google down around 34 cents. That's all I got, Sadnov. What do you think here today?
Well, today was one of those weird days when I thought the NASDAQ was going to take the market down. I was really surprised when about midday they finally turned the NASDAQ around, and I made the mistake of shorting it when the NASDAQ futures were up about 70, and I thought, okay, this is a gift because I thought they'd be down another 50 at least on the day. They never did. They
never really looked like they were going to turn around either. I mean, you tried making a few scalps there early in the day, but after that, what was?
After that, I gave up on the S&Ps, but I thought the NASDAQ had a chance to turn around, and it clearly didn't. Up 200. Not a chance. And so, this was. I thought after Friday that today was going to be. We said it last night. We said it this morning. I thought today was going to be a bullish day. I was surprised big time that they were down last night.
Bigly, you said bigly.
Bigly. Surprised bigly that they were down last night, down 30, 35. It kind of messed me up overnight. If they were down like 10 or 15, I would have thought rally for sure. When they were down 30, I'm like, okay, maybe I'm wrong on this one, but no. They came for him Friday. They came for him today. It makes sense. Nice two-day bounce. I think tomorrow they will try to chop a little bit higher, but I think by Wednesday, Thursday, they give up the ghost. And I don't think they're going to do anything Wednesday. The challenge tomorrow is going to be, I think they took all the juice out today. Like you said, I think they took the weekend out. I think they took, the prior weekend, not this weekend coming, but the prior weekend. Yes. Yeah. I think they took a lot of the weekend out Friday, but they took more, they took the rest out today, and they took Monday out. I don't know because the big Fed's talking on Wednesday and VIX, everything is Wednesday. I don't know if much premium will come out tomorrow. I don't think you're going to see a lot coming out tomorrow. I think tomorrow's going to be
I think you got
a struggle.
I think you got it today. I agree with you 100%.
I do too.
Yeah.
I do too. I don't see a lot of juice coming out tomorrow. Bonds had a couple of swings today. We caught those okay, but mostly this was just a day where you had to be short vol, you had to have it coming in, and you got paid.
Yeah, well, it's okay. I mean, you're allowed.
Yeah. This is one of those days when everything pays you.
Yes. Yes.
So,
you do have the FOMC interest rate decision on Wednesday, Sadnov, too. Don't forget.
I know I mentioned that. I don't think that that's anything. I think that's a complete non-event. I mentioned this also a couple of times. I know,
but maybe to keep volatility bid here, like we don't go down too much more if there's got jobless claims on Thursday. Also.
Yeah, I agree. Yeah, I agree. I don't think much happens. I think it's a big non-event tomorrow with vol not coming in, and I think that on Wednesday, vol will come in after the Fed stuff from Wednesday to Friday, but I also think that that's going to be met with a little downward pressure. But we'll see. I don't think you have to get short today. I tried a little too early. I think you'll have as much time as you need to get short tomorrow, if you want to.
Yeah, I get it. It makes sense to me too.
It's a good rally. This is almost 2 day.
2 day extravaganza, Sadnov, from around what? 5,600 to 57.5 or so.
Yeah, probably a little below that. Yeah,
right.
I mean,
a little bit below.
It's about a little under 200 point rally from the bottom, and that's little plus 3%.
Yeah, you're right. The lows were 55.60, so almost 200 points.
It's wrapped right around 3%, and maybe couple of freckles more, and that's it. I think that's a nice little bounce back. 10% top to bottom, 3% bounce back. It's pretty good.
Yeah, dynamic market. Bulls and Bears getting a chance to make some money.
They got you both ways here. I mean, the question is, if anything's going to hold them up tomorrow, it's going to be the NASDAQ stocks, because NVIDIA, Meta, Tesla, Amazon, they're all down today. And so, Google, Apple turned around, but the rest of them are all down. If anything's going to hold them up tomorrow into the Fed number, it's going to be the NASDAQ stocks, because NVIDIA, I think, was down too today. Yeah, it was.
Mm-hmm.
And so if anything holds them up tomorrow, it'll be a little rally in the NASDAQ or tech stocks, but who knows? We'll see.
So if you ever think a stock could be up $42 on 6 million shares of stock?
Sure. What is it, Netflix?
Yeah. I mean, it is a now it's a $960 stock, but it was a $900 stock before.
I mean, 6 million shares is a lot. Yeah, I mean, it's a crazy move on a stupid analyst upgrade. I mean, really stupid move. If I had any balls, I'd get short Netflix right here. I'm not kidding.
we know you won't be getting short Netflix then. I mean, you can't come to the party. Bring your BYOB. You're not bringing any. Then there's nothing I can do for you.
No, I've been defrocked. But yeah.
4 million Q shares of Q options have traded. 10 million SPY. Good volume all the way across the board here. I mean, even the S&P's 1.8 million is pretty good volume there too. Solid day all the way across the board.
No question about it. I think I was actually quite surprised by the volume today in the S&Ps and what looked like a very heavy volume in the option marketplace. I'm a little bit surprised. Yeah, agreed.
NVIDIA and Tesla are almost trading the same amount of volume of options today. That's a lot for Tesla. A Tesla. How do you call it?
Well, if you're from New York, you say Tesla. If you're from
got it.
Yeah, if you're from New York, you say Tesla. If you're from Chicago, you can say Tesla.
You can say it any way you want. Got it.
Yeah, I would be a hair. I mean, if any stock's got to make you nervous here, it's probably Tesla. If you're long, if you're trading it, I think it's one of the best stocks possible to trade, because like NVIDIA, it trades it trades like water.
Mm-hmm.
I mean, it's one of the best trading vehicles out there. But if you're just if you're a trader, it's a good stock. If you're a passive long, it would scare me.
Yeah, we got that phone call today from the gentleman who was passive long it, and it's it moves too quick, too fast for a lot of people. This last move down.
Yeah, it's
not fun.
Yeah, sometimes you see those stocks that just go straight up, and you can't figure out why it's going straight up, and then you see those stocks go straight down. You can't figure out why it's going straight down. Like that. But Tesla seems to be.
You're not happy on the way up. You're not happy on the way down. You're not happy unless you're unhappy.
Well, I was definitely more happy on the way down than the way up, because the way up was way worse.
You actually, I got to give you that one. You called that one a little bit.
Tesla,
I did not.
Tesla's been one of our best performing stocks this year, surprisingly, but of the equities. Yeah, Tesla's probably our best performing stock, and I think our worst is AVGO, believe it or not. I don't know why. I don't even remember doing anything in there. But
I can't believe AVGO. I mean, it's just because of the magnitude of the moves, because that's not even a stock you put a big position on.
I know. It's just the magnitude of the moves, I guess. They were just huge. But I think I looked the other day, and those were my best and worst so far in 2025.
Yeah.
Anyway.
IWM for a public service announcement. IWM has a dividend today. Let's just call it 50 cents. Maybe it's a little bit lower, but check out your options there. If you're mechanical and you're in April, you're not going to really have any problems unless you're down below the 178, 179 level.
Usually after a market sell-off like this, you're not going to have any dividend issues.
Sure, because you're saying that calls that are in the money, as you go higher and higher and higher, then you could have dividend risk. Yeah. Yes, I agree.
Yeah, you want the two things. Yeah, there's an IBM, there's an
but now that you have daily options, Sadnov, people who aren't paying attention here, if you're trading the 0 day versus the 1 day, or if you're trading the 1 day versus the 2 day,
That's fair.
50-cent dividend, that gets you right around the 200 level. It's only $5 away in IWM with 2 days to go. And if you're 1 day, it's probably going to be half that, probably be around $2 or $3, right? Yeah, 203. So,
yeah, that's fair.
It's not your grandpa's option trading like you had, quarterly options, and there were no monthly options. So, be a little, sensitive to people's needs.
I'll do my best. Also, don't forget that if you still have a front month future on, you want to roll those. So if you have a front, not any future, just an index future, ES, MES, NQ, MNQ, RTY, M2K, DJ. What am I saying? What's the symbol? Why am I spacing out? Oh, YM. I'm sorry, YM. And is there a micro DAO? I forgot the symbol. I've never used it.
I can go to the micros for you and find
I don't know. I know you've never used it either. I've never.
No,
used
I've never used micro DAO. I'm sure there is.
Yeah, I'm sure there is too. Is it Y2? I don't know.
Let's go see. 2YY M. I don't know. I'd have to go through them.
Yeah, no worries. Don't even check. Yeah, I don't know. Anyway, ES, NQ, RTY, and YM all roll today. And if they have the micros, those roll too. Just right click on your future, go to roll. You get the inside market. Just hit, whatever it is, bid or offer.
But the inside market's even tighter than what you used to for the bid ask. Your half ticks.
It's 20. Yeah, fifth
quarter ticks, whatever. Yeah,
fifth ticks.
Yeah.
Anyway, that's that. All right. What else did you see today? What are the takeaways? Strong turnaround rally in NASDAQ. We mentioned that.
You didn't have some of the players that have gotten beaten up, which I think is a little bit surprising. You mentioned Tesla already, but there are other good NASDAQ stocks here that have gotten beaten up that aren't in there. You got Meta's down today, still down around $2. You mentioned Nvidia down $1.50, but you got Amazon down almost $1, Google down 30 cents. I mean, on a big rally like this, like you said, 3% off its lows or whatever, you guys still got some NASDAQ stocks that need to get their wings underneath them to keep this market going higher. I mean, these are the Mag 7.
Yeah, well, we'll see. Like I said, I don't think this market's going anywhere fast, but this has been a nice 2-day rally. It's a relief rally. Gives the people
it's a relief rally. You got a memo?
Yes, I did. And it gives people that were stuck a little bit long a chance to make back 30% of it. That's about,
I neutralized some long delta today that I've carried on for a little bit too long. So we should probably rip the next 4 days, Sadnov.
It would.
And I hold it this whole way and I get a couple of percentage points back and you feel like you're a genius, I'm going to do this so good right now. And, you just should have stayed where you were. You know how that goes.
Yeah. No, I never seen that movie.
Yeah. And never seen it this week because it's Monday. Maybe that.
Yeah. Anyway, so they down-ticked them on the close on Friday. They were up like there was a little panic buying right before the close. They took them up to up 120 and closed them up 96, 97. So they took them down about 20 handles on the close on Friday. So I figured today, just playing the opposite game, they might just goose them up about, 10, 15 handles here on the close, take them up about 60, 65, and then see what happens. But we'll see. That's what I'm counting on because I'm going to lay out a couple shorts if they get them back up to today's highs, up around
59, 759, about 14 handles higher is where we were for the highs, Sadnov.
Yeah, that's a good price, 759. I like it. We'll lay out a little NASDAQ futures if they get up there. I don't think they're going to get all the way up there, but if they get up there, that'll be a good one. I think the commodity markets today, there was absolutely nothing to do. I mean, we scalped a few bonds this morning, but that was it. But I wouldn't touch the bonds here, premium wise, until midday Wednesday. I thought it was interesting that last time we had a Fed number, bond premium came in big time from before the number till after the number. So we'll try it again this time because it worked. And if it's working, keep going to the well. So
sure, and then if it doesn't work, try it one more time just to make sure, right?
Well, it worked. So we'll try one more time on Wednesday Still a little bond premium right before the number comes out. But I mean, I'm sorry, right after the opening or midday. Other than that, yeah, commodity markets were crap today. This was all, you know what? The S&Ps and the Dow really carried this market today. And it was, because the NASDAQ stocks were the ones that fooled you for a change. So
I'll give you that. I mean, they're all up around 1%. I mean, the Russell on a percentage base is actually up the most 27 points. But yeah, I'll give it to you. Usually when the Dow, when even the S&Ps are up like 50, NASDAQ's up 400.
Yeah, I discount the Russell because I don't think it means anything. I think it's just it's just
hey, welcome
index.
to my side. This is great. You put a little kibosh on the market. You said we're going to rally. It's only up 53 now. Good job out of you, Seth.
Yeah, only up 53.
Only.
Yeah. I'm hoping actually we get a little more rally tomorrow, and then I'm hoping they can sell into it on Wednesday. I think, if you looked at the expected move, 50, we said 5,800 at the top end of the range this week. So let's kind of see. Maybe. Who knows?
Yep.
5,550 to 5,800 was kind of the two-sided range. So, that's when they were down about 30 last night. So let's see if we get up there. And that would be very interesting. And I also think it's going to get kind of, it makes sense to me to get a little bit wild by Thursday to Friday. And you've got the only earnings you have all week are all Thursday afternoon. So you've got 3 or 4 earnings going into triple witching. I kind of like that. I think it's going to make for some interesting trade Thursday into Friday. I think tomorrow will be the deadest day of the week. Tomorrow will be dead. Will be an inside day. It'll be completely dead. We'll wait. Wednesday will be dead in the morning. Everybody will be waiting for whatever happens to happen, and then kind of the shit hits the fan type thing, and we start to get busy. Wednesday afternoon, Thursday into Friday, and I like it. That's my call.
Okay. Knowing full well that nobody knows nothing.
No one knows anything, but years of experience suggest that's what's going to happen. Dead until midday Wednesday, and then all hell breaks loose from midday Wednesday all the way through to the close on Friday.
Sounds good to me, but who cares what you think? Let me get some real guys that know what's going on.
Real guys, real men.
Real guys, real men who know the future. That's right. I'm talking about Chris and my man Ilya. What's up, gentlemen?
What's going on, gentlemen?
Today's a good day.
It's a pretty good day.
Yeah. Pretty good day.
Solid day in the market.
It was funny listening to you guys chide me on Friday afternoon on last call, because little did you know I was already long when the chiding was happening. So thank you for that. And yes, I listen when I'm even not on air. I thought we were
really complimentary. I don't remember exactly what we said, but I thought it was all compliments.
you throw around that word public again, which is basically a swear word around these parts. Towards us peons.
Well, you have to wear that word until somebody else comes on the network, and then you can pass it on.
Cool.
That's right. You have to find somebody to put it on now.
You own it until you can pass it on.
Yeah, poop runs downhill. So you got to find somebody to tag it with.
I mean, we gave that nickname to Nikki and Mike for years, and then you guys came along, and then you got to have it.
Obviously, you guys owned it.
Yeah. Now
so
you
does
own
that? Can we put in a request to hire new employees for the sole sake of being able to pass on this moniker?
Sure, you can request anything you want.
Okay. Noted.
That's an interesting idea. Let me look into it.
Thank you.
Jot that down.
They never get back to you. All right, what do you guys, gentlemen? What are you thinking here?
I mean, I think the playbook that we talked about last week, and Tom, what we discussed on last call, or on first call rather, yesterday, I think that pretty much holds here. I mean, I got out of my shorts last week expecting that the market is going to look for the Fed to save them. And on Friday, it started. It continues today. It probably continues tomorrow. You can kind of see it line up with the VIX. Once the VIX kind of petered out and stopped going up, that's about midweek last week, where the administration essentially said, we don't care that the market is down. We're not going to come and save it. And so the market said, right. So that means the Fed's got to come out and save it. And you immediately saw it in Fed funds futures and yields all over the place. So I think we ride high into the Fed meeting, the Fed's going to say nothing of substance. The market's not going to like that because they want to be saved. And then the back half of the week is kind of soggy. I'm waiting to re-enter shorts, but not here. I think 5,800 in S&P, like 20,600 in NASDAQ. I think those are levels that are reachable.
Oh, they're certainly reachable. They're both inside the expected move for sure.
Yeah.
For the week.
I would love to see 5,800 in the NASDAQ, Ilya. I don't think, man, I would be surprised.
A 75% decline.
I would be surprised. Yeah. Anyway, I don't like this close here. It's not as strong. I was hoping they closed them at the highs. I thought after the month.
Got to get you weak people out of the way. That's all.
The weekends?
Yeah. Give you a chance to cover so you can sell them higher tomorrow.
They did give me a chance to cover some NASDAQ futures. That was the ding a second ago, which was a lot uglier when they're up 250 as opposed to being up 120.
Yes. They've given back half of their rally already.
Yes.
From this afternoon. Mm-hmm.
Yes. Me like.
Good for you. I'm happy when you're happy, because when you're happy, the whole world is sunshine. 100%.
All right, boys. What else? What else looks good to you?
Pretty good here.
What do you like here?
Bonds look pretty good at the long end here as well. I'm already a little bit long. I think after the Fed, there'll be an opportunity to load them up.
Maybe if they get lower, I'd like to see them. This morning they got down to the 116 and a half, 116.20 and stuff. Or a little bit lower than that. I'd love to see them get, low 116s. Then I do think you're right.
Yeah, I mean, anywhere like between 115 and a half to about low 116 seems to be some kind of a area where they've been holding. So, I mean, I'm already long. I've been long. So from a little bit back, but I would definitely add if it rips from here or if it pulls back and sort of anchors into the Fed, because I think ultimately if the Fed disappoints them, the market are going to say, okay, so you have to cut more later and take down yields at the long end. So I like that as well. Same idea, just different market.
Today's market, like, it's a nice little rebound here, but it's not super great on rotation aspect. It's mostly consumer defensive that's leading the way higher, and Netflix, healthcare, energy, right? It's not your typical Mag 7 names. So nice bounce, but not the leadership group that we'd like to see.
Yeah, that was the point that I made. I think we need a couple more of these stocks for the Mag 7.
I don't like this close at all for the market. Up 68, now 38. I don't like it.
Volatility's still down 92 cents. You're all right, Sadnov. Just hold yourself. Get a pillow. Bite on a pillow or something like that. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with the Overtime Boys. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Oh, yeah. Tasty Nation, good morning.
Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here is how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your accidents.
They hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. No. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
Stock bounce, then fade. Is that it for the rally? It's Monday, March 17th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. That's Nick Batista sitting in for Dylan Radigan today. He's live in the Chicago office. We're here for the rest of this hour as we take you through the futures market close. If you're watching us on YouTube, come over to the platform. Come over to tastylive.com, see what we're all about. If you're already there, join the chat on YouTube. Tell us what you're trading today, what you think of this action. Gentlemen, modest bounce here in stocks, although an ugly-ish close. S&P was up closer to 1% now, up by only 0.6. We find ourselves looking at bond yields that have moved a little bit lower, depending upon where you look along the curve. Metals are absolutely mixed. Energy's mixed. The dollar is a little bit weaker. So net, it's a quiet start to the week. I suppose we didn't have that nightmarish Monday after the futures market opens, digesting the weekend's news. Nick, I'm going to turn to you first as our guest of honor here today. More importantly, someone who I know is perhaps happy that we're bouncing here. Given the conversations you and I are having offline, you must feel relieved on this Monday.
Yeah. I was worried. You know, the rent payment might be tough. The credit cards are getting a little full there. It is nice to see a little bit of a bounce. I mean, I've been looking for the bounce for more than just the last 2 days that we've had, so I can't say I bottom ticked it, but you know, the pain has felt pretty big underneath the surface when you look at some of these Mag 7 stocks, your Amazons, Googles, Apples, Tesla, Nvidia. The pain in those stocks is much worse than the market as a whole, and so it feels like, you know, that is kind of a bottom sign for me, and that, you know, you got kind of the froth taken out of the big names, and the market stayed, you know, market had a little bit of a pullback, but stayed relatively contained. And, you know, that's a good sign. If you get now from here a 5 or 10% move in some of those stocks, you know, the market's got to be back to, you know, 6,000. I mean, that just based on where we've come off, with those stocks being the real pain compared to the rest of the market.
Ilya, I think that this is a bounce that you weren't necessarily not expecting. There's a reason why you exited your short positions last week. We've seen some signs of potential near-term exhaustion in this market playing out in the short term, as it were. What do you think about the first half of this week? Is it still kind of unfolding all according to plan, where you're going to get your counter trend bounce that gives you and other people perhaps an opportunity to resell, re-engage this downtrend at a better price?
That's definitely the script that I'm working from. So, like you said, I got out of my shorts last week, think about midweek, once you started to hear out of the administration that they were not going to fight this stocks sell-off. So Treasury Secretary Bessent was out there. The president himself was out there. Other officials were out there basically saying, look, this is fine. We're not looking to fight it. There's a great and prosperous future just on the horizon. We just got to get on the other side of this whatever adjustment. I think Mr. Bessent said we're detoxifying. Unclear from what, but so it goes. And as you get that, the markets go right. So these guys are not going to U-turn on us. They're not going to take the market signal. So if that's not what's going to happen, then we need the Fed to come in with the cheap money to bail us out, as they usually do when fiscal policy gets wacky. And we've, of course, have a Fed policy announcement at that point about a week away. So Fed funds futures move, they price in a bunch more easing, and so I took that as my cue to say, okay, well, the markets are going to be imbued with hope now, so I'm going to back up. And I'm just looking for this bounce to run its course. I think the Fed is ultimately going to say nothing, and the markets don't want nothing. The markets want acknowledgement and a sign of hope that the rate cut calculus has somehow shifted up. And at this point, that's not what it looks like. It looks like the first cut is fully discounted by July. It looks like we have 2 with optionality for 3 on the menu for this year, 1 on the menu for next year. So that's basically in line with what the Fed forecasted in December, about 100 basis points through the end of next year. But the markets have it front-loaded. 3 now, 1 later. The Fed had it spread out, 50 and 50. So they want to hear the Fed tell them, yes, we have a sense of urgency. We don't like this. Also, we're coming to the rescue. I suspect that's not what the Fed is going to do. And so the market's going to get disappointed. But into that news, I think it's pretty easy to envision that the markets, after that kind of a sell-off, want to come back away from the extremes. So I'm going to start to get interested in the S&P, hopefully if it gets back up to like 5,800 or something like this. If NASDAQ gets back to 20,600, something like that. And then signs of exhaustion start to appear. I'm not just looking at these levels where it gets to the level and I'm an automatic seller. I don't really think about it in those terms. I need the price action to tell me we've run into some kind of resistance, some kind of a wall there. And if the price action starts to stall out there, I'm going to look to reload on shorts.
Nick, I suppose let's take a swing at the Fed first here. We'll go macro down to micro. We'll talk the big picture issues, and then we'll go into what to expect perhaps around something like Tesla. There was an interesting JP Morgan analyst report this weekend giving a 120 price target. So I suppose that's worthy of discussion. Nick, when you think about the Fed meeting this week, though, and this rebound in stocks here on this Monday, how are you playing this Fed meeting as someone who takes? I know you pay attention to the news. You're not like a macro first guy like me and Ilya, right? Mm-hmm. So how do you square this up given everything going on in this marketplace in the recent weeks?
I mean, it's pretty clear that there's not going to be any sort of change in rates at this event. So I know that's kind of already priced in. And I agree with Ilya in that I don't think he's going to show any sort of hand. He really hasn't at any of the past, 4 or 5 events, really since the election. He's been pretty mute on forward looking. It's more of the same kind of rhetoric of, data dependency, and it's the whole kind of we'll see sort of thing. So I think that continues. I mean, I look at the market now, and today, if you were looking at volatility last week, it was very, very steep. I mean, you had a pretty decent backwardation. We're totally flat across the vol curve. You have volatility coming off the board. You have the March expiration for volatility on Wednesday, and the rest of the curve looks totally flat. So it kind of signals to me a short term, at least, cooling off, maybe a chop fest. I like the idea of 5,800. That would be a beautiful spot to get back to. I mean, I don't think that's like a today or tomorrow thing, one day type move, but hopefully that's kind of on the table here. You have option expiration at the end of this week. You have an NVIDIA event. You couple that with the Fed, couple that with a big downside move. I think there's, some potential for a little bit of a higher squeeze here, just with all of those things kind of coming to a head. And where volatility is right now, if once all those things kind of conclude and we're in the middle of next week, I anticipate volatility being lower, which means that markets are probably higher from here, would be my thesis.
Yeah, I'm nibbling down here. I nibbled at the end of the day on Friday, despite the chiding going on by Tom and Tony.
Don't let them call you public. That's crap. Tom's the public guy, okay? Tom's the one. He's listening to all the analysts on CNBC. That's his news source now. He's public.
He texts me every morning. He's like, "What do the folks at Nomura and HSBC say today?" And I said, "Hold on a second, boss. Let me get that over to you." And so, I point out that like Friday, we did have those two conditions that define the downtrend in both ES and NQ defeated.
Yes.
We've talked about this on Friday and obviously today on Futures Power, but worth reiterating for a different crowd. The two things that define the downtrend on a technical basis in both ES H5 and NQ H5 were the fact that you hadn't seen a close one above the prior day high at any point during the downtrend. So no strong bounces. And then secondly, I would point out that you never got to close above the 1 week moving average. Both of those things were accomplished going into the close on Friday, kind of paving the path for the end of the bearish momentum and a little bit of a bounce here at the start of this week. But it is also not just a Fed week, Nick, right? It's VIX-piration. We have quad witching coming up. How do you plan on approaching those other events? Because this week is really loaded in the second half. This is not just about the Fed or the BOJ or BOE. There's a lot of just market plumbing type of events occurring here as we make this turn through the middle of March.
Yeah, I mean, event volatility is usually bid into this. Like you would expect if we didn't have what has happened over the last 2 weeks, where you have just kind of a stair step lower pop in volatility, I would have expected volatility to stay bid this week, but we had I feel like the pain is already in. Like we've already taken the hit to the downside. Whatever happens with J. Powell is going to be, a non-event. I don't expect there to be anything either way in terms of changes to the projections for interest rates or anything like that. I don't think any of that changes. And so I think the path of least resistance is a little bit more of a vol crush and a little bit of a bounce. That's my permabull, Chris. I mean, come on. I'm expecting you to agree with me. You haven't agreed with me once. It makes me a little worried. I know you were talking about this morning. You finally started nibbling on the long side. You've been listening to my pain for a little while. So, come on.
I'm a masochist. And, I appreciate when I see that in other people, they're suffering. It's like, oh, see, I'm not the only one suffering as a Jets fan out here. But, that aside, I mean, look at the composition of this bounce, Nick. This is not where are the shiny names that we usually like? This is consumer defensive.
I think that's
industrials.
Good. I think that's
Why do you think that's good?
Because when the Mag 7 bounces, when they have their bounce, that'll be the big move. Like this is a nice bottoming. You get a little bit of the junky stuff moving a little bit higher. If Amazon, which is down 30%, let's call it this year from the highs, if it's down 15% on the year, the market itself is much higher than where we're looking right now.
Ilya, what do you make of this sector composition today? I know we're looking at more or less an individual level here, but to kind of just get big picture, GDXJ is your top performer, up 2.73%. GDX is up 2.14%. I guess the only good name on here in terms of the ETF is XRT, which is up 2.29%, and that's been a real dog. Mm-hmm. But everything else seems real defensive. IYE, XLE, XLP, XLI. At the bottom of the list, it's XLY, ITB, KRE, XLK. Like the banks, tech, discretionary are all the underperformers on this green day. Mm-hmm. I don't know. Nick seems to think that's a good thing. Do you think it's different?
I think it depends on what you make of the nature of the sell-off that got us to here. If you thought that sell-off was about valuation, then okay, I can see the rotation argument. I don't think that was it, though. I think the sell-off was nothing about valuation. I think it was about recession fear. And I think you can see it very clearly. Because the whole thing starts as the PMIs, which is some of the most leading economic growth data that there is, start screaming bloody murder about the service sector suddenly in January, and then confirm it in February. And that's not what you want to see, and then some. Because for maybe the preceding 9 months, the only thing growing in the world economy was the U.S., and the only thing growing in the U.S. was the service sector. In fact, the reason that U.S. strength didn't spill over to other economies is we mainly service that demand at home. We import mainly on the goods side of things. Services are mainly done by domestic U.S. companies. So the U.S. was able to decouple, and all the other major growth engines, and of course the Eurozone and China are the two other really big ones, completely anemic. So there was one thing you could not do if you wanted to have the overall backdrop of growth that you need for markets to go up. Markets can shrug off any which thing as long as there's growth. As long as they can look out and say, it's okay if we lose money today. It's a generally positive growth environment. We'll make it back tomorrow. As long as the economy is growing, earnings are expanding, there's a positive trajectory out there, we can shrug off any which risk in relatively short form. In late February, that stopped being a given because the market started to connect the data. In fact, you can point a finger on February the 21st when that PMI data comes out for that month and tells you that the U.S. service sector is basically at standstill suddenly. And from that point, it's recession risk that's motivating this. And so when you look at the kind of defensive breakdown here, what you see isn't the market going, oh, goody, we're back to the races. It's the market saying the Fed will bail us out by defensive names because the recession is still coming. But the Fed will give us cheap money to ride it out. And I think when the Fed ultimately is like, maybe not, we'll see. There's nothing to say here yet. We'll see you when there's a real crisis. I think that falls back on itself. And you get back to essentially correlations going to 1 and the market's going, wait, there's no cavalry. So to me, this rotation speaks to the growth concern nature of the environment, where when the markets are prepared for a bounce, they're not buying the high flyers. They're not leaning into the AI super future. They're buying defensive names because they're looking to have some kind of risk-on exposure, but the nature of it is defensive nevertheless, because it's a cycle turn. That's the worry.
We see some evidence of consumers pulling forward their spending here in today's data. The retail sales report came in this morning. Not the headline number is the one that I'm interested in. I care more about the fact that the control group, the number that goes into GDP, comes in at 1% versus 0.2% anticipated. So that's going to help boost some of these growth forecasts. And in fact, the Atlanta Fed GDP Now growth tracker for today, after all these data points come out, it does get a little bit of a bump higher here. It's now minus 2.1%, which I suppose is good. They are making adjustments to it from the lows because of the impact of gold imports. And again, I think the latest figure that I saw here, it was gold is taking minus 3% off this. So absent the gold imports that we've seen, growth would be higher by 0.9% in the first quarter. Definitely a slowdown, not recession, right? And I think that's a key clarifying difference here.
Sure.
Nick, outside
of the direction of travel of this thing that really should be front of center.
That's what bothers people.
Never mind what the actual number is. We're too far away to really hang on what this number is. A bunch more data is going to come into it. It's going to move around. What's important, I think, in that Atlanta Fed GDP now number is that it's pointing aggressively down. That is to say, all the data that's coming into the nowcast is pulling it in a direction. Where it ultimately settles doesn't matter all that much, but the tone of the data clearly is god-awful.
The tone's bad. Nick, you've been riding the wave throughout it, though. What makes you feel so resilient and confident that being long deltas is still the right move? I know the last 2 days have been good, but what makes you feel like that's still the right move?
I mean, I think if you have capital on the sidelines, you have to start at least nibbling on some long delta at some point. You don't get 10, 15, 20%, 30, 40% down moves in some of the biggest stocks in the world. Those don't come very often. So, I mean, I think that's at least a start. Volatility has helped significantly. So if you were, selling puts, obviously it's painful to the downside, but when you get this 1 or 2 day bounce and a 4 or 5 point volatility contraction, you get bailed out for the 3 or 4 days that were really painful to the downside. I mean, even if you're looking at a Tesla or an Nvidia or, even an Apple or an Amazon where there hasn't really been any relief to the upside, volatility coming in on those really, really helps you on just a small little bounce. So that's been,
Sure.
That's been helpful, but you can't hide from a 15, 20% down move across the board in most of the things that I trade in. It's just, unless you're just short the market, if you're any sort of long, you can't hide. And so, you have to be a little bit more selective with some of your opportunities. I've been trading oil a lot. Some of the oil components, XOM and XLE, have been, have had some two-sided action. I get the defensive trade there, but I think the key has been playing into volatility and being a little bit nimble, taking profits very quickly. If you sell puts and you get a bounce and a contraction in volatility, instead of waiting for 40 or 50%, you're taking 20%, off the table and moving on to the next trade. I think that's kind of been how I've been trying to manage through this.
Let's we haven't really gotten into Tesla here today individually, but I saw that JPM note that I wanted to discuss with you guys. JP Morgan is issuing a very strongly negative prediction for Tesla for Q1. It's going to say that Q1 delivery is the lowest the company's seen in 3 years. They're slashing their delivery forecast for this quarter by 20%. That's down from the initial projection of 440,000 to 355,000 units. They say that this is going down to 120. Nick, I also see that you have people like Dan Ives, who's a friend of the network, right? He's been on with me and Victor before on previous shows, Jones and Friends. He still has a 550 price target, Wedbush Securities. Which one is the path that people should be paying attention to, or is this just all noise and narrative, and who cares what any of these stories you see about CNBC say? Just pay attention to the 56.7 IBR.
I think it's all noise on both sides, but I will say if you think that if the market is going to have some sort of V-bottom, vol contraction, that sort of thing that we've watched over the last 3 or 4 years as being the sort of moves that you get at bottoms, I think in Tesla and to a lesser extent Nvidia are obviously the high beta plays at that. I think that with all the sort of news that is baked into the Tesla downside right now, I don't think there's a person on earth that thinks there's like overall good sentiment to Tesla right now. I think that's, kind of the time you start to think about the upside, because it is a vol product. I mean, it can move with something that Trump says or Elon does or a combination of the two. There is so much velocity to the upside that I think if it's at 120, it's 2 or 3 years from now. If it's at 500, it's a month from now. Like that's the sort of, you know what I mean? Like I don't think I think that's a little aggressive to be 500 a month from now, but that's a description of the risk. I think here is like, okay, if you think it's 120, it's probably dead in 5 years, and there's some sort of fraud or whatever, something takes down Elon or whatever. But the faster move is to the upsides at some point. And so that's how I think you have to play that and Nvidia and a lot of these other Mag 7 stocks, because we've seen this story. I mean, maybe this time is different, but we've seen, when the dust settles, you got a couple days and or else you miss it. At least that's how it's been, recently.
Yeah, Ilya, the Mag 7 names here dragged down by Tesla, off 4.79% today. Mag 7 are off 1.03% themselves. One of the reasons why the NASDAQ underperforms, it is the worst performing major index. Russell leads to the upside, up by 1.06%. Is this a foundational start of a global rest of world outperformance for the U.S.? I know, given the recency of what's happened in 2025, it's easy just to say yes, given returns in Europe or Asia, right? You could look at any single European country ETF. You could look at China. You're going to see outperformance versus the U.S. in 2025. But for so many years, hasn't the story been, as I've said, as you've said, Europe's been uninvestable? Right now, Europe is investable, or at least it so appears. Why would people put money back in the Mag 7 right now?
It's really important not to overestimate what you think you're seeing in Europe by looking at U.S. tracking ETFs that are adjusted for currency, because the U.S. dollar has been getting shellacked against the backdrop of all of this. And so a lot of these things look a lot better than you think they do because you're looking at them in U.S. dollar terms. And so when you actually look at what's been happening in those markets, I mean, let's take Europe. You actually have a net gain that's much more modest than it would appear. And in fact, if you look from the peaks, so that index, and I'm looking at the Euro Stocks 50 here, just by way of example, so the big Eurozone index. It peaked back at the start of March and is down about 5.2% to the low. It's managed to wind that back to being net down about 2%. If you look at the UK, similar story. From the high at the beginning of March, it fell as much as 4.8%. It's now net down after a little bit of a bounce, in sympathy with what's going on Wall Street, of course, down about 2.4%. So you can keep going down the list here. And these markets are not exactly loving the idea of a U.S. recession, because that means global recession. We are, for the first time in a while, looking at a real meaningful fiscal impetus in Europe. And we've seen the bond markets there obviously react with vigor. So Eurozone bonds have absolutely crashed. The yields picture is looking much stronger, and that explains a lot of why the euro has soared as much as it has, why the pound has soared as much as it has. Take a look here at the chart that you're pulling up here. Take a look, for example, at Z1 exclamation point. That's the UK benchmark index, and that's obviously a monthly chart, but you can see on the month it's down. Take a look at FESX1 exclamation point. That's the Eurozone benchmark index. If you look at that, you can see that off the peak from the beginning of the month, down. Take a look at China's benchmark index. I believe the ticker there is, let's see if I remember this correctly, 000300 is that it? There we go. CSI 300. Not great, all of it. So, yeah, when you look at it in US dollar terms, it looks much better. A global recession isn't good for anyone. And it's the kind of thing where you could go into a risk-off correlation one, everything falls together kind of an environment. Because, and we'll hear from the Bank of England this week,
yes,
you're getting this fiscal impetus. It'll be a long while before that's earnings. But much faster than that, it'll be inflation expectations. Because if you look at the Eurozone bond market, you're already seeing it. You already see the markets going, the ECB is not going to be able to cut as much as we thought. The BOE is not going to be able to cut as much as we thought, especially next year, because all of this military buildup that they want to do now to essentially make up for the fact that maybe NATO isn't as reliable as they thought, or at least the U.S. Aid part, the security blanket, is maybe not what we thought, then we need guns. And they're going to buy a lot of them. They've already said it. But the market has said, okay, well, so you're going to spend a bunch of money on guns? That's inflation. The currencies have gone up. So the market is already there. That's not good news for those stock markets. That's monetary tightening. Equities don't like that. So again, the Fed becomes the only game in town because the Fed might actually step up easing. Well, what if they don't this week? As I suspect, you're not going to hear anything special. So you could see equities go down hand in hand here on both sides of the Atlantic and elsewhere.
So I guess my question is, like, who on earth is expecting the Fed to do something this week? Where, like, they'd be placing trades around the idea that the Fed is going to surprise. I don't know a single person.
I think it's the SCP. I think nobody, actually thinks the Fed is going to pull the trigger on anything until July. You see it in Fed funds futures. There is no cut until July. Nobody is going that way. What you do see is the aggregates for this year and next have shifted around to a more urgency of stimulus setting. At one point last week, we got as far out as 120 basis points. That has eased as stocks have bounced and people have thought, okay, no, they're going to come around, they're going to help. But if the SEP doesn't nod to some sort of additional urgency, if the press conference with Powell is like that speech he gave 2 Fridays ago, where he was essentially just saying, there's nothing to see here, guys. We have all the time in the world to figure out if all of this uncertainty really means anything. And of course, the markets are saying, yes, we're down 10% because we have all the time in the world. Yes, right. No, we need the easing now. Thank you. So I think the market is not going to hear nearly enough because they are going to get a Fed that's not jumping out the window on anything. And that could be bad for stocks, period. Be it the European stocks or Chinese stocks or whatever where it is. Nobody wants a global recession here when the U.S. is the only source of growth.
I don't know. It sounds like the administration's pretty okay with a recession. I mean, just Besant this week keeps talking about how there's going to be an adjustment period and there might be lower growth, and
we got a detox, baby.
The price to pay is worth it, right? And the stock market has got. Listen, from a certain perspective, if you want to pitch me like stocks are due to step back at the start of the year because they've gone up back-to-back years of 20% plus, fine, right? But that's not guaranteed to happen because you have back-to-back years of 20% plus. History doesn't indicate that, so I don't know if that's a fair way to pitch things.
Well, this is the key, right? It's not like the markets didn't know the tariffs were coming. They knew. The tariffs coming is not the issue. It's the way that they're coming and the actual realized growth implications of that already. Markets didn't freak out until the PMI numbers dropped off because businesses started to say, this is too much policy volatility. We're going to hold the money back and not invest and not hire. You needed to see the actual economic response. Until then, the markets were not concerned.
I mean, I think that's the bigger issue here where the market's trying to figure out the price of money in the future, and we don't know what the price of money in the future is going to be and how much economic activity we'll be able to generate. And so people have been stashing assets into cash. in anticipation of whatever bills they have to pay moving forward, because how do you plan for anything? You need to have capital do that. And if input costs are up 25% or 50%, they're on, they're off. Who knows? But, Nick, what is the most important event this week? Is it the Fed meeting? Is it Vixpiration? Is it OPEX? Is it the Bank of Japan meeting? Is there an earnings report that we're missing? Is it just paying attention to Truth Social? I mean, what should traders ignore? Seriously, what should we be ignoring this week? I feel like the last few weeks, if you've only paid attention to Trump and ignored CPI and PPI and, the market's been moving on the tariffs and just been ignoring everything else effectively.
I think Trump obviously has been quite the mover for stocks. You do have an NVIDIA event at the end of the week, which is a sector that has just been absolutely a dog. Micron has earnings in the middle of this week as well. I think on Wednesday after the close, if I'm not mistaken, Wednesday or Thursday after the close. So maybe there's a bounce there, or at least gives us a reason to bounce in that sector. Micron's been kind of range bound the whole year, but yeah, NVIDIA has an event at the end of this week, a little bit of, their plans for 2025. So maybe you get something there, but I think ultimately the market has been moving on the Trump tariff tweets. And I think it's a risk to both sides. And, at this point, I think it's starting to get digested a little bit better than it was in the beginning. I mean, the moves have certainly not been as big in the last week and a half, 2 weeks. So maybe that's a good sign here. But I think the ultimate risk is to have the whole thing conclude, so to speak, the uncertainty of what Trump is going to do day to day. If that comes off the table, that is a green shoot for the market. If it was just we agreed with, Canada and Mexico and, Europe, we're going to do X, Y, and Z, and now it's over. It's done with. We're going to do this for the next, 3 years or whatever. That sort of event would be a really interesting firework for the market, I believe.
Yeah. I mean, I think that's exactly what the markets want. I don't think anybody is that concerned with any given news this way or that. What the markets are concerned about is uncertainty, because they can't go and price risk. Mm-hmm. If they knew what was coming, they would go, right, okay, so let's discount for this scenario. In this world, this asset should be higher, that asset should be lower. They would take some sort of digestive period and we'd be fine. I think this is what's so critically different. If you looked at what's happened in January, February, March to stocks this year, it's tempting to say a new administration has come in, it's moved fast, it's knocked a lot of things over, but it's getting to where it's got to go in a hurry. It's reorienting hard. Once it sort of sticks in a spot, once this is done, once the mad dash is over, things will even out. Well, that's only true if people know where the mad dash is supposed to land at and plan for that. But they don't know. And since they don't know, the uncertainty continues to swirl. And we already see it appear in the places you don't want to see it appear. That is business confidence, the PMIs, and consumer confidence. The University of Michigan consumer confidence numbers just came out on Friday. They were horrendously bad. And so when you look at that, I mean, they were expected to be bad. They were worse. And so 16-month low was expected. We got one, but it was lower. And so we have very serious concerns here, clearly. Consumers are concerned. They think the tariffs are going to be inflationary. Their one-year inflation expectation is back to 4.9%. That isn't to say that we're going back to 5% inflation, but people do fear that we are. They're going to claw back consumption as a consequence. They're going to say, you know what? If prices are going to be ramped up again like this in just a year, I remember what this was like. The last time that inflation was running that hot was 2022. Just as the Fed started to have an effect and started to cool things off. So, okay, we know what that was like. Things were really expensive and painful. Fool me once, shame on me. I'm going to be ready this time. And they're going to claw back spending. And the U.S. economy is 70% household consumption. This is not what you want. This is now a real growth risk. This is not just sentiment.
Yeah, and the I think one of the important things to understand about the state of policy right now is that with the continuing resolution that was just passed, it freezes it's a static top line spending bill, and so with inflation, that means real spending is actually going to decrease a little bit over the course of the year. So that is a way to take aggregate demand out of the economy. And they're clearly attempting at trying to take aggregate demand out of the economy right now.
Question is, do they mean to?
It's, again, if you're trying to get the economy to slow down a little bit, reducing growth, one way to do it is to take away the carrot of government stimulus in many different forms and fashions.
Sure.
Even if we don't agree with it, right? So that's just how they're going to do it. I think, right, it could be carrot or stick. They choosing this path. Let's get off of the stocks and macro level shtick here, though, and maybe evolve that conversation. Nick, what are you thinking about the metal space, about commodities here? You mentioned you're trading oil recently. I have not placed a trade in crude in months. I find this to be terribly boring and uninspiring with a 28.1 IVR. How are you having more confidence of approaching it? Because I'm looking at it from the vol side, and I find the vol to be uninspiring.
Yeah, I mean, it's something to diversify in when you're, feeling the pain in some of your long delta positions. Sometimes you look for something that isn't as painful, and this has been, kind of chop fest between 68, 78 for the better part of the last 6 to 8 months, and so I've been trading around that. There's all sorts of ways you can play it. The micro crude contract is great if you want just static delta MCL. Options are liquid. I mean, volatility right now isn't super high, but it still moves, and the markets are liquid, so you can get into positions there. Some of the stocks that are obviously high beta to oil, XOM, CVX, they've been kind of dead money for a little while, and it's been kind of a long thesis there. I've been listening to too much Thomas Westwater. I mean, he gave me the short natty gas, long oil proposition, and it's worked out over the last week and a half-ish. Took some pain on the natty gas side, but it's starting to come in a little bit today.
Ilya, oil to you, I think, has been something that has no business rallying here. Natural gas is a different story. Oil, though, today it does try to stage a bounce back above 67.5. It really can't get through there in the CLK5 contract. You see the swing lows in mid-December. You see the 1 month moving average here, the yellow line today. We run into it and immediately sell off. Why should we have any faith in oil staging a significant rally from these levels?
I don't think you should. I think oil is very much a part of this cyclical story that we've seen. The kind of tepid rebound in oil rhymes for me with the tepid rebound in some of these defensive names and defensive sectors on the stocks side that says, okay, the Fed's going to come rescue everybody, is going to be okay. The demand story is not going to fall off as much as we could, because the Fed's going to ride to the rescue and offset this. So let's be defensive, but let's also not assume that growth is falling off a cliff. Otherwise, when you look at this story, what do you have? The administration wants to pump more oil. They don't have a lot of room to pump it because we're already at records.
They backed off that. Their official energy plan, it no longer has drill, baby, drill as part of the 9-point plan.
Oh, I see. Well, there you go. It might be because we're already producing more petroleum products than Saudi and Russia combined.
They didn't make a big deal of that announcement, right?
No, that one got swept under the rug. I missed that, but it's not a shock that I missed that one because it changes day to day.
Well, that's the whole thing. Is we're gonna have somebody. So somebody compiled a list without drill, baby, drill, and then somebody is gonna come out into the press room, and I'm thinking about the president here, and say, "What? No." Sort of like the tariffs were delayed until April until they were not, because Apparently, somebody told the president that they were delayed, and he very promptly turned around and said, "Delayed? Get out of here!" No. So I don't think the administration knows internally exactly what the specifics are near term, or at least what the timelines look like. Seems to be a lot of cooks in the kitchen. But when you look at sort of the scope, they're not looking to go the other way. They're not looking to constrain supply, and supply is very abundant already. You could ostensibly, if you wanted to increase supply, create pathways to encourage the restarting of wells, because all of this record supply has happened with the number of active wells and fracking installations declining, because we're getting more efficient. We're getting more out of what's there. You could, if the administration were to encourage everybody and give them some tasty inducements, you could restart more capacity. But if prices fall very much further, that's not going to be economical. So it's going to screw up a lot of people's profitability on the extraction side. They're going to fight it. So if anything, supply is neutral to slightly higher. Demand is the real issue. Geopolitics hasn't been a big consideration for a while, and for good reason. It looks like we're very much heading in the direction of de-escalation, and we'd benchmarked these things as not really disruptions months ago. So I think the main story here, as ever, is recession risk and cratering demand. And if the Fed doesn't come to the rescue, that's bad for stocks, it's bad for cyclical commodities, it's bad for the dollar, it's good for bonds, sort of on and on and on and on. It's all one thing.
Nick, you mentioned there's an NVIDIA event later this week. Is our market savior coming down the pipeline? Is Jensen coming here, riding in on a white knight like Gandalf with the Riders of Rohan to save Helm's Deep?
I believe so. I don't think this is a product event. I think it's more like a developer type event. So okay. I don't know if it's going to be as, I don't know if Gandalf is coming on his white horse to save the Rohirrim, but I mean,
making me look like a real surface level fan by name dropping the correct terminology there.
Well, I had to, but that's just another thing. It seems like there's a lot of things this week. There's a lot of events this week, and if I know anything about events, volatility usually stays bid. We're not seeing it stay bid, which means that, or at least which signals to me that we've already kind of gone past this. And after, all these things come to pass, that's usually, you get to all the info is out there. There's no more questions about what Jay Powell is going to say. There's no more questions about, the dealer positioning into Friday's expiration. There's no questions about, how much short vol there is on Wednesday. All that stuff is going to be over with at the end of this week. And, after a 10 or 15% downside move, I play the upside. That's just like, how I look at the short-term markets. Longer term, I mean, yeah, sure, things don't look awesome right now, but I think there's, as always, a lot of, and especially with who's in power right now, there's a lot of scary things that could slingshot up, is how I feel about markets and some of the stocks underneath the surface.
Do you feel like there are opportunities outside of semiconductor names besides NVIDIA? I know several months ago you and I were having conversations about ASML. It hasn't really been punished here, though, the past several months, right? Like this has just kind of been moving sideways while everything else has been slinking up and down.
Yeah, I mean, some of the other bigger named stocks, ASML, you've got TSM, which hasn't really moved in that direction. Even Intel, you got new CEO at Intel, and the potential for bringing some of that stuff more onshore. I mean, I think that's an interesting story as well. I mean, across the board, everything's at a discount. I have, I've been looking at like cybersecurity names like CrowdStrike, some of the Coinbase, Robinhood. I mean, these stocks have gone, they're 30 or 40% lower in the last month. I don't know if I can say that's warranted.
Ilya, I know you're not much of a single stock guy here, but is there a stock or a group of stocks that you're paying most attention to right now as a bellwether for how you look at broader risk appetite? It could be a tariff name, it could be an AI name. What's on your mind?
I mean, I think if you want to think in terms of single stocks, Tesla necessarily has to come to mind, because if you're thinking about it as a barometer, basically on what the markets think of the political implications, this is probably the closest. And so just as a sentiment read, this is something to look at. The news is replete with all the stories that at least at a very surface level start to go, oh, people are turning in their Teslas. There is a big market out there for used Teslas all of a sudden because of discontent with what's going on. People on social media go, when I see a Cybertruck, I'm going to key it. Things like this.
Isn't that so funny, by the way?
Friends of mine that are not in markets are
10 years ago, Teslas got keyed because they were seen as too liberal.
Yes.
Teslas are now getting seen because they're coded as right wing.
I'm saying, right? So it's like you
10
see
years
a
ago was the
Cybertruck
time
and
to
like
buy it too.
MAGA hat images start to conjure for people. Like friends of mine who are not political, who are opportunists, are saying, I'm about to get a Tesla at a discount. I'm over here waiting for this market to come in a little bit because I'm trying to buy a cheaper Model 3 used. So, and this is now in the zeitgeist then. This is just sort of regular people. They're not thinking about markets. They're thinking about Teslas. So when your buddies are organizing the protest to sink Tesla car prices so that they can buy the used cars. Oh, I guess that's not insider trading, right? No, it's fully out there. I mean, and these are secondhand models. They're not trying to buy new Teslas, so Tesla's not going to see any of this money. Not that they'd care. They're just trying to get some cheap Teslas. And so when I look at all of this and I see it sort of show up at the man on the street level to this extent, it's only nominally the price of a stock. It's more so a sentiment gauge at this point. So I look at it in those terms.
Speaking of sentiment gauges, I suppose this is a sentiment gauge for us to think about here. Ilya, I texted this to you and Radigan on Friday night, and I said the S&P is probably good for 3% this week, right?
Yes.
Ooh.
Okay.
He's back. My man's back. I thought I lost you for a while, Chris.
Mind you, this is not this week's cover. This is the previous week's cover.
Ooh. Yeah. So we talk about and the Economist covers, right? Actually, I gave a presentation a number of years ago out in Las Vegas at a trading conference about how you can use popular media as a sentiment gauge when they do inflammatory headlines like this. Thinking specifically about
search the YouTubes, you could find it.
Yeah, if you look at summer 2011, The Economist ran a bunch of covers talking about how, like the euro is falling off a cliff going into 2012. The euro is falling off a cliff. They had pictures of George Washington with a black eye on the cover to talk about the dollar demise. And whenever they do a George Washington black eye cover, it's like within 4 weeks of a significant turning point of the U.S. dollar.
Yeah, buy some dollars. Like the moment The Economist has the black eye cover, go buy dollars.
You talk about reaching the everyman here. I think The Economist, listen, I enjoy their writing. I agree with a lot of their perspective.
I read it religiously every week.
I think that they have people that run their these choices of images that are very much like Steve Buscemi, how you doing, fellow kids? And so they kind of arrive at the zeitgeist after the market's already made that move. It's become a story.
Public, right?
This is the story of public. So
this
you talk
is
about
public.
So I would point to this And then there was another chart that I shared in the chat and research here, which I'm going to pop out right now. In terms of CTA selling right now in this market, I'm just going to pull this up on the screen, right? CTA selling in this market, lowest net short, or rather the most net short CTAs have been since October 2023. I think the point I'm getting at here is that we're probably at an extreme in sentiment right now. And so if this week comes and goes without any big kerfuffles, I know this is futures roll week, the opportunity for a short-term squeeze higher exists. And so if it's ESM 5, that's about 58.55 to the 1-month moving average. That brings you right back to the swing lows that you have in October, in November, in January. For ESH 5, it's about 5,800 right now. And Ilya, that would set us up with the opportunity to sell back at a neckline and a potential double top if these recession concerns persist. But you know what? We're going to have to cover that all tomorrow because overtime is now out of time for this Monday. We're back Tuesday, as we are every Monday through Thursday, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, our guest host, Nick Batista in Chicago, I've been Chris Vecchio in New York. We'll see everyone later. Of course, after this, take a quick break, get some water, come back. Ilya Spivak's here with Macro Money.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Make your move, genius. Tasty Trade.
Stocks go up and stocks go down. Markets move. Beta is a way to measure the movement of a specific stock relative to the market as a whole. In simple terms, it tells us if the underlying has more volatility of price movement relative to the S&P 500. Beta of 1 is our control here, SPY being the underlying. If the beta of a stock is less than 1, it would mean the stock typically moves less than the SPY. If the beta of the stock is greater than 1, it means the stock tends to move with greater volatility than the SPY. It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
So I started trading in the equities market when I was 18. Real basic ETFs, mutual funds. I didn't discover options and really tastylive until about 2012. It made sense to me from a risk perspective. And so I started trading and never really have looked back. The people you see that's who they are. They're trying to be as open and clear as they can with the trades that they're putting on. Teaching a methodology, like teaching the logic behind things. It is tried, true, and tested. They back it up with research. They share that research. It's not just trust us and do this, which is a very dangerous thing in the financial world. But learning about that in the Tasty universe, it starts to prove itself out, right? When you follow the methodology, you'll see those profits and you'll understand why a position did what it did. Sometimes the market wins and sometimes you have a 90% winner and you don't know, why don't I do this every day, right? This is easy. But you kind of have to reset that and just go, okay, close the trade and move on to the next one, which is really what Tasty's about.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
The markets manage a little bit of a pull-up as last week ends and this week begins, but do we have the ingredients for things to keep going? Macro risk calendar for this week suggests maybe, maybe not. It's loaded with central banks once again, and of course front and center for them, the Federal Reserve. That's what we're going to unpack here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we have to consider here after what has been a painful sell-off across a whole range of markets here is, will we finally get the relief valve that the markets have so wanted to see? And that, of course, is cheaper money. And as it comes to cheaper money, the real question is cheaper dollars, because, of course, as we've talked about at length on the show before, the dollar and the cost of borrowing dollars ultimately determines the cost of borrowing globally because of how ubiquitous the dollar is in global commerce. The latest numbers from the Bank of International Settlement, not quite updated yet for this year. They update every 3 years. The last one we have is 2022. They show that the dollar still accounts for close to 88% of global monetary transaction settlement. And that number hasn't really moved very far away from 80% in decades. In fact, it's only gone up in recent years, largely because the role of the euro has diminished. And so what we're looking at here when we talk about the stimulus function for these markets that are now concerned, it becomes a question of, well, if the Fed sets the cost of borrowing dollars, then it sets the cost of borrowing, because almost all economic activity is transacted in dollars globally. And so the cost of borrowing to finance that activity lines up neatly with the costs of borrowing dollars. And that, of course, is set by the Fed to a large extent, or at least guided by the Fed. And so the real question then for markets is, will this week's Fed policy announcement be the help they've been so desperately pining for. But let's start the conversation with why they're pining for support. We have yet another down week for stocks last week. S&P down 2.4%, NASDAQ down 2.6%. A little bit of a wiggle higher on interest rates, but only a wiggle. Bonds still very much net up over recent weeks against the backdrop of this sell-off. And last week we get basically standstill. The long end of the curve had a little bit more of upside mobility 2 weeks back, but the overall thrust seems to be that after a protracted rally around these expectations that the Fed will perhaps do more vis-a-vis policy support, we have bond markets that have moved meaningfully higher off their lows over the past several months and now are in some sort of digestion mode as that is absorbed. We nevertheless get more gains in gold. Crude oil, after a protracted decline, again, seemingly around recession worries, manages to just eke out a flat result. And the dollar keeps falling in a telling sign against the basket of major currencies, both the euro and the yen, as kind of bellwether counterparts. They manage another week of gains last week, although the process has slowed some. Certainly not the kind of 4.6% rally that we saw 2 weeks back, but nevertheless, almost a percent added for the euro and over 0.5% added for the yen. So the thrust of the story still very much is growth concerns and what the Fed would do about it. Now, it seemed like in the first stages of the stocks sell-off from late March, what we saw was perhaps the idea that with a market signal, that is to say, with the data showing signs of growth coming apart and the market selling off on that, and that data screaming that the reason for the consternation, be it the PMI numbers or the consumer confidence numbers, PMI is, of course, a measure of business confidence. If that's ultimately going to scream at policy officials about there being consternation about their moves and the speed of them and the way that they're being delivered, that there would be an adjustment and that this would be a source of relief. But everything that we've heard has instead sounded more like saying this is a necessary adjustment. There's a period of transition that has to happen, and the administration is okay with the level of market selling that has transpired so far. This is the message we've heard from the president, from the Treasury Secretary, and so forth. And so the markets have instead said, okay, well, if on the fiscal side of the ledger, they are okay with this, on the Fed side, the monetary side of the ledger, there might start to be conversations about perhaps we need to dial up stimulus to make sure that we're on course with our growth and inflation targets. Otherwise, we might veer off if the economy weakens suddenly. And so that's what the markets have been hoping to see. Now, we get the first real test of this idea with this week's policy announcement. It is one of the big quarterly announcements where the Fed is going to not only deliver its rate decision, but also, in addition to the policy statement and a press conference with Fed Chair Powell, give us updated numbers for the summary of economic projections. That is to say, what the Fed expects for growth, inflation, and most importantly, the path of interest rates for the coming 2 years or so. The upshot, of course, is that these expectations are not the Fed's official expectations in the sense that it isn't the institution, it's each individual policymaker on the Fed board gives their forecasts, and then the Fed publishes the median of those. But it does give a very good sense of the consensus on the committee. And when we look at where the markets think this is going at the moment, we can see the Fed, of course, got very dovish in September. The markets since talked them off that ledge. And already we can see that by November, on this policy curve implied in Fed funds futures, we were already at a much less dovish setting and haven't really moved around very much since then. Basically are sitting right around there across the subsequent policy announcements. So from September to November, we make the change, and then subsequent meetings in December and January leave us about in the same spot. The sort of structure of the curve for now seems to be a little bit more of a bias to stand still up front, with a little bit steeper of a shift toward cuts downwind. And we see that with the current median rate at 4.38. That's, of course, the middle point between the Fed's current target of between 4.25% and 4.5%. No changes. We're at the median for this month, for April. We're starting to flirt with cuts in June, and the first cut is fully baked in. That is 38 minus 25 basis points right here for July. If we look at the overall tally here, we do see, of course, that all this consternation about growth has marked a sharp, dovish revision in expectations. So about a month ago, we only saw maybe 50 basis points in cuts for all of this year and next. Now we're looking closer to 100 basis points, sort of hovering around this mark right here. We got as low as 120. We're now at about 90. So sort of hovering around the 4 rate cuts tally, which is actually in line with what the Fed initially told us in December. We can see here the Fed was looking for 50 basis points this year from 4.4 to 3.9, and another 50 basis points next year from 3.9 to 3.4. Now, if the growth concerns in any way shape these numbers to give a more dovish view, well, then the markets ostensibly are going to feel that this readjustment that they've made has been vindicated, and of course would take that as a sign of encouragement. But if instead the Fed says, you know what, we don't see a crisis that would allow us to back away from wait and see mode, we of course acknowledge that there's been some concerns about growth, but lucky for us, as we just heard from Fed Chair Powell 2 weeks ago in a speech, the Fed has the benefit of time. There's no sudden surge in the unemployment rate. Inflation isn't running away in some sort of weird direction. So we're just going to sit on the sidelines here and do nothing. Wait for more confirmation. That's perhaps not what the markets want to hear, considering all of this adjusting. And if then the Fed disappoints in this way and basically doesn't do much of anything, then the message for markets will be, well, this means that they are delaying now, so they're going to be late to fight whatever economic downturn now looks to be on the menu, which means harder cuts later. And so what we might see then is, as a consequence of all of this, this 30 basis points or just over one cut that's priced for next year might start to become a much larger number. And the upshot, of course, then speaks to lower bond yields, especially at the long end of the curve, and perhaps a still weaker dollar. Now, the Fed is only one of the major central banks announcing policy this week, and each one has their nuances. The Bank of Japan due for a policy announcement. They are expected to hold rates unchanged. And as we see here, the curve, their policy curve, this is the only central bank that's expected to hike this year. So you'll notice the Fed policy curve is pointed down because they're biased to cuts. Japan's policy curve is pointed up because they're biased to hikes. And we can see here that by the end of the year, we're looking in excess of 75 basis points on the rate. That, of course, means one more rate hike from now. We're at 50 basis points now. And you can see that we don't have any changes. This right here is the spread between the current rate and what these curves are saying. So we don't see us get back over 25 basis points, that is to say, to price in the full cut, until we basically get to November. And then no more after that. And we can see the curve has been fairly static from this month to a month back. So with that in mind, one more hike, and there's not really a whole lot of speculative interest around the idea that maybe there's more that could be on the horizon. But at the same time, the situation growth-wise is heating up. We see increasingly fast Japanese composite PMI numbers. They're telling us that economic activity growth has rebounded to the fastest since September of last year after this dip in the fourth quarter. And against that backdrop, inflation has surged and is back to 4%. So it could be the right time for the Bank of Japan not to change policy suddenly, but certainly to signal that maybe they're prepared to be more hawkish than current pricing anticipates. Or perhaps maybe that rate hike could come a bit later. They're waiting to see, ostensibly, what wage negotiations look like as their fiscal year ends this month. And so with that, perhaps the Bank of Japan might signal that after these wage negotiations and where they see things settle, we could get more of a hawkish perspective, which might be the fuel that the Japanese yen needs to continue to reflect falling U.S. interest rates. If you got a hawkish BOJ coupled with a Fed that isn't prepared necessarily to cut and run and cut early, the upshot might be a yen-favored shift at the longer end of the two countries' yield curves, where rates in Japan had higher, rates in the U.S. had lower at the longer end, and that's exactly the kind of ingredients that the Japanese yen would need to continue to rally. It's already staged a pretty impressive advance so far this year, and it could find fuel for more of the same. And then the Bank of England will issue its policy announcement. A very similar story here to the Fed, where September was very dovish, and then we ended up in a kind of choppy range. Since then, the markets came off those extremes and have since been sort of stuck in a band here from November to December to February, now going into this meeting in March. The BOE doesn't meet in January. And you can see that, again, no cuts on the menu for this go-around. So we can see we don't get down into rate cut territory until June, 450 down to 423. And then we get another cut by November and sort of tilt a little bit lower by year's end. And what that shakes out to is 58 basis points being priced in for this year. That is to say, 2 cuts with about a 32% chance for a third, and stand still next year. Now, the key here, again, is the guidance. We're going to start looking at what the Bank of England has to say about whether this forecast still makes sense. And there is, of course, the knock-on effect to trade for them to weigh. But more importantly, the recent tensions between the U.S. and Ukraine have really perked up interest in the major continental and, of course, the UK capital. It seems like for the first time really in ages, London, Paris, and Berlin are prepared to hold hands and rearm together and in size. They seem to have concluded that Europe needs to be much more independent in its defense and not so reliant on a U.S. security umbrella that has basically guaranteed European security via NATO since the end of World War II. Now, they seem to be scrapping debt limits in Germany and variously plotting out big splash defense spending in France, in Germany, in the UK. And not surprisingly, of course, those are the main military powers on the continent. And all of that has already shown up in the bond market. We can see this creep higher in UK bond yields already starting to speak to this. And of course, the trend has been higher for quite some time, but even just more recently, we've seen this start to perk up. So before all of this spending ends up in the corporate earnings of European defense contractors, and maybe even U.S. ones, the markets are anticipating that a big fiscal impetus will show up as inflation expectations. And to the extent that the Bank of England is prepared to talk about this and flag it as an inflationary risk, the pricing for rate cuts this year could start to look a bit rich. We could start to come in for one cut with a chance of two rather than two and a chance of three. We might start to entertain the idea that next year could ostensibly even see a move in the opposite direction. Obviously, the euro has been a little bit more responsive to these moves. And already for the eurozone, not only have expectations for ECB rate cuts come in significantly since they last met, but the markets now put at about a 50-50 chance that the ECB will hike rates next year. A similar adjustment for the BOE, assuming that they say the right things, as the ECB did, to encourage that level of thinking, that could start to look like another rally for the British pound. And, of course, that would continue this sort of anti-dollar move across the board, but it would certainly catalyze a larger one here, especially if at the same time you get a backdrop of a Federal Reserve that seems to be delaying. So not only would you then get the implication for the markets that the Fed might not be ready to do something now, you would start again to build more into the back end of the curve, which actually would line up quite nicely with building up more tightening into the back end of the UK curve. So again, as you start to focus on next year's policy path, given a Fed that isn't seemingly in a hurry, you could get these yield spreads send the dollar especially lower in a broader dollar sell-off against the likes of the euro and, of course, the pound. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I am also on Futures Power Hour with Chris Mondays and Fridays, on with Victor Jones for The Price of Truth this week on Wednesday, usually on Tuesday, this week on Wednesday. Market calendars for that. It'll be a conversation right after the Fed policy announcement, so no doubt replete with all manner of spicy conversation and analysis. We are going to be back with Chris for Futures Power Hour Friday, back with Victor and Tom for First Call on Sundays, writing for the News and Insights portion of tastylive.com, and commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
Looking for a better broker and a bonus? Sweet. We got you. Right now, you can get a bonus of up to $4,000 when you open and fund a Tasty Trade account. Plus, low rates, smart tech with the analysis tools you need, and award-winning support. So, get a broker who's actually got your back. And up to $4,000 at Tasty Trade. Make your move, genius. Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Dear Kaylee, hats off to you for being such a culinary genius. I don't think it has ever dawned on our kitchen staff to serve gazpacho hot. Sincerely, Bob.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't want to fact check you with my vagina, but I will.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
Why are we literally rolling out the red carpet? What has this diva done?
I saw that. Why do you got a little red carpet?
Diva.
They said it's
sound.
Do we have a wide shot of the studio? They said it was sound. Yes, me lord.
And do we have to clap when you walk in?
Where are the rose petals? Wow.
Vanetta.
Hello. Yes. Good morning. Ooh. Yay.
New phone. Who dis? I did go in and get the phone at AT&T, and I didn't realize.
You went in unsupervised?
I went in by myself without a helper.
Did Beth have to pin all of your information to your jacket? It was like, my name is Tom Sosnoff. I need help, but I am an independent person, but I am looking to buy a phone. Here's how much money I have available. If I need help, you can call Beth.
I can send you some viral pictures of my corned beef.
No, that is a terrible sentence. I do not want pictures of your unseasoned beef. No, ma'am. No, ma'am. You guys are elderly?
I'm the only one in this room that's never been in an accident.
That you've reported. See, I report my accidents. You don't report your accidents.
You don't report your accidents. Other people report your accidents.
They hit me. There was nothing I could do. They hit me. I was standing still. They hit me.
I've heard this story.
Okay?
You're the only one in this room that's ever run yourself over.
That's true. That's true.
Classic.
That's true. No. You're the only one that had to sue your own property insurance because you backed your car up into the garage.
Oh, yeah.
Didn't sue anybody.
You're the only one who's had their mirror kicked off by an angry cyclist. This is fun.
Forgot about that.
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
And Cecilia and Dan, we've got a special show planned. We've got KG and Cole from Valmex here. We're going to talk volatility, talk their product, talk what's going on in the markets. But before we do, Cole, KG, how you guys doing?
Good, thank you. Doing great. Thanks for having us. Excited to be here at Talk Shop today.
Absolutely. We're excited to have you here as well. I hope you both had some wonderful weekends. But we're not going to mess around. Let's just jump right into it. Typically, we go through the markets and give our opinion, but we'll do that towards the end. You guys are some of the first guests that we've had on in a while, so we're excited to fire that back up. But you are behind Valmex Indices, some leading volatility products in the space. I think before we get started, maybe if you guys want to just give us a little bit of background about yourselves, and let's jump into what you're doing at Valmex.
Cool. Great to be here. This is Cole from Valmex. I'm the founder and CEO of Valmex Labs. Here with my colleague KG. There's a little bit of echo on my end. Can you guys hear that, or is that just me?
I think you're coming in okay on our side.
Okay,
but
cool.
yeah,
great.
we'll iron out any technical details here.
So TLDR, we build the leading Bitcoin, Ethereum, Solana volatility indices, kind of like a VIX-esque index for the Bitcoin crypto markets. 30-day rolling implied vol. We have a number of other indices which we've recently rolled out that track different things like interest rates, fixed income, other sort of metrics. And so, quick background on myself: I've been working in crypto startups for about 6 years. I have been following the options market and vol market my entire life. My dad actually spent about 30 years working at a couple different U.S. equity options exchanges. Did a lot of trading in my PA, and saw the void for this type of product in crypto. That's how a little bit on Volmex's history and my background. KG is a super interesting background. KG is our head of research. I'll let him jump in.
Thanks, Cole. Thank you for inviting. This is KG, head of research at Volmex Labs. Prior to Volmex, I was in TradFi space, working for an HFT company. I have a PhD in finance. I was focusing during my PhD in the volatility research, especially option pricing, volatility modeling, volatility forecasting. So applying those in the crypto area and building the implied volatility products in Volmex Labs.
Awesome. Well, we appreciate you guys again for coming on the show. I'm just curious, what prompted you to start Volmex, and how long ago did you guys start it?
Yeah, so we've been in the market. Thanks, Ryan. We've been in the market for the last couple of years. Got formally started in 21. So as mentioned, I followed the vol product space, option space through my dad, who's worked at a couple different U.S. equity options exchanges. Deribit was getting very liquid. Kind of noticed that there was no leading, de facto vol index standard, and we kind of got started on, building out an indicator, early version of BVIV, our core index, as well as some tradable products around it. And so basically we saw, a major opportunity to build a tradable vol product, a pure vol product in crypto that made it really easy to trade vol in a very seamless and intuitive way via perpetual futures. And then also there was no sort of leading index indicator standard. And so, the rest is history. We got started a couple of years back, and, building an index takes a lot of time to build track record, to build reliability, trustworthiness. So we've been in the market for the last couple of years. I think the market is now finally ready for this type of product. So it's kind of a confluence of the right team, the right product, and the right timing. And so really excited about where we're at right now.
Yeah, and if we can, we've got volmex.finance here in our browser. If we can just throw that up so everybody can see what we're talking about. If they want to check it out, go to volmex.finance and you'll see what we've got here on our screen. How does somebody get started? Is this something that, obviously you have the indices, are they tradable? How do you access some of the dashboards or the data here? And then we can talk about how to use it.
Yeah, so I'll take this one. So our indices are available via a number of different platforms. So you can go to charts.volmex.finance, which is kind of our own charts page, which has over, has our term structure, has BVIV, EVIV, SVIV, MVIV, the Bitcoin, Ethereum, Solana volatility indices we built. As mentioned, we have a BVIV 1 day, BVIV 7 day, all the way out to 180 day, term structure. And so number of different indices available here. We have a variety of realized vol indicators, correlation indices, all available on this platform here. For about 2 years, we've had these really great integrations with both TradingView and CoinMarketCap. And so if you go to TradingView, tradingview.com, you search for Bitcoin implied, Ethereum implied, Solana implied, Volmex's indices are actually the top results for those. And so, we're available on TradingView. We're also available on CoinMarketCap. If you go to coinmarketcap.com/charts, they have a whole dedicated section in the mobile app as well as on the web app about Volmex. And we have integrations with the Block, Levitas, and then we have a variety of APIs. We have an enterprise API offering. And it's, whatever sort of platform for data, you use, we have that, integration, coming or already built out. And then we have a couple of tradable products in the market and more coming soon. So we have this collaboration with Bitfinex, which is notably the sister company of Tether. And so if you have an account at Bitfinex, you can trade the BVIV, the Bitcoin Vol Index Perp, or the EVIV, Ethereum Vol Index Perp. And then we also have a collaboration with Arbelos, which has recently joined FalconX. And so those guys will also make markets OTC on the BVIV index. And so it's tradable through a variety of different wrappers and accessible in terms of data through a variety of different platforms right now.
Awesome. So I'm assuming for Tasty Live viewers and a lot of the traders at the Tasty Trade brokerage, they're going to be U.S. based, so might not have access to Bitfinex products or to perpetual futures. So, hopefully that's coming soon. We'd love to get your view on that in a second. But is it fair to think about this in almost a similar fashion as I would think about a VIX future, where while this is obviously related to Bitcoin or to Ethereum, it's going to allow me as a trader to express a view on volatility, or possibly I could use this as a vehicle to hedge? Is that kind of the primary use case, or what do you guys see in terms of how the indices and the trading or the perpetuals are used?
Either I or KG can take this one. KG, you want to take this one? I'm doing the last couple of questions.
Oh, yeah. So basically, main feature of volatility is, especially when there's a negative shock in the market, volatility goes up. So that's why, if you put it in your portfolio, it could be a good hedge against some negative jumps in the market. So that's one type of use. The other one is you can get a speculative view of the market, volatility market. So basically, we can see some vol spikes. So those could be good opportunities to sell because of the nature of the volatility. We see sudden spikes and then goes back to the kind of mean. So it's the mean reversion of volatility. It's a very important, well-known feature of volatility. And also, if it goes down to some lows, we can expect, at some point volatility will go up. So like speculative view, you can trade for hedging, you can use it. And also, if you have an option portfolio and carry some Vega, this could be a product that you could hedge those exposures.
Yeah, as I was poking around in here, one of the things that I came across that I really like, let's just look at BV, IV, or BVIV, is that you guys have the rank as well as the percentile in here. And I'm assuming that's just looking at where is the current implied volatility relative to the range that it's been in over a certain period of time. Is it fair to say then that one approach to this would be, okay, I want to trade, let's just say I want to speculate on volatility. I believe that it's going to mean revert. Would you look for the rank to be kind of towards this end of the range, closer to zero? That maybe presents an opportunity to go long versus I would short the perpetual on the other side of that if we were closer to 100 or we're closer to that 99th percentile?
Yeah, I think as KG mentioned, when the market sees a big spike in volatility, it will typically revert back to some sort of it'll always revert back to some sort of long-term, medium-term mean, depending how you're looking at it. You could also think that, there could be some mean reversion, different types of mean reversion. That's kind of the most topical sort of use case is after a big spike, say the rank or the percentile is towards 90, 100%, should come back to some sort of long-term, medium-term mean. And so that's a very classic use case for implied vol. It's, going to mean revert after a big move up. And so that's kind of, I think, very, very topical and something for the listeners.
Since you guys have been in this space, what do you see in terms of the larger drivers around crypto volatility? Where obviously we've had points in time where you've had forced selling post FTX, you've kind of had these big boom and bust cycles that have gone on throughout history, the short history of crypto, but seemingly quite frequently. Have you seen that change at all? In any way, is it more macro driven? Is it still relevant to what's happening in the crypto markets? What are the big drivers of volatility?
Very analogous to the VIX index. When there's a lot of fear in the market, the BVIV index tends to always spike. So it's a very, it's a fear gauge, just as the VIX index is, with the US equity market. And so I think that, that's a very positive, that's a very negative correlation, very strong, persistent negative correlation in times of fear, BVIV and the spot market. It's interesting, it's a bit different from the VIX in times of greed and excitement in the market. You can observe at some points a positive spot vol correlation when there's a lot of spot buying. And so, as spot gets bid, options get bid, vols are increasing. And so For example, during the earlier last year with the ETF launch, there was some, a lot of positive spot vol correlation going into some of those launches, followed by a vol crush, which is, pretty intuitive, and we could talk about that for listeners as well. But yeah, so very negatively correlated times of fear. It depends in times of greed and positive markets. Perhaps it's very positively correlated with the spot market. But yeah, it's a bit different for risk assets than the VIX index in times of greed and positive price action. KG, what anything you want to add there?
I can make some additions on top. It could be in the last year we can see that there are two things. There are volatility coming from actually itself from the crypto industry, but also there are some volatility or a factor which is dampening the volatility, which is the I think ETFs. We can say that. So since the introduction of ETFs and inflows, especially inflows are key here. We saw in the last year implied volatility of Bitcoin or BVIV index is now much less than EVIF, ETH implied volatility index. So this type of differences, could happen because of the inflows, and we can say that this is because of some macroeconomic factors. One is, for example, when we see interest rates are decreasing or signs of quantitative easing, we see more inflows into the ETFs, and those are priced also in both BTC and also implied volatility in our index LIV. So that's why we see more inflows, introduce more stability into Bitcoin, and that's how we now see much less values of BVIF in comparison to EVIF. So this type of factors are quite important.
Do you think that we're likely to see that should we get a Solana ETF possibly later this year? Obviously, we have the ETH ETF. I mean, have you observed that in other products as well? Because we got that question quite a bit early on here, where it's like, okay, with these ETFs, the further institutionalization of the space and maybe alongside that risk controls and the way that these investors behave, are you going to see muted levels of volatility? Are you going to continue to see volatility almost dampen in this space over time versus what we've experienced over the last few years? Do you think that we'll see that across Ethereum and Solana and any others that are kind of given that ETF wrapper?
Yeah, so it has that potential. So potential is there. Yes, now we have the ETFs. Soon it will be Solana ETFs. It has that potential. But the real factor there is, in my opinion, it is the adoption or the inflows, we can say. We saw that inflows in BTC, like a huge amount of inflow, and that actually decreased. In comparison, we saw Bitcoin Vol actually decrease a lot. But that didn't happen in ETH, and because there were not that much of inflows. So same thing when it comes to Solana. When we see a lot of inflows, a lot of adoption in it, that will decrease the implied volatility. That's my expectation. But if that's not the case, we will not see that much of a decrease. So it really depends upon the adoption, how market will actually welcome the ETFs and inflows will enter.
Awesome. Yeah,
kind of on this point,
makes
I think
sense.
that so it's well said, KG. I think the advent of the IBIT options have introduced a lot of new players into the market. I think this will bring a lot of structured products in the market. And there could be some dampening of vol long term. We haven't seen that with Ethereum, as there's not an Ethereum ETF option at this point. And then, like you said, Ryan, there's not any Solana ETFs in general. And so something to pay attention to as the ETFs, the options around the ETFs get more adoption, we could see some impact on the vol long term. And I think this is something really interesting to follow, right? So the advent of more structured products, more options, definitely should have implications on overall Bitcoin vol levels in the US, tradable product market, as well as offshore on exchanges like Deribit and OKX. And so it's a really interesting time in the crypto options landscape. Things are changing quite a bit with the, entry of the IBIT options, which have been very successful, right? The IBIT options are now about half the size of Deribit in terms of open interest. And so the market structure is very quickly evolving, something that we're paying a lot of attention to. We'd actually love to talk about that here as well.
Yeah, I guess, can you speak to what the broader option market looks like? I mean, again, here we are certainly US centric and tend to think that unless it trades on a US listed exchange, there really is an interest in it. But in crypto, it's really the opposite. As I understand it, maybe 80% or so of trading activity in terms of volumes in perpetual futures is outside the US. Clearly, you have exchanges such as Deribit. How do those volumes in those markets compare to what just now is accessible to investors in the US?
Yeah, so we've been publishing pretty consistent research the last couple of months about the growth of the IBIT options and how it maps to the Deribit market and the OKX offshore options exchanges. So as you alluded to, Deribit, OKX are the leading offshore options exchanges. Bybit has an offering, Binance has an offering. I sit in the US, I'm based in New York, and Volmex is a US company. So we're very excited about the entry of options products into the US for crypto. And we think that this is a major inflection point for the crypto market. Now, if you're a regulated hedge fund sitting in New York or a retail trader that trades through, Thinkorswim, shout out to Tom and Tasty or Tasty Trade or a Tasty Brokerage, you can now access these IBIT options. And so we think that's a very big win for U.S. investors, U.S. traders. And so, there's a kind of a different profile right now that we're seeing on sort of Deribit market, OKX market, as it compares to the IBIT options. KG, maybe you want to talk a bit about that. There's kind of a difference in the average strike, the average, the average tenor, and the volumes are kind of ramping up for the IBIT product. And so it's really interesting. It's kind of the market structure is changing a lot, and Volmex is positioning itself to sort of straddle both markets. So we would love to kind of enter the U.S. market in a big way, and something that we're working on behind the scenes. And so really excited about the growth in the offshore market, but also with perps and the BVIP product, but also the U.S. capital markets are the most liquid and deepest in the world, and so this is clearly where things are headed.
We've got a question from the chat, if we can entertain it, if you guys have a view here. I think this is a great question. This is from Scramble Everything. How does strategies, or formerly MicroStrategies, their strategy of convertible debt offerings and then the subsequent purchases of Bitcoin, does that affect Bitcoin volatility at all? Have you guys, I guess maybe to rephrase that, have you observed anything structurally that's changed when you have, and I don't know how big of a buyer MicroStrategy really is at times, but you have a player like this that's consistently coming in there. Have you seen a change in volatility across the space since they started to participate in the fashion that they currently participate?
Hey, do you want to take it, or I can go for it?
Yeah. So I categorize that into like institutional, like as more institutions, buy Bitcoin because they buy and hold, right? So this is in terms of like volatility. This usually creating like downward moves in the volatility. So adoption and more this type of purchases will. In my opinion, like decrease the vol over the long term. But at the same time, now BTC has an exposure of risk coming from big firms like MicroStrategy, right? So any problem that MicroStrategy has now will be reflected in the vol profile of BTC, because in times of any distress, any issues, the people will be if it's not like scared of what will happen to BTC then. So the risk will be carried into BTC, but at the same time, these are institutional players, right? So more institutions entering into market will decrease because of their usually like buy and hold strategies. So it's like both, like yes and no. It really depends upon where we are. So currently, a MicroStrategy looks quite strong, so that's why there will not be an effect of its own risk going into BTC, but it's more now like the institutions buy and hold, and that's like less volatility reflected as like less volatility in the market, in the BTC market.
Awesome. Well, hopefully that answers your question there. Scramble everything. Thanks for the question. If anybody else has a question, please pop it into the chat. If you're not on the YouTube channel, pop over there and you can chat with us here.
I got a question. So you guys are crypto OGs. You've been around for a few cycles. You've seen some things, right? So what's your personal view on where we are in the cycle? Like, are there any similarities, differences from a volatility perspective compared to previous post-halving cycles?
I think, it's interesting. Where we are currently in the market, there's a bit of apathy and, some folks are sort of jaded towards where the crypto market's at. I personally think that Bitcoin is going a lot higher long term, this year and in years to come. And so looking for, well into the six-figure Bitcoin. I think, it's dangerous to say this time is different, but this is the first time we've had an ETF on Bitcoin, an ETF on other crypto assets, Ethereum. And so I think the IBIT options, the IBIT ETF have been very, very successful. There's been in the order of tens of billions of dollars that have entered the crypto market, either for just outright, buy and hold strategy or, different sort of, basis trades and things like that by some of the hedge funds. And so I think, the US market is really maturing. Crypto is growing up generally. And I think that this unlocks a lot of big players to come into the market, right? Previously, if you were, a regulated hedge fund with tens of billions of dollars in New York, you didn't have a Deribit account, but now you can trade IBIT, right? And so things are growing up a lot. I think that this allows more sophisticated players to come in the market. At the same time, I think a lot of crypto OGs get a little bit jaded. If you've been in the space for 5-10 years, which is crazy to think about, there's it might seem like things are moving a little bit slow, which is kind of a naive view, I think. And so really excited about where things are at. I think there's no reason Bitcoin can't go to 150K, 200K later this year. It's, in a little bit of a lull right now, but, there'll be some new news eventually and, things will pick back up. And so hard to say what those catalysts are, but, we're builders. We're really excited about this industry and are building products and tools which make it easier to navigate. And so, we think that there's big things ahead, but, not financial advice, obviously. And obviously the BVIP product is very relevant in those types of moves, since though, there should be a lot of strategies and, ways to use our different indices throughout that kind of price action. So I think it looks a little bit different now with the entrance of the, big institutions and ETFs and the BlackRocks and the Fidelities of the world. But the core thesis of crypto still applies. It's a non-sovereign monetary store of value that provides Bitcoin is digital gold, right? And Ethereum, Solana are these sort of decentralized app stores that allow for sort of permissionless, unstoppable applications. And so I think that thesis remains the same as previous cycles, but now we're seeing more sophisticated players come in the market. KP, what do you think?
I can add only maybe the effect of the macro events, and quantitative easing is quite important, because in the previous cycles we always see there is a coincidence of quantitative easing and the bull market. So currently we're kind of on a pause. And it's more likely that it will continue. So that's why we are not there yet, and I think the bull market will continue. But it's very related. It's very connected to the global markets, global money supply. So quantitative easing is quite important here. My personal opinion, of course, but I think we will see with the more rate cuts come, the markets will be more active and more bullish, I guess.
Yeah, I tend to absolutely agree with you there, KG, where I think people at times become very impatient. There is this, at times, this get-rich overnight mentality that might exist in crypto. But the real driver really being quantitative easing, the quote-unquote money printing, right? We're still going through that period, or maybe we're close to the end of balance sheet reduction. Interest rates are still about 4% with no expectation of a cut even this week. And so I think there's a lot of catalysts yet to come that I'm excited about. One final question for you guys, just from a strategy perspective, before we wrap things up. when you look at the indices that you guys have created, you've got term structure on here. And again, I encourage everybody to go to volmex.finance and check out the charts. It's in TradingView as well. But are there any setups that you look for where you're kind of licking your lips? There's a lot of edge, whether that's for time spreads or anything where nothing's going to work all the time. But are there any specific setups that you look for and strategies that you like to deploy as a result?
One simple thing could be some, events that we see vol spikes. It's also possible that volatility may go even further, but it's less likely, like after we see some, like rare event, then volatility, goes up, jumps suddenly. It's quite expected to see the vol levels to go down, right? So that could be a strategy. Some other strategies could be found as well, but I think this is the simple, maybe the simplest way of exploiting this future of volatility, which is the mean reversion, like we just talked about. Other than that, depending upon your portfolio, it could be a good hedge, but that's more like personal thing. It's not the mean reversion strategy. On top. I don't know. What do you think of?
Yeah, so I think sort of the event vol crush dynamic's really interesting. Going into some of the ETF launches, there was a crazy event vol premium that was kind of priced into BVIV, priced into EVIV, which some folks found very intuitive to see a vol crush right after that. So once the ETH ETF went live, there was a major EVIV vol crush. Same thing with BVIV, with the Bitcoin future Bitcoin ETF launch as well. And so I think, that's really interesting. We had published some research last year about if you had shorted every FOMC, announcement, there would actually be sort of like around 45 or 50% annualized yield, if I remember correctly. Because there's typically a small vol crush after most of those, macro news as well. And so very interesting dynamic with the event vol crush, which is very, analogous to what you see in the equity market, right? With earnings and, events with stocks. And so that's one area. I think that's very topical. When we get the next big Bitcoin date, for some sort of milestone, look for some sort of event rising vol into that event, and then a vol crush, after that event. That seems to be something that there's a lot of actionable trading strategies on. If you had a Bitfinex account or any of the other exchanges that are going to be listing the BVIV, products and other Volmex index products, you'd be able to express a view on that event vol or that vol crush. And so, great question, Ryan. There's a lot of things. It's a very versatile product.
Awesome. Well, appreciate that. And we've unfortunately run out of time. Appreciate you guys coming on the show. I hope that have you guys back on, and certainly, again, encourage everybody to check out volmex.finance. Check out the research that they've put together. Would love to, again, have you guys back on the show to talk through some of that at different points in time. Seems like there's a lot of interesting takeaways there. But as we wrap things up, where can everybody find you guys in addition to volmex.finance? Where should we follow you on Twitter? How else can somebody get in touch with you if they want to learn more about what you guys are building?
Yeah, thanks for having us. This was a blast. We'd love to come back on and take stock of the vol market in a couple weeks, couple months. So follow us on Twitter, Volmex Finance, VOLMEX Finance. We have a Discord with some, you can track our indices and, ask questions there. But Twitter is a great resource. Add it to your TradingView watch list, right? So search for BVIV, EVIV, SVIV, some of the other indices we have. If you search for Volmex on TradingView, you'll see we have over 50 indices available there. Download the CoinMarketCap app. Charts.Volmex Finance is our own charts platform. So yeah, check it out. Let us know if you have questions. It was a pleasure. Looking forward to next time. Thanks, Dan. Thanks, Ryan. Great to be here.
Thanks, guys. Appreciate it.
Yeah, thank you very much. All right, that's going to do it for our show. We will be back on Wednesday. Until then, I'm Ryan.
I'm Dan.
Peace.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at Tasty Live.
In road trips, my family, it was like whoever could get the captain seat was it.
That's great. I'm having a great time.
Me too. But, I mean, stay a while. Take your jacket off.
No, I mean, I'll stay, but the jacket's not
Come
coming
on,
off.
take your jacket off.
Nope.
Come on,
No.
take it out.
I'm sorry. I didn't mean to.
No, I'm sorry.
You hopped on this cowboy's horse, so I guess you got to hear his tale. In '87, I took it off. There was the market crash. In '92, NBC canceled Blossom. A couple of years ago, I lost it for 2 days, and the Lakers won the NBA Finals. Bottom line is when this thing comes off, bad things happen.
You've got to take it off sometimes. I mean,
Never do.
how do you shower?
And the jacket's kind of gotten used to it. In fact, every few days it needs it.
No matter what, you keep it on.
I can take my shirt off if you want, but I'm not taking the jacket off.
I just don't know if that's something that I could deal with.
It'll be like a teal tornado. Just endlessly washing up on your short.
I mean,
This is moving so fast, and I like it.
Yeah.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Oh, yeah. Tasty Nation, good morning. Oh, yeah. It is Monday, March 17th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast called The Price of Truth, a show where we like to explore the incentives that govern our world. Good golly, they're giving us a lot of incentives, and they're trying to govern. More on that in just a bit. Before we get to the meat and potatoes, let's say what's up to the people. Shout out to everybody watching on tastylive.com, as well as all of you watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. If you don't already have both, go get them. This is going to be a long show, I can already tell. Oh, I got to sneeze, and I'm trying not to sneeze. But if you want to be part of this, nice. If you want to be a part of this chat, you got to hop into the evil Google YouTube. So head on over there and find Tasty Live's YouTube channel. And and start typing away metacarpals, phalanges, skull, anything. Bash it against the keyboard. Random ass characters if you want. Anything to spoof Google's algorithm into putting us in front of as many people as possible and helping to deprogram the world. Make the world a better place one view at a time. Shout out to everybody currently in the chat. I would give you a big digital hug if I had consent. But I don't have your written permission to do so, so I will just give you a digital nod. Shout out to Grumpy Mike, Catan, Big Deal Donuts, Nicole, Adam Green, Victoria, Catan. Did I say your name twice? Go buy a lottery ticket. EB, Scramble Everything, good name. Cato Prime, Son, and so many more. Shout out to all of you. Great to see all of you. What a day. What a day, my babies. I guess we got to start with price, and then we'll get into all the good stuff. CM says, good to see you. Good to see you too, CM. Hope you all had a terrific weekend. I'm going to sneeze. It's coming. I'm telling you it's coming. SPX, S&P 500, cash was up 2/3 today. Nice reversal from yesterday. I think yesterday futures open a little bit after futures open yesterday evening. We're down like 0.5%. So a decent reversal from yesterday evening. If you're a degenerate like me, that's how you know. You know what I mean? If you're just if you're half stepping, the markets start on Monday. If you're really down, the markets have been open for a day, 24 hours already. NASDAQ up 0.5%, and the Dow Jones up 0.4%. The Russell was the outperformer. Up a little bit more than 1%, 1 1/5%, just about. And the S&P 500, we've moved up off of that 5,500 sort of basing area, headed towards the top of this range. The VIX absolutely collapsed, my babies. Gold to 4,000. It's coming, says Lincoln. I could see that in the cards. I don't think we go straight there from 3,000, though. I think you got to make people's. I think you got to. It'd be kind of crazy. We go from 2 to 3, from 3 straight to 4. I don't know. It could happen. I don't think it works like that, though. I think we had a decent call. I don't know. Did we? I think we had a decent call. We started selling vol as of last Friday, not the Friday that just passed, but the one before it. Took a little bit of heat into the early part of last week. And up into 30, and then we got a really nice vol crush. A really nice vol crush. Vols come from about 30 down to 20.5, and that's VIX cash. VIX futures down to 1975. A quick look at VIX term structure. And we still got an ugly little sort of backwardation kind of going on here, but not by much. And it really is just 1 month. If you remember, we were in like a 3-month backwardation where you sort of had like March, April, and May. All that term structure was funky and it was spiked. It was raised. And then June on was sort of in this sort of normal to flat term structure. That's now sort of all settled out, and you really just got March, which is elevated. And, what we had said last week, World Gold Council. Are they listening? we talk about 4,000 gold, and I get a gold ad instantly. Where was I going here? Oh, so a quick note. Why, Victor? Why were you talking about VIX backwardation so much last week? It's just because there had been two spots where we had a nice VIX backwardation, and I didn't pull the trigger the way I wanted to. And so last time, I promised myself that if we got into a deep backwardation again, that I was going to do, I was going to kind of go for it a little bit. And so as scary as I think last week was, and to have 3 months sort of in this weird backwardation, I went for it by selling the big dogs, the big VIX futures, which I normally don't play around with. So, I nibbled on a little bit of stuff last week, but the bigger position was selling the big VIX futures contracts. And, even a blind squirrel finds a nut. So that, if you're wondering, why the hell's Vic tweeting so much about Vol Crush? Somebody said, somebody said, you look like you're in bullish stress. I wasn't in bullish stress. I just took on a really big position. I don't normally do that. And it was just because, I like the VIX backwardation setup. I had said this even on the show. You don't know how long those are going to last. In the 2008 case, we had a nasty backwardation. It lasted for 60-something days. 2011, a nasty backwardation. It lasted for 70 days. See, it could get bad, and it could stay bad. But of all the setups, to me, that's one I kind of want to play. I'm willing to take that risk. As long as I don't position myself to blow up. To me, I think it's a decent risk. Anyways, we're still in backwardation, but it seems like the easy money has been made. Vol collapsed from 30 to 20. I don't know. In equities, 55.50. We never quite got down to 5,500. But, we got close. 5,500. We're now 160 points away from that. So we're sort of 50% of the way between what I think is fair value and the top end of the range. I've said, I think the new structure of the market is probably 5,500 fair value plus or minus 300. So you go test 5,800 and figure out if this resistance is real or not. And on the downside of 5,200 might be a decent washout. I don't know that we ever get to 5,200 though. And I think that's probably the new sort of range we're in. And I don't know, it seems like maybe some of the easy money, which is the vol crush, has been made, and maybe not so much in the equity side. I don't know that I'm that. I don't know how to think about this market though. How to think about the market at the major level. Because if Russell's outperforming NASDAQ, you know what that means? It means what people are buying. They're still not buying the Mag 7, right? It means they want to go. They're finding other values to deploy capital to. I'm not sure what that says about the overall market. Let me know. What were you doing last week? Were you running around like your hair was caught on fire? Fear mongering. Were you picking up some stuff? If you picked up something, what did you pick up? If you didn't, if you were doing neither, what you might have been doing is sort of closing out shorts, looking for a new opportunity to lean against this thing, to get short to the downside. And I'm not mad at that either. I think ultimately that might be, I think that's still probably the play. Real estate was the outperformer today. Gosh, give me a second. Let me read some of this. Gold to 4,000 is coming. I already read that one. This morning, it was in contango. Scramble, was it? I missed it. I didn't see it go back to contango. That probably makes sense, right? They probably crushed the last of all this morning. It got cheap enough for people to buy some short-term protection again. It's again, not a good sign. How many years of growth will the U.S. miss if not participating in a program like China's Belt and Road Initiative? That's a really interesting question. Late moves, last but certainly not least. Skew at 133, nothing to see. 57, 54 was resistance. You mean support? 57, 54 was resistance, down move coming tomorrow. Okay. Intel over NVIDIA. Whoa. Gotta be kidding me. Who said that? Who said Intel over NVIDIA? You're just saying today's price action or what? I mean, I get it. I mean, you got to close your shorts. Oh, I think that's what you're saying, Katan. It's that Intel was up nearly 7%, NVIDIA down still 2%. At some point people realize it's not even that they're better companies, Katan, and I know you know this, but like at some point, so much good news is priced into a concentrated 7 stocks that like an incremental dollar can't make sense there. And so much bad news is priced in that like, I guess all I'm saying is risk and reward. All I'm saying is risk to reward, basically. At some point, the risk to reward of a long bet makes more sense than short, even if it's a bad company, and even if all you know about that bad company is that they've changed leadership. At some point, an incremental dollar in a good company doesn't make sense because of the risk and reward. And I think the good news, I think about like NVIDIA and Microsoft and Amazon and Tesla. I think the good news is that some of that concentration risk, some of that perfection in the market is getting priced out right now, which, I know it's probably painful for a lot of people if that's what you're concentrated in, or that's what you've sort of been riding the momentum trade, or just from, I think, most people's 401ks, it's all in this stuff. And so normalizing the paper market, this is one of the things that I was thinking about this weekend is, let's say any of this is successful, and I don't want to start some political argument. It's too early for that. It's a Monday. I don't want to start some political argument, but let's just say any of the objectives, let's say any of these tactics accomplish your objectives, which is, over the last 15 something odd years, you could say longer, but let's just say specifically the last 15 years, a lot of the growth has been paper money growth, right? We attract capital. That capital has gone into our assets, and we've had asset price inflation to the benefit of asset holders, to the detriment of asset light, as Chamath would say, or effectively those that don't own assets. It's come at the detriment. And not only has that happened, but also we've sort of hollowed out we've hollowed out manufacturing, we've hollowed out a lot of strong working class jobs. We've sent them overseas. And if you imagine like what we're about to embark on, whether it's successful or not, I do not know. Whether we have the stones to go forward with it when it starts to get painful, I do not know. But if we're attempting to normalize this, you just have to think back and go, okay, well, what were the flows? The flows were TINA. There is no alternative. All excess liquidity from the world gets filtered back into U.S. markets. It used to just be buying treasuries, but in a post-ZIRP world, that buying treasuries, they were still buying treasuries, but like what else? A lot of that money came in and bought U.S. tech stocks. And the real economy in the U.S. suffered, while the real economy in a lot of other places flourished. So if what we're trying to do, I suppose, is improve our real economy, and that will likely come at the expense of our paper economy. Not the full expense, but at some trade-off. And it will come at some detriment to international real economies with some benefit to their paper markets. And you're already seeing that. you're already starting to see over the last month and a half, maybe 2 months, a change in capital flows. We've talked about it a little bit, but and I think Ilya would take issue with the framing of this, and I'll talk to him about it tomorrow. He would call a lot of this currency related. But I do think that you can already see a difference in capital flows to international markets. Europe being one, Japan being another, China being an obvious one. And I'm not so sure that that's a short-term trend. I'm not so sure that that's going to be short-lived. And so, yeah, I look at charts like this one, VGK, and on a 1-year basis, it's not the most enticing. A contrarian would look at that and say, how do I fade it? I know FXI, it's a really difficult market to look at and go, I want to buy some of this stuff right now, given the moves that it's had. And I'm not saying that this is the most advantageous place to execute along into this, but I'm just saying I'm not so sure this trend is over if we're going to actually stick with this policy for the next at least 4 years. For better or for worse. Again, I'm not here for political discussion on this early, maybe a little bit later in the show. My whole point is I think that the international flows to me make sense as a risk to reward bet. Let's see here. Seems like Tesla could be better for a bounce than Nvidia. I'm not. Yeah, somebody called for Tesla 170 or 160 the other day. I think that's what Pete said on First Call. I think that's kind of crazy. I remember we were loading them up here. They were giving it to us at 170. And then I felt like a dummy. I think I got rid of it at in the 3s. Can't believe we're back at 240. But again, this is how funny the market gets, Tesla at the end of the day, they sell cars. And it's like people forgot about that. You can sit at the throne at the right hand of the president. But how much of that should you be pricing into the equity? You know what I mean? At some point, markets get silly. They get silly and they go, I got to be in this thing. I don't have enough exposure. And people stop caring. They become price insensitive. And you get a Tesla stock that's gone from 225 to 500. And you're going, they haven't sold another car. In fact, people are boycotting the cars. You forget about that. But anyways, at 240, it is getting pretty cheap, I think. I think it's starting to get pretty cheap. Would I love to see it at sub 200? Yeah. I don't know if we're going to get there. I'd love to see it at sub 200, though. Even then, it's not like you're getting deep value for it. Earnings on April 22nd. It'd be nice to get bottoming out but prior to earnings. Oh yeah, we can sell some pretty decent puts here, sub 200. Those 180s, 185s. If I'm being a big chicken, maybe even the 200s at 550. That doesn't look too bad. I'm not gonna pull the trigger now. But I don't know. That's starting to look pretty decent. An interesting risk to reward. CM says equal weighted fund would have been better going into this stuff for sure. Equal weighted fund, I think outside of the NASDAQ. There's an equal weighted NASDAQ. I don't know that I'd be touching that. Moving jobs overseas was way before 15 years ago. I know, CM, I said that. 15 years ago was ZERP. Moving jobs overseas probably starts with China to WTO, so like 2000. It was where it goes hyperspeed. Manufacturing difficult now. Many of the Tech 7 have taken over the power supplies that manufacturing used to use. They use it to power data centers. Bingo, Night Moves. The thing is, they've done a lot of like MOUs, which is, here, let me say it this way. I've started to acquire a lot of utilities and energy companies on this premise that if the market doesn't buy them up and increase these valuations, if we continue to have cheap utility and energy valuations, then the tech companies, why wouldn't they just buy them up? So it's either the market is going to revalue these things, or some of these will likely get purchased. And we saw some of that. It didn't get outright purchased, but like the Microsoft deal with Constellation, CEG, I think that'll probably be, that model is probably something we'll continue to see into the foreseeable future. I think tech is really smart. Here's the flip side of that. Tech is really smart, so they'll figure out how to buy a company without buying it. Case in point, Microsoft and OpenAI. What a charade that thing is. Nonprofit, you know what. I would own, CM says, I would own NVIDIA long-term before Tesla, for sure, but for bounce, seems like Tesla has so much negative in it. Where's NVIDIA at? I agree, but NVIDIA is not that. I mean, last week it was at 108. I say 108 because that's my purchasing price. I know it got lower, but I keep saying 108 because it's 108 to me. To me, like it's at I don't know. 108's not the worst price in the world. I say that as somebody who bought NVIDIA, wrote it up to 900, which would have been the equivalent of $90 before I sold it. So everything after 90, I didn't participate in much, if at all. I think a few times it got back down to like 100, then I got back in. But it's sort of funny how that works, how opinions can change over time and space. That at 90, which was 900, which is effectively 90, I was like, all right, this is a bit expensive. Now, if we got to 90 again, I'd probably go, this might be cheap. Funny how that works. Victor, it's time to buy Alcoa stock. Aluminum getting up to all-time highs. I bought more Albemarle last week. It's not the same. It's lithium, but we're in the ballpark of materials here. That's not an ugly stock. I'm not mad at that idea, Catan. John Stein says the payoff for Elon Musk will be regulatory approval of self-driving, and the stock will be worth $800 a share. I agree with that, John. I do agree the payoff is self-driving. I don't think it's that straightforward, because I think that's it will be helpful. But you still got to still work with the states. But I do agree with you. Federal approval will be helpful, and it will increase the value of Tesla. Let me not say that. I can get in trouble. I think it does make Tesla a more valuable company in the long run. But I don't think you do that at first. If you're Trump, that's your chip. That's probably the only chip you have on Elon. And you're not going to do that early in the administration. You know what I mean? That's like a Biden pardon. You do that walking out of office. I'm sorry. Okay. I do like the Alcoa play, though. I'll look at that more. I don't know much about the aluminum market. We sold Newmont and added to Barrick. Oh, Catan. Yeah, at least you're in the ball. At least you're in the gold miner, so I got no problem with that. But why are you going and chasing the performer? You're going after the thing that's working. I get it. You're selling the thing that's not working, going after the thing that is working. I would do the opposite. I'm in both. So I have some Barrick Gold, which is GOLD, and I have some Newmont mining. My Newmont mining is bigger and getting bigger. But Catan, I think that's kind of when people first started going after the gold miner theme, they went after Newmont. And then it seems like the money sort of spread out. It's gone into other places, Agnico Eagle Mines, Barrick Gold. Even some of the silver miners finally started to perform today. We had a nice breakout. I'm in this one, Pan American Silver, PAAS, which was up 3.5% today. So a nice breakout to the upside. I think the silver miners to me are interesting. Gold miners are still interesting. And if you think gold can get to 4,000 in the next year, which I do think, but I don't think we go straight there. And if you don't think we go straight there, how do you get exposure to an increase in gold price without sort of top ticking a gold move? So I think Tom's instinct, we had a conversation on first call yesterday. I think his instinct is right. At any minute, we could be down 5% gold. And if that's true, I would rather be in some of the miners, which I think are still trading at a discount relative to the gold price. People just don't believe in this move or something. If you look at GDX, these are the big miners, made a new high today, up 2%. GDXJ are the junior miners, so a little bit higher beta in this one. This one was up 2.6% today. Another high as well. It's just, I don't know. You try to tell people, but they won't listen. They just keep buying Tesla calls, NVIDIA calls. And that was the game, that was the game for a really long time. So you could just say, yeah, okay, whatever, boomer. And you just double down, buy some more just outright naked calls. And then they just smoke you on performance. They're like, what are you doing? And you give them some complicated description of how you're trying to mitigate risk, and you go, what are you doing? I'm buying Tesla calls every day, bro. It's like, all right. That's what the game was. And I'm not, I don't think, I don't know. I always say this, but it seems like the game is changing. At 5% cost of capital, a little bit more difficult geopolitical situation to navigate, harder just politics and policy read-throughs. People being a little bit less straightforward about what their real motives are as well. I think all that makes this more of a poker game this time around than it was before. Let's see. Noah says, Victor, gutting of the American manufacturing base is something I don't know much about, but I think it's been going on for 50 plus years. U.S. capacity won previous world wars, then won too. Somehow it became less important. Yeah. Again, I don't know if you guys are earlier in the stream or what. But the inflation part, the asset inflation part, I think I conflated these, or like spoke about it too loosely. The asset inflation part starts around 15 years ago at ZERP. It's been happening for a long period of time, but I'm saying it went on steroids when you drop the cost of capital to zero. And the hollowing out of manufacturing, I agree, has been going on for a long time. But again, it goes on steroids when China joins the WTO, which is about year 2000. You make arguments for these cases as sort of long, not drawn out, but like longer term trends. And I'm down with that. I'm not going to argue. I'm just saying these things go on steroids in the year 2000 and the year 2008. Bonds, interestingly enough, have been a whole bunch of nothing. So we're at 117 here, the long end of the curve. And this is a really hard call. So there was a period in time where the only thing I wanted to trade was bonds. The only thing I wanted to trade was bonds. I could not figure out what the hell was going on in equities. I'm slowly starting to feel the exact opposite. I'm slowly starting to feel like the risk and the uncertainty is in bonds. And I'm feeling a bit more comfortable with equities, and I'm going to explain why. I think the tough part with yields is figuring out just what is the appetite for pain. And I don't know the answer to that. I don't know what the answer is for pain here. I don't know what the answer is for the appetite of pain. And if what they're saying is true, if what Besson is saying is true, and the Trump admin is saying is true, then yeah, maybe bonds are really interesting. They're still at an interesting level. But if they're bluffing, and it's hard to know if they're bluffing, right? Because with all the talk of cuts and layoffs and all of this stuff, they also put a budget. They're doing a budget by continuing resolution, which if you have the House and the Senate and the executive and the judiciary, why wouldn't you take this moment when you have all this political capital and political favorability? Why wouldn't you take this moment to actually do a real budget? Why would you do a continuing resolution? And why would you be passing Biden's previous budget instead of putting something of your own out there? So you get to like continue this spending. You get to continue this spending and just say, this wasn't mine, it was a previous administration. I don't get what they're doing. So on one end, they're talking tough, and on the back end, you're passing a budget that'll increase the deficit by $2 trillion. You're managing by continuing resolution instead of an actual budget. It's like I can't figure out whether to take them serious, and I think the truth is probably somewhere in between, which means, I almost want to short bonds at 120. I feel like shorting bonds at 120 is the more interesting play if you had to do anything. But 120 doesn't feel like a great level. So I don't know if this is helpful or good streaming content, but I think maybe 125. We get to 125. They happen to give us a gift. Maybe that's the level to start playing against it. Because I don't think they've got it in them. I honestly do not think they've got it in them. So I think they'll create the narrative of the fiscal conservative. I think they want to wear that uniform, but I don't think they want to execute. I don't think they want to do the dance. You know what I mean? They want to wear the dress and they don't want to dance. I don't know what that analogy is. but the bond market gave them a little bit of credit at 112. It seems to have gotten stuck here at 120. And I think we're getting close. So I think the risk and reward makes a little bit of sense to bet against the long end, especially going into FOMC here, where they're going to have to put a new SEP in front of people. And if they listen to the bond market, they have to lower inflation and lower growth expectations, right? Because you got to do something. You can't just put this same thing in front of everybody, this same summary of economic projections. You've got to do your job. And the last time we had this summary of economic projections, GDP was going to be at 2.1% for 2025. Unemployment rate at 4.3%. PCE inflation at 2.5%. Core PCE at 2.5%. Fed funds at 3.9%. So they have to true this up a little bit with 3.9. They have to true this up with the market a bit. I don't know. Maybe they don't move anything. Yeah, that would be wild if they almost they don't change anything. And he says nothing. That would be so perfect. He says almost nothing. He stays neutral. He acts like Mr. Magoo. They put out the same SEP or nearly the same SEP in front of people. They say good night. We'll see you in 3 months. I don't know that anything sticks out at me as something they must change on here, or it's an easy change. Uptick downtick says, imagine believing anything the Trump admin says is true. Imagine believing anything any president says is true, bro. That's the whole game, is figuring out what they're lying about and what they're telling gradients of truth about. The thing is, if he contradicts himself, he can't always be lying. You get what I'm saying? So, these narratives are always funny. What are you trying to guess? There are competing pressures, which is keeping bonds in this zone. Yeah, I agree, Scramble. That's what I'm saying. What I'm saying, I'm not trying to guess anything. I'm trying to figure out which side of the coin I would rather be on here. And I think it's so hard to sort of pick one that I'm trying to articulate why I don't love being long or short bonds here. Because I can make the case for either, and I don't think it's at an extended position that lends itself to, or if we were at 125, as I said before, I would really like the opportunity to get short there. 110 was an obvious level. I mean, in hindsight, at the time, it felt obvious too. That 117, 118, I don't necessarily know that bonds are off sides in any direction here, and I don't know that I want to be on any long-term trend play for bonds. I'm not trying to guess anything. I suppose I'm trying to articulate myself as well as sort of figure out if what I'm saying I actually believe in. Because I'm not in a bond position, so I am flat, and I haven't thought about where I would want to go long or short and why. And I sort of wanted to take a moment to think through that because I realized I hadn't done it, and it's FOMC week. And FOMC week can create some volatility for interest rates, and I want to go where the vol is. but I don't know that I have a strong opinion. So I think this is one of those cases where I just wait and I see, and whatever the market gives us, we'll play it from there. Add liquidity and fade whatever the market does is probably my game plan for FOMC. I don't have really strong bias and opinion. Scramble Everything says we are not getting 125 ZBs anytime soon. I think you're right. I think they thought it would be business as usual, but Trump needs a little time to get things going in the right direction. VM, that's the narrative. That's what they're saying. That's what like Senate Republicans are saying. But I think that makes no sense. If your favorability levels are high, you do it now. Getting time to get things done, that only adds risk, right? Vol is synthetic time. The more time, that's why your vol term structure normal is contango. The more time you give something, the more potential for something to go wrong. So if you actually wanted if this meant something to you, if you weren't just effing around in the cloak of the fiscal conservative, but you actually needed the government spending, you needed some of that fiscal impulse to offset the vol you were creating, which I think is what this is. They need, just in the same way the Biden admin needed the fiscal impulse to offset that raise in interest rates. I think in some ways the Trump admin needs some of this continued spending to offset the vol from some of the trade policies. And I think that's what that is. And they're saying, oh, we need more time to whatever. I think that's BS. And so the risk is if this doesn't work, your favorability levels are going to drop. If your favorability levels drop, you can't cut. You have to spend. Like politically speaking, anyway. Catan says term premium got to be costly. Victor, investment, long bond, and USA skittish. CM, one of the Nigerian brothers told me also they all lie. Anyone on CNBC has suggested unusual volume of option trades means something. That was good. And Lobo says, all right, I'll do one more and then I'll start going here. The government cuts and tariffs could take months, years to show up in data. I disagree with that. Right off the bat, I disagree with that. Once it does though, the momentum will be hard to stop. Thinking whichever way the bonds move, it will be big. Yeah. There's a part of me that thinks the economy was always slower than what they were presenting. And we just really gamed in 2024 we just gamed what we should have run into 2023 and 2024 with just like this massive fiscal impulse. Whether it was right or wrong, we just gamed it. It doesn't mean it was stronger. The economy was strong, but we needed that narrative. And now I don't think tariffs are helping, but it gives this illusion of control. But I think if he never does the tariff thing, never says anything to Canada and Mexico, this thing was slowing. And I think I think that's sort of his style, to try to pretend like he's always in control. But I also think it's probably not politically smart, because that's going to give everybody an out. It gives the Fed an out. It gives political opposition an out. But I don't know. It's a big card game. and I get the reasons why. In theory, I get the reasons why. To me, I find it interesting that people have a hard time steel manning stuff. Let me run something by you. I was trying to get to like the simplest way to explain what's happening. I try to do that because I'm not the smartest guy in the world. So I try to get to the simplicity of something. And I think like if you were running for president and you promised peace and you promised fiscal discipline, and as commander in chief, you've got two things you can execute foreign policy with: a carrot or a stick, hard power, soft power. So the soft power is through economics, right? Our printer is shut off at the moment, theoretically, because you promise fiscal discipline. Hard power, you promise peace. So you put the carrot and the stick on the shelf. What's left? And I think if I was thinking through this and I'm like, all right, if you promise peace and fiscal discipline, how do you execute hard power or soft power? And I think that's how you land on tariffs. Not saying it's right. I just think that's where he put himself. How do you execute any hard power or soft power to the world if the whole world knows you want peace and the whole world knows you don't want to spend money? I know I'm oversimplifying, but that's sort of what I'm trying to do. I'm trying to get to like the simplest explanation of what's happening right now, and I think that's not the worst explanation. All right, GC gold up to 3,000, up above 3,000. We knew we'd get here. It's just a matter of time. We finally are here. I think it will be. I don't know. Normally, I would say you get to 3,000 and you'll probably get a big puke, right? I don't know that happens, and I'm going to tell you why. I'm going to say I don't know that'll happen. I won't bet on it. I'm going to tell you why I won't bet on it. Because this consolidation here, if you wanted to puke or you wanted to take some chips off the table, you were waiting. You were waiting for like a month, and you were at 29.50. You mean to tell me there are a bunch of people that waited through that consolidation just to get the 50 points higher to dump it? I don't think that's how this game works. I don't think that's how that game works. So I wouldn't bet the dump here. I'm not saying it won't happen. I'm just not going to bet it. I don't love the setup. CM says, I live for steel manning and do it regularly. Finding the best argument for something doesn't make it the best logically sound argument. Yep, I agree with that, CM. Agree with that 100%. But I think it's a test. I think it's I won't. Let me say this. I'm gonna be careful with the way I say this. I think arguing with somebody. I think before I engage in like a good faith debate, finding out if they've taken the time to research the opposition is a worthwhile exercise. Because it's like, am I just debating somebody who just constantly gets on the internet looking for facts that back up their already existing point of view? Or am I having a conversation with an intellectually honest individual who may change my mind, who may change their mind? And I think just at least framing what type of conversation you're about to get yourself into, I think is helpful. Because I find one type of person exhausting to have a conversation with, if you're blindly defending a point of view, and I don't know how, I don't know how people fall into those buckets. You know what I mean? Like if you grew up in Chicago and your father was a White Sox fan and he was a Bears fan, he was a Bulls fan, and every day, you know, you've got memories associated with those teams. I get how, as an adult, you're a Bulls fan, you know, and you're like, I don't like the Pistons or whatever. I don't get how people do that with politics. I do not get it. Like, I could understand if you did that with a position, like I have a policy stance and this is what I believe. I think so many people just riding with teams and then it's interesting because if you've known somebody for 20 years and you go, okay, what do you think about immigration? And if you've known them through the Bill Clinton era, when unions were 20% of the workforce, and the Democratic Party was pretty staunchly anti-immigration because of what it does, because of the threat to domestic workers and wages, then it just flips, you know, completely flips, and people go with it. And that's the part I don't understand. Same thing with, I can do the same thing with the Republican Party too. Like how do you just ride with a group of people who change completely on like fundamental positions on how to think about the world and the economy? How does that work? I get the politicians' incentives to just switch his mind or her mind and opinion based on their donors or their incentive structure. But you as the individual, why are you changing your mind every 7 years? How are you getting talked into changing everything you believe every 5 years? That's I don't get that. And I don't like it's not like I don't like talking to those people. I just don't take them serious. I can't take you serious because you haven't sat down to do any work. You sit down to do any work and figure out what you believe about the world, or are you just scrolling enough that you saw enough images and memes that now you believe something? And if I just spend enough money, I can make you believe something else. Yeah, anyways, sorry. I got off on a tangent there. Anyways, I like the gold mine. I've said this a million times. I like the miners here. I don't love a long gold, even though I think if I had to be long or short, I'd be long. I could definitely see us waking up and being down 5% in gold. But I think if that happens, I'll just end up buying more miners on gold volatility. And I think silver miners are pretty unloved here. If I had to take a bet, I kind of like silver, which is weird to say near these highs at 35. So I wouldn't take a new long. I would do the same thing. I don't want to say that. I wouldn't do the same thing because it's not the same setup. The silver miners are not as cheap. They are at highs along with silver, so it's a little bit different setup. Copper, again, we talked about this on first call, near highs. But the equity's still trading at a bit of a discount, but they've just started to take off the last 4 or 5 days, you know? And that's what happens, bro. That's what happens when people wake up to these things. They go, oh, wait, copper's at the highs. And the thing that makes 70% of its revenue is at its yearly low. Does that make sense? And everyone says no. And you get this $5 rally in Freeport out of nowhere. And that's the easy money, and then it gets harder from here. Yeah, so I've sort of been I've been very consistent about the ideas that I've been on, and I'll probably be consistent when they start working. Then come up with a new set of ideas, because that's the game, right? Don't run these things into the ground. Look for those easy money opportunities, and then when they're gone, we'll figure something else out. But I still think Newmont's a decent bet. I still think Freeport is a decent bet here. I like Albemarle. This one's lithium. I talked about this a little bit earlier, but this one had a nice little bounce today of 5.5%. And wasn't this like, didn't Kramer say don't touch this last week or something? I like the idea of accumulating some materials here, and I've explained why, but I will just really quickly again. In a world where multiple participants, we're going from globalization where you are just looking, you have sort of this global supply chain. Somebody's adding materials. Whoever has access to the cheapest materials is adding that. Whoever has access to the cheapest labor adds that. Whoever has incremental marketing and shipping, all that stuff, just the world participated in like this sort of singular and efficient supply chain. And that works in a cooperative world. And people are no longer cooperating with each other. The cost of capital goes up. And for national security reasons is what everyone is pitching. You need to go away from this sort of globalized supply chain, and you need to build your own national supply chain. And that seems to be repeated in multiple countries and territories. But if all those people are recreating their supply chains, they're gonna realize at some point that like, oh, we need 3 times the materials. And I think the setup and not only that, but you have this situation where if we're not careful and we trip some credit event, or we have to go into QE again, or something like that happens at some point in the future, maybe not today, maybe not next year, but you have a situation which would be very beneficial to all hard assets. So Bitcoin, gold, silver. I think in a way the market is sort of leaning that direction right now. It's like, let me lean towards the fixed hard asset that the central bank cannot print. I'm going to lean into that direction. That's what seems to have been happening. And anything that the central bank can print, people leaning away. And so I think you trip some sort of credit event, or this gets ugly, the negotiations get wild. Yeah, you're going to need to turn the printers back on, and that's going to be extremely beneficial for every hard asset you can imagine. Bitcoin especially. And I don't know why you don't. There's a part of me that goes, isn't it inevitability? You know what I mean? And so there's some part of me that totally gets what the Bitcoiners see. I can make the arguments against it, but I do see what their end game is. Let's keep going. We'll do sectors really quickly. So I started off doing this and I left the topic. I think I went with the chat. But real estate up 1.7%, a little bit of a bid into this area we've been watching, which is the home builders finally got a little bit of a lift, and XHB and ITB, we track both of them. The last 2 sessions, not much, but a 2-day reprieve of the selling after hitting lows last week. I watched a bunch of stuff this weekend, which I normally don't do, but I did watch a bunch of stuff this weekend, and I saw a lot more people speaking about the housing market. A lot more people speaking about these home builders, and the lockup in housing, this pause in housing. I think as soon as we raise again, as soon as we cut again, I think our fortune will be told by the long end. If the long end lifts again, we've got real big problems. If we kind of stay where we're at or drift lower on a cut, we're going to be okay. Like the economy might be might be an okay. I'm not going to call it strong shape, but it might be okay. If the long end lifts, we're screwed. I think that's the way I see this. If the long end lifts even higher, we're going to be screwed. Home prices are coming down, and they're coming down hard. But if it plays ball, if we cut and the long end falls or doesn't lift, this might actually work. This thing might actually work. So I think that's the thing to answer all questions. We shall see. Last one here is going to be crude oil, 67.16. The first, what was it, 2 weeks ago, sort of was the first floating of a headline that I'd seen about doing something with the SPR. I think this is a hard market, given the negotiations going back and forth between the U.S. and Iran. This is another one. It's funny because I used to be all give me crude oil, give me gold, give me silver, give me copper. And I used to be playing all of those things through futures options. Now, I don't love any of those markets, and I love their equity counterparts. So I don't love copper, but I like Freeport. I don't love gold, but I love Newmont. I don't love silver, but I want silver miners. And I think in energy, it's the same. I think crude oil is a hard one for me because I can't figure out the incentives. I know that we want a lower energy price, but we don't want it too low. And picking a spot here in crude oil, it seems impossible. If you're getting a low price, I think you've got any day you could wake up and the U.S. admins floats a headline about filling the SPR. So shorting it becomes hard, or they have a tough negotiation with Iran. I just think the underlying market here is filled with really difficult catalysts. So I would rather be in long energy stocks here, which I think have been unloved. And for the right reasons. I think everyone is discounting more supply in the market, but I like energy stocks too. And over the last 3 days or so, people have been scooping these up too. But I think energy makes a lot of sense for the long term as collateral. All right. CM says, we arguably need home prices coming way down. Boomers need to relinquish and find some humbleness for the first time in their lives. I don't disagree, CM. I'm going to take us out on this. I don't disagree with you. So then, how do you do it? We only have one mechanism to like clearly take the home prices down, and that's to jack interest rates. But if we do that, people lose their jobs. We go into a deep recession. So how do you do it? See, the hard part that we're in right now is everyone wants lower prices, but nobody wants to go through the difficulty, the challenge, the stress that it requires. Because you don't just get to say, okay, all prices go down and everyone keep their jobs. Everyone keeps their house. Everyone keeps their health outcomes. There's no magic button that does that. And so, but then if you're one of the people that says, I'm willing and I'm ready to go through the pain because I think the other side will be most beneficial for most people. If you say that, people think you're unrealistic. People think you have a lack of empathy. But it isn't a lack of empathy. It's this train only goes one direction, and you're not going to like where it heads. It heads to more wealth inequality. It heads to authoritarianism. And this other place, it's not perfect. It's certainly not perfect, but it's better than where that train goes. And yeah, so that's sort of it's a really difficult thing to articulate because people think you're either crazy, unrealistic, or you have a lack of empathy for other people, and it's just not true, man. I just think of the two options, one of them is much better for more people. Not perfect, but better. If rates are up, retirees can earn more interest in savings rather than market risk. You're explaining why your vote wasn't a great idea. Oh, CM. Oh, you're brutal sometimes. Inflexible might be the word. I don't think that's fair. Sorry, I shouldn't say this. I have the microphone. I want to thank all of you. I think that's going to do it. I want to thank all of you for tuning in with me for nearly 90 minutes here. Do me a favor, hit the like button before you get out of here. Subscribe to the channel if you haven't already. Follow me on Twitter at Victor Jones. The Owen Jones is a 0 because I like to be difficult. It's a big week this week, especially towards the tail end of this week. With the FOMC announcement, there's some pretty decent reports. It's quad witching week, excuse me. So there's a lot riding on this week. The interesting thing is they already took all the vol out, right? Like if I told you this was quad witching, you've got FOMC, and you were coming into this week at 30, you would say, well, oh my God, I'm selling vol for sure, because you got to have a massive vol crush regardless of direction. What's so sick about the market is we got to what is a more neutral level going into this week at 20. But that's what the market does. It finds the exact pain point. I will see you back here tomorrow with a conversation with Ilya Spivak. I definitely want to focus on international markets with him tomorrow. If you want, do me a favor. You can tweet at me if you have specific questions or topics that you'd like Ilya and I to cover for tomorrow. I don't normally do this, but I am curious what say the audience here. If you want to, go ahead and tweet me, and I'll see if I can incorporate some of those topics into the discussion outline for tomorrow. Otherwise, I'll see you back there. I'll see you tomorrow. Same time, same place, same great network, only on Tasty Live. Peace.